Hello everyone, good evening to all of you. Good evening, good afternoon. Start the session फटाफट से एक बार देख लेते हैं। इंडियन मार्केट देखोगे तो इंडियन मार्केट मार्केट बैंक निफ्टी हल्का सा गैप अप था, फ्लैट कह सकते हो, ज़्यादा भी नहीं। वहाँ से थोड़ा बहुत सेलिंग ही आई है मार्केट में फिलहाल के लिए। कल को भी देखोगे तो फ्लैट ही ओपन है। यहाँ पर एक एफईजी है, थोड़ा बहुत रुक सकता है। एफईजी पर ऊपर भी एक रेजिस्टेंस है। बोथ एक्ट लाइक एज रेजिस्टेंस। ये भी एक रेजिस्टेंस की तरह काम करेगा, ये भी एक रेजिस्टेंस की तरह काम करेगा। नीचे सपोर्ट देखें तो एक सपोर्ट नीचे है हमारे पास 6200 के अराउंड, फिर 6170 के अराउंड। ये 6200 वाला थोड़ा सा वीक समझना। अब ठीक है ये सपोर्ट थोड़ा सा वीक मान के चलेंगे। इसको लिख लेते हैं। ये भी सपोर्ट है बट थोड़ा सा वीक, नथिंग एल्स। नेचुरल गैस देखोगे तो हल्का सा एक गैप अप ओपन हुआ है। कल का रेजिस्टेंस सपोर्ट बन गया, ऊपर एक रेजिस्टेंस है तो एक अच्छा रेजिस्टेंस देखोगे ऊपर 305 के अराउंड। ये भी एक रेजिस्टेंस कह सकते हो, थोड़ा सा इसको वीक मान के चलना। वीक रेजिस्टेंस लेवल 298 वाला। नीचे बाकी एक सपोर्ट है 288 290, और फिर नीचे कल का एक सपोर्ट और बन गया है 270 280। वैसे ये कल ले चुका है सपोर्ट, तो फिर से सपोर्ट लेगा नहीं लेगा देखना पड़ेगा, बट दीज आर सम सपोर्ट जोन्स इन 15 मिनट टाइम फ्रेम इन नेचुरल गैस। बाकी डेटा की बात करें, फिलहाल के लिए मुंबई सेशन ओपन है। 7 PM पे एक डेटा है और 9 PM पे नेचुरल गैस की इन्वेंट्री। ओके सो मुंबई सेशन 9 AM ऑलरेडी ओपन है। 1:30 पे अभी लंदन सेशन ओपन हो जाएगा, न्यूयॉर्क सेशन 6:30, और फिर यूएस मार्केट 8 PM पे आपका ओपन होगा। उससे पहले 7 PM पे अनएम्प्लॉयमेंट क्लेम्स का डेटा गोल्ड और सिल्वर के लिए इंपॉर्टेंट रहेगा, एंड देन नेचुरल गैस की इन्वेंट्री शाम को 9 बजे इंडियन टाइम के अकॉर्डिंग। भाई कोई न्यूज़ आती है तो देखते हैं, ठीक है, उसका कुछ इम्पैक्ट पड़ेगा अगर कोई न्यूज़, मेजर न्यूज़ रहेगी।
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
We're clearly engaging in a trade negotiation dance. As much as we want to know the answer, we got to go through the dance.
It's all about trying to figure out what the market's pricing and therefore the risk distribution around events.
There are companies that are going to be winners in all of this, and there are companies that are not going to win.
Going this way, going that way. There's going to be a zigzag back and forth, and I think it is hard to pin those things down.
It's impossible to do in terms of trying to game out or forecast what's going to happen.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Each trading week is just like one long day, never ending, just one very long day. It's Wednesday. Live from New York City this morning. Good morning, good morning. Bloomberg Surveillance starts right now with equity futures down hard. On the S&P 500 by 0.5%, on the Nasdaq 100 down by 0.9, a 1-2 punch to tech sentiment. Let's start with Apple. According to our reporting here at Bloomberg, China's antitrust watchdog is laying the groundwork for a potential probe into Apple's policies and the fees it charges app developers.
Yeah, they take about a 30% cut of in-app spending. This is something that's been probed elsewhere, too. Let's be very clear about this. The other notable thing about this investigation is it started by Chinese authorities late last year, so not necessarily one to put into the tit-for-tat that we've seen with respect to China and the U.S. Nonetheless, another dent in sentiment that's already been eroded with the shares lower in pre-market trading at a time where people are really questioning whether the biggest winners can keep on winning in 2025.
These are the champions of corporate America, and they've now got a target on their back. If you go back to the inauguration, we said at the time, just the day afterwards, that was a celebration of everything that was great about American corporate America and American champions of tech. They've now got a target on their back as well. And you can see that foreign countries, nations, adversaries and allies see that as a potential pressure point for this administration. We saw that when the threat of tariffs on Canada came about. What was the first thing one province in Canada did? Came out and said, you know what, we'll cancel the Starlink contract. We'll go after Elon Musk. This is just the first or second time we see of this. I think you could see more to come in the year ahead.
Well, we saw that already with Tesla sales in France plummeting more than 60% in December, maybe in response to some of the back and forth that we've seen between the governments. Key issue is how long-lasting is this versus get it all out of the way, come out with the bazooka of pretty radical suggestions and see what sticks.
I said a 1-2 punch to sentiment. Here's the second punch. It comes from Alphabet. Check out these numbers. $75 billion in 2025 capex. The estimate was 57.9. Cloud revenue slowing as well, taking some wind out of the stock with negative 7%.
So to me, I looked at these numbers and it was a disappointment, and it wasn't that big of a disappointment. But what it highlights is that the expectations are very high for a lot of the big tech players, and their ability to meet those expectations is getting lower because of capacity. The fact that they still are saying that capex is the way to go and that it was so much higher and it will be so much higher than people expect highlights how they don't think that they can win unless they spend that money, and they're still being penalized for it.
Amazon results just around the corner as well. They're about 24 hours away. Stack day ahead for you too. Let's go through some of it. Economic data a little bit later. We'll get the ADP report. Jobs came out. Job openings a bit lower than expected yesterday. ISM services data due after that, so look out for that as well. Then we get some Fed speak. We'll catch up with Tom Barkin, the Richmond Fed president, a little bit later this morning.
And it comes at a time where Fed officials have largely been talking from the same hymnal, that they have a good chance to just wait and see what the data shows. But a bit of divergence. Yesterday, Fed Vice Chair Philip Jefferson came out and said he still continues to see gradual rate cuts throughout the year, whereas Mary Daly of the San Francisco Fed came out and said, we have to make sure that we get our inflation down. 100% of my energy is devoted to getting inflation to target.
We've got time. We can take our time. Seems to be a new way of saying we've got no idea what happens with tariffs and changes of policy down in Washington, D.C. Equity futures right now negative by 0.5% on the S&P. The loss is bigger on the Nasdaq. We'll be talking about tech throughout this morning. Coming up on the program, we'll catch up with Aaron Cannon of Clear Harbor Asset Management on the latest tech jitters. Michael Townsend of Charles Schwab with Trump in no rush to talk to Xi. And Stefan Slowinski of BNP Paribas following disappointing results from Alphabet. We begin with our top story out of Washington. President Donald Trump saying the United States should take control of the Gaza Strip.
I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, the U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Joining us now from D.C. is Bloomberg's Anne-Marie. AMH, let's get straight to it. That one was unexpected.
Unexpected, although Trump has flirted with this idea last week and even earlier in the Oval Office, but he was pretty serious and firm last night in that press conference saying this is his vision for the Middle East and for Gaza. It was unorthodox, way out of the box, has been described to me. Some in Israel who are looking well on this think it's a bold vision. What I would say this morning is adversaries will look at what the President of the United States said last night as a land grab. But at the same time, this could spark, and already has, fierce debate, which may mean that other individuals may actually come to the table with ideas. Because at the moment, what is the solution when it comes to Gaza? The issue, and what I really question, is the president's policy last night, stated policy, this is something he wants to do, he's looking into, kind of undermines his big picture of what he wants to get done in the Middle East. And I'm talking about normalization between Israel and Saudi Arabia. Remember, Trump 1.0 brought normalization with a number of Gulf states, the Emiratis, Bahrainis, with Israel. And Saudi Arabia last night, almost immediately, I believe it was 10 minutes after that press conference, put this statement out. The Foreign Ministry affirms that Saudi Arabia's position on the establishment of a Palestinian state is firm and unwavering, and it continues to say they will not establish diplomatic relations with Israel without that. So by talking about what he wants to do in Gaza, he undermined his big goal for the region.
Anne-Marie, do we have a sense of, in back channels, what this discussion is like with allies in the region, Middle Eastern powers that could potentially have a role in prolonging the ceasefire and getting some sort of solution?
Yes, and the back channels say that these countries, whether it's Egypt, whether it's Jordan, a really important meeting next week now is going to be President Trump's sit down with His Majesty of Jordan. That is going to be incredibly important because Jordan, Egypt are very reluctant to take in more refugees. And none of the Arab states want to either. Part of this also is because they want to make sure that Israel does not just take over Palestinian land in Gaza. So there are back channel talks about this, but I have not seen a single country in the region move on their willingness to take in Palestinians. So this is going to spark a tremendous amount of debate. I would also say, because we are also focused on the president's comments on Gaza, we are not talking about the second phase of the ceasefire. And it feels like Prime Minister Benjamin Netanyahu got a pass last night. This is something Steve Witkoff wanted to see Trump's envoy for the Middle East, wanted to see the Israelis really commit to. Those discussions are happening now. And Netanyahu is dealing with a very right-wing government that potentially doesn't want to see a second phase and want to make sure they can go back in and eradicate Hamas. There was very little discussion of that last night, and I imagine is going to be this morning. Anne-Marie, appreciate it. We'll catch up with AMH again in about 10 minutes' time, so look out for that. For those of you just tuning in, equity futures down across the board here. We're negative by 0.5% on the S&P. Aaron Cannon of Clear Harbor Asset Management joins us now. He writes, we continue to believe equities will outperform other major asset classes. However, elevated valuations suggest more tempered expectation for future returns. Key concerns include if tariffs bite instead of just bark. Aaron joins us now for more. Aaron, welcome to the programme, sir. Good to see you. It's been too long. Let's talk about sentiment. Sky high coming into 2025. Is that bark sufficient to dent sentiment?
Well, we'll see. Certainly the first sort of volley around tariffs, Jonathan, has been more bark than bite. Mexico and Canada We'll have to see what happens in China. But certainly there is sort of the silver lining in all of this, which was alluded to a little bit even with your conversation around the Middle East, which is tariffs 2.0 for Trump are very much not just about trade. They're about foreign policy and border policy. And so we'll have to see how he uses that tool and whether he's effective in using that to affect some foreign policy outcomes. I mean, the issue in Ukraine, the spat with China on multiple fronts, including their covering the back of Vladimir Putin, could all come into play on tariffs. And I think that's part of sort of the potential grand bargain that we could see across multiple fronts, which could be could boost the risk on trade. But for now, lots of uncertainty. It's the risk off trade. No one wants to lever up. They want to take risk off, and we'll have to see.
Aaron, you talk about some of the unknowns, and that has to do with tariffs and global policy. Some of the knowns are some of the earnings that we've gotten recently, in particular from Alphabet, from AMD, showing that there was a very high bar and an inability to clear that very high bar. Is there a tell in that essentially this is the moment of either transition away from some of the big winners last year to everyone else, the adopters this year, or if it's just really maybe valuations are just too high?
Well, certainly the last 2 years, Lisa, the narrative has been AI growth. NVIDIA has been the poster child of it, but also statistically the driver of that outperformance. Technology, massive outperformance in the S&P 500 last year. This year, it's the leading underperformer of all the sectors through yesterday. And I think the market is rethinking, how the evolution of AI is going to play. Who are going to be the winners? Will they be last year's winners, the hyperscalers, or will they be the future winners? Maybe the data storage companies and segmenters of data storage and the like. And so it's going to be quite interesting. But for sure, if you look at equal weight this year in the S&P 500, it's outperforming market cap weight. And we think there's plenty of opportunity outside of technology right now to take advantage of some of the themes. I would also just say, too, that AI and the discussion, the bullishness around AI accrued over the last couple of years, not just to public technology, but to private equity. I mean, every pitch book that I saw come through my office, mega private equity firms, they're about infrastructure, but it was digital infrastructure. It was AI, it was data centers, it was the utility build out. And so I'm sort of curious to see in the coming weeks how those pitch books will change.
At a time when it's unclear whether they will get the same benefit due to efficiencies. Aaron, putting the ideas together of the geopolitics as well as the tech story, something John brought up earlier with respect to Apple, which is how much of a liability is it to be a national champion in the United States at a moment where suddenly this becomes a potential negotiating chip on the other side by potential governments that are looking over at the Trump administration and trying to get attention?
I mean, certainly it's a risk. We saw some of that play out in Apple's numbers. We're seeing that play out this morning and in the headlines with China and Apple. But I will say there are smart people at Apple strategically thinking about their supply chains, not just the demand side, which is partially out of their control in China, depending on sort of geopolitics, as you just alluded to. But the good news with Apple is they've moved a good deal of their production to places like Vietnam and India and elsewhere. And so, we're hopeful that that this is really just a diplomatic sort of move on the part of China ahead of tariff conversations with Trump and Xi.
Aaron, as you know, that friction goes beyond just tariffs, and I think we're finding that out pretty quickly this morning with the likes of Apple and other situations too. Energy was part of the story over the weekend, coming into this trading week as well. One sector you like is energy. We'll catch up with the Chevron CEO, Mike Wirth, a little bit later on this morning. What is it that you like about energy right now?
Well, there are components of energy that we like. We think the LNG demand from the United States will continue to remain relatively strong. We think natural gas demand will remain, as a result, relatively strong. So you want to be in the right basins geologically. You want to be close to LNG export facilities in that regard. We think there's probably going to be a little bit of a rethink around the pivoting a little bit to utilities on this point, but the degree to which electricity demand is going to be required around AI. Yes, Constellation Energy is up a great deal year to date. But, we'll have to see how this all plays out with data center growth. But we do like the natural gas side of things to the extent that we see global growth pick up on the margin. We could see the price of oil pick up as well. We also see, huge opportunities in Europe and internationally. We talk about forward multiples. Lisa mentioned or alluded to forward multiples in the United States. They look quite expensive. You look at Japan, you look at non-Japan Asia, and you look at Europe. And there are a lot of opportunities there trading at 9, 10, 12 forward PE multiples. And it's not just because they are exposed to sectors that tend to be cheaper. There are also some opportunities there as well.
I've got to push you. That was true 10 years ago. And it was a long decade of underperformance. Why is it different now?
Well, that's a good point. I think part of this potential for sentiment is very weak right now in Europe. And I would argue that if you look at the banking sector, the growth opportunities are there, but the price to book valuation is not. And, at the end of the day, too, I think that there are industrials in particular in Europe that are going to be, probably more positively impacted by the NATO build out, the demand for European countries to spend more on their defense. That will not just accrue to U.S. defense manufacturers. That could accrue to countries like Norway, Sweden, the UK, France, Germany. But then again, the headwind remains in the auto sector, for example, and that's a big component of Europe. So we want to be a little careful there.
Aaron, appreciate your time. It's good to see you. Let's do it again soon. Aaron Cannon there of Clear Harbor Asset Management. Futures right now negative by 0.5% on the S&P with an update on stories elsewhere. Here's your Bloomberg Brief with Yahara Hacker. Say, Yahara.
Hi, John. Alphabet shares are trading lower in the pre-market, down 7% after the tech giant behind Google reported earnings that fell short of expectations. Revenue came in lower than analyst estimates after growth in its cloud business slowed. Still, Alphabet plans to invest $75 billion in CapEx this year, far more than analysts expected. Meanwhile, the U.S. Postal Service is temporarily suspending inbound parcels from China and Hong Kong. According to its website, letters and flat packages from the region will not be impacted. The move comes after President Trump imposed a new 10% tariff on all Chinese goods. And now the latest on the mid-air crash between an American Airlines jet and an Army helicopter. The remains of all 67 victims have been recovered from the collision. According to the NTSB, the latest data shows the Black Hawk was flying at about 300 feet at the time of the accident. That's about 100 feet higher than allowed in the area. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, holding firm on a trade war.
We're going to do very well against China and against everybody else.
Any update on when you would speak to President Xi?
No, we'll speak to him at the appropriate time. I'm in no rush.
That's one call that did not happen. That conversation up next, live from New York this morning. Good morning. Equity futures on the S&P negative by 0.5%. In the bond market, yields are down by 4 basis points. It's a break of 450, 447. Job openings coming in much lower than expected yesterday. Next stop for another read on the labour market later on this morning, 8:15 Eastern, the ADP jobs report. We'll talk about that a little bit later. And the surveillance this morning, holding firm on the trade war.
We're going to do very well against China and against everybody else. I've never seen the deficit with China is about $1 trillion. Think of it, $1 trillion. They're using our money to build their military. We are respected again as a nation, maybe at a level that people haven't seen for many, many decades.
Any update on when you would speak to President Xi?
No, we'll speak to him at the appropriate time. I'm in no rush.
So here's the latest this morning. President Trump downplaying China's retaliatory tariffs against the United States and saying he's in no rush to speak with Xi after previously saying he would have a call with him in 24 hours. Anne-Marie has more from D.C. Hey, Anne-Marie.
Hey, John. So far, no call between Trump and Xi, but potentially there will be one. And I'm joined now by Michael Townsend of Schwab, Managing Director of Legislative and Regulatory Affairs, to break down all of this. Michael, we're entering the third week of the Trump administration. What are you telling clients when they see these tariff and trade headlines? Almost whipsaw within 24 hours. They're on, they're off. But when it comes to China, they've stuck.
Yeah, first of all, I'm telling clients you can't overreact to everything. There's so much going on right now that you can't jump at every noise. But I think you're right. China's different than Colombia, than Canada, than Mexico, where the threat of tariffs was there, and then almost immediately talk started happening. China's a longer game. It's going to be a longer game. We always knew it was going to be a longer game. So when he says I'm not eager to make that happen in the first 24 hours, although he did originally say that he was going to do it in the first 24 hours. I think that's where he's coming from. He understands this is a much longer game with China.
What's the ceiling when it comes to tariffs on Chinese goods?
I don't know that there is a ceiling. I think it's going to be this kind of incremental tit-for-tat kind of situation. So you'll go for a while at 10%. Then maybe if there's no progress, you see that tick up a couple percentage points, something like that. We'll have to see.
And when it comes to China, what makes this go around different than phase one in the Trump first administration?
Yeah, I think it's a continuation. A lot of people don't even remember that the tariffs from 2018 and 2019 are still in place.
Yep.
So this is on top of that. So, I think the president feels probably stronger than he did the first time around. And I think he's willing to play a longer game with China. So, again, we'll have to see how it all plays out.
I want to also talk to you about what's going on the other side of Pennsylvania Avenue when it comes to Congress. Everyone is focused on what's going on in the Oval Office, but we are almost a month away from a government shutdown. This summer, we are going to hit the debt ceiling. This is all before we get what the market would call the good stuff of tax cuts. How do you see the sequencing of this going down? Because the Republicans have the slimmest majority they've ever held historically.
And it's actually going to get slimmer. When Elise Stefanik resigns, it'll be one seat in the House of Representatives. So I think this is going to be really, really difficult. We're already seeing signs that it's difficult. The House of Representatives, Republicans plan to consider a budget resolution, the very first step in the sort of gigantic package that's going to include taxes and lots of other policies. And they were planning to do that this week, and they couldn't get there. So they're still negotiating internally. I think the Senate is eager to get going. And we may see the Senate take the lead here before the House of Representatives in the coming weeks.
If the Senate takes the lead, does that mean this one big, beautiful, powerful bill becomes two?
I think it increases the chances, no question, that it becomes two. I think that the Senate is sort of looking at it as, we can do things like energy policy, border policy, maybe get some wins on the board fairly early. If we start putting taxes and debt ceiling and some of these other really complicated things into it, it's going to take a really long time. Will Trump have the patience to wait that out? So I think that's where the Senate is coming from. Let's get something on the board maybe a little early. I don't know whether the House of Representatives will agree to that, but I think that's where there's this divide across the House and Senate.
You talked on your podcast last week that bond market investors are very uncertain and very uneasy. What are they paying the most attention to?
Well, I think they're trying to pay attention to everything, which is probably, not
the market
not
can only
best
focus on one thing at one time.
You can only pick a few things to pay attention to. And, what we've been telling people is that this kind of, bursts of uncertainty is going to continue to happen. We think there are going to be tariffs, and then the tariffs are pulled back. But the tariffs could come back on March 4th. This is a 30-day pause. So I think there's a little bit of whipsawing that's going to go on here. And, bond investors who traditionally want to sort of see a longer term and have a clearer path may not have that opportunity here in the coming weeks.
What's the most underrated issue right now that you don't think people are focusing enough on?
Yeah, to me, it's the debt ceiling. The debt ceiling is going to be really, really complicated on Capitol Hill. You've got a bunch of Republicans who have never voted for a debt ceiling increase. And Democrats don't really at the moment have any incentive to help out in that situation. So I think that's kind of the underrated one. They're going to try to package it with California wildfires, maybe something like that.
Democrats already said no to that.
Exactly. But
this is going to be a challenge.
I think it's going to be a real challenge.
Michael, thank you so much for your time this morning. That's Michael Townsend, Jonathan, of course, from Schwab, Managing Director of Legislative and Regulatory Affairs. He says the biggest underrated item to watch in Washington right now for the market is a debt ceiling, and potentially we can hit that this summer.
Anne-Marie, appreciate it. Thank you. You've got to be across a number of things simultaneously at the moment. So let me bring you the latest on the Middle East. This coming from the President of the United States, Donald Trump, posting on social media this morning, reiterating something we've heard from him before. I want Iran to be successful, but it can't have a nuclear weapon. On Iran, I prefer a verified nuclear peace agreement.
And then he says, God bless the Middle East, after he says that some of the reports are greatly exaggerated, that the U.S. and Israel are going to blow Iran to smithereens. I guess this to me is interesting because of all the things that he said. It seems maybe that's gaining the most concern in the Middle East at a time when there are some pretty complicated negotiations going on. Watch this space, because the conversations are continuing in pretty robust form behind the scenes.
We'll catch up with an official from this administration on this subject. Morgan Ortega's a little bit later on this morning, so look out for that conversation. It's about 50 minutes away. Up next on the programme, Stefan Slowinski of BNP Paribas Exane, as Alphabet's cloud sales fall short of expectations and the CapEx numbers come in big. That conversation up next.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Equity futures declining across the board here. We're down by about 0.5 on the S&P 500 after snapping a two-day slide in yesterday's session. We start to eat into those gains. On a Russell, just about unchanged, positive by 0.2%. These moves today, all about tech. We'll talk about tech in just a moment. Let's turn to the bond market. Yields look like this at the front end of the curve. The 2-year down 2 basis.
We're clearly engaging in a trade negotiation dance. As much as we want to know the answer, we got to go through the dance.
It's all about trying to figure out what the market's pricing and therefore the risk distribution around events.
There are companies that are going to be winners in all of this, and there are companies that are not going to win.
Going this way, going that way. There's going to be a zigzag back and forth, and I think it is hard to pin those things down.
It's impossible to do in terms of trying to game out or forecast what's going to happen.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Each trading week is just like one long day, never ending, just one very long day. It's Wednesday. Live from New York City this morning. Good morning, good morning. Bloomberg Surveillance starts right now with equity futures down hard. On the S&P 500 by 0.5%, on the Nasdaq 100 down by 0.9, a 1-2 punch to tech sentiment. Let's start with Apple. According to our reporting here at Bloomberg, China's antitrust watchdog is laying the groundwork for a potential probe into Apple's policies and the fees it charges app developers.
Yeah, they take about a 30% cut of in-app spending. This is something that's been probed elsewhere, too. Let's be very clear about this. The other notable thing about this investigation is it started by Chinese authorities late last year, so not necessarily one to put into the tit-for-tat that we've seen with respect to China and the U.S. Nonetheless, another dent in sentiment that's already been eroded with the shares lower in pre-market trading at a time where people are really questioning whether the biggest winners can keep on winning in 2025.
These are the champions of corporate America, and they've now got a target on their back. If you go back to the inauguration, we said at the time, just the day afterwards, that was a celebration of everything that was great about American corporate America and American champions of tech. They've now got a target on their back as well. And you can see that foreign countries, nations, adversaries and allies see that as a potential pressure point for this administration. We saw that when the threat of tariffs on Canada came about. What was the first thing one province in Canada did? Came out and said, you know what, we'll cancel the Starlink contract. We'll go after Elon Musk. This is just the first or second time we see of this. I think you could see more to come in the year ahead.
Well, we saw that already with Tesla sales in France plummeting more than 60% in December, maybe in response to some of the back and forth that we've seen between the governments. Key issue is how long-lasting is this versus get it all out of the way, come out with the bazooka of pretty radical suggestions and see what sticks.
I said a 1-2 punch to sentiment. Here's the second punch. It comes from Alphabet. Check out these numbers. $75 billion in 2025 capex. The estimate was 57.9. Cloud revenue slowing as well, taking some wind out of the stock. We're negative 7%.
So to me, I looked at these numbers and it was a disappointment, and it wasn't that big of a disappointment. But what it highlights is that the expectations are very high for a lot of the big tech players, and their ability to meet those expectations is getting lower because of capacity. The fact that they still are saying that capex is the way to go and that it was so much higher and it will be so much higher than people expect highlights how they don't think that they can win unless they spend that money, and they're still being penalized for it.
Amazon results just around the corner as well. They're about 24 hours away. Stack day ahead for you too. Let's go through some of it. Economic data a little bit later. We'll get the ADP report. Jobs came out. Job openings a bit lower than expected yesterday. ISM services data due after that, so look out for that as well. Then we get some Fed speak. We'll catch up with Tom Barkin, the Richmond Fed president, a little bit later this morning.
And it comes at a time where Fed officials have largely been talking from the same hymnal, that they have a good chance to just wait and see what the data shows. But a bit of divergence. Yesterday, Fed Vice Chair Philip Jefferson came out and said he still continues to see gradual rate cuts throughout the year, whereas Mary Daly of the San Francisco Fed came out and said, we have to make sure that we get our inflation down. 100% of my energy is devoted to getting inflation to target.
We've got time. We can take our time. Seems to be a new way of saying we've got no idea what happens with tariffs and changes of policy down in Washington, D.C. Equity futures right now negative by 0.5% on the S&P. The loss is bigger on the Nasdaq. We'll be talking about tech throughout this morning. Coming up on the programme, we'll catch up with Aaron Cannon of Clear Harbor Asset Management on the latest tech jitters. Michael Townsend of Charles Schwab with Trump in no rush to talk to Xi. And Stefan Slowinski of BNP Paribas following disappointing results from Alphabet. We begin with our top story out of Washington. President Donald Trump saying the United States should take control of the Gaza Strip.
I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, the U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Joining us now from D.C. is Bloomberg's Anne-Marie. AMH, let's get straight to it. That one was unexpected.
Unexpected, although Trump has flirted with this idea last week and even earlier in the Oval Office, but he was pretty serious and firm last night in that press conference saying this is his vision for the Middle East and for Gaza. It was unorthodox, way out of the box, has been described to me. Some in Israel who are looking well on this think it's a bold vision. What I would say this morning is adversaries will look at what the President of the United States said last night as a land grab. But at the same time, this could spark, and already has, fierce debate, which may mean that other individuals may actually come to the table with ideas. Because at the moment, what is the solution when it comes to Gaza? The issue, and what I really question, is the president's policy last night, stated policy, that this is something he wants to do, he's looking into, kind of undermines his big picture of what he wants to get done in the Middle East. And I'm talking about normalization between Israel and Saudi Arabia. Remember, Trump 1.0 brought normalization with a number of Gulf states, the Emiratis, Bahrainis, with Israel. And Saudi Arabia last night, almost immediately, I believe it was 10 minutes after that press conference, put this statement out. The foreign ministry affirms that Saudi Arabia's position on the establishment of a Palestinian state is firm and unwavering, and it continues to say they will not establish diplomatic relations with Israel without that. So by talking about what he wants to do in Gaza, he undermined his big goal for the region.
Anne-Marie, do we have a sense of, in back channels, what this discussion is like with allies in the region, Middle Eastern powers that could potentially have a role in prolonging the ceasefire and getting some sort of solution?
Yes, and the back channels say that these countries, whether it's Egypt, whether it's Jordan, a really important meeting next week now is going to be President Trump's sit down with His Majesty of Jordan. That is going to be incredibly important because Jordan, Egypt are very reluctant to take in more refugees. And none of the Arab states want to either. Part of this also is because they want to make sure that Israel does not just take over Palestinian land in Gaza. So there are back channel talks about this, but I have not seen a single country in the region move on their willingness to take in Palestinians. So this is going to spark a tremendous amount of debate. I would also say, because we are also focused on the president's comments on Gaza, we are not talking about the second phase of the ceasefire. And it feels like Prime Minister Benjamin Netanyahu got a pass last night. This is something Steve Witkoff wanted to see Trump's envoy for the Middle East, wanted to see the Israelis really commit to. Those discussions are happening now. And Netanyahu is dealing with a very right-wing government that potentially doesn't want to see a second phase and want to make sure they can go back in and eradicate Hamas. There was very little discussion of that last night, and I imagine is going to be this morning.
Anne-Marie, appreciate it. We'll catch up with AMH again in about 10 minutes' time, so look out for that. For those of you just tuning in, equity futures down across the board here. We're negative by 0.5% on the S&P. Aaron Cannon of Clear Harbor Asset Management joins us now. He writes, we continue to believe equities will outperform other major asset classes. However, elevated valuations suggest more tempered expectation for future returns. Key concerns include if tariffs bite instead of just bark. Aaron joins us now for more. Aaron, welcome to the programme, sir. Good to see you. It's been too long. Let's talk about sentiment. Sky high coming into 2025. Is that bark sufficient to dent sentiment?
Well, we'll see. Certainly, the first sort of volley around tariffs, Jonathan, has been more bark than bite. Mexico and Canada, we'll have to see what happens in China. But certainly, there is sort of the silver lining in all of this, which was alluded to a little bit even with your conversation around the Middle East, which is tariffs 2.0 for Trump are very much not just about trade. They're about foreign policy and border policy. And so we'll have to see how he uses that tool and whether he's effective in using that to affect some foreign policy outcomes. I mean, the issue in Ukraine, the spat with China on multiple fronts, including their covering the back of Vladimir Putin, could all come into play on tariffs. And I think that's part of sort of the potential grand bargain that we could see across multiple fronts, which could be could boost the risk on trade. But for now, lots of uncertainty. It's the risk off trade. No one wants to lever up. They want to take risk off, and we'll have to see.
Aaron, you talk about some of the unknowns, and that has to do with tariffs and global policy. Some of the knowns are some of the earnings that we've gotten recently, in particular from Alphabet, from AMD, showing that there was a very high bar and an inability to clear that very high bar. Is there a tell in that essentially this is the moment of either transition away from some of the big winners last year to everyone else, the adopters this year, or if it's just really maybe valuations are just too high?
Well, certainly the last 2 years, Lisa, the narrative has been AI growth. NVIDIA has been the poster child of it, but also statistically the driver of that outperformance. Technology, massive outperformance in the S&P 500 last year. This year, it's the leading underperformer of all the sectors through yesterday. And I think the market is rethinking, how the evolution of AI is going to play. Who are going to be the winners? Will they be last year's winners, the hyperscalers, or will they be the future winners? Maybe the data storage companies and segmenters of data storage and the like. And so it's going to be quite interesting. But for sure, if you look at equal weight this year in the S&P 500, it's outperforming market cap weight. And we think there's plenty of opportunity outside of technology right now to take advantage of some of the themes. I would also just say, too, that AI and the discussion, the bullishness around AI accrued over the last couple of years, not just to public technology, but to private equity. I mean, every pitch book that I saw come through my office, mega private equity firms, they're about infrastructure, but it was digital infrastructure. It was AI, it was data centers, it was the utility build out. And so I'm sort of curious to see in the coming weeks how those pitch books will change.
At a time when it's unclear whether they will get the same benefit due to efficiencies. Aaron, putting the ideas together of the geopolitics as well as the tech story, something John brought up earlier with respect to Apple, which is how much of a liability is it to be a national champion in the United States at a moment where suddenly this becomes a potential negotiating chip on the other side by potential governments that are looking over at the Trump administration and trying to get attention?
I mean, certainly it's a risk. We saw some of that play out in Apple's numbers. We're seeing that play out this morning and in the headlines with China and Apple. But I will say There are smart people at Apple strategically thinking about their supply chains, not just the demand side, which is partially out of their control in China, depending on sort of geopolitics, as you just alluded to. But the good news with Apple is they've moved a good deal of their production to places like Vietnam and India and elsewhere. And so we're hopeful that that this is really just a diplomatic sort of move on the part of China ahead of tariff conversations with Trump and Xi.
Aaron, as you know, that friction goes beyond just tariffs, and I think we're finding that out pretty quickly this morning with the likes of Apple and other situations too. Energy was part of the story over the weekend, coming into this trading week as well. One sector you like is energy. We'll catch up with the Chevron CEO, Mike Wirth, a little bit later on this morning. What is it that you like about energy right now?
Well, there are components of energy that we like. We think the LNG demand from the United States will continue to remain relatively strong. We think natural gas demand will remain, as a result, relatively strong. So you want to be in the right basins geologically. You want to be close to LNG export facilities in that regard. We think there's probably going to be a little bit of a rethink around the, pivoting a little bit to utilities on this point, but the degree to which electricity demand is going to be required around AI. Yes, Constellation Energy is up a great deal year to date, but we'll have to see how this all plays out with data center growth. But we do like the natural gas side of things to the extent that we see global growth pick up on the margin. We could see the price of oil pick up as well. We also see huge opportunities in Europe and internationally. We talk about forward multiples. Lisa mentioned or alluded to forward multiples in the United States. They look quite expensive. You look at Japan, you look at non-Japan Asia, and you look at Europe, and there are a lot of opportunities there trading at 9, 10, 12 forward PE multiples. And it's not just because they're exposed to sectors that tend to be cheaper. There are also some opportunities there as well.
I've got to push you. That was true 10 years ago, and it was a long decade of underperformance. Why is it different now?
Well, that's a good point. I think part of this potential for sentiment is very weak right now in Europe. And I would argue that if you look at the banking sector, the growth opportunities are there, but the price to book valuation is not. And, at the end of the day, too, I think that there are industrials in particular in Europe that are going to be, probably more positively impacted by the NATO build out. The demand for European countries to spend more on their defense, that will not just accrue to U.S. defense manufacturers. That could accrue to countries like Norway, Sweden, the UK, France, Germany. But then again, the headwind remains in the auto sector, for example, and that's a big component of Europe. So we want to be a little careful there.
Aaron, appreciate your time. It's good to see you. Let's do it again soon. Aaron Cannon there of Clear Harbor Asset Management. Futures right now negative by 0.5% on the S&P with an update on stories elsewhere. Here's your Bloomberg Brief with Yahara Hacker. Say, Yahara.
Hi, John. Alphabet shares are trading lower in the pre-market, down 7% after the tech giant behind Google reported earnings that fell short of expectations. Revenue came in lower than analyst estimates after growth in its cloud business slowed. Still, Alphabet plans to invest $75 billion in CapEx this year, far more than analysts expected. Meanwhile, the U.S. Postal Service is temporarily suspending inbound parcels from China and Hong Kong. According to its website, letters and flat packages from the region will not be impacted. The move comes after President Trump imposed a new 10% tariff on all Chinese goods. And now the latest on the mid-air crash between an American Airlines jet and an Army helicopter. The remains of all 67 victims have been recovered from the collision. According to the NTSB, the latest data shows the Black Hawk was flying at about 300 feet at the time of the accident. That's about 100 feet higher than allowed in the area. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, holding firm on a trade war.
We're going to do very well against China and against everybody else.
Any update on when you would speak to President Xi?
No, we'll speak to him at the appropriate time. I'm in no rush.
That's one call that did not happen. That conversation up next, live from New York this morning. Good morning. Equity futures on the S&P negative by 0.5%. In the bond market, yields are down by 4 basis points. To break at 450, 447. Job openings coming in much lower than expected yesterday. Next stop for another read on the labour market later on this morning, 8:15 Eastern, the ADP jobs report. We'll talk about that a little bit later. And the surveillance this morning, holding firm on the trade war.
We're going to do very well against China and against everybody else. I've never seen the deficit with China is about $1 trillion. Think of it, $1 trillion. They're using our money to build their military. We are respected again as a nation, maybe at a level that people haven't seen for many, many decades.
Any update on when you would speak to President Xi?
No, we'll speak to him at the appropriate time. I'm in no rush.
So here's the latest this morning. President Trump downplaying China's retaliatory tariffs against the United States and saying he's in no rush to speak with Xi after previously saying he would have a call with him in 24 hours. Anne-Marie has more from D.C. Hey, Anne-Marie.
Hey, John. So far, no call between Trump and Xi, but potentially there will be one. And I'm joined now by Michael Townsend of Schwab, Managing Director of Legislative and Regulatory Affairs, to break down all of this. Michael, we're entering the third week of the Trump administration. What are you telling clients when they see these tariff and trade headlines? Almost whipsaw within 24 hours. They're on, they're off. But when it comes to China, they've stuck.
Yeah, first of all, I'm telling clients you can't overreact to everything. There's so much going on right now that you can't jump at every noise. But I think you're right. China's different than Colombia, than Canada, than Mexico, where the threat of tariffs was there, and then almost immediately talk started happening. China's a longer game. It's going to be a longer game. We always knew it was going to be a longer game. So when he says I'm not eager to make that happen in the first 24 hours, although he did originally say that he was going to do it in the first 24 hours. I think that's where he's coming from. He understands this is a much longer game with China.
What's the ceiling when it comes to tariffs on Chinese goods?
I don't know that there is a ceiling. I think it's going to be this kind of incremental tit-for-tat kind of situation. So you'll go for a while at 10%. Then maybe if there's no progress, you see that tick up a couple percentage points, something like that. We'll have to see.
And when it comes to China, what makes this go around different than phase one in the Trump first administration?
Yeah, I think it's a continuation. A lot of people don't even remember that the tariffs from 2018 and 2019 are still in place.
Yep.
So this is on top of that. So, I think the president feels probably stronger than he did the first time around. And I think he's willing to play a longer game with China. So, again, we'll have to see how it all plays out.
I want to also talk to you about what's going on the other side of Pennsylvania Avenue when it comes to Congress. Everyone is focused on what's going on in the Oval Office, but we are almost a month away from a government shutdown. This summer, we are going to hit the debt ceiling. This is all before we get what the market would call the good stuff of tax cuts. How do you see the sequencing of this going down? Because the Republicans have the slimmest majority they've ever held historically.
And it's actually going to get slimmer. When Elise Stefanik resigns, it'll be one seat in the House of Representatives. So I think this is going to be really, really difficult. We're already seeing signs that it's difficult. The House of Representatives, Republicans plan to consider a budget resolution, the very first step in the sort of gigantic package that's going to include taxes and lots of other policies. And they were planning to do that this week, and they couldn't get there. So they're still negotiating internally. I think the Senate is eager to get going. And we may see the Senate take the lead here before the House of Representatives in the coming weeks.
If the Senate takes the lead, does that mean this one big, beautiful, powerful bill becomes two?
I think it increases the chances, no question, that it becomes two. I think that the Senate is sort of looking at it as, we can do things like energy policy, border policy, maybe get some wins on the board fairly early. If we start putting taxes and debt ceiling and some of these other really complicated things into it, it's going to take a really long time. Will Trump have the patience to wait that out? So I think that's where the Senate is coming from. Let's get something on the board maybe a little early. I don't know whether the House of Representatives will agree to that, but I think that's where there's this divide across the House and Senate.
You talked on your podcast last week that bond market investors are very uncertain and very uneasy. What are they paying the most attention to?
Well, I think they're trying to pay attention to everything, which is probably, not
the market
not
can only
best
focus on one thing at one time.
You can only pick a few things to pay attention to. And, what we've been telling people is that this kind of, bursts of uncertainty uncertainty is going to continue to happen. We think there are going to be tariffs, and then the tariffs are pulled back. But the tariffs could come back on March 4th. This is a 30-day pause. So I think there's a little bit of whipsawing that's going to go on here. And, bond investors who traditionally want to sort of see a longer term and have a clearer path may not have that opportunity here in the coming weeks.
What's the most underrated issue right now that you don't think people are focusing enough on?
Yeah, to me, it's the debt ceiling. The debt ceiling is going to be really, really complicated on Capitol Hill. You've got a bunch of Republicans who have never voted for a debt ceiling increase. And Democrats don't really at the moment have any incentive to help out in that situation. So I think that's kind of the underrated one. They're going to try to package it with California wildfires, maybe something like that.
Democrats already said no to that.
Exactly. But
this is going to be a challenge.
I think it's going to be a real challenge.
Michael, thank you so much for your time this morning. That's Michael Townsend, Jonathan, of course, from Schwab, Managing Director of Legislative and Regulatory Affairs. He says the biggest underrated item to watch in Washington right now for the market is the debt ceiling, and potentially we can hit that this summer.
Anne-Marie, appreciate it. Thank you. You've got to be across a number of things simultaneously at the moment. So let me bring you the latest on the Middle East. This coming from the President of the United States, Donald Trump, posting on social media this morning, reiterating something we've heard from him before. I want Iran to be successful, but it can't have a nuclear weapon. On Iran, I prefer a verified nuclear peace agreement.
And then he says, God bless the Middle East, after he says that some of the reports are greatly exaggerated, that the U.S. and Israel are going to blow Iran to smithereens. I guess this to me is interesting because of all the things that he said. It seems maybe that's gaining the most concern in the Middle East at a time when there are some pretty complicated negotiations going on. Watch this space, because the conversations are continuing in pretty robust form behind the scenes.
We'll catch up with an official from this administration on this subject. Morgan Ortega's a little bit later on this morning, so look out for that conversation. It's about 50 minutes away. Up next on the programme, Stefan Slowinski of BNP Paribas Exane, as Alphabet's cloud sales fall short of expectations and the CapEx numbers come in big. That conversation up next. Equity futures declining across the board here. We're down by about 0.5 on the S&P 500 after snapping a two-day slide in yesterday's session. We start to eat into those gains. On a Russell, just about unchanged, positive by 0.2%. These moves today, all about tech. We'll talk about tech in just a moment. Let's turn to the bond market. Yields look like this at the front end of the curve. The 2-year down 2 basis.
We're clearly engaging in a trade negotiation dance. As much as we want to know the answer, we got to go through the dance.
It's all about trying to figure out what the market's pricing and therefore the risk distribution around events.
There are companies that are going to be winners in all of this, and there are companies that are not going to win.
Going this way, going that way. There's going to be a zigzag back and forth, and I think it is hard to pin those things down.
It's impossible to do in terms of trying to game out or forecast what's going to happen.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Each trading week is just like one long day, never ending, just one very long day. It's Wednesday. Live from New York City this morning. Good morning, good morning. Bloomberg Surveillance starts right now with equity futures down hard. On the S&P 500 by 0.5%, on the Nasdaq 100 down by 0.9, a 1-2 punch to tech sentiment. Let's start with Apple. According to our reporting here at Bloomberg, China's antitrust watchdog is laying the groundwork for a potential probe into Apple's policies and the fees it charges app developers.
Yeah, they take about a 30% cut of in-app spending. This is something that's been probed elsewhere, too. Let's be very clear about this. The other notable thing about this investigation is it started by Chinese authorities late last year, so not necessarily one to put into the tit-for-tat that we've seen with respect to China and the U.S. Nonetheless, another dent in sentiment that's already been eroded with the shares lower in pre-market trading at a time where people are really questioning whether the biggest winners can keep on winning in 2025.
These are the champions of corporate America, and they've now got a target on their back. If you go back to the inauguration, we said at the time, just the day afterwards, that was a celebration of everything that was great about American corporate America and American champions of tech. they've now got a target on their back as well. And you can see that foreign countries, nations, adversaries and allies see that as a potential pressure point for this administration. We saw that when the threat of tariffs on Canada came about. What was the first thing one province in Canada did? Came out and said, you know what, we'll cancel the Starlink contract. We'll go after Elon Musk. This is just the first or second time we see of this. I think you could see more to come in the year ahead.
Well, we saw that already with Tesla sales in France plummeting more than 60% in December, maybe in response to some of the back and forth that we've seen between the governments. Key issue is how long lasting is this versus get it all out of the way, come out with the bazooka of pretty radical suggestions and see what sticks.
I said a 1-2 punch to sentiment. Here's the second punch. It comes from Alphabet. Check out these numbers. $75 billion in 2025 capex. The estimate was 57.9. Cloud revenue slowing as well, taking some wind out of the stock with negative 7%.
So to me, I looked at these numbers and it was a disappointment, and it wasn't that big of a disappointment. But what it highlights is that the expectations are very high for a lot of the big tech players, and their ability to meet those expectations is getting lower because of capacity. The fact that they still are saying that capex is the way to go and that it was so much higher and it will be so much higher than people expect highlights how they don't think that they can win unless they spend that money, and they're still being penalized for it.
Amazon results just around the corner as well. They're about 24 hours away. Stack day ahead for you too. Let's go through some of it. Economic data a little bit later. We'll get the ADP report. Jobs came out. Job openings a bit lower than expected yesterday. ISM services data due after that, so look out for that as well. Then we get some Fed speak. We'll catch up with Tom Barkin, the Richmond Fed president, a little bit later this morning.
And it comes at a time where Fed officials have largely been talking from the same hymnal, that they have a good chance to just wait and see what the data shows. But a bit of divergence. Yesterday, Fed Vice Chair Philip Jefferson came out and said he still continues to see gradual rate cuts throughout the year, whereas Mary Daly of the San Francisco Fed came out and said, we have to make sure that we get our inflation down. 100% of my energy is devoted to getting inflation to target.
We've got time. We can take our time. Seems to be a new way of saying we've got no idea what happens with tariffs and changes of policy down in Washington, D.C. Equity futures right now negative by 0.5% on the S&P. The loss is bigger on the Nasdaq. We'll be talking about tech throughout this morning. Coming up on the programme, we'll catch up with Aaron Cannon of Clear Harbor Asset Management on the latest tech jitters. Michael Townsend of Charles Schwab with Trump in no rush to talk to Xi. And Stefan Slowinski of BNP Paribas following disappointing results from Alphabet. We begin with our top story out of Washington. President Donald Trump saying the United States should take control of the Gaza Strip.
I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, the U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Joining us now from D.C. is Bloomberg's Anne-Marie. AMH, let's get straight to it. That one was unexpected.
Unexpected, although Trump has flirted with this idea last week and even earlier in the Oval Office, but he was pretty serious and firm last night in that press conference saying this is his vision for the Middle East and for Gaza. It was unorthodox, way out of the box, has been described to me. Some in Israel who are looking well on this think it's a bold vision. What I would say this morning is adversaries will look at what the President of the United States said last night as a land grab. But at the same time, this could spark, and already has, fierce debate, which may mean that other individuals may actually come to the table with ideas. Because at the moment, what is the solution when it comes to Gaza? The issue, and what I really question, is the president's policy last night, stated policy, this is something he wants to do, he's looking into, kind of undermines his big picture of what he wants to get done in the Middle East. And I'm talking about normalization between Israel and Saudi Arabia. Remember, Trump 1.0 brought normalization with a number of Gulf states, the Emiratis, Bahrainis, with Israel. And Saudi Arabia last night, almost immediately, I believe it was 10 minutes after that press conference, put this statement out. The foreign ministry affirms that Saudi Arabia's position on the establishment of a Palestinian state is firm and unwavering, and it continues to say they will not establish diplomatic relations with Israel without that. So by talking about what he wants to do in Gaza, he undermined his big goal for the region.
Anne-Marie, do we have a sense of, in back channels, what this discussion is like with allies in the region, Middle Eastern powers that could potentially have a role in prolonging the ceasefire and getting some sort of solution?
Yes, and the back channels say that these countries, whether it's Egypt, whether it's Jordan, a really important meeting next week now is going to be President Trump's sit down with His Majesty of Jordan. That is going to be incredibly important because Jordan, Egypt are very reluctant to take in more refugees, and none of the Arab states want to either. Part of this also is because they want to make sure that Israel does not just take over Palestinian land in Gaza. So there are back channel talks about this, but I have not seen a single country in the region move on their willingness to take in Palestinians. So this is going to spark a tremendous amount of debate. I would also say, because we are also focused on the president's comments on Gaza, we are not talking about the second phase of the ceasefire. And it feels like Prime Minister Benjamin Netanyahu got a pass last night. This is something Steve Witkoff wanted to see Trump's envoy for the Middle East, wanted to see the Israelis really commit to. Those discussions are happening now. And Netanyahu is dealing with a very right-wing government that potentially doesn't want to see a second phase and want to make sure they can go back in and eradicate Hamas. There was very little discussion of that last night, and I imagine is going to be this morning.
Anne-Marie, appreciate it. We'll catch up with AMH again in about 10 minutes' time, so look out for that. For those of you just tuning in, equity futures down across the board here. We're negative by 0.5% on the S&P. Aaron Cannon of Clear Harbor Asset Management joins us now. He writes, we continue to believe equities will outperform other major asset classes. However, elevated valuations suggest more tempered expectation for future returns. Key concerns include if tariffs bite instead of just bark. Aaron joins us now for more. And welcome to the programme, sir. It's good to see you. It's been too long. Let's talk about sentiment. Sky high coming into 2025. Is that bark sufficient to dent sentiment?
Well, we'll see. Certainly, the first sort of volley around tariffs, Jonathan, has been more bark than bite. Mexico and Canada, we'll have to see what happens in China. But certainly, there is sort of the silver lining in all of this, which was alluded to a little bit even with your conversation around the Middle East, which is tariffs 2.0 for Trump are very much not just about trade. They're about foreign policy and border policy. And so we'll have to see how he uses that tool and whether he's effective in using that to affect some foreign policy outcomes. I mean, the issue in Ukraine, the spat with China, on multiple fronts, including their covering the back of Vladimir Putin, could all come into play on tariffs. And I think that's part of sort of the potential grand bargain that we could see across multiple fronts, which could be could boost the risk on trade. But for now, lots of uncertainty. It's the risk off trade. No one wants to lever up. They want to take risk off, and we'll have to see.
Aaron, you talk about some of the unknowns, and that has to do with tariffs and global policy. Some of the knowns are some of the earnings that we've gotten recently, in particular from Alphabet, from AMD, showing that there was a very high bar and an inability to clear that very high bar. Is there a tell in that essentially this is the moment of either transition away from some of the big winners last year to everyone else, the adopters this year, or if it's just really maybe valuations are just too high?
Well, certainly the last 2 years, Lisa, the narrative has been AI growth. NVIDIA has been the poster child of it, but also statistically the driver of that outperformance. Technology, massive outperformance in the S&P 500 last year. This year, it's the leading underperformer of all the sectors through yesterday. And I think the market is rethinking, how the evolution of AI is going to play. Who are going to be the winners? Will they be last year's winners, the hyperscalers, or will they be the future winners? Maybe the data storage companies and segmenters of data storage and the like. And so it's going to be quite interesting. But for sure, if you look at equal weight this year in the S&P 500, it's outperforming market cap weight. And we think there's plenty of opportunity outside of technology right now to take advantage of some of the themes. I would also just say, too, that AI and the discussion, the bullishness around AI accrued over the last couple of years, not just to public technology, but to private equity. I mean, every pitch book that I saw come through my office, mega private equity firms, they were about infrastructure, but it was digital infrastructure. It was AI, it was data centers, it was the utility build out. And so I'm sort of curious to see in the coming weeks how those pitch books will change.
At a time when it's unclear whether they will get the same benefit due to efficiencies. Aaron, putting the ideas together of the geopolitics as well as the tech story, something John brought up earlier with respect to Apple, which is how much of a liability is it to be a national champion in the United States at a moment where suddenly this becomes a potential negotiating chip on the other side by potential governments that are looking over at the Trump administration and trying to get attention?
I mean, certainly it's a risk. We saw some of that play out in Apple's numbers. We're seeing that play out this morning and in the headlines with China and Apple. But I will say there are smart people at Apple strategically thinking about their supply chains, not just the demand side, which is partially out of their control in China, depending on, sort of geopolitics, as you just alluded to. But, the good news with Apple is they've moved a good deal of their production to places like Vietnam and India and elsewhere. And so, we're hopeful that that this is really just a diplomatic sort of move on the part of China ahead of tariff conversations with Trump and Xi.
Aaron, as you know, that friction goes beyond just tariffs, and I think we're finding that out pretty quickly this morning with the likes of Apple and other situations too. Energy was part of the story over the weekend, coming into this trading week as well. One sector you like is energy. We'll catch up with the Chevron CEO, Mike Wirth, a little bit later on this morning. What is it that you like about energy right now?
Well, there are components of energy that we like. We think the LNG demand from the United States will continue to remain relatively strong. We think natural gas demand will remain, as a result, relatively strong. So you want to be in the right basins geologically. You want to be close to LNG export facilities in that regard. We think there's probably going to be a little bit of a rethink around the, pivoting a little bit to utilities on this point, but the degree to which electricity demand is going to be required around AI. Yes, Constellation Energy is up a great deal year to date, but we'll have to see how this all plays out with data center growth. But we do like the natural gas side of things to the extent that we see global growth pick up on the margin. We could see the price of oil pick up as well. We also see huge opportunities in Europe and internationally. We talk about forward multiples. Lisa mentioned or alluded to forward multiples in the United States. They look quite expensive. You look at Japan, you look at non-Japan Asia, and you look at Europe, and there are a lot of opportunities there trading at 9, 10, 12 forward PE multiples. And it's not just because they are exposed to sectors that tend to be cheaper. There are also some opportunities there as well.
I've got to push you. That was true 10 years ago, and it was a long decade of underperformance. Why is it different now?
Well, that's a good point. I think part of this potential for sentiment is very weak right now in Europe. And I would argue that if you look at the banking sector, the growth opportunities are there, but the price to book valuation is not. And, at the end of the day, too, I think that there are industrials in particular in Europe that are going to be, probably more positively impacted by the NATO build out. The demand for European countries to spend more on their defense, that will not just accrue to U.S. defense manufacturers. That could accrue to countries like Norway, Sweden, the UK, France, Germany. But then again, the headwind remains in the auto sector, for example, and that's a big component of Europe. So we want to be a little careful there.
Aaron, appreciate your time. It's good to see you. Let's do it again soon. Aaron Cannon there of Clear Harbor Asset Management. Futures right now negative by 0.5% on the S&P with an update on stories elsewhere. Here's your Bloomberg Brief with Yahara Hacker. Say, Yahara.
Hi, John. Alphabet shares are trading lower in the pre-market, down 7% after the tech giant behind Google reported earnings that fell short of expectations. Revenue came in lower than analyst estimates after growth in its cloud business slowed. Still, Alphabet plans to invest $75 billion in CapEx this year, far more than analysts expected. Meanwhile, the U.S. Postal Service is temporarily suspending inbound parcels from China and Hong Kong. According to its website, letters and flat packages from the region will not be impacted. The move comes after President Trump imposed a new 10% tariff on all Chinese goods. And now the latest on the mid-air crash between an American Airlines jet and an Army helicopter. The remains of all 67 victims have been recovered from the collision. According to the NTSB, the latest data shows the Black Hawk was flying at about 300 feet at the time of the accident. That's about 100 feet higher than allowed in the area. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the programme, holding firm on a trade war.
We're going to do very well against China and against everybody.
$500 billion endpoints across more than 190 markets. Visa Direct helps.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, I'm Caroline Hyde.
And I'm Jackie Davalos in San Francisco. This is Bloomberg Technology.
Coming up, Apple in the geopolitical crosshairs as China weighs a potential antitrust probe into the App Store practices. Plus, Alphabet shares tumble after posting slower growth in its cloud business and a $75 billion capital expenditure commitment. And AMD falls on a disappointing outlook for its AI chip growth. That and so many more earnings coming up. But first, we check in on these markets. Some light services data, perhaps a macro perspective on the Nasdaq. But more broadly, it's tech earnings that weigh us today. We're off by 0.3% after yesterday's rally. Move on and see the biggest points contribution to the downside. And we shine a light on what's happening with Alphabet, of course. We're off by 8%. Cloud growth of 30%, not good enough. $75 billion to expand AI and data centers. But still, people want to see the return on AI. AMD, we need return on AI here, too. Again, AI accelerators not living up to their expectations. We're down 9%. And Apple off by 1.3%. A key issue here is China and the US and a potential antitrust probe coming from China, all regarding its App Store. Let's get to it, Bloomberg's Peter Elstrom, because the timing here is, of course, amid this tit for tat from US and China in tariffs. But this started before Trump came to office.
Yeah, that's exactly right. So what we've heard from sources is that Beijing regulators are looking at Apple and specifically the policies around its App Store. It takes a 30% cut of app revenue like it does in other countries, too. And also it kind of locks down payment systems because it wants you to make those payments through the Apple Store in particular. So we've heard that SAMR, the regulator there, is taking a close look at Apple. They've called in executives from the company and some other executives, too, to find out more information. Now the ball's in Apple's court to respond to some sort of in some sort of way and see whether they're able to address this or whether regulators are going to have to take more action. To be fair, though, this is the same kind of action that Apple has faced in other countries, too, where there are concerns about the App Store, how much money it takes away from developers, and whether that's actually a level playing field for other companies.
Peter, one of the outstanding questions is this just a bit more bark than bite? And what is the time horizon here? Because a lot of these probes take time to play out. Do you have a sense of how long it'll take before companies actually see a hit from some of these probes?
Yeah, that's a very good question. This is coming, of course, in the middle of this kind of geopolitical tit for tat between the United States and China. So the U.S. levied the 10% tariffs on Chinese imports, and China has responded with some more careful, targeted things, including an investigation into Google, which has a similar kind of app store issue, doesn't have that many operations in the country beyond that. So I think politics are going to play a role here. We're going to see how that plays into the negotiations with these companies. Beijing has a very forceful regulatory arm if they do decide to go ahead and take action against Apple, Google. We know they're investigating NVIDIA too. It could be very punitive for those companies, but it may have to do with the dynamics between the two countries, in fact, rather than the companies themselves.
Bloomberg's Peter Alstrom, we thank you. Alphabet shares dropping after fourth quarter earnings missed expectations yesterday. Investors were disappointed by a slowdown in sales in Google's cloud unit. For more on this, we're joined by Brent Thill from Jefferies. Brent, when we look at Google, Alphabet's cloud sales lagged by 2%. This was, behind estimates. It's the second hyperscaler to lag on this front in the last week. Microsoft last week posted disappointed cloud numbers. What's driving the decline for Google specifically? Because the Microsoft story was a little bit different there.
Yeah, the common thread is Google and Microsoft are indicating, slower growth. Now, I want to be clear, last quarter was an anomaly for Google, so growth went to 35 and then went to 30 this last quarter, so I think everyone is concerned about the magnitude, but they did say there were some one-time items. Growth in Q4 is still up from the front half of the year, so it's not like things are falling out of the sky, and even for Microsoft, right, they had low 30% growth. They wanted to see mid-30s, and they didn't see that acceleration. They took that off the table. So we're still talking 30% growth across both companies. And we're at the beginning of the AI change. So I'd be careful to look at just one quarter and say it's a massive trend. The trend has actually been pretty healthy. And then I think the other thing is you kind of have this bug zapper light, as we call it, with AI. Everyone gets attracted to this light over here and says, AI, and then they forget about the core workloads, right? And so Microsoft highlighted that their AI piece was strong, the non-AI piece was a little weaker. So I think part of this is we're on a journey. We're at the beginning of the journey. There are going to be some rocks and pebbles and, barking dogs that cross the path on the way that you got to navigate. And it's not like a straight line up. But ultimately, I think it's pretty good. Now
But Brent, just on the pretty good thing, can I just ask about the $75 billion capex, though? Because we are trying to understand whether you should be committing such significant investment at this time if the return on AI is still questioned.
100% you should be committing. The question that everyone's asking, and every company, when you ask the companies this question, and Microsoft will say, do you want us to get 5% market share or 50? We're at one of the biggest tectonic shifts. The CEO of Medtronic, every board in America globally, we're talking about China taking down $1 trillion of market cap last Monday. Do you want to be involved or not? And there's a price to admission. And so this is very clear that the time to spend is now, and the time to spend is not in 4, 5, 6 quarters.
To your point, what happened last Monday, the takedown that was born by DeepSeek. And actually, we did hear from Sundar Pichai talking about DeepSeek. Just take a listen, Brent.
There's been a lot of observations on DeepSeek. First of all, I think tremendous team. I think they've done very, very good work. I would say both our 2.0 flash models or 2.0 flash thinking models, they are some of the most efficient models out there, including comparing to DeepSeek's.
From your perspective, does Alphabet able to compete when it comes to cheaper models?
Yeah, look, the China training thing is nonsense. Okay, David Sachs from the White House came out and said it's nonsense. Okay, so we got to get that off the table. The technology's there, but the training run costing $6 million is nonsense. So I think, look, they're going to be. We have software companies using 25 LLMs, Atlassian 25, Intuit using 10. these are all going to commoditize, and they're all going to have a place. And DeepSeek will have a place, but it's not this. You open your garage door with one button, and you open your iPhone with another button. There's going to be multiple buttons. Okay, it's not just one. And so we think ultimately the big platforms with the users, with the capital and the data win. And Google has a lot of data, and they have a lot of great technology. So again, this is why Meta is doing so well. Meta is going to perform very well with Llama. So we are a believer that, look, yeah, better AI efficiency will come, but it's not coming at the pace that the market thinks with DeepSeek. It's just not. And it look at all the CapEx numbers. Between Meta and Google, they've raised CapEx by $25 billion. If it was that efficient, these are pretty smart companies. They don't want to waste shareholder money. They don't want to waste. They have a lot of employees that work there because they get paid in stock. Like, they wouldn't do this if they felt like, oh yeah, it's so efficient. Like, why would you jack up the numbers as much as they have? So again, I think everyone's being misled by one comment from a Chinese firm that you can't validate the spend. And
Brent, I'm curious if you can kind of speak to maybe, shifting back to Google's bread and butter, search, YouTube, and bring in the artificial intelligence picture here, because while we're seeing some of this still kind of come out on the cloud side, what sort of benefit are investors pricing in on the YouTube and search side? What AI boost are you expecting there in the next couple quarters?
Well, no one's pricing in anything today. So obviously stock's off big on this kind of, minor miss, if you will. But ultimately, we think AI is going to have a huge role. Like, you look at Gemini, I've been using it every day. And over time, Gemini is going to get smarter. And I think there's a role of core search. I'm looking for a restaurant. I'm looking for hours of a local small business I need to visit. I need to get an answer of what's the population of Iceland. And I want to ask Gemini, or I want a quick response in Gemini. These things are going to effectively, I think, search and what's happening with AI, and these AI agents are going to effectively melt together, and so it'll be a seamless experience. I think Google can do this. So there'll be times where you see an ad and sometimes you don't. Is that going to force advertisers to run away? I don't think so. Look at YouTube, great numbers. Look at core search, good numbers. The issue in Google's quarter has nothing to do with the core business. It has to do with the smallest business, the cloud, and CapEx is up massively. Guess what? Meta, Microsoft, everyone else is doing the same thing.
Yeah.
And you got to do it right now. So
and look,
we've said this AI journey is going to take time. It's going to be a long journey, and we're at the beginning of it.
Well said. And Alphabet just coming down from some record highs of yesterday as well. Jefferies analyst Brent Thill, it's so good to catch up with you. Thank you very much. Coming up, we're going to talk more earnings. AMD disappointing with its AI outlook. More on the Chipmaker's earnings and other in the silicon sector next. But as AMD falls, so too does Snap. Quick check on those earnings. After a mixed outlook, basically spurring a load of downgrades on the street. Wells Fargo, for example, cutting it to an equal weight, saying solid revenue trends, but not enough to outweigh the period of reinvestment. This is Bloomberg Technology.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Shares of AMD tumbling today after the chipmaker left investors with a disappointing outlook for its AI data center business, saying they see strong double-digit growth. For more, Joanne Feeney, Advisors Capital Management Partner, joins us. And investors, they don't just want double-digit growth. They want a doubling of AI business, right?
They want a lot, Caroline, that's for sure. And what they overlook is what's going on with the rest of the business. I mean, look at how much share that AMD has taken from Intel. Their data center business has nearly doubled 2024 over 2023. It's PC client business up more than 50% for the whole year. They've done a tremendous job of really taking advantage of Intel's problems, but have been doing it by being able to develop superior chips of its own.
You're right, Joanne. They're not getting a ton of credit for that revenue beat, doubling their other unit. I'm curious if you can kind of speak to what they said about that estimate miss on the data center unit, and what does it say about AMD's standing in the AI ecosystem broadly?
Yeah, so the problem they had with their report was that their entry into the AI side of data center is something that's a little bit slower to roll out than people were hoping, and expectations were high heading into the quarter. And so this new chip that is expected to really push AMD into this business more securely, and they've only just started rolling out this whole line of chips. That new chip, the MI350, isn't now expected to ramp until the second half of this year. And so consequently, their guidance was softer than expected for the data center. That doesn't take anything away from the core data center business, which continues to grow, but we are in a seasonally weaker quarter for PCs and for data center. And with a little bit less of a ramp on those new chips, the gross margin takes a bit of a hit. And so, in the semiconductor world, gross margin is everything. And so whenever you see a decline in the gross margin expectations relative to, or outlook relative to expectations, typically stocks go down. But, more importantly, their second half outlook for this ramp remains intact. It's just become a little bit of a wait and see game. And some shorter term investors don't tolerate that well, and they get out of the stock and they say, okay, we'll get back in later. For long term investors, it becomes a ride this out moment. You don't know when sentiment is going to change. People could say, okay, it's coming in the second half. Well, that's July. Oh, maybe I should start buying it, in March, or, maybe I better get ahead of that buying spurt and buy it, later this month now that it's come down. So it's really hard to time this kind of thing. What you have to rely on is that the fundamentals are good.
Speaking of the short-term disruptions, DeepSeek also came up on the earnings call, and I was surprised to hear that the CEO projected a tone of confidence that they could actually benefit from some of these algorithmic breakthroughs. I'm curious if you can explain, how does AMD and perhaps even Qualcomm's foothold in edge devices like phones make it better positioned perhaps to handle some of the disruptions coming from a DeepSeek or models like it, as opposed to an NVIDIA that really saw its shares tank in the wake of that?
Yeah, so the DeepSeek innovation news was surprising because they were able to achieve efficiency potentially more quickly than folks had imagined. But efficiency is always something that comes to this space, right? Chips get smaller, faster, cheaper over time, but that never led folks to buy fewer chips. Same thing here, right? The models become cheaper and more efficient over time, but that doesn't mean that folks are going to step away from buying the best chips they can. Now, AMD, Qualcomm, have more of a focus on the inference side of this. That is the use of the models, and that's where greater efficiency will mean more use. And I think that's what they're focused on. More use is good for them. It's going to mean more chips are going to be needed to roll out those applications. And so, hey, if the market shifts from the training chips, where you absolutely have to have the highest quality, most powerful NVIDIA chips, over to the inference side, where there are different components like memory and speed, that plays into their strengths.
And ARM benefits? We've got ARM and Qualcomm after the bell today.
Yeah, absolutely. ARM is more diversified, I say, more diffuse in their exposure. I mean, yes, they certainly play a role in a lot of the chips that go into the AI infrastructure, but they also are, more heavily tilted towards smartphones and in a very broad way. Qualcomm, obviously more smartphone oriented, but fortunately for them, the smartphones they go into tend to go to the higher end consumer, and that is an area that continues to be strong. So we do own Qualcomm. We've owned it for a long time for clients. We like their growth potential. We also like the income with their pretty solid dividend.
Lots to see today after the bell. Joanne Feeney of Advisors Capital Management, thank you. Coming up, we'll tell you what video game maker Electronic Arts says it plans to do to get its revenue back on track. This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Electronic Arts cut its full-year revenue outlook yesterday. That follows a decline in the company's third-quarter sales. For more on what we learned from the video game publisher, we're joined by Bloomberg's Jason Schreier. Jason, this stirred concerns among investors that EA Games can continue to squeeze growth from its tentpole soccer franchise games. It accounts for a big slice of its overall revenues. What did you learn from the earnings call about how the company plans to turn this around?
Yeah, so it was an interesting call last night. EA had already reported preliminary results a couple of weeks ago and are taking a bath in their stock. As a result, I believe they're down about 20%. They had a slight gain overnight, partially because they said they were buying back $1 billion in stock. And yeah, I mean, they are looking at the soccer franchise. That is their big moneymaker. I believe it's something like 75% of EA's revenue in their business is now from live service, meaning not just selling a game on a store shelf, but also recurring revenue, getting players to buy stuff within the game after it launches. And the soccer game is a big part of that. This recent kind of disappointing quarter is a result of this new soccer game not having the same kind of long-term revenues that they hoped for.
Analysts at Morgan Stanley, for example, calling out lower user acquisition, softer engagement with FC. But they also then turn their attention to Battlefield and basically a slipping calendar date there too a bit, Jason.
Yeah, it looks like they are planning on releasing the new Battlefield at some point this coming fiscal year, so before April of next year. And yeah, this one has been a little while in the making. It's been a while since EA's recent Battlefield, most recent Battlefield game. Battlefield has never been able to keep up with their biggest rival, Call of Duty, from Activision Blizzard, so it'll be interesting to see how they perform this time. They, for I believe the first time, they have 4 different studios within the EA organization just working on this single Battlefield game, so it is a humongous bet for them.
Jason, one of the company's challenges right now is getting users to play the updated version of the game, but they're still pretty interested in playing the older version of the game. How does the company typically deal with something like that?
This is the eternal video game industry problem right now, which is that you have so many people who just don't feel compelled to keep buying new games every single year when they can still have a great time playing their older games, playing Fortnite or playing a previous iteration of the sports game. In the sports, it's been interesting. Traditionally, a company like EA has been able to get people to keep buying new releases because of roster updates and kind of slight feature enhancements. In the case of the soccer games, formerly called FIFA, now called EA Sports FC, one of their biggest investments is this kind of like this ultimate team mode where basically players have to buy these kind of loot boxes or card packs that give them randomly generated players and stats, and it's this whole big ecosystem that a lot of people have criticized for feeling a whole lot like gambling. And EA's hope is that EA has said that the most recent entry is a little bit unbalanced. Right. Players didn't like a lot of things about it, and they're hoping that a big update they just released a couple of weeks ago will fix things and get people back on track.
Jason Schreier, thanks so much for the update on EA. Now on to more earnings. Uber shares falling on weak gross booking guidance. Bloomberg Intelligence analyst Mandeep Singh is in the house, and look, they're blaming weather. You're actually more worried about broader deceleration from ultimately monthly user growth.
Yeah, look, I think when you look at their 3-year target of mid to high teens, what could kind of get them there? It has to be the mobility segment. That is the core business. The delivery side isn't that profitable still when you compare them to DoorDash. And on the mobility side, everyone is so worried about Waymo rolling out to 10 more cities. Now, granted, the number of rides that Waymo is doing is a fraction of what...
And Uber has a relationship.
But only in 2 cities. So that's the catch here. It's not, a relationship that spreads across all the cities. And that's what I think investors are worried about. If Tesla robotaxis were to come this year, and that's a big if, and they get all the regulatory approvals they need, then you could make the case that mobility, growth will slow down. And DoorDash has partnered with Lyft now, so I would say Lyft should benefit from DoorDash's distribution. So all those factors kind of weigh on the user growth, and then it's very hard to make a case that the ride frequency will grow, given Waymo is expanding in all these new cities.
Mandeep, in 30 seconds, Uber shed its self-driving car business years ago. What's its strategy today? Has the company said anything about how it plans to go about that?
Yeah, they mentioned that they will be looking for the right acquisitions, and they don't want to spend too much in terms of making an acquisition, but it's pretty obvious that they will be looking for tuck-ins and adding their own technology to avoid being disintermediated here.
Bloomberg intelligence analyst Mandeep Singh, we thank you. Now coming up, Disney stock gets a lift from its streaming strength. We hear from CFO Hugh Johnston next. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Jackie Davalos in San Francisco.
Quick check on these markets first. Some news on the political front. Pam Bondi is indeed being sworn in as U.S. Attorney General. And we see at the moment the market just trying to digest macro implications of a weaker services number as well. And big tech on deck with the earnings not living up to expectations. We're off by 0.25% on the Nasdaq more broadly. Dig into some individual stories for you. Interestingly, I want to shine a light on perhaps a slightly political story here, which is Tesla. The numbers out of Germany, horrific. Down 60% in terms of sales for January, basically. And we're seeing the similar trends that we saw in France in terms of sales slow down in January as well. All of this pointing as to whether or not there's an implication on slower rollout of new models or whether actually it's the implication of what Elon Musk means for the brand. We're off by 2.5% on Tesla. Disney off by 1%. Interesting is they managed to do particularly well in streaming in terms of profitability. They're still seeing the Moana 2 effect really bullying up what's happening in terms of their movie-making business. Entertainment was flat. Let's have a little look at what the CFO was talking about in terms of the Disney numbers, which did beat on a profit basis. Jonathan Ferro and Lisa Abramowitz sat down with the CFO, Hugh Johnston, earlier this morning. Here's what he said about streaming strength.
The streaming business is doing extremely well. This is a business we invested pretty heavily in a couple of years ago. And what you're seeing now is the benefit of those investments. Our expectation is we'll continue to grow subs. We'll improve margins. We should make more than $1 billion in that business this year, and next year we're looking at double-digit margins in that business. So certainly a ton of positive momentum. Now you get into the question of why. A lot of it is the great content that's coming from the studio side of the house, both on the TV and the movie side of our entertainment business. Moana 2, Inside Out 2, Deadpool, all terrific hits. And on the TV side, the combination of Abbott Elementary, Shogun, and High Potential, causing viewership to grow. We're seeing higher engagement. We're seeing churn ultimately coming down over the course of this year. So we feel like the streaming business is going to be one of the big drivers for our company going forward.
Hugh, you know how much I love Shogun, and Lisa, I can say, loved Moana 2 as well. So the content slate is looking pretty good so far. I did want to talk about the cost issue, though, and clearly not an issue from you, so I appreciate the explanation. Conversation we've had over the last few days or so is if we get tariffs, can companies pass on the costs? I'd like to know from your perspective and for the company, the additional tariffs that have gone on to China, how that could impact your business. How are you thinking about things?
Yeah, right now, based on what's been proposed, and obviously this is a rapidly evolving environment, so we're going to react as we learn things. The impact would be immaterial to us. So from that perspective, really, the Walt Disney Company will be fine based on what's on the table right now.
That was Disney CFO Hugh Johnston, and we stay with Disney earnings. Joining us now is Ross Gerber, CEO of Gerber Kawasaki. Ross, one of the things that stood out to me in this report is not just that quarterly profits beat, but that positive performance might have a few drivers here. And the thing that stood out to me is that price hike from the fall. I want to know how much of that profit beat came from that price hike or versus, organic customer growth. What are you seeing?
Well, we didn't see a huge amount of organic growth in customers, and that was part of the strategy in making streaming profitable by charging the right amount for the content. But what they proved is that they could jam a pretty, big price hike into the system and not lose subscribers by any meaningful amount, and therefore increase profitability. And when you look at exactly what the CFO said, the enormous amount of money they've invested in streaming to now see it becoming a very profitable business with double-digit margins. That was always our hope for Disney. Disney's a top holding in my fund, GK, and I think the stock is just wildly undervalued when you compare it to Netflix, which is actually the top holding in my fund. And Netflix is killing it on all corners, but it's really a two-horse streaming race between Disney and Netflix.
Bob Iger was talking on the conference call with investors such as yourself, talking about how he's so pleased with the subs numbers, the fact that you didn't see more churn. But what about the growth story back to the likes of entertainment? Yes, you want to see streaming being a real pillar for Disney going forward, but we've got broader entertainment, we've got TV and cable being difficult for them, not to mention people getting onto the latest boat or into the latest park.
Well, the big thing about, linear TV is dying, and that's not going to change. But what it really is about is good content. And that's the Iger effect is real. And we're seeing the benefits of having Iger back at the helm because the content has improved dramatically from the Chapek era. And that drives results. It drives it in the theaters with Moana 2, and then it drives it onto the streamer because I'm just waiting for Moana 2 to drop on Disney Plus, and subscriber numbers will soar because people want to watch these really successful movies that they'll pay in the theaters, but then they'll watch it again on the streamers probably for the next 10 years, So, Disney's experiences division, the parks and they made a lot of investments, and then they had the storm that kind of hurt earnings a little bit. But with the new cruise ships coming out too, this business is a gold mine. So if you look at Disney's cash flow, it's just a wonderful business at a really decent price. So, we're very bullish on Disney's future.
What about the future of the CEO?
Well, Iger is a young, 70 or whatever, and I hope he stays forever. And Disney has a long history of having CEOs that keep saying they're going to retire and don't retire. But I think ultimately they should drive the industry towards the digital part of their business, or maybe a co-CEO situation where you have experience and a digital, kind of like what Netflix has done, because the businesses are huge and quite different. But we need somebody who can really drive creativity, because that's what drives Disney's earnings.
Ross, let's pivot, shift gears to another game or another name that you cover, Tesla, no pun intended there.
Yeah.
Gerber Kawasaki Holdings peaked in 2018, and they've come down quite a bit. And what do you make of Elon Musk's growing side project with Doge and his role in government? At what point do you think you'll really start to pare back more, or if not completely, if his attention continues to be diverted there?
Well, there's a lot of things to unpack with Tesla. First of all, his full-time job is at the government right now, so we all know he doesn't really work at Tesla. And that's not so bad, because many of the people at Tesla are actually fine with that, because he's quite disruptive. That said, the goals for Tesla are quite immense, and they have very little time to achieve them based off the timelines that they've set out. Tesla has a lot of issues that they have to deal with, especially from a marketing perspective as well, because like the numbers in Europe. So, we've been a seller of Tesla over the years because we had such an overweight
Moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
We always support the capital market union to start with, because already a deeper, more functioning capital market during the capital market would help already Europe, and we really need to activate our private capital, which we don't do. I mean, look at Germany. We are unfortunately a country of savers and not investors, and we need to change that. So we really need to increase financial literacy here. We need to convince the people that it's smarter to have a securities saving plan instead of leaving the money on their side deposits and things like that, having private retirement schemes, all these things, because that would activate capital, and this capital can be used for what Marcus just said. First of all, financing venture capital, really startups, because without innovation, without startups, we do not get new companies. But we also need to have the financing power for the developed corporates, because the investment need is huge.
Does the next government look and need to re-look at the debt brake in Germany? You have 62% debt to GDP. We have 97% in the UK, 120%, more than 120% in the US. Does the debt brake need to be reassessed by the next government to ensure that there is more fiscal spending? Thomas?
I'm actually surprised about the question, and I'm actually surprised about the whole discussion in Germany. If you look into your money, you look at first what you spend before you increase your thinking about your debt level. Look where you spend the money. And we have not a problem to have enough money available for the government. We have a problem how we spend it. The spending issue is the big thing. If that is sorted out, then to talk about that, what we call the maximum limit of the debt level, can be discussed, no problem. But at first, please, analyze and decisions how we spend the money. There's a lot of money going for, let me say, in all fairness, useless things, not sustainable. And I think there we have to look into. And to be honest, the politicians have to be honest where they spend the money. The amount of government officers in Germany from 2013 doubled. That means from 49 to 2013, the amount what we had is now doubled since 2013 to now. I think we should look into that. It can't be the answer of a government to recruit more bureaucrats if they see an issue to sort out. That can't be the answer.
Marcus, you keep the debt brake or you loosen the debt brake?
I 100% agree. I think the worst thing that can happen, we have a huge advantage with consolidated financials on government level as Germany. Of course, gives us lots of headroom. But the worst thing that can happen is that we now ease all the political problems, finding decisions and taking the tough decisions by opening the debt brake and spend it on consumption. Yeah? So first, I fully agree, we need to sort out where we spend the money. And then if there are good ways to spend the money on infrastructure investments and the future, then you can address the debt brake. But that order, please, not the other way around.
Bettina?
Yeah, I think I'm also, we need to look at the spending side. However, I mean, time is of essence. So I think in parallel, you also need to think about what you do with the debt brake. And I think the important part is that not to find a joint alignment on what is investment, because many times it's more consumption than investment. So investment is really investment in infrastructure, etc. So as long as we can make sure that the new debt is used for real investments, I would support that. If in parallel there's a cut in spending.
What would those real investments look like to you?
Well, it's infrastructure investment, railway, streets, the whole infrastructure with respect to energy and things like that, digitization.
To get consumers to spend, you need them to feel more comfortable about their own finances. Energy costs have been a pain point for households, but particularly as well businesses. German businesses, industrials paying 3 times the amount for energy on average versus their US counterparts, twice versus China. Marcus, how do we lower energy prices? What is the prescription there? Do we need subsidies? Do we need tax cuts for the grids? What specifically is needed to lower energy costs?
Let's first briefly look at what are the root causes. We have two root causes. One is, of course, we are cut off of Russian gas, and we now need to import LNG. That's a marginal molecule coming into Europe, and that is more expensive. That's a structural change. We have to adapt. That is not different for countries like South Korea or Japan. They're always dependent on LNG, and they're still industrialized countries. The second biggest problem we have is underinvestment. For more than a decade, we have now only discussed what we close, nuclear, coal, and so on. We have now made certain progress on renewables, but we still need to have more investments because we have a supply crunch still, and you see that from price spikes we see from week to week. So we need more investment. Second is we need to rely on market forces. There is an over-regulation in the decarbonization path. Actually, we have a European emission cap and trade system that should sort out where you save emissions most efficiently. But we in detail regulate everything we can do, and that makes things slow, more expensive, and by that drives energy prices. And the last thing, we need a bit more coordination and the right incentives, because currently the grid build-out and the renewable build-out and backup capacity are not synchronized. And we have a lot of renewable assets which can actually not get the power to the consumer because the grid is not ready, and that also drives costs.
Are you comfortable taking more gas, in theory, from the US? It's certainly potentially part of a trade deal between Europe and the Trump administration. Buy more US gas, or do we become more dependent then? We have the dependency on Russia, that's been eroded, of course, and then we become dependent on the US. Is that a risk?
If you have an import infrastructure which makes you independent from a supplier, when you have LNG import infrastructure, you can buy from anybody, from Qatar, from the US, even from Australia. Shipping-wise, not smart, but you are not dependent. You are dependent when you are at the end of only one pipeline system. Yeah, but with LNG infrastructure, we are not dependent. Let me ask the first question you said with a nuance. I think even if we get everything right on the energy side and make it more efficient and cheaper, I think the energy-intensive industry still needs structural relief to be competitive staying in Europe, because we have a different decarbonization path in other parts of the world. And I doubt whether CBAM really works. So I think there is a case for some structural relief for the energy-intensive industry to keep it here.
Thomas, does there need to be that relief? Subsidies, tax cuts?
Let me answer like that. Of course, I agree. The thing is, we are over-regulated. And if you are over-regulated, you put all your forces in reporting the regulation requests instead of getting more innovative. We talk about startups, I agree. But when you look into the innovation investment of German industry in the last 10 years, it's permanently decreasing, and other countries are increasing. We work mainly, 90% of that what we work on are existing assets, 10 years, 20, 30, 40 years old. There's a lot of potential to improve. Second, I'm generally against that the politics are putting their hands on the business. The market should regulate it. And that's with the LNG the case. If it makes profit, then we will have the infrastructure and we will have competition on the suppliers. I would not make political decisions on that. I would really open the market for that. Then to the energy-intensive industry in Germany. We have since more than 10 years now a really opposite politics decisions on energy-intensive industry in Germany. And that has a big impact. The question is, if we need energy, and we need energy, we have to be able to forecast it. It can't be that we are 3 times higher in the cost. It can't be that we shut down nuclear power plants and then we have the biggest import out of France ever, nuclear power. It can't be that we as a technology country actually cut off out of moral and political reasons technologies. So what we say is, yes, sustainable green technology is necessary, but until we have it available in a competitive financial way, we need other buffers to serve our high energy industry. Otherwise, it's gone.
I want to get to Bettina, but before I do, I can't let that one go. So, Marcus, nuclear power. Should the next government look at reviving your nuclear power plants? The CDU has suggested they would be open to an appraisal.
Look, we have The decision has been taken by politicians in 2011. So we know since then that the closure will happen. All the operators have planned for that. So there is no qualified staff available. And I can go.
So you're happy to take French nuclear power rather than German nuclear power?
No, what we need to have a strategy how we actually ensure security of supply and how we replace nuclear and coal. And the ideas are on the table since a decade, but nothing happens. And building 50 gas plants, which is the right thing to do, will only, is probably in the end per annum 3% of the total power cost. It's from a cost perspective irrelevant. Let's just get the investments done. But we are waiting for the framework now, and with another delay because the government fall apart.
Okay, so on that point, there's the interaction between politics and business, and this is being debated here. Bettina, do you feel like, are you confident that the next government, whoever it is and whatever form and shape it takes, will have your back and support you as an independent bank at Commerzbank?
Yes, I think so. At least, we are in talks with all Democratic Party leaders, and they also all have openly communicated their support and their stance about the approach, and therefore we are confident that we have the support, but we are not relying on it actually, because we built our own strategy, and we just completed a very, very successful year 2024, and we are continuing this trend this year, and we'll have an excellent Capital Markets Day next week on Thursday, where we present our upgraded strategy and where we will show that we are very worthy. And
so you've been talking just to be clear, you have the Capital Markets Day, February the 13th, really crucial for Commerzbank, given UniCredit's 28% stake in your business. You've been having conversations with Merz of the CDU, CSU, and you're confident that he will support the pushback against this potential takeover?
He has also, and all party leaders have publicly stated their support, and our MP here of Hessia, Mr. Ryan, has been very explicit. So we feel very much supported, yes.
How should Germany think about potential tariffs from the Trump administration? How much of a risk is that, Bettina?
It is a risk, absolutely, and I think the most important part is that Europe is prepared, that Europe stands together, and that we have a coordinated
Moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
What if there is no defensive playbook? Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex D. Are you allowed to say that?
I don't know. I said it out loud.
You did. He said it out loud. But there is one today when you take a look at what's happening with the 10-year, really dropping like a stone after the ISM services here, down by 9 basis points, breaking below the 50-day moving average. Some are saying it's actually a short squeeze, and that's really dominating the overall market action. Remain equities flat, the VIX a little bit softer.
Stocks really are trying to shake off the dent from all of the Trump trade chaos that we've been subjected to. No one, though, is banking on a reset just yet. In fact, trading desks from Wall Street to Brickell Avenue furiously trying to suss out a defensive playbook. JP Morgan launching 11 equity baskets across various regions to help investors navigate tariff turbulence. And Evercore ISI pitching low vol, high buyback stocks as your trade war heroes. That discussion in a moment. Meanwhile, retailers and consumers alike appear to be creating their own defensive playbooks. The latest data from December shows the U.S. trade deficit widening sharply as firms front-loaded imports. And it's not just in retail products. Energy imports from Canada surge, as did industrial parts from Mexico. That front-running likely to continue with the new tariffs on Canada and Mexico delayed until March 1st. And if you're trying to get a package from China, Alex, good luck.
Mexico and Canada kind of agreed to do things that they had already agreed to do. I mean, Mexico had 10 to 15,000 troops on its border going back to 2017 in a promise they made to Trump the first go-around and reiterated with Biden. So, again, how much is political theater? How much is real? We'll have to see. The China tariffs, I think, obviously are a lot more serious and are worth watching.
And, of course, complicating things for investors is the softness that we're seeing in the Mag 7 right at the time when we actually need them most. High valuations and high capital expenditures finally bringing some bullish investors back to reality. Alphabet sinking the most in more than a year. 5 of the other 7 Mag 7 in the red on the day.
Yeah, definitely a big move there for those Mag 7 guys. We get tech after the bell as well. So this great chart comes to us from Bloomberg Intelligence, and it shows what worked the last time tariffs were put on when it came to Chinese goods, for example, back in 2018. The white line is the low volatility stocks within the S&P, and the yellow line are high volatility stocks within the S&P. And the spread between these two is a multiple of 6. So a big wide spread with the outperformance coming from those low volatility stocks. So the questions remain, is that the way you want to be playing the safe haven trade? And will we see a repeat of what we saw back in 2018, or is the landscape different?
It's a lot. We're going to be talking about that today, but some breaking news involving SoftBank, involving Ampere Computing. We have learned that SoftBank is in advanced talks to actually acquire the chip designer. This is a Japanese company. It does have, and you're looking at shares of ARM Holdings right now, but Ampere Computing right now, said to be valued at about $6.5 billion, including debt. This, according to people familiar with the situation. Those folks say that a transaction may be announced in the coming weeks. We're going to keep an eye on that. We're going to keep an eye on SoftBank. And, of course, we're going to keep an eye on the broader markets right now as everyone has a focus on AI and tech. They have a focus on tariffs and trade. And the big question right now is, what do you pay attention to when there's so much noise out there? Jeremy Siegel kicks us off to the close, Professor Emeritus of Finance at the Wharton School of the University of Pennsylvania. Jeremy, how do you look through the noise, or do you not?
Well, it looks choppy to me, and I think you named those two things. I mean, tariffs ahead, and the question of AI spending. Now, we've had some firms reaffirm their spending, but, you know, things can change if fast-moving developments show that the need for high-level chips is not what it would be before. Now, we had a nice bounce today in NVIDIA, but, clearly I think those two uncertainties seem to me to put a cap on any big thrust in the market in February.
Of course, looming all over this is really what's coming out of Washington, or at least the anticipation of what could come. And I know we sort of had a taste of this a few years ago during Trump's first term. This feels a little bit different. There's a lot coming out in a relatively short time, just a couple of weeks here. Do investors, do they just sort of sit and wait, or is there sort of a way to sort of navigate through this?
Well, I mean, we saw the first time, I mean, he stepped back at the last moment, which really didn't surprise me, but you know, it's like the wolf, the sky is falling. The sky is falling, and pretty soon people are going to ignore it. And, maybe he will put them on. And that sort of uncertainty is always in the back of your head in terms of what kind of strategy he will have on the tariffs. You're absolutely right. It is much more aggressive now than it seemed to be in his first term. And I think that that's an uncertainty that, the stock market doesn't like those uncertainties. So it's going to discount them and keep it from moving higher, even though earnings certainly look good in the fourth quarter.
What's so interesting to me is just a week ago, I was at a hedge fund conference and the vibe was buoyant. I mean, you could just sense that the U.S. exceptionalism theme was running rampant. Everyone was feeling really good. And that has obviously changed now, just like a week later. Does it change again? Like, how do you manage that kind of turn?
Well, I think long run U.S. exceptionalism is still there. And I mean, the Mag 7 is a unique group of stocks such as we have never actually seen before in history. I mean, a group of $1 trillion stocks, which have earnings backing them. I mean, except for Tesla, we're talking about PEs in the 30s at most and some below that. So the group of earnings that they have is also unprecedented in history. Mm-hmm. And so there's very little to know when that trend will stop. Clearly DeepSeek is one threat, but as I say, a prize fighter, takes one blow, he keeps on fighting. Normally, for a narrative, a trend to change, you need 2 or 3 factors that convince people that, hey, you know what? I think it might be time for a rotation. But we all know how many head fakes we've had about rotation in the last 6-9 months. 1 or 2 days of bad tech, and then it comes roaring back. So, yeah, I mean, in my look, the trend is still intact. But certainly we've seen some softening in the last 4 weeks.
Yeah, it's so true. It's like just ask the small caps, one day one thing, one day the next thing. So U.S. exceptionalism plus AI, that's there. And the other bucket, though, you have many looking for an expansion of earnings and a rotation within the market and a sign of a healthy market. What would tell you we're in a healthy market?
Well, and clearly, I think what was hoped to have happened was that the Fed was going to lower those short-term rates more. And that does help those small and medium-sized stocks a lot. And when the realization that, we might get only one or maybe no cuts this year, interest expenses, much greater proportion of earnings for small and mid-size than certainly the Mag 7 has virtually no interest expense. All capital, all equity. So I think that, that hope that many expressed when the Fed did the 50 basis points cut in September, has basically been dashed by the strength of the economy, the threat of tariffs, the sideways movement of inflation, and therefore the tremendous revision of what is going to happen to interest rates from what we thought 4 or 5 months ago.
Yeah. Well, the good news, at least in the secondary market, you're seeing a big drop in yields today, not necessarily for the right reasons, Jeremy, that 10-year down about 9 basis points right now. I am curious about the impact of the dollar, because we've heard this come up on several conference calls and earnings reports so far this season, that headwind is real and is having a material impact. And if this trade war continues, the theory is that dollar appreciation will be the story.
And you're absolutely right. First of all, tariffs would bring about a rise in the dollar, and it's already brought about a rise in the dollar. 41% of the revenues, and I even think a slightly higher percent of the profits of the S&P 500 come from foreign sales. So a 5 or 8 or 10% rise of the dollar, if you really take the broad one, that really does nick the dollar value of those sales, and certainly is going to be a headwind coming forward. Even without the imposition of tariffs, the high dollar, I think, is going to be a headwind for Q1 earnings. Of course, we won't have those until April, but it's certainly just something to contend with in 2025.
Professor, we really appreciate your time. Always wonderful to get that perspective. Jeremy Siegel, Professor Emeritus of Finance at the Wharton School of the University of Pennsylvania. All right, our next guest reveals his tariff playbook, recommends buying trade war heroes or low volatility, high buyback stocks. Julian Emanuel, Chief Equity and Quant Strategist at Evercore ISI, joins us now. His street notes are obviously a must read for anyone in the market. So break it down. Who are the trade war heroes? What do you think?
So actually, it is interesting because we did take the playbook from 2018, but there's some nuances here because the types of stocks that are now high buyback, low volatility actually intersect in many ways with the AI theme, right? So think about it, right? If you are throwing off that much free cash and you're buying your shares back, obviously you're dampening the volatility. And then on the other hand, if you're throwing off that much free cash, you are actually reinvesting it and trying to be convex to the leading edge of adopting and adapting to AI. So for us, it's maybe it's a little too trite to say have your cake and eat it too, but there is an element of the intersection there. And when we think about how much the AI theme has sold off in recent weeks, we think it's a great opportunity for re-engagement with that theme.
I literally just took a sip of water as you were talking. That was super smart of me to do that. I need my coffee. That's the thing. So then how do you make then what do you think about when it comes to, say, valuation and then worries about those CapEx spend? Then how do you offset the fundamentals.
So you definitely, and what we'll say about the bull market in general is almost every client conversation starts with valuation because it is high across the broad swath of the market. And frankly, from our point of view, when the conversations don't talk about valuation anymore, that's when we'll get worried. So we're not worried right now because people are, appropriately concerned. But when you look again at some of these AI names in particular, they have had tremendous discounts to their last 5 years' valuations because of this volatility, and that's sort of where you've got the opportunity for me.
I am curious, though, about, because when we talk about, let's talk about the AI and particularly some of these big tech companies, I don't think anyone's doubting their cash flow and their ability to continue to grow, maybe not necessarily at past levels. There is some concern about how much money they're spending to chase after this AI dream. And I'm kind of confused because it seems like on one hand, some investors are like, I'm comfortable with it if, you want to spend $80 billion this year or whatever the heck, Microsoft said they were going to spend $65 billion at Meta and who knows what Alphabet's spending. When do you look for a return from that?
It's a function of what the adoption curve looks like. And the great thing about DeepSeek, or as painful as it was in the short-term hit, is that it's galvanizing the psychology. I mean, think about, the government having announced the formation of large pools of capital, let alone the hyperscalers, is galvanizing the idea that the U.S. has to be out in front of this. At the same time, if you're in a corporate boardroom and you really have only given sort of passing mention to AI, you're thinking, okay, it's probably going to cost me less to implement than I thought it was. And it's clearly, still extremely, extremely important in terms of a competitive edge. And so, given the fact that the hyperscalers really have reiterated their CapEx spend plans over the last couple of weeks, we think it is sort of clearing the runway for that next leg higher in these themes.
So when we talk about the broader market, I assume you think that most of the gains that we're going to see this year in, let's just say, the S&P, is that primarily going to come from big tech, or is there going to be broader participation?
So in our view, when you think about the development of a bull market, and particularly given the administration in Washington and the potential for a deregulatory environment, creating a capital market cycle, creating more enthusiasm, really. We haven't seen a huge burst of enthusiasm that you see in the later stages of most bull markets.
This is your year-end target here, 6,800 that we just put on the screen, which isn't the highest on the street, by the way, but that's still pretty aggressive.
It's a very good, solid year after two 20% plus years. But the point, again, here is it is likely that those names lead, but what's really, really good, and I think being overlooked, is the fact that if you look at the last 2 quarters of 2024, the other 493 names have begun to contribute to earnings growth, and there we are.
So wait, so you're saying that it's not a rotation, it's an all-and, hence your cake and eating it too?
Very much so. There'll be winners and losers like there always are.
Did you feel that in the winners and losers with AI, are we seeing any rotation into like software versus the chips or something based on DeepSeek? Like, can we get more nuance now in how we play that?
So in our view, you want to skew towards not necessarily the commodity type places, and you're seeing that differentiate a little bit in the market today. But one of the reasons we like software is because it is really on the cutting edge of figuring out how to take AI and put it in an application framework. If you think about it, right, the internet was just this thing in the 1990s, and then you had companies figure out how to actually apply and, create business on top of it. And we think the application aspect is very important.
All right, Julian, great stuff as always. And just to reiterate what Alex said here, those notes are really a must-read coming out of Julian Emanuel, Chief Equity and Quantitative Strategist at Evercore ISI, as we do see Alex here. A broader market trying to sort of find its footing here after being rattled the last couple of Mondays here.
Yeah, and you have to wonder, too, when you have earnings coming out, like all the movers in the S&P are all earnings related. There's like no macro trade that you can see. Maybe there's some safety with like real estate doing well. But it's really interesting. And you have a lot of nuances there. So some good trading trading opportunities.
Absolutely. Here, earnings really driving the discussion and driving the market as well. When we come back, we're going to take a closer look at those earnings. Disney, a great quarter. Moana 2 and a boost in subscribers, leading Walt Disney to a first quarter victory. Disney CFO Hugh Johnson said there's only more streaming growth to come. A recap coming up next in our top calls.
This is a business we invested pretty heavily in a couple of years ago. And what you're seeing now is the benefit of those investments. Our expectation is we'll continue to grow subs, we'll improve margins.
All right, let's get a view from the sell side. Top calls, the big movers on the back of analyst recommendations. And we start today with Robinhood. Raymond James starting coverage of the trading platform with a market perform rating and no price target. The analyst says Robinhood's suite of products and services can support an ambitious growth agenda. But despite these positives, he's not a fan of the stock's valuation or its risk reward profile. Remember, that stock, which at one point was down 90% from its record during the pandemic, up 45% year to date, including 3% here on the day. Next up, Warby Parker getting its first sell rating in a year. This after Citi lowered its recommendation on the eyewear company. The analyst calls the stock overvalued and says sales growth has significantly lagged store growth. Citi did, however, raise its 12-month price target to $23 a share from $19, which still implies a drop in the stock price from current levels of almost 14%. The drop today down by about 0.6%. And finally, Mattel upgraded to buy from hold over at Jefferies. The analyst says the toy company is set to benefit from its expansion into entertainment, as well as from broader distribution and new collabs that set the franchise up for top-notch sales growth. Those shares having a phenomenal day, up about 14%, and those are some of our top calls. Good for Barbie, but take a seat for now because there's a new princess getting praised for her box office gains. Her name is Moana, and if I can editorialize here, way better movie than Barbie. The Walt Disney Company says the success of her sequel at the box office, coupled with subscriber gains for its streaming services, made for a magical first quarter. Joining us now to talk a little bit more about the quarter is Jessica Reif-Ehrlich, Senior Media and Entertainment Analyst at Bank of America. She has a buy rating on the shares. All right, Jessica, let's get right to it because this is kind of a tale of two cities. Not all was good in this earnings report, but let's start with the good. It looks like entertainment, the core business of this company, did phenomenal in the most recent quarter, not just on Moana, but really that drive of more folks and profitability to the streaming service.
Absolutely. So, I mean, there were a lot of surprises in the quarter and all on the upside. So, as you mentioned, they had a really good film quarter. It was Moana 2 plus Mufasa. And those movies will wind their way into the streaming platform and drive viewership there. And, of course, every time there's a movie on Disney Plus, people tend to go watch the original as well. So it does drive engagement and subscribers. But the other divisions were really strong. I mean, DTC, the streaming platform, significantly beat numbers. Parks beat numbers, and this is the trough quarter for the year. And sports beat. I mean, it was a pretty solid beat across the board.
But why do you think we're looking at a stock that's down about 2% here on the day. I mean, were investors looking for something more out of this quarter?
No, it's not the first quarter numbers, which beat, I think, most estimates, if not all. It probably was the tone of the conference call was a little bit muted, not promotional because they've changed the format. It's Q&A, and it just depends on the questions. That may be one thing. The other thing, maybe more importantly, is that management reiterated fiscal year 25 guidance, but didn't change it. So they didn't raise guidance despite the beat. Having said that, we already published our follow-up report with new numbers, and we did flow through some of the beat. I mean, it's pretty clear that the streaming business will benefit this year from password sharing crackdown, which has just been started. Netflix did that last year. It was a big driver of subs. Disney has had price increases. They also have more content coming on the platform, and advertising has been incredibly strong on direct-to-consumer. So there are a lot of things going on there, and we believe that there's a big cushion here for the full year.
Okay, just to go back to Barbie for a second, Romaine hadn't seen that movie, so this is not a fair comparison.
No, I saw it.
You didn't finish it. Yeah. Okay, this is number one. I just want to point that out. And Moana 2 is not as good as Moana 1. Okay, Jessica, what about their sports venue into streaming, like ESPN on streaming? Do we know kind of how much people are willing to pay for that, how they can monetize that?
So sports is the one division. There's a lot going on. There was a big beat in the quarter, but there's a lot going on in sports in general. So you have venue was shut down. That will be a $50 million charge in Q2. And also there's $100 million of costs, just timing of games and SEC, rights acquisitions, reconfiguration of some of the leagues. So Disney typically will tell you what the headwinds are, not the tailwinds. So they did give us that, the $150 million. But having said that, as we progress through the year, Disney will acquire 70% of Fubo, and they'll have a service with Hulu. So that's one thing. They're going into skinny bundles. That's another thing. And also, of course, they'll be launching ESPN Flagship on streaming probably around the start of the football season, in the fall. So a lot going on. As far as Flagship, all they've said, none of us have seen it, is that it will be personalized with sports betting and a lot more content. I think that most people are assuming or expecting that the price point will be $25 to $30, really geared for one channel, for one network, to the super fan. But even if they get a couple of million subs of cord cutters or cord nevers, that would be a win. They're expanding the base, and it will be on ESPN will be on every platform.
Wow, that's some good perspective there. Jessica, before I let you go, the one part that was a head scratcher were parks in terms of how it's going to fare during the competition. Do you feel like their guidance was solid on that, or do you feel like they're a little light?
I think their guidance it's another place where they're leaving a cushion. So their guidance is 6 to 8% operating income growth. If you look at the first quarter, they reported domestic parks down 5%. But if you add back those one-time items from the hurricanes and from the pre-opening costs for the cruise ship, which launched in December, domestic parks were up 6% in their worst quarter. So they've said bookings are positive. And you have the cruise ship, the first full quarter in operation, it will be profitable. So as we look out towards the rest of the year, we think that numbers sequentially get better. We know that their bookings are positive despite Epic opening in May, which is Universal's theme park. Most people will not go to Orlando and not also visit Disney. So it will likely expand the market.
Right, exactly. You're not like your kid's not saying, let's go to Universal Studios. All right, Jessica, thanks a lot. We really appreciate it. Jessica Reeve over at Bank of America. Have you at least seen Moana?
Yes, I told you.
One or two?
Yeah, both. Yeah.
Okay.
So, but I saw Barbie. I just didn't make it through the end.
I literally sing I'm Just Ken on commercial breaks sometimes.
But look, here, Alex, this shows you the diversity that we have in entertainment options out there, and you can make your pick for what you want to see.
All right, fine. Soon they're going to just bundle everything together over streaming, and that's going to be a full thing.
When is the Deadpool Barbie / mashup? Are they on the same? That's two different things?
It's different.
Okay.
It's different.
Right.
Yeah, but I think you can kind of tell my movie choices. Barbie and Deadpool. Sweet. All right, coming up, we're going to break down real estate. We're going to talk to Compass CEO taking a trip to the NYSE to ring the opening bell. We'll talk to the founder and co-founder, Robert Reffkin, next. This is Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. So market's on the front foot right now, right?
Yeah.
Yields coming down. Whether or not that's a good or bad thing is a different story. But I did want to highlight the ag sector is doing really poorly. I mean, FMC is down 32%.
Yeah.
It's a really rough space right now.
Well, I mean, there's just so much uncertainty there. I mean, you're looking at coffee prices where they're at a record high. I mean, most of the other soft commodities, of course, are getting rattled because of a lot of the trade and tariff concerns here. And then you just have the whole supply-demand dynamics and whatever, weather issues are going on as well. So I don't know how you actually operate in that environment.
No, I think it's really tough. Bunge, ADM, Cargill, all the like. Anyway, that's the worst performing stock on the S&P is FMC, which is an insecticide company. Anyway, one of the largest real estate brokerages in the country. I wasn't gonna. I was just gonna do like a pure cut there. But I'm glad that you now talked, and now I can't get the flow back. Anyway, one of the biggest brokerages in the U.S. Is launching a new platform, taking home buying to the next level. You got Compass One is a client-facing dashboard that it connects Compass agents with customers through every phase of the home buying experience. The new technology was developed in-house, and here in studio with more on this is Robert Refkin, CEO and co-founder of Compass. What is that thing again? Like, what did you do? Why did you do it? Compass One.
So Compass One is the one place for all of your home needs. It's the first of its kind all-in-one client portal that gives 24/7 transparency to every step of the process, before, during, and after a transaction, for buyers, for sellers, and for owners of multiple homes. It has the full transaction timeline, so you know the 50-plus steps and who's supposed to do what when, if it happened. You know all the search, your comments are there, all the documents and e-signature, forms, files. You have your open house app, you have feedback, you have your pricing and valuation, everything in one place, as opposed to your agent emailing you hundreds of messages and text messages over the course of your time.
So what problem are you trying to fix with that?
What we're trying to fix is, I've never heard a client say, please, don't put everything in one place for me, just like Apple does, just like Uber does. I'd rather have 170 emails and text messages. What the problem it solves is it takes away the complexity and makes it seamless. So everything's in one place, and you always can go back to that single place.
So, I mean, that's the benefit to the user. What's the benefit to Compass? Specifically, there's been a lot of discussion about how this tool can be used, and about the idea that if you do get an elimination of a rule that's been in place that effectively allows a little bit more transparency in listing prices, that a tool like this would actually have a great benefit to Compass and your read on where prices are.
Yeah, so my read on where prices are is, last year they went up 6% year over year. I would expect prices this year to be more normalized at the historical 2 to 3%. You referenced, there are a lot of these MLS rules which are designed to...
Moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
This is the Asia Trade. I'm Shivrian in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set to extend Wall Street gains despite underwhelming earnings from some of the tech heavyweights. A weak reading on US services sending Treasury yields to 2025 lows. ARM Holdings tumbling after the bell as a muted forecast adds to AI concerns. Ford warning of a $2 billion profit slide on tariff and EV threats. Investors are also bracing for fresh geopolitical shocks as China seeks US trade talks.
भाई गाइस, ये क्रूड ऑयल का ध्यान रखना, नीचे एफईजी तक का पहला टारगेट रहेगा, उसके नीचे अगर जाता है तो फिर नीचे के बाकी टारगेट ओपन होंगे. Harry, thank you so much for joining channel membership. If you have any question, you can ask. I'm very impressed with your strategy. I'm doing over trading and cannot hold profit most of Nasdaq and oil. My choice. No issue, sir. Don't worry. Over trading, if you reduce the number of trade, and if you took a big risk reward trade, then definitely over trading automatically gone over the time, so it's okay. Like भी करते रहो guys, 100 likes का target है. Don't forget to like the stream, subscribe the channel. ये WRL WSL weak support weak resistance लिखा हुआ है, ठीक है, कंफ्यूज मत करना.
We'll watch that market as they open in about an hour, but within that market is really the tech sector as well, because the government there has announced plans for a $23 billion fund to support battery and biotech stocks. But it's really about the tech stocks that could move in the Asian session as well. Of course, we do have Tokyo Electron earnings today, but we've also heard from sources that the SoftBank group is in advanced talks to acquire Ampere Computing. And you can see the Japanese yen right now strengthening a little bit at that 152 level, the strongest since December. We have seen that surge in yields here in Japan as well, given the strong wage growth data that we got this week. We're watching the offshore yuan as well. We had a little bit of pressure, not surprising given the U.S.-China trade tensions. But what we're watching is the overnight session on Wall Street as well, not to mention the after-hour session as well. You mentioned some of those stocks like ARM falling in the after-hour session, while Qualcomm is also rising on a bullish sale forecast. So we're seeing right now the Nasdaq 100 futures holding steady, while the S&P 500 futures also not doing much. We actually saw stocks rising, gains in most major industries overnight, but the likes of Alphabet had its worst day in over a year. And with yields falling, as you mentioned, the dollar also at the lowest level in more than a week. Crude prices holding steady. Of course, we have plenty of commentary coming from the Trump administration when it comes to the Middle East tensions.
Let's, Sherry, get some more on the top stories that we're watching today. Bloomberg's political news director Jody Schneider joins us out of Washington. Our chief North Asia correspondent Stephen Engel is in Hong Kong for us, and Garfield Reynolds, who leads our Markets Live Asia coverage here in Sydney. Jody, let me start off with you. So we had, of course, the pretty brisk global reaction to the Gaza plan that was delivered by President Trump at the press conference with Netanyahu yesterday. We're now expecting to hear details of a plan to end Russia's war with Ukraine. This is expected to happen at the Munich Security Conference next week. What do we know about the positioning here and what he could say?
Yeah, this after, as you're noting, we had kind of that surprise, those surprise remarks about this Gaza plan, which were kind of roundly criticized in the Middle East today, except for Israel, which supported them. The president and this is according to people familiar with the matter, it has not been announced, but that the president will send Keith Kellogg, his negotiator on Ukraine, to the Munich Security Conference next week to lay out a plan to end the Ukraine-Russia conflict. What we know of the plan, and it's sketchy thus far, would be to basically try to pause fighting, that that Russia temporarily has some of the lands that it has gotten in the conflict, that this would end that this pause, at least in fighting, would end before the 3-year mark of the Ukraine-Russia conflict, and that both sides would go to the negotiating table. The U.S. would be involved in those talks. That's what we know at this point. More will be coming out, but this is something that President Trump has talked a lot about on the campaign trail, saying, in his words, that war would have never started under his presidency, and under his presidency, he will end it. Lots of conjecture at this point whether Ukraine would accept this, especially if they would be losing land or territory that Russia had taken over in this, and what kinds of requirements would they need to have before they went to the negotiating table. And we haven't heard from Russia yet on this either. We did hear, the only thing we heard from Ukraine on this today was that they have no comment at this time. Again, this is according to people familiar with the matter, and we expect to hear many more details about this in coming days.
And Jody, of course, as Heidi mentioned, we had also reactions from President Trump's comments on Gaza, both in the United States and really quickly from Saudi Arabia as well.
Yeah, Saudi Arabia, along with most other Middle Eastern countries, criticized this idea, which at this point it's not really a plan, it's more an idea, to displace or to have temporarily displace Palestinians from the Gaza Strip. There's almost 2 million people there, and send them to other countries while the Gaza Strip was redeveloped. This is something the Palestinian Authority came came out and criticized today, and Saudi Arabia said it would basically be tantamount to a forced evacuation of people from their, what Saudi Arabia calls their legitimate lands. So this is something that is not flying well with leaders in the Middle East. Today, the press secretary in the White House briefing said that there would be no troops on the ground, no American troops to require this, and that American money would not be spent, or U.S. dollars would not be spent. But she did say that the president does mean for there to be a temporary displacement of the people who now live there. And of course, that sounds like that would be a non-starter with a lot of these other countries. We also did not hear from any Middle East countries that they would want to take the Palestinians, that they would take them on a temporary basis. Right now, they seem to be saying this is a non-starter as far as they are concerned with any forcible removal of people from the Gaza Strip.
Judith Schneider there joining us from Washington, Bloomberg's political news director. As we continue to watch the Middle East, we're also watching China increasing its objection to President Trump's 10% tariff, filing a complaint at the WTO that calls for talks with the U.S. Our chief North Asia correspondent, Stephen Engel, joins us now from Hong Kong. What do we know at this point about this action?
Well, China is simply following through on its pledge that it would file a complaint at the World Trade Organization. And in that filing, they said those 10% tariffs that you mentioned, Sherry, were, quote, imposed on the basis of unfounded and false allegations. The measures at issue not only violate WTO rules, but are discriminatory and protectionist in nature. And it is seeking talks with the United States through the WTO mechanisms. But it's yet to be seen, given the Trump administration's more unilateral approach to executive orders justifying these tariffs. It will be an interesting development if the two sides would come together under the WTO. Still waiting for a potential phone call that the White House has said a couple of days ago could have happened within 24 hours or a couple of days. But yesterday, of course, Donald Trump sort of poured cold water on that, saying, I'm in no rush to speak with Xi Jinping, and also classified China's response so far as that's fine. And it has been a fairly muted response from Beijing so far after the enactment of those 10% tariffs. It leaves Beijing with some room, perhaps, to either negotiate or also roll out further measures down the road. Keep in mind, it's retaliatory measures that included some tariffs as well as export controls and a couple of American companies added to the blacklist entities list. That takes effect February 10th. That's next Monday. So there is room there, perhaps, for negotiation. But keep in mind, Beijing kept the big guns to itself for now. Agricultural products like soybeans could have been tariffed like it was in the first retaliatory trade war action back in 2018. And then in that first term of the Trump administration, keep in mind, the soybean exports from the United States to China dropped 80% in the first couple of years, costing U.S. farmers about $11 billion. So China hasn't done that yet on the United States. I'm not saying they will. They have diversified their supply chain as far as sourcing from countries like Brazil. So they're building resilience into their sourcing. But again, agriculture on the sidelines right now. Also, keep in mind, remember, they announced yesterday, Beijing did, that they were launching an investigation into Google, which is sort of a muted point because Google has been out of the China market for 15 years. But now we're hearing that they could be launching kind of the framework for investigating Apple's policies. About the fees that it charges developers. The sources are telling us that Chinese regulators believe Apple may be charging local developers in China unreasonably high prices, and that barring a third-party app store and payment method also hinders competition and hurts local consumers. So watch this space for Apple in China as a potential lever of negotiation for China, or a lever for retaliation from China against those 10% tariffs.
Steve, we've also had this whiplash reversal from USPS as well, right? The Postal Service first refusing Chinese and Hong Kong parcels and then turning around saying that they've worked out a mechanism to collect those taxes.
Yeah, well, there was about 12 hours of extreme confusion about this because I saw the statement on the U.S. Postal Service website. It basically was one line saying they will, for now, temporarily suspending the receiving of all packages from China and Hong Kong. And keep in mind, this sudden move by the Trump administration to remove this loophole of this $800 de minimis exemption for small packages less than $800 into the United States. Direct shipment that didn't require duties or inspection really kind of threw the USPS into panic mode to figure out how they're going to enforce that. There were 1.4 billion de minimis shipments into the United States last year. It's about 4 million a day. So I think they really kind of panicked and said, how are we going to comply with these new rules? But it sent, obviously, online e-commerce providers into panic mode as well. And also, what about all those shipments that are currently going across the Pacific or elsewhere from around the world? So again, the USPS is saying, as of now, they are accepting all packages and mail from China and Hong Kong. But watch this space.
Always our Chief North Asia correspondent Stephen Engel there. Well, Asian equities are set to advance after we saw both stocks and bonds rising on Wall Street in a week that's been marred by tariffs, lackluster tech earnings uneven, US eco data. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. And Garf, a period of extreme uncertainty, as Steve characterised it as. I guess that's going to be the next 4 years. But I guess we can see in this example with USPS how quickly the outlook can change for, certain segments and companies like e-commerce in China, for example.
Well, yeah, and you're sort of left waiting for the next shock that might come, including shocks that end up being extreme geopolitical or political shocks where there isn't any obvious market move that's attached to it. So it's a very fluid situation out there, and I think there's going to be an air of caution even as Asian equities rise now, because you don't know what might come next.
Yeah, here in Asia, of course, given the uncertainty, what we're watching is just trading by headlines. At least when it comes to the Chinese markets, though, what sort of reaction did we see after the open, given that also we saw a lot of consumption during the Lunar New Year holidays?
Well, we did, although there was some disappointments. I thought it was very noticeable that the services PMI that came out yesterday fell and missed expectations that it would hold up precisely because of Lunar New Year holiday spending. So that was the first time since early 2003 that all 4 of the PMI readings for China fell. They also just about all of them missed expectations, or best case was they came in about the same as expectations. So that's a pretty grim picture, and it was focused on the services PMIs. Those were the worst ones. So amid that, there is an ongoing concern about China's potential to spur consumer demand. We'll probably see, I suppose, a recovery in some of those e-commerce shares that fell yesterday in China on the USPS news. But really what China needs, as far as the broad equity market investors are concerned, is concrete stimulus measures. They need, they're looking for some combination of rate cuts or reserve ratio cuts, concrete, large, targeted spending moves to boost consumer demand, to make it clear that they are seriously interested in doing that. And so far, the market is still waiting for that. the main pockets of buoyancy that were apparent in the Chinese equity market yesterday were those companies that were tied to DeepSeek and the China tech sector that was seen as potentially benefiting from China's apparent success in coping so well with the restrictions that have been imposed on what chips it could use. But for a broader market rally, you're going to need more than that. You're going to need the authorities in Beijing to come to the party in a way that so far they've been reluctant to do.
Catherine Reynolds, who leads our Markets Live Asia coverage there. Well, coming up on the Asia trade, we take a deeper look at how the US-China trade war will impact oil prices. Vector's energy partners will be with us, and Stashaway joins us to discuss positioning for market volatility. Plus, we'll take a look at what's next for Asian chipmakers with the Futurum Group. This is Bloomberg.
We're seeing mixed moves for tech stocks in late trade after Qualcomm and ARM gave divergent outlooks in earnings. Right now, we had Qualcomm gaining ground at first, but we're seeing the downside pressure right now as ARM Holdings, of course, fell, given a disappointing outlook as well. Let's bring in our reporter Annabelle Drewlers for more. And Belle, let's start with Qualcomm because it gave a rosier outlook, and we had that after we're trading higher, but it seems that it's playing catch down with ARM as well.
Yeah, that's right. It's been pretty interesting moves in after hours, and it just tells you maybe investors are continuing to digest these results coming through and maybe starting to zero in on some things or hone in on some things that are causing a lot more concern. But at the headline level, actually, the numbers were pretty good, and we did see shares moving higher, as you say. So earnings per share, they were up 24%, coming in at $3.41. That was well above the consensus from Wall Street of $2.96. Revenue as well, that was up on an adjusted basis, but still up around 18% on the year, so coming in at $11.6 billion. The estimate had been for $10.93. And as well, in terms of what they're seeing for the quarter ahead, still, at the upper end of the scale, it's still coming in better than what Wall Street analysts had been tipping. But what is driving a bit of concern in late trade is this concern around the licensing business or the licensing portion of the business. And this is going to be generating, they say, the company between $1.25 to $1.45 billion for the period. The average analyst projection had been for $1.4 billion. And so that is sort of causing a bit of concern also because of what it signals. This is based on a projection of the number of phones that are sold. And so it is causing some to say maybe the outlook for smartphone growth isn't looking so strong.
What else kind of stood out to you when it comes to that release?
Well, we had Qualcomm, of course, and it's sort of coming in a flux of a different number of earnings across the week because ARM was another one as well. And this one we've seen, of course, is dropping in late trade. But essentially, they gave a pretty cautious outlook for the current period. And that, of course, follows what we had from AMD that also gave a bit of a lackluster projection. And so in aggregate, again, it's not painting such a great picture. But revenue is going to be $1.18 to $1.28 billion in the fiscal fourth quarter. That ends in March. That is in line with some prior forecasts, but some analysts, again, have been tipping it to go even high. There's a lot of expectations that are on these companies as well. So, again, we've seen those shares dropping in late trade, but it is that concern around the outlook from the company.
And Bill, we're also hearing that ARM's majority owner, SoftBank, is in acquisition talks for Ampere. What do we know?
Yeah, that's right. So actually, SoftBank still owns 90% of ARM, but we have been reporting at Bloomberg that there were these talks or discussions in place between SoftBank and Ampere for an acquisition. This has been something that's been going on for quite a period here, but the latest that we've got is that they could be discussing a deal that would value Ampere at $6.5 billion or thereabouts, and that would include debt. A transaction we're hearing as well, it could be announced in the coming weeks. We had been reporting on this expression of interest last month, but even going back a couple of years ago as well, In 2021, there were talks at this point as well. And what's interesting is the valuation that had been tipped at that point, which was around $8 billion. So coming down to what could be $6.5 billion now also just tells us how much increased competition there is in this space.
Our tech reporter Anna Bildrul is there with the latest. Let's get you caught up when it comes to some of the other corporate headlines that we're following this hour. And Tesla sales in Germany fell 59% last month, with less than 1,300 new cars registered for its lowest total since July 2021. That was when, in a market that we saw that EV sales overall jumped 54%. The company's struggles may be connected to Elon Musk's political activities. A YouGov poll taken in mid-January suggested many Germans viewed the CEO unfavorably. A group of Morgan Stanley-led banks have sold $5.5 billion worth of debt tied to Elon Musk's social media platform X, offloading around half the exposure they've been holding since the 2022 purchase of what was then called Twitter. Sources say the loan sold at 97 cents on the dollar. The banks still have $6 billion of X-related debt on their balance sheets. Google has told staff it will no longer formally seek to improve the diversity of its workforce through aspirational goals. It's just the latest tech giant to retreat from such initiatives since President Trump's election win. A note to employees says that as a federal contractor, Google is also evaluating recent court decisions and executive orders on the topic. More ahead on the Asia trade. This is Bloomberg.
We're watching Treasuries trading. Of course, we had Treasury yields declining in the Wall Street session. A weak reading on U.S. services pushing the 10-year yield down, supported on the other side by stronger than expected ADP private payrolls. But of course, there's also the Fed narrative, with the Fed's Austin Goolsbee warning that persistent tariffs could renew supply chain disruptions and drive up inflation. We'll discuss all of this and the macroeconomic picture globally coming up today on Bloomberg TV. Tomorrow on Bloomberg TV, we'll hear exclusively from Bank of Korea Governor Lee Chang-yong about Trump's tariffs, inflationary pressures on the Korean economy, and the chances of a rate cut later this month. More ahead on the Asia trade. This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Gulf Coast refiners actually run a lot of the heavy grades that come from Venezuela. If you see sanctions on Canadian or tariffs on Canadian or Mexican oil, that may send some of that oil to other countries. And so the Venezuelan oil could be even more important. So it's things like that. It's how would this work through the system that we really try to help the policymakers understand.
Chevron Chairman and CEO Mike Wirth there on the potential impact of U.S. tariffs on oil markets. Take a look at what we've seen when it comes to some of the moves across crude markets over the last 2 days. Of course, so much of the geopolitical and trade tensions have played into the moves, and we've now seen that tariff threat has really encouraged Canada to rethink those limits on oil pipelines. So that's a potential factor there as well. But oil has fallen to that lowest settlement price of 2025 as traders exit the market after all of these Trump policies, the positions on the war in the Middle East, the tariffs on energy, all of this really weighing on sentiment. Let's get some more perspective now on oil markets. Joining us now is Tamar Estner, principal at Vectors Energy Partners. Tamar, we've seen a $17 billion net outflow from crude and fuel markets globally. Do you expect this exodus to continue?
Yeah, I think that the uncertainty from Trump's announcements and policies and really the lack of understanding what his clear motivations are will lead investors to be uncertain and find oil increasingly uninvestable for the foreseeable future. And so that's a big overhang on the market, even if Trump ends up backing down on some of the tariff threats, as we've seen with Canada and Mexico. Just the overall market of uncertainty is not good when it comes to the outlook for demand, particularly in an environment where Chinese demand, sort of the linchpin of the demand growth story, is already under question.
It's clear that the direction of travel going forward the next few months is going to be lower, and you say political and geopolitical developments are going to be more important than fundamentals. What role then do you see as being played by OPEC Plus and allies?
Well, I mean, over time, we know that OPEC has significant spare capacity, anywhere 5 to 6 million barrels, depending on how you calculate that. And ultimately, we know that they want to bring those barrels to market. They've been fairly disciplined so far in sort of adhering to their deals with some exceptions. Obviously, Trump has called upon OPEC to add more barrels, and they've sort of pushed back on that. Ultimately, we think that there could be some sort of deal, I say in air quotes, where Trump can declare victory by OPEC saying that they'll add back barrels in April, which is sort of in line with what they are initially planning to do. Obviously, it will sort of depend on where prices are at the time. Over time, though, I mean, it really is, it's a difficult situation for OPEC because without the pressure from Trump, there really isn't much need for those OPEC barrels this year, the way we see balances, because in an outlook where demand is uncertain and supply growth is robust in and of itself, there really isn't room for the OPEC barrels. They may just take the out from Trump and add those barrels, start adding a small amount of those barrels back anyway, but it's a difficult position for them. And ultimately, it's sort of a threat to the OPEC cohesion unwinding over time.
What does that mean for Americans, for example, at a time when we're thinking of potential tariffs on Canadian oil imports? I know that those are on hold for the next month, but what happens afterwards?
Well, I mean, we'll have to see, obviously, particularly when it comes to Canadian tariffs. Ultimately, we think that those remain carved out, even if other tariffs on Canadian products end up coming online. We expect that somehow or another there will be an agreement to keep Canadian oil exempted, because there just really is no alternative for the 4 million barrels a day that the U.S. imports from Canada. And if those tariffs did come into effect, it would be tremendously disruptive for the U.S. Energy system and for consumer prices. So from just our conversations in the industry, we expect that there ultimately will be carve-outs for that. The main uncertainty right now is what impact this all has on the demand outlook from all of the economic uncertainty that this is creating.
Especially economies like China that have already been stuttering, but at the same time, we're seeing perhaps a little bit of a revival of consumption coming after the Lunar New Year holidays. How are you seeing demand from China coming in the next few months?
It's really such a gray area, because any data coming from China, you really have to take with a grain of salt. It's just so uncertain. We expect that there will be a lot of noise around it. Obviously, the lower oil prices go, the more China starts buying for their strategic and commercial inventories. So we expect demand will look a little better amid lower oil prices. Of course, we won't get that data until several months delay. And obviously, the looser that they are with their refinery export quotas, they basically just end up exporting a lot of refined product back onto the market. So, I mean, over time, the clear picture direction of travel, as you said earlier, is for lower Chinese demand. The demand growth, at least, is going down. Their whole policy is based on a system of being more power dependent, so coal and renewables to fuel electric vehicles. And so oil is going to be less and less a part of that story, but amid that long-term trajectory, there will be a lot of noise and up and down with the Chinese demand data, and that could be a source of support for the market this year.
We saw a lot of support also for energy stocks in the past year or so, given the expectations of how much compute power it would take to really bring in the new era of artificial intelligence. But now you have China's startup DeepSeek that can do all of this at a low cost and more efficiently. Does that change your calculations at all on these names?
I mean, maybe by degree, it changes in terms of just how much the demand expectations will be for more power. But ultimately, demand for power is going up. I mean, clearly with electric vehicles, increased digitalization, data centers. Even if DeepSeek's model ends up proving more scalable, demand is going to be higher for power. And so I think that that's a long-term source of demand, of support for natural gas stocks, particularly vis-a-vis oil stocks. So the problem right now is oil, as we said earlier, has kind of become underinvested and sort of uninvestable because investors just don't see long-term demand for oil. They're really concerned about that, terminal value issue. With the whole power demand story coming from AI and digitization and electric vehicles, you've sort of created a long-term thesis for natural gas stocks vis-a-vis oil. And so I think that that's a source of outperformance for those stocks.
Tamar Esner, always good to have you with us. Principal at Vectis Energy Partners. We're not just watching oil, we're also watching the metal space because, of course, there are threats of tariffs on the likes of steel, aluminum, copper as well. We're also watching gold because it's hit fresh record highs. There's haven demand given all of the tariff news. Also, gold in the Bank of England trading at a discount to the wider market because of these fears of potential tariffs coming from the Trump administration. In the meantime, Arabica coffee, again, prices have doubled over the past year. We continue to see supply concerns, especially when it comes to Brazil, Vietnam, global stockpiles now falling to a 25-year low.
Well, Sherry, Richmond Fed President Tom Barkin has joined other Fed officials in calling for more time to see where the U.S. economy and inflation are going under President Trump's policies. Barkin spoke exclusively with Bloomberg about the Fed's patient approach to rates.
The case for wait and see is, in fact, that you want to wait and see. I mean, I start with a baseline economy the data's been pretty favorable. I mean, we had a pretty good growth in the fourth quarter. Consumer spending's healthy. Inflation, especially the last 2 months, has come down, and I expect the 12-month numbers to come down nicely over the next couple months as we lap last year's elevated first quarter numbers. Job market seems to have stabilized. So I start with a baseline that's pretty favorable for what we're trying to do. And then you have uncertainty. And it could take us up, it could take us down. We'll just have to see.
Do you still see the Fed cutting at some point this year?
I mean, that's certainly the lean, but we'll see what happens.
Could the Fed potentially see anything that could cause you to contemplate hiking rates?
Well, I never take anything off the table. And so if you never take anything off the table, you can't take anything off the table. So I'm not going to do that. But you'd have to see an economy overheating. And I don't see any signs of an economy overheating. I see inflation coming down, not going up. I see the job stabilizing, but we got the JOLTS data yesterday. It seemed to come down a little bit. It doesn't feel like we're overheating. And I think you'd have to imagine you're seeing an economy overheating.
Let me go back to the base case idea. At this point, do you think that interest rates are suitable for this economy? For a while, the Fed was saying we need to cut because we're still tight. But if you can't, is that okay? Are you looking for data that will tell you to cut, or are you looking for data that will tell you to hold?
Well, so I supported the recalibration we did, obviously, in the fall. And that's because with inflation in the twos and unemployment weakening at the time, the one number that seemed out of range was having the Fed funds rate at 5.3. So we brought it down 100 basis points. It's at 4.3. I still think that's moderately restrictive. But we'll learn as we go. And if what happens is the economy comes back strong, you have to ask yourself questions about how restrictive you really are. If the economy weakens further, you can adjust appropriately. If inflation continues to come down, you could say, yep, I'm having the impact I want to have. If it doesn't, you ask yourself those questions. And so I think we've recalibrated to a place that is more sensible given where the economy sits right now. And I think it leaves us well positioned on whatever happens.
Richmond Fed President Tom Barkin speaking exclusively with our colleagues Michael McKee and Lisa Abramovitz. More ahead on the Asia trade. This is Bloomberg. Well, Honda and Nissan appear to be on the verge of abandoning plans to merge into one of the world's biggest car makers. A collapse in discussions would spell trouble for Nissan in particular, which was counting on its peer for a lifeline. Our global business senior editor Chester Dawson joins us now from Detroit. So what do we know in terms of the diminishing prospects of this deal coming through?
Well, it still seems like the negotiations are a little halting at best, and it's still somewhat unclear as to whether they're going to come to terms and become the world's third largest automaker, or whether this is all going to fall apart in a great ash heap. It seems like, for one thing, that the restructuring that Nissan has done to prepare itself to streamline maybe hasn't been quite sufficient enough to win over Honda. But it's very unclear whether these two companies are going to be able to come to terms, or maybe they're going to need some outside catalyst to come in and stir things up.
The idea was that if we got this alliance and this combination, that we could see potentially them rivaling Toyota, right? How is Toyota doing right now? We got their earnings.
Toyota's doing fine. I mean, it just keeps humming along. I mean, the latest quarter was fine. It didn't blow the lights out, but their full year forecast for the fiscal year that through the end of March was good. It didn't quite meet some analyst expectations, but Toyota is always very conservative with these things. If you look at their exchange rate, for example, and they're still recovering from a certification scandal or quasi-scandal earlier this year. So they're in great shape. They've got the hybrids doing well, and their vehicles, they're still the world's largest automaker.
Our senior editor, Chester Dawson, there joining us from Detroit. And it's a busy week of earnings here in Japan, because we also have chipmaking equipment supplier Tokyo Electron expected to report its highest quarterly operating profit in 2 years today, thanks to the boom in artificial intelligence. For more, let's bring in Bloomberg Intelligence senior tech analyst Masahiro Wakasugi. Masa, of course, we know that the results now look pretty positive, but always with Tokyo Electron, it seems to be about what happens in the future, especially if you have these tariffs against China as well. Not to mention DeepSeek, and I haven't even gone that far about more low cost-efficient AI.
Yeah, probably in this time, market focus will be again the revenue from China. So in the case of Tokyo Electron, their revenue exposure to mainland China was quite high. And the market may think that one of the big reason why Tokyo Electron is now reporting good numbers, but the market may be a bit concerned about the future demand reduction, potentially from mainland China. So the market focus could be something around the China-related demand. So the situation might be a bit different from Japanese suppliers and U.S. suppliers. So that could be one of the focus.
How well are they doing then in diversifying away from China? And adding to that, how much of an impact is for a semiconductor equipment supplier when we're thinking now that we could get cheaper AI models?
So probably in the case of Tokyo Electron, they are having a bit more demand from the kind of probing equipment, or apart from that, their existing main product is coater developer or etching machine. So they are kind of having more broad-based products going forward. So maybe related with AI or AI-related processors. So actually, its peer Tokyo Semi reported quite good numbers. So maybe that implies that the Tokyo Electron will be doing quite good for the other products, including probing machines. And maybe if we talk about the AI models, we basically think that cheap or maybe cost-efficient AI models will promote more AI adoption going forward. So that will eventually create more demand for the semiconductors, and also the semiconductor equipment revenue should be pretty linked with AI adoption going forward.
What are we watching for when it comes to China sales? Does that sort of give the possibility of upside or downside either way? And are some of those risks already priced in?
I think that mostly the market understands the situation. So in the case of Japanese makers, mainland China revenue exposure is around maybe 40-45% range. And in the case of U.S. makers, that should be around the 30-35% mark, revenue exposure range. So that should be the focus. So if the number is a bit too high, market may be a bit too concerned. Market may be concerned about the potential revenue decrease from mainland China next year. So I think the market should be looking at what percent of revenue coming from China in December quarter for Tokyo Electron.
Bloomberg Intelligence Technology Senior Analyst Masahiro Wakasugi here with what to expect from Tokyo Electron. As we get their earnings, we have more results coming out of Japan. Nomura's profit already being reported as rising more than expected in the quarter ending December. Net income at Japan's biggest brokerage doubled from a year earlier to over $660 million. Nomura reaped the benefits from robust trading and its investment banking business and made progress on cost cuts. Revenue at Nomura's domestic wealth management division also grew 13% for the eighth straight quarter. Ford shares fell in late trading after the automaker warned its profit this year may fall by around $2 billion. The initial warning pegged the possible weakness to falling vehicle prices at the same time it works through expensive new model launches. CEO Jim Farley told us that President Trump's threatened tariffs could also cost the auto industry billions.
I think longer term is the bigger concern. These kind of tariffs, especially in these two countries, are very significant. And if they persist beyond months, we could see billions and billions of dollars of pressure on the industry, lost jobs, lots of impacts to communities and our ecosystem in the industry. And that's what we're talking to the administration about and congressional leaders.
Disney CFO Hugh Johnston says that the Trump administration's tariff blitz is immaterial to the company. He also told Bloomberg why he's expecting continued growth for Disney's streaming business. That saw a 31% gain in first quarter earnings.
The streaming business is doing extremely well. This is a business we invested pretty heavily in a couple of years ago. And what you're seeing now is the benefit of those investments. Our expectation is we'll continue to grow subs, we'll improve margins. We should make more than $1 billion in that business this year, and next year we're looking at double-digit margins in that business. So certainly a ton of positive momentum. Now you get into the question of why. A lot of it is the great content that's coming from the studio side of the house, both on the TV and the movie side of our entertainment business. Moana 2, Inside Out 2, Deadpool, all terrific hits. And on the TV side, the combination of Abbott Elementary, Shogun, and High Potential causing viewership to grow. We're seeing higher engagement. We're seeing churn ultimately coming down over the course of this year. So we feel like the streaming business is going to be one of the big drivers for our company going forward.
Hugh, you know how much I love Shogun, and Lisa, I can say, loved Moana 2 as well. So the content slate is looking pretty good so far. I did want to talk about the cost issue, though, and clearly not an issue from you, so I appreciate the explanation. Conversation we've had over the last few days or so is if we get tariffs, can companies pass on the costs? I'd like to know from your perspective and for the company, the additional tariffs that have gone on to China, how that could impact your business. How are you thinking about things?
Yeah, right now, based on what's been proposed, and obviously this is a rapidly evolving environment, so we're going to react as we learn things. The impact would be immaterial to us. So from that perspective, really, the Walt Disney Company will be fine based on what's on the table right now.
Disney CFO Hugh Johnston speaking with Bloomberg's Jonathan Farrow. We have more ahead on the Asia Trade. This is Bloomberg.
The latest political stories from around the world now, and French Prime Minister François Bayrou has survived in 2 no-confidence motions in Parliament, assuring the passage of a 2025 budget following months of political turmoil. France is now on its 3rd government since President Emmanuel Macron called snap elections last year that fractured the National Assembly. French bonds rallied this week, although Bayrou describes the budget bill as imperfect. Sara Duterte has become the first Philippine vice president to be impeached by the House of Representatives. The move heightens political risks amid a public feud between her family and that of President Ferdinand Marcos Jr. Duterte will face a trial before the Senate, which could result in her removal and disqualification from holding office. Sherry.
Take a look at the broader markets right now, trading across Asia. The ASX 200, and that's staggered open, saw the gains of 0.9% early in the session. Nikkei futures setting up for a higher open of 0.4% as well. We had a little bit of a mixed picture when it came to U.S. tech earnings that we saw. Qualcomm had a bullish sales forecast, ARM, though, tepid outlook. Both of them, though, falling in the after-hour session. So we're looking at those tech stocks in the Asia session, especially as we get Tokyo Electron's results today, expected to report its highest quarterly operating profit in 2 years. U.S. futures not doing much. As I said, it was a little bit of a mixed picture, but we actually did see U.S. stocks rising in the overnight session, with most major industries higher. The dollar falling to the lowest level in more than a week. A little bit of a different economic picture. Weak reading on U.S. services, but stronger than expected ADP private payrolls. So we'll be watching U.S. Treasuries trading at the same time. Also, the Japanese yen at the highest level since December against the U.S. dollar. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we keep an eye on those tech stocks. Of course, we had a mixed picture coming from tech earnings in the U.S. Heidi, we do have Tokyo Electron also earnings out today. But what we're also watching is really commentary coming from the Trump administration on the Middle East and the Ukraine war.
Yeah, and of course we continue to see the reaction to his plan for the U.S. to take over Gaza reverberating around the world. There's been so much sort of ridicule and scorn and outrage over that plan, even as his own aides try to walk that back. So it'll be very interesting to see what sort of plan materializes when it comes to the future of Ukraine. And at the same time, we continue to see just a lot of uncertainty. For example, that USPS news, right, being walked back as well. So we could see some upside when it comes to some of those e-commerce stocks in China.
Yeah, we'll be watching that open after Chinese stocks took a tumble after coming back from the Lunar New Year holidays, really setting a different tone for the markets. But right now we're seeing Japan coming online, gaining ground 0.4% for the Nikkei as we're awaiting that Tokyo Electron earnings. Not to mention we already are reacting to earnings that have come out in the past week, including Nomura, Toyota as well. Not to mention that we're watching that potential tie-up between Nissan and Honda that could be facing a little bit of trouble at the moment. The Japanese yen strengthened in the overnight session. Look at that. It's at that 152 level, the highest level since December. We had the dollar falling on the other side of that trade because we had some conflicting numbers also out of the U.S. Economy, especially when it comes to that services data disappointment. But the 10-year yield, high levels, at the highest, I think, since 2011 or so. So do watch out for that because we are seeing those expectations for BOJ tightening continuing to rise. So we're seeing yields rising and the yen strengthening as well. Take a look at how the Kospi is coming online, because we've been watching, of course, semiconductors, chip makers like Samsung, SK Hynix, the Kospi gaining ground at the open. The Korean won still a little bit weaker against the U.S. dollar. We heard from the South Korean government that they're expanding this huge fund. They're going to set up a new fund in order to be able to support those biotech names, those tech names as well, Heidi.
Take a look, Sherry, at what we're seeing when it comes to the trading situation here in Australia. We're just about an hour into the session for the ASX. We're seeing upside of about 0.9%. If you want to take a look at a bit of a breakdown, most of that rise being left by the financials, the banks, property stocks as well. In New Zealand, we're seeing that session close today for a public holiday. We're also watching the picture when it comes to treasuries as well as sovereign bonds. Right, in Australia, we saw that new bond attracting 83 billion Aussie dollars worth of bid. This is a record-breaking sale due to the central bank policy easing, moderating inflation levels, trade tensions as well. So we're seeing Australian bonds joining the likes of Spain, France, the UK and getting those record orders this year. At the same time, we're watching Treasury yields very closely, right? That slide to the year's low so far after with the drop that we saw in the services index, with most of those yields across the tenor falling around at least 10 basis points after the service sector activity gauge weakened more than anticipated. So really kind of firming up the view that the Fed interest rate levels will stay restrictive, perhaps strengthening the case for for cuts to come later this year, but certainly that sense of wait and see is still very much intact there. Let's bring in Stephanie Leung, who's a Chief Investment Officer at digital wealth manager Stashaway. So, Stephanie, it's been a pretty chaotic week so far, pretty chaotic year so far as well. How are you navigating all of the uncertainty and the possibility that the news flow can kind of just be in such a whiplash sense of changing the narrative?
Yes, I mean, indeed, if we think about how long Trump has been in the office, it was just 2.5 weeks, but it felt like almost 2 years, I think. But I think it's important to remember a few things. The first thing is that there is going to be a lot of noise, and this was the Trump administration that we saw in 2016, and this continues to be the new Trump administration that we see right now. However, it's important to think about what are noise and also separate noise from actually real data. Indeed, if we look at real data, for example, when we look at the PMI data that just came out, I mean, global kind of industrial cycle has been improving. And indeed, it's been improving in the U.S., and particularly if you look at some of the, I guess, smaller cap companies and mid-cap companies, they are reporting improvement in sentiment, and that gets actually reflected into better performance this year versus the broader S&P index. So, for example, if you look at the equal weight S&P or the mid-cap S&P, those have actually been outperforming the overall market. And I think you're seeing a bit of rotation here out of the popular stocks and popular sectors from last year into the broader market, which is something that we would like to see. So in the beginning of the year, we put out our outlook piece. It's called FAT is the new normal, FAT. And the reason why we call it FAT is because, of course, we all like kind of a bit of more substance, especially around the Chinese New Year. But also FAT represents fiscal policy, AI, and Trump. And I think these three pillars are going to be kind of what we should pay attention to as investors in this year and perhaps in the next few years.
I'm curious, though, sort of, I guess, outside of that, are there domestic stories that you think might be less impacted and also make for compelling investment thesis?
Yes, and indeed, we are overweight in the.
Okay, क्रूड ऑयल में देखोगे रेजिस्टेंस पर है प्राइस, ठीक है. ओवरऑल तो बुलिश ही लग रहा है, लास्ट रेजिस्टेंस है ये. लेट्स सी होल्ड करता है तो. नीचे एक और एफईजी बना दिया इसने, तो थोड़ा सा ध्यान रखना. यहाँ पर भी एक एफईजी बन चुका है प्राइस में. आता है तो ये एफईजी टू एफईजी टारगेट रहेंगे, डायरेक्टली नीचे का टारगेट नहीं रख सकते. वापस नीचे आएगा तो 6268 के अराउंड वापस रुक जाएगा ऑटोमेटिकली. ब्रेक करता है तब थोड़ा फिर नीचे वाले एफईजी तक जा सकता है. का ध्यान रखना गाइस क्रूड ऑयल में, ठीक है। एफईजी पहला टारगेट है, नीचे वाला जो पहला एफईजी है, 2 एफईजी बना दिए। दिस इज अ फर्स्ट टारगेट। इसके नीचे अगर निकला तो ये सेकंड होगा, नहीं तो यहीं पर रुक जाएगा प्राइस भी। फाइट हो सकती है फिर इसी लेवल पे। 4 PM हो चुका है, देखते हैं और कितना मूव करता है। Crude oil price finds support from Saudi Aramco price hike, but Trump policies still wait on prices. हैरी जी कोई क्वेश्चन है पूछ सकते हो। Say Nasdaq view, sorry might be I missed. No, not about the Nasdaq view, I'm talking about crude oil. Nasdaq market open around 8 PM IST, so we will discuss at that time. नेचुरल गैस को भी देखोगे तो स्टक हो गया लेवल पे, एक ही लेवल पे। विनय कुमार पटेल जी, if you have any question you can ask. क्रूड ऑयल में ध्यान रखना, नीचे टारगेट इतना ही है, पहला एफईजी यहाँ पर रुकना चाहिए प्राइस को, अगर ये रुकता है यहाँ पर तो फिर वापस रेंज के अंदर चला जाएगा। एफईजी ब्रेक हुआ तभी और नीचे आएगा, ध्यान रखियो। पे व्यू तो बुलिश ही है ओवरऑल। आज एक डेटा अनएम्प्लॉयमेंट क्लेम्स का, उसका थोड़ा बहुत इम्पैक्ट हो सकता है 7 PM पे। ओवरऑल व्यू बुलिश ही है। कल वो लेवल बनाए थे 5 मिनट टाइम फ्रेम पे, याद होगा। 15 मिनट में तो कोई रेजिस्टेंस बना ही नहीं था उसमें। 5 मिनट टाइम फ्रेम पे जो लेवल बनाए थे वही चल रहे हैं फिलहाल के लिए। वैसे तो 15 मिनट में ही बन गए होंगे, आई होप सो। देख लेते हैं। ये लेवल 15 मिनट के नहीं है, ध्यान रखना, कल मार्केट हाई पे था। ये 5 मिनट के रेजिस्टेंस एंड सपोर्ट बना रखे हैं। तो ओवरऑल भी बुलिश ही है। 7 PM का डेटा इंपॉर्टेंट रहेगा, उसमें कुछ अगर मोमेंटम होता है तो दैट इज़ वेरी इंपॉर्टेंट डेटा फॉर टुडे। In 15 minute M setup start in Nasdaq. You are trading from UK. You are trading in Nasdaq or you are trading in can you let me know the time frame? Using IG, which broker this is IG? I can't see that broker. Okay, this one, index CFD IG, US tech 100 cash dollar 100. I think you're talking about this broker IG. Today Amazon earning is there. You can put the target around 21,600, but this M pattern, no, the last swing is not that much good. So remember, might pause, might possible there is some kind of reversal as well, or retest. 21,600 would be the target. Retest pending, remember. Okay, so that was the final target. It might possible it will do some retest, so be aware. 21,600. Okay, first target going to hit in crude oil. Remember, okay, crude oil might possible it will take some kind of support or pullback as well again from here. अगर ये एफईजी ब्रेक हो जाता है कैंडल क्लोजिंग बेसिस पे नीचे कहीं आ जाता है तब फिर नीचे वाला एफईजी और फिर ये फाइनल सपोर्ट. अदरवाइज अगर यहीं पर रुक गया तो फिर ये रेंज बन जाएगी इसमें. किसी एक साइड के एसएल निकलने जरूरी है तब फिर बड़ा मूव आएगा या तो अपसाइड या फिर इस एफईजी के नीचे. तो टारगेट का थोड़ा सा ध्यान रखियो. हायर हाई फॉर्मेशन पर है, अभी तक कोई लोअर लो नहीं बना है, रेजिस्टेंस पहला है. मार्केट को थोड़ा सा बेरिश होना है तो लोअर लो फॉर्मेशन बहुत ज़रूरी हो जाएगा 15 मिनट टाइम फ्रेम पे यहाँ पर ट्रेड करने के लिए और बेरिश होता हुआ. अदरवाइज एफईजी विल एक्ट लाइक एज अ सपोर्ट. ओके, लंदन सेशन का वॉल्यूम भी चला गया थोड़ा बहुत. अब न्यूयॉर्क सेशन 6:30 ओपनिंग है, उसके बाद थोड़ा सा वॉल्यूम और प्रॉपरली आता हुआ दिखाई देगा. UK gas hits 15 months high. Mahindra Logistic partners with Asian Paints for transportation solution. Mahindra Logistic. वॉलेटिलिटी बढ़ रही है क्रूड में।
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin in Washington, where a split is building between Republicans on Capitol Hill over how to move forward on President Donald Trump's agenda. Senate Republicans have introduced a plan that would delay action on extending the president's 2017 tax cuts until Congress passes a second so-called budget reconciliation bill. That would prioritize Trump's effort to crack down on border security and unauthorized immigrants first. But House Speaker Mike Johnson has called for combining both priorities into one big bill. Republican Congressman Jason Smith says that's the right way to go.
The One Big Beautiful Bill is the best and quickest approach to get as many of the president's priorities delivered to his desk as possible. The House is focused on One Big Beautiful Bill. It's the Senate that continues to say that they're going to do two.
But fellow House Republican Byron Donalds is getting behind the Senate approach to send more resources to President Trump's border czar.
Tom Homan needs money today in order to get the repatriation of force that the president has said that the American people voted for up and running. We have to get debt ceiling through, and we need to do it without Democrat votes because Chuck Schumer is going to use that as leverage.
President Trump plans to meet with Republican lawmakers today. He has said repeatedly he would like, quote, one big beautiful bill, but he's also said he'd be okay with more than one.
Well, Nathan, President Trump's proposal to take over Gaza and turn it into what he calls a Riviera continues to reverberate through Washington. Now some of the president's top aides are trying to tone down the idea. Here's White House Press Secretary Caroline Leavitt.
The president has not committed to putting boots on the ground in Gaza. He has also said that the United States is not going to pay for the rebuilding of Gaza.
And White House spokesperson Caroline Leavitt says any relocation of Gaza's more than 2 million residents would be temporary. Secretary of State Marco Rubio says the president does not want the U.S. to own Gaza.
The only thing President Trump has done very generously, in my view, is offer the United States willingness to step in, clear the debris, clean the place up from all the destruction that's on the ground, clean it up of all these unexploded munitions.
Israelis have welcomed President Trump's talk of a reborn Gaza, but the Palestinian Authority says it rejects all calls for displacement of the Palestinian people from their homeland.
Now, meanwhile, Karen, Secretary of State Rubio says he will not attend a Group of 20 summit in Johannesburg later this month. Among the reasons he cites is South Africa's efforts to address inequality. The move adds strain to U.S.-South Africa relations. They have been tense due to South Africa's close ties with China and its refusal to condemn Russia's invasion of Ukraine.
Well, Nathan, today is the last day for federal workers to decide if they want to take up President Trump on his offer to quit their jobs. And Bloomberg's John Tucker is here with the latest. And, John, what's the response been so far?
Well, as of yesterday, Karen, more than 40,000 workers signed up. That's about 2% of the federal civilian workforce, and the administration expects a rush of applicants in the final hours. The deadline to apply the end of the day today. A government employee simply has to send the word resign from a government email account. President Trump and Elon Musk told the federal workers they'd be paid through the end of September if they take the offer, but federal employee unions question its legality. The head of the American Federation of Government Employees said in a statement that federal employees shouldn't be misled by what he called slick talk from unelected billionaires and their lackeys. I'm John Tucker, Bloomberg Radio.
All right, John, thank you. The White House says Elon Musk will police himself and determine if there are conflicts of interest between his work reviewing federal spending and his overlapping empire of 6 companies. Musk is CEO of SpaceX, which has significant government contracts with NASA and the U.S. military. He is also CEO of Tesla, the electric car maker that has been the subject of several federal probes.
Well, we turn to the markets now, Nathan, and U.S. futures are higher following yesterday's gains on Wall Street. The 10-year Treasury yield is hovering near the lowest since mid-December after Treasury Secretary Scott Bessent said his focus is bringing down yields rather than the Fed's benchmark short-term interest rate. And a programming note, Bloomberg's Saleha Mohsen speaks live with the Treasury Secretary today. Full coverage is at 1 p.m. Wall Street time on Bloomberg Radio and the Bloomberg podcast page on YouTube.
And we're watching some stocks on the move this morning, Karen, including shares of Ford. They are down nearly 5%. The automaker is warning its profit could fall by $2 billion or more this year on lower vehicle prices and costly new model launches. As heard here on Bloomberg Radio, Ford CEO Jim Farley says the forecast does not factor potential steep new tariffs on Canada and Mexico.
I think longer term is the bigger concern. These kind of tariffs, especially in these two countries, are very significant. And if they persist beyond months, we could see billions and billions of dollars of pressure on the industry, lost jobs, lots of impacts to communities and our ecosystem in the industry. And that's what we're talking to the administration about and congressional leaders.
CEO Jim Farley also says he's dialing back Ford's huge bet on electric vehicles that overshot consumer demand and fueled steep losses. You can get our full conversation with the Ford chief executive on the Bloomberg Talks podcast. Bloomberg Talks, available on Apple, Spotify, or anywhere you get your podcasts.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The NBA trade deadline comes today. Plenty of activity yesterday, including Miami Heat trading Jimmy Butler to Golden State in a deal where they get back Andrew Wiggins and a first-round draft pick. Butler had demanded a trade and had been suspended 3 times in recent weeks by the Heat. Washington traded Kyle Kuzma to Milwaukee for Chris Middleton. From baseball, Pete Alonso staying with the Mets. He was a free agent, signed a 2-year deal. He can opt out after the first season. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
Donald Trump has already changed the way we think about the U.S. economy. Now he's back in the White House, and Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, head of government and economics at Bloomberg. Whatever the big question of the week is, we'll have something interesting to tell you about it in a lively conversation with the reporters and analysts closest to the action. Listen to new episodes every Wednesday and follow Trumponomics on Apple Podcasts, Spotify, or wherever you listen.
Steve, tell us what we're hearing.
Yeah, you know, we've been covering this for the last few years, obviously, since the Chinese government sort of launched a bit of a crackdown, if you want to call it that, on multinational consultancies in China, whether it's Bain & Company, which saw its offices raided in China, Capvision found it embroiled in some sort of anti-espionage campaign. It is headquartered in New York and in Shanghai. McKinsey, it's an interesting story, obviously, probably one of the bellwethers of global and U.S.-based consultancies that have businesses around the world in 130 cities across 65 countries, including in China, where it's loss-making. And you mentioned about North America being, could potentially offset if they did have a retreat. Half of its revenue comes from the United States, and it loses money in China. But again, the global managing partner, Bob Senfelds, maintains that McKinsey is a global company, right? So it is a dilemma right now, and we're hearing in an exclusive story that is number 2 on the Bloomberg Terminal, most read right now, essentially that McKinsey senior partners are speaking up anonymously. They don't want to necessarily put their names to this, but increasingly they're questioning the presence in China, given the heightened geopolitical risks, given the fact they're not making money right now. They did pull back headcount in China by about 150 employees. They have 1,000 or so, and they have, according to their website, about 1,500 client engagements in China. They're active in China, obviously, but is it worth the risk? And it really highlights the growing dilemma of a number of American companies that are doing business in China. That latest survey in January from the American Chamber of Commerce in China said a record 30% of American companies are either considering or have already considered or already starting to pull out of China because of these heightened geopolitical risks, national security risks from both governments.
Moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
The next mile. Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
In case you missed it on Balance of Power.
This great show, by the way. Melania coin helped to delegitimize serious crypto coins.
Look, meme coins, they have another handle for them, another 4-letter word.
Can't say it on the air.
All these meme coins really undermine what is digital properties that can make a huge difference over the long term. But people buy it. Yeah. People are interested in it. And I wasn't into Beanie Babies, but perhaps this is digital Beanie Babies.
Don't miss Balance of Power live every weekday.
Equities on the S&P 500 just about positive by 0.05%. Looking for a 3-day winning streak on the S&P. On the Nasdaq right now, negative by 0.1%. Shook off some of the tech jitters in yesterday's session more broadly. Not a great day for the likes of Alphabet through most of yesterday's session. But for Amazon, Amazon's up next after the closing bell. Look out for cloud revenue. We'll talk about that a little bit more in just a moment. Turning to the bond market, 2-year, 10-year and 30-year. The big takeaway of the data of the past few weeks, taking out just a little bit of heat from the economic story in America. Things still okay, but just not as hot based on the ISM that we saw yesterday and the job openings number we saw before that. Bond yields a little bit higher here, Bramo, by 2 basis points. The 10-year, 443.62.
I have to give you a victory lap. Yesterday, you said to me the most important data point of the day. You said not ADP, and you were right. You said it was going to be ISM services, and indeed, it was ISM services, but it wasn't necessarily even the headline number that came in softer. It was the fact that prices paid, that component came in weaker, softer than people expected. It all speaks to the idea that inflation, nah, it's not going to happen, and increasingly, you've taken the risk of a possible rate hike off the table and really increased the risk of possible rate cuts.
I'll take credit when I deserve it. I'm not sure that comment deserved that much credit.
You get full credit.
I don't think it required that much foresight.
It was
that ISM might be more important than ADP, but okay. I'll run with it. You're being kind. I like it. I'll accept the compliment. Thank you. Let's turn to foreign exchange. I want to focus on sterling. 30 minutes away, there's a Bank of England rate decision, and Governor Bailey might have to do something that no central banker wants to do anywhere on the planet. Downgrade the outlook for growth and upgrade the outlook for inflation. That ain't good. Sterling's down to 124.27.
The interesting thing is, 3 weeks ago, when you saw the highest 10-year gilt yields going back to 1998, people were speculating that they wouldn't have the room to still cut rates with that type of outlook, with a higher inflation outlook and a lower growth outlook. Now everyone is expecting them to still cut rates. And who gave them the pass? Perhaps the ISM services data that showed prices paid came in lower. There is a feeling that maybe we're not on this inflationary spiral that gives them the space to cut rates, but it highlights how constrained that central bank is in a way that maybe the Federal Reserve isn't.
Gilt yields lower, sterling a bit weaker, cable 124.27. Let's get you some news. On our radar this morning, Treasury Secretary Scott Bessent saying the Trump administration is focused on bringing down 10-year bond yields, adding that the president is, quote, not calling for the Fed to lower rates.
So this is a change of tune for the president, I would say. The president did say on Sunday to reporters that the Fed did the right thing, but how many times have we seen Trump 1.0, campaign trail, coming into the White House, the president constantly saying he wants lower interest rates. He is a real estate guy, and he thinks he knows better than Jay Powell. So I'm just kind of wondering how long will this reversal in terms of where they are happy with where interest rates are is going to last.
At the same time, Tom Barkin, who was here yesterday, came in and he said, people think we control mortgages. People come up to me and they're saying, it's so expensive to buy a home. What are you going to do about it? And he said, we don't control that. We control the front end at best. So this is a real estate developer who is listening to people who understand that actually maybe the Fed doesn't hold the keys to the rate that he actually cares about. So, you know, maybe this will stick. We'll see.
I'm a real estate guy. They dropped rates and mortgage rates went up. But this is what Bessent's getting at, right? Secretary Bessent is making the argument that that reduction in interest rates contributed to those high yields at the long end, contributed to higher mortgage rates, which for people listening who might not be on Wall Street might sound really counterintuitive, but that's the argument that some people have made.
If you lower rates in the near term and people believe that there still is quite a bit of heat in the economy, then they ratchet up their expectations of long-term growth and inflation. This is the delicate balancing act that Scott Bessent, with a real estate developer as president, needs to manage. And it's the reason why maybe we saw the president come out and say he actually thinks the Fed did the right thing by holding, which surprised everybody.
How difficult is this going to be, though? Because, of course, tax cuts, higher tax cuts, and what Ed Mills was talking about, what Scott Bessent said yesterday to Larry Kudlow, that he wants them to be permanent. How much more are you going to have to tap the debt market for that? And how much more is the bond market just going to push back on a higher U.S. deficit?
The 10-year Treasury yields right now higher by 2 basis points, 4.44. Let's turn to another story. U.S. allies expecting President Trump to present a plan to end Russia's war on Ukraine next week. Sources telling us here at Bloomberg the plan potentially includes freezing the conflict and providing Ukraine with security guarantees.
So I would say, and I was part of this reporting with the team, what I would say is this month is going to be pretty critical, and you can already see a major shift in tone. President Zelensky sitting down for an interview this week saying that he wants to end the, quote, hot stage of the war, and he is willing to speak to Putin. Now, after General Kellogg goes to the Munich Security Conference and unveils this plan to allies, he's also going to be, it's his first time as this envoy, going to Ukraine. At the same time, Zelensky himself is also going to be making a trip to the Gulf, definitely going to Qatar, definitely going to the United Arab Emirates. Diplomacy in the works at the moment because Trump is really forcing their hand to get to the negotiating table.
They are going after so many things simultaneously, it's almost jarring. Because it was so sleepy in the final few months, the final few years of the Biden administration. The contrast is just absolutely stark. How much they're getting done and how quickly it's happening, whether you like it or not, over the past few weeks.
Everything, everywhere, all at once. They're firing on all cylinders. And I spoke to sources yesterday. I was at the White House. Everything they talked about and were preparing after Trump won the election, they wanted to come in and they wanted to make sure all of their people were in place, at least the initial top-level people, to get these things done. It is jarring because, not to be rude, but Biden was like watching paint dry. He himself would drag his feet for every decision, where Trump just comes out, and even if something is an idea floating around the West Wing, he says it out loud.
That's the latest on that front. Let's turn to the earnings. Ford warning the profit may fall by $2 billion or more this year, citing lower vehicle prices and expenses linked to the launch of new models. The company saying the forecast does not factor in potential tariffs from the Trump administration. That name is down by more than 6%. And Bramo, it could get a lot worse if we do see those kind of tariffs.
Well, Ford itself said that they could see billions and billions in profit destruction should some of these tariffs go into effect. You can feel this delicate dance that a lot of executives are doing. On one hand, they want to warn about the consequences of some of these tariffs, but they don't want to get in the bad graces of the president. So there is that sort of olive branch saying, we know that he doesn't want to destroy Detroit. We know he wants a strong, robust U.S. auto manufacturing sector. You can feel this tension as they realize just how much carnage could be done to their business and their profitability.
Ford is down this morning in the pre-market by more than 6%. Let's turn to more earnings. Let's turn to tech. Amazon reporting earnings after the closing bell today. Scott Devitt of Wedbush rating the stock outperform with a 280 price target, expecting another year of gains for the company. Scott joins us now for more. Scott, welcome to the program. We've heard from Google, we've heard from Microsoft. What do those two names tell you about what we could hear from Amazon later?
Well, I think the biggest overlap comes in the web services business, where Microsoft and Alphabet both underperformed. There's some idiosyncratic effects, particularly as it relates to Alphabet. The company didn't have capacity in the cloud business, which was the reason that it missed by 200 basis points. Microsoft was a little bit of a different story. So it'll be interesting to see whether Amazon, kind of takes control of the narrative again in web services in terms of being a share gainer, and that they're AI positive relative to kind of the positioning it's had the last 12 to 18 months of being, an AI market share donator to Azure. So that to me is the biggest data point, from those two. Otherwise, Alphabet and the advertising business was quite strong. I think that's a positive data point for Amazon's retail business as well.
At the same time, Scott, there's been a vibe shift in a pretty big way when it comes to capital expenditures tied to cloud computing and just how some of these companies are going to expand. We saw that Google was penalized pretty significantly by their $75 billion price point for how much they plan to spend. Do you think that Amazon can shift the narrative on capital expenditures at a time where really it's the fact that supply cannot keep up with demand?
Well, Meta, the stock responded positively to high levels of CapEx because the market's viewing Meta as being front-footed, and Alphabet, excuse me, I apologize, as being, on its back foot and having to spend to keep up in this transition, and so effectively diluting the margin profile. I think Amazon sits somewhere in between. I mean, there's a necessity to invest in the cloud business to retrofit it for selling AI services, but a lot of the Amazon spend as well goes to fulfillment centers and other things which are driving incremental high levels of growth. And so I think the market response, to the extent that Amazon doesn't shock with CapEx, but instead of, say, our $87 billion estimate, it comes in somewhere 90 to 95, that'll be digested quite well so long as the fundamentals are as strong as we think they are.
Scott, the focus has been so much on spending by some of these big tech guys. How much is the focus going to shift to cost cutting, to efficiencies? Andy Jassy has come out and talked about cutting middle management in particular and replacing with some of these machine learning tools, potentially to reduce costs. How much are you looking for that type of announcement today?
So we had, 22 really the year of discipline across the board for all these companies coming out of the pandemic. And then, you've gone back into investment mode, but it's non-human capital investment. And I think you'll continue to hear that from companies, including Amazon, becoming more efficient with human capital and those gains being redeployed into capital infrastructure. And so I don't expect, meaningful leverage from Amazon in terms of that transition. But what I will say with Amazon is they're benefiting from a
क्योंकि ये नेचुरल गैस में देखोगे ना MCX में तो इतना क्लियर नहीं है ऊपर लेवल फॉरेक्स में यहाँ पर रेजिस्टेंस है वैसे ठीक है फॉरेक्स चार्ट में देखोगे देयर इज अ रेजिस्टेंस ओवर हियर यहाँ पर रेजिस्टेंस है फॉरेक्स में यहाँ पर एक गैप डाउन हुआ है तो उसके बाद का लेवल है नहीं अवेलेबल सो दैट इज द लास्ट लेवल वी हैव देखा जाए तो यहाँ पर प्राइस एक बार सेलिंग दिखा चुका है फिर सेकेंड टाइम दिखा चुका है ये थर्ड टाइम आ रहा है लेवल पे और लोअर लो नहीं बनाया है, बट ऊपर भी कैंडल क्लोज नहीं हुई है, तो अभी भी इंटैक्ट है। क्रूड भी पिछले ऑलमोस्ट देखोगे तो 1 2 3 4 5 6 कैंडल से और रेजिस्टेंस पे रुक गया, नीचे भी नहीं आ रहा है। फाइट चल रही है, रीजन है नीचे वाला एफईजी, ये दोनों पे ही प्राइस में अटक गया है। प्राइस किसी एक साइड के लग रहा है, ऐसे उड़ेंगे तभी प्राइस और मूव करेगा। पीएम हो गया, लगता है 6:30 के बाद वॉल्यूम एक्सपेक्ट करा जा सकता है। उससे पहले तो वॉल्यूम थोड़ा मुझे लग नहीं रहा आने वाला है कुछ खास।
Strip. Trump writing the Gaza Strip would be turned over to the United States by
प्रीमियम नहीं बढ़ रहा, ऑप्शन ट्रेड किया हुआ है, ऑप्शन में तो नहीं बढ़ेगा, मोमेंटम ही नहीं आ रहा। ऑप्शन सेल किया या फ्यूचर सेल किया तब थोड़ा हो सकता है, पुट बाई किया है तो फिर प्रीमियम बढ़ने के चांसेस वैसे ही कम है, मोमेंटम जरूरी हो जाता है। टारगेट हो गया तो उसमें निकल जाओ नैस्डैक में। अभी हुआ नहीं है, इसमें रिटेस्ट भी पेंडिंग है, हो सकता है रिटेस्ट के लिए चला जाए। हाफ प्रॉफिट बुक करके ट्रेल कर लो, हाफ प्रॉफिट बुक करके ट्रेल कर सकते हो एसएल कॉस्ट पे रिमेनिंग क्वांटिटी का। इन्हीं हैरी को कह रहा हूँ मैं, इन्होंने आई थिंक नैस्डैक में ट्रेड कर रहे हैं ना शायद वो। ये रेंज अगर ब्रेक होती है ना, मेरे अकॉर्डिंग अब बड़ा मूव जरूर करना चाहिए मार्केट को, इन दोनों में से किसी एक साइड पे एसएल निकल जाए, सेलर्स के या फिर बायर्स के। अब होगी असली फाइट, क्रूड और नेचुरल गैस। नेचुरल गैस की आज इन्वेंट्री भी है, ध्यान रखना। पहले ध्यान रखना, इतना ही टारगेट है फिलहाल ये एफईजी, अगर एफईजी ब्रेक नहीं हुआ तो रुक जाना चाहिए प्राइस को, ये रेंज बना रखी है। यस नेचुरल गैस भी देखो रेजिस्टेंस पर ही है ये एक्चुअली फॉरेक्स में एग्जैक्ट लेवल है एमसीएक्स में वो गैप डाउन हुआ है तो उस वजह से दिख नहीं रहा है मैं फॉरेक्स के अकॉर्डिंग अगर लेवल को लगाऊंगा तो ये कुछ लेवल बनेगा ये लेवल बनता है उसके अकॉर्डिंग बट बिकॉज यहाँ पर देखोगे ना ये सीधा इसके बाद कोई प्राइस एक्शन नहीं है बहुत बड़ा गैप डाउन है बट फॉरेक्स में थोड़ा बहुत प्राइस एक्शन इसके बाद भी बना था प्राइस में तो थोड़ा सा कम गैप है तो वहाँ पर क्लियरली दिख रहा है यहाँ पर थोड़ा सा क्लियर नहीं है इतना क्योंकि गैप डाउन हुआ है तो ये भी रेजिस्टेंस पर ही है ठीक है तो नेचुरल गैस भी रेजिस्टेंस पर ही है बट प्राइस एक्शन अगर देखोगे ध्यान से थोड़ा बहुत यहाँ पर एक बार सेलिंग ऑलरेडी आ चुकी है लास्ट टाइम यहाँ पर फॉरेक्स में एक बार सेलिंग यहाँ से भी दिखा चुका है ये थर्ड टाइम आ रहा है एमसीएक्स में दूसरी बार ही दिख रहा है इसलिए वो डब्ल्यू लिखा हुआ है डब्ल्यू मतलब वीक रेजिस्टेंस लेवल डब्ल्यू मतलब वीक सपोर्ट लेवल इसको ऐसे समझ सकते हो है वो रेजिस्टेंस या सपोर्ट बट थोड़ा सा वीक मान सकते हैं क्योंकि एक या दो बार टेस्ट हो चुका है लेवल्स ओके गाइस क्रूड ऑयल में देखो दो चॉइस है आपके पास या तो बुक कर लो या एसएल कॉस्ट पे रख लो एफईजी ब्रेक नहीं होगा तो नहीं जाएगा नीचे फिर बता दूं प्राइस को अगर और नीचे जाना है तो एफईजी का ब्रेकडाउन होना ज़रूरी है नहीं तो बस इतना ही टारगेट मिलेगा फिर यहाँ से अगर एफईजी ब्रेक हो जाता है तब थोड़ा सा मुझे लग रहा है ये बड़ा फॉल कर सकता है अगर एफईजी ब्रेक नहीं हुआ यहीं से वापस बाइंग आने के चांसेस काफ़ी हाई हो जाएंगे फिर ये रेंज बन जाएगी और फिर रेंज अगर बन गई तो फिर आपको पता ही है किसी एक साइड के एसएल फिर हिट होंगे तभी कुछ हो पाएगा मोमेंटम तो सेलर्स चाहो तो प्रॉफिट बुक कर लो या फिर एसएल क्या कर सकते हो कॉस्ट पे रख सकते हो कोई बहुत बड़ा टारगेट नहीं है 30 पॉइंट ही अगर तब थोड़ा बड़ा टारगेट मिलेगा गलत जगह पे एफईजी बना दिया इसने यहाँ तक भी रहता तो बेटर था बट अब है तो है ठीक है तो अब ये रेंज है किसी एक साइड रेंज के मैं वेट करूंगा कि ब्रेकआउट या ब्रेकडाउन हो जाए यहाँ पर थोड़ा बहुत रुकना चाहिए क्रूड को 15 मिनट टाइम फ्रेम के अकॉर्डिंग प्रॉफिट बुक करके एसएल कॉस्ट पे डाल दो तो आपकी चॉइस निकलना है तो पूरा प्रॉफिट बुक करके निकल जाओ अगर ट्रेल कर रहे हो तो एसएल कॉस्ट पे रख के रिमेनिंग क्वांटिटी का हाफ प्रॉफिट बुक करके निकल जाओ या फिर पूरा ही एसएल कॉस्ट पे रख लो रिस्क मत लेना क्योंकि अब सेलर्स रिस्क में आ जाएंगे अगर वापस रिटर्न हुआ यहाँ से हाँ ब्रेकडाउन हो जाता है 6257 के नीचे तो बात अलग है क्योंकि एफईजी का कुछ पता नहीं है कभी होल्ड करता है कभी नहीं करता तो नहीं कर लो ट्राई नेचुरल गैस में ट्राई कर रहे हो तो Nasdaq कीवर्ड इन ट्रेडिंग व्यू इंस्टेड ऑफ यूएस 100 चार्ट सेम ही होगा चार्ट में ज़्यादा डिफरेंस नहीं होगा आप ब्रोकर आईजी यूज कर रहे हो ना if you are using IG broker then chart is same there is no difference because every broker giving their own chart so If I search normally, US future chart is there. If I search Nasdaq, because US 100 is a Forex symbol for Nasdaq. ठीक है, नेचुरल गैस में भी थोड़ा सा वीक रेजिस्टेंस मान के चलो इसको, एंड लेना चाह रहे हो क्वांटिटी कम रख के ट्राई कर सकते हो, इतना ही सजेस्ट कर सकता हूँ फिलहाल के लिए। 2 बार रेजिस्टेंस ले चुका है, थर्ड टाइम आया है यहाँ पर। मैं ये बिल्कुल नहीं कह रहा हूँ कि वीक हो, मतलब रेजिस्टेंस नहीं है, रेजिस्टेंस जरूर है, बट थोड़ा सा वीक साइड पे मान के चलना, तो रिस्क ज़्यादा हो जाएगा। बेस्ट तो ये है कि यहाँ पर ये रेजिस्टेंस ब्रेक करे, नया सपोर्ट बनाए, या फिर नीचे आके सपोर्ट ले ले सीधा, या फिर थोड़ा सा और ऊपर निकल जाए 305-6 के अराउंड ना, वो भी ठीक है। ओपन इक्वल टू हाई बनाए के इसमें गैप अप गैप डाउन पूरा प्राइस सेक्शन खराब कर देते हैं कभी कभी। फर्स्ट टाइम गुड। Chart is not, chart is same, chart is same. ठीक है, नेचुरल गैस वाले थोड़ा ध्यान रखना, अगर थोड़ा रिस्क उठा रहे हो यहाँ पर, थोड़ा सा वीक रेजिस्टेंस लेवल मान के चल रहे हैं। 3 बार दो बार रेजिस्टेंस ले चुका है, थर्ड टाइम आया है यहाँ पर। थोड़ा सा प्राइस में चार्ट पर डिफरेंस दिखेगा फॉरेक्स और एमसीएक्स में, बिकॉज फॉरेक्स में यहाँ पर है, एमसीएक्स में थोड़ा सा ऊपर है, क्योंकि गैप अप गैप डाउन हुआ था थोड़ा सा बड़ा, तो फिर क्लियरिटी नहीं है। चाहो तो दोनों को कंबाइन करके ये भी रख सकते हो, एंड 50% लेवल पे एक कैंडल ड्रॉ कर सकते हो, सो दैट एसएल छोटा हो जाए। ठीक है, तो थोड़ा सा इस चीज़ को समझना, चार्ट पे थोड़ा बहुत डिफरेंस दिखेगा, बाकी थोड़ा वीक ही मान के चलेंगे। ट्राई करोगे तो कम क्वांटिटी ट्राई करना, एसएल टारगेट बड़ा रख लेना, सो दैट एसएल जाए तो छोटा जाए और टारगेट मिले तो बड़ा मिले। कोई और नया लेवल बना नहीं है, ऊपर फिर एक रेजिस्टेंस यहाँ पड़ा हुआ है, सपोर्ट यहाँ पर है। तो नीचे आके सपोर्ट ही बना देता तो ये नेचुरल गैस बढ़िया रहता, और एक और फॉरेक्स में भी नहीं आया नीचे। बाकी देखो, वो जो आप कह रहे हो ना नेस्डैक वाला, ठीक है, तो यहाँ से भी देखोगे सेम ही आएगा, क्योंकि ये भी आईजी ब्रोकर का ही दिखा रहा है। यूएस टैक 100 वही सर्च किया था मैंने, वही देखा हुआ आईजी, तो सेम ही है, कोई डिफरेंस नहीं है। हाउ टू चेंज द माइंडसेट, प्रॉफिट छोटा और लॉस बड़ा, ये माइंडसेट चेंज कैसे करना है? देखो, दो चीज़ें यूज़ कर लो, ठीक है। ओवर द टाइम वो ऑटोमेटिकली कम हो जाती है ओवर ट्रेडिंग। और ये जो माइंड सेट है नॉर्मली क्या कर सकते हैं उसके लिए सबसे बेस्ट क्या है? पहली बात तो रैंडम ट्रेड लेना बंद कर दो, नंबर वन। जैसे कल हमने भी लिया था ना, वो बीच में एक बार नेचुरल गैस को किसको क्रूड ऑयल को सेल किया था, वो बीच में उड़ा के ऐसे उड़ा के चला गया। तो रैंडमली ट्रेड नहीं लेना है, पहली बात। दूसरा, बड़े रिस्क रिवॉर्ड के ट्रेड प्लान करो। मतलब एटलीस्ट 1:2 1:3 तो होना ही चाहिए नॉर्मली। 1:2 1:3 हो जाए फिर प्रॉब्लम नहीं आएगी, फिर आपका एसएल भी चला जाएगा ना, फिर भी ओवरऑल माइंडसेट प्रॉब्लम नहीं करता क्योंकि कवर हो जाता है वो। आपने 1:3 पे कोई टारगेट रखा है, मान लो हिट हो गया, आप 3 बार लॉस करोगे तब मैं ऑन एन एवरेज कह रहा हूँ, देखो कोई परफेक्ट नहीं होता, थोड़ा बहुत पॉइंट का ऊपर नीचे हो जाता है, फिर भी मैं 2 से 3 ट्रेड अगर लॉस करोगे तब कहीं कॉस्ट टू कॉस्ट ही आओगे, या थोड़ा बहुत लॉस या थोड़ा बहुत प्रॉफिट में रहोगे। तो रिस्क रिवॉर्ड बढ़ा लो, रैंडम ट्रेड बंद कर दो, ओवर ट्रेडिंग खत्म हो जाएगी। और ओवर ट्रेडिंग के अलावा जो 2 चीज़ें और रहती हैं मेनली, इशू आता है ट्रेडिंग के वक्त माइंडसेट में, वो भी ऑटोमेटिकली चेंज हो जाएगा। जिसमें हाँ ठीक है, जिसमें आपका मेनली ओवर ट्रेडिंग हो गया, रिवेंज ट्रेडिंग हो गया, वो भी उसी के अंदर आ जाता है, एंड फोमो हो गया, फेयर ऑफ मिसिंग आउट की ट्रेड निकल जाएगा। Near on target 21,600 Nasdaq, book the profit and wait for 6:30. 6:30 New York session is opening time, so you can expect a volume after that 6:30 candle, because 7 p.m. is also there is a data, unemployment claims data, that will also impact Nasdaq. हाँ, मिनी ले रखा है, बढ़िया है, चलो ठीक है, टारगेट बड़ा रख लो यहाँ तक। रुक जाएगा ये अभी यहीं पर। हो जाता तो यहाँ तक आ जाता। टाइम फ्रेम पे इंक्रीज कर सकते हो पुनीत कुमार जी, यू कैन ऑल्सो इंक्रीज द टाइम फ्रेम। समटाइम्स क्या होता है ना, हम स्मॉलर टाइम फ्रेम पे ज़्यादा ट्रेड करते हैं। मेनली आपने देखा होगा सब लोग वही 1 मिनट 3 मिनट 5 मिनट पे, मैक्सिमम लोग इसी पे ट्रेड करते हैं जितना मैंने देखा है। बहुत कम लोग होते हैं जो 15 मिनट 1 आवर 4 आवर पे ट्रेड करते हैं, क्योंकि वहाँ पर ट्रेड ऑब्वियसली पहली बात तो बनेंगी कम, और फिर बन भी गए तो फिर उनको आपको लॉन्ग होल्ड करना पड़ेगा, और इंट्राडे हुआ भी नहीं। तो आप थोड़ा सा क्या कर सकते हो, अगर आप सिर्फ इंट्राडे ही करते हो तो टाइम फ्रेम भी इंक्रीज कर सकते हो, क्योंकि 1 मिनट टाइम फ्रेम पे आप ट्रेड करने या 5 मिनट में टाइम फ्रेम पे ट्रेड करने बैठोगे नॉर्मली, तो ऑन एन एवरेज अगर ठीक ठाक मार्केट भी हुआ ऑन एन एवरेज, तो भी 5 से 6 ट्रेड दे देता है 1 मिनट में ना। 5 मिनट में 3 4 दे देगा, 15 मिनट में मुश्किल से 1 2 या 3 ट्रेड मिलते हैं। तो टाइम फ्रेम इंक्रीज कर सकते हो, उस केस में ट्रेड कम हो जाएंगे, रिस्क रिवॉर्ड ऑटोमेटिकली बढ़ जाएगा। अगर इंट्राडे कर रहे हो स्पेशली, स्विंग या पोजिशनल कर रहे हो तो फिर वो बात अलग होगी, क्योंकि फिर उसमें ओवरनाइट होल्ड का भी एक कॉन्सेप्ट आ जाता है। बट अगर सिर्फ इंट्राडे कर रहे हो, वहाँ पर टाइम फ्रेम बढ़ा सकते हो। 3 चीज़ कर लो, अगर कोई भी अपना टाइम फ्रेम थोड़ा सा इंक्रीज कर लो, जिस भी टाइम फ्रेम पे करंटली ट्रेड कर रहे हो, रिस्क रिवॉर्ड बढ़ा रख लो अपना, और रैंडम ट्रेड मत लो। जो भी सेटअप यूज़ कर रहे हो, कोई भी, मैं नहीं कह रहा हूँ मेरा सेटअप, कोई भी, मान लो मूविंग एवरेज यूज़ कर रहे हो, सेटअप के अकॉर्डिंग ट्रेड आ रहा है तभी करो, बाकी मार्केट को जाने दो। तो ऑटोमेटिकली 3 मेन चीज़ें जो रहती हैं सब रिमूव हो जाती हैं। क्या देखो, क्रूड ऑयल रुक गया वहीं पे, पावर ऑफ एफईजी, पावर ऑफ स्टॉक नहीं, पावर ऑफ एफईजी। स्टॉक वाले तो सुबह से इस पानी सर है, ग्रेट ट्रेडर। इसको एक बार देख लेते हैं। ट्राई कर सकते हो, ट्राई कर सकते हो। स्पेशली अगर आप कमोडिटी में ट्रेड करते हो तो फिर तो करना ही चाहिए मेरे अकॉर्डिंग, क्योंकि सुबह 9 बजे से रात का 11 बजे तक मार्केट ओपन है। ऐसा तो होगा नहीं कि एक ट्रेड भी नहीं मिलेगा, एक ना एक ट्रेड मिल ही जाता है। क्रूड नेचुरल गैस, गोल्ड सिल्वर में तो उससे भी ज़्यादा मिल जाएंगे। व्हाट्सएप पे मैसेज किए हैं, व्हाट्सएप पे मैसेज किया है तो थोड़ा सा मेरे को बता देना, क्योंकि मैं देखता नहीं हूँ व्हाट्सएप कंटिन्यूसली ना। ये कौन भाई साहब हैं, ट्रेडिंग विद आकाश? का व्हाट्सएप आया हुआ है मुझे। हितेश पटेल जी, दिस इज एफ जी। हितेश पटेल जी कौन सा वाला है मेरे को? 21,600 वो तो आ गया ना, रीच हो गया शायद 21,600 ऑलरेडी। वहां पर रुक सकता है थोड़ा सा, कोई न्यूज हुई तो बात अलग है, अदरवाइज कहाँ गया जी ये है। यहाँ पर थोड़ा रुकना चाहिए यहाँ पर प्रॉफिट बुक कर लो, पूरा ही आ गया, पुल बैक भी नहीं दिया है। यहाँ पर रुक सकता है थोड़ा बहुत प्राइस। तो यहाँ पर अपना पूरा प्रॉफिट बुक करना है, पूरा ही बुक कर लो, क्योंकि अब थोड़ा सा प्राइस को और गिरना है तो ब्रेक करना पड़ जाएगा नीचे 21,552 यहाँ कहीं। इसके नीचे अगर कहीं क्लोज करता है तब थोड़ा और गिर सकता है, नहीं तो इस एरिया से थोड़ा सा पुल बैक आने के चांसेस हैं प्राइस में। 15 मिनट की बात कर रहा हूँ। कर सकते हो, स्कैल्पिंग भी कर सकते हो क्रूड ऑयल में पुल बैक के लिए, बट स्कैल्पिंग ही करना, क्योंकि देखो अब रेंज बन गई है। किसी एक साइड के एसएल हिट होने जरूरी है, या तो बायर्स के या सेलर्स के, तभी थोड़ा सा रेंज प्रॉपर मूव होगी। नॉर्मली एफई से बाइंग करी नहीं जाती है, बट समटाइम्स इट विल टेक सपोर्ट, समटाइम्स नॉट। ठीक है, ये कोई एग्जैक्ट सपोर्ट नहीं है, बट यहाँ थोड़ा बहुत पुल बैक आ सकता है। ध्यान रखना 630 की कैंडल का। बैंक ऑफ इंग्लैंड कट इंटरेस्ट रेट टू 4.5%। इंटरेस्ट रेट थोड़ा सा कट कर चुके हैं बैंक ऑफ इंग्लैंड की ओर से। 10 to 20 पॉइंट पे एरो उनका मैसेज आया था, शायद वो कुछ बात करना चाह रहे थे। सेबी का नया रूल आया था, मैंने आप लोगों को बताया होगा। सेबी की नई गाइडलाइंस आई थी। एक्चुअली रूल पिछले साल ही आ गया था, इस साल उन्होंने उसको थोड़ा सा मॉडिफाई कर दिया है, फिर और चीज़ें उसमें ऐड कर दी है। आप लोग भी पढ़ सकते हैं, उनकी वेबसाइट पर है वो। लाइव स्ट्रीमर्स के लिए है वो, जो लोग लाइव स्ट्रीम करते हैं ना, उसमें क्या क्या कर सकते हैं क्या नहीं, डिटेल से पढ़ना। उसका पॉइंट नंबर 3 बड़ा इंटरेस्टिंग है।
The dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. Do a real job, do something different. Just can't go back. If you go back, it's going to end up the same way it has for 100 years. I'm hopeful that this ceasefire could be the beginning of a larger and more enduring peace that will end the bloodshed and killing once and for all. With the same goal in mind, my administration has been moving quickly to restore trust in the alliance and rebuild American strength throughout the region. And we've really done that. We're a respect. I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
President Trump and Israeli Prime Minister Benjamin Netanyahu speaking at the White House, where the president proposed a U.S. takeover of Gaza. Well, joining us now is retired General Wesley Clark, Chairman and CEO at Wesley K. Clark and Associates, and former NATO Supreme Allied Commander in Europe. General, good to have you with us. Perfect timing to have you on our show. Just to put it up there, the U.S. taking over Gaza is actually illegal under international law.
Well, of course, it would have to be given. That's the first thing. But, Linda, you know, I did do the work in Bosnia. I was part of the peace delegation. We had a peace agreement there. Look, you have to take what President Trump says seriously. He's the president of the United States. Some people are dismissing it, but here are the challenges he has to face. First of all, even if Israel agrees, who represents the Palestinian people? Does Hamas? Are they going to agree? What about the Palestinian Authority? And then you have the terrorists that are in there in addition, like Islamic Jihad. And then where will the people go if they leave Gaza? The Jordanians have said they don't want them. Egyptians have said they don't want them. They've got their own issues with population. That's 1.5, almost 2 million people that have got to go somewhere. Are they going to be in a refugee camp? Who's going to build it? Where is it going to be? And then what are the rules of engagement for the U.S. military if it goes in there? Are we just peace keepers? Are we wait to get shot at? We're wearing blue helmets? Or are we taking the role of the Israelis? If so, people are not going to like that. And so there are many, many issues that are very difficult here. This is something that has to be worked over many, many months. And there's already considerable opposition to it already voiced in the region. I'm not saying it couldn't be done, but also consider it against the very limited resources of the United States military at this point. We have about 440,000 in the Army. We're stretched from the Pacific into Europe. And now we're going to we have a couple of thousand maybe in the Middle East. Now we're going to put what in Gaza to make sure this works? 20,000, 40,000, and then rotate them. So you have to have 3 times the number that are deployed. Look, there are many, many, many steps to be analyzed before this could be realized. But I do think it has to be taken seriously. If the president says it, I hope the chairman of the Joint Chiefs of Staff, the Secretary of Defense, and the military leaders will, give it a hard look and come back to the president and say, Mr. President, here's what it takes.
General, are you then saying that it is actually a viable option, a viable solution, a viable alternative? He's not just shooting from the hip.
Well, he may be shooting from the hip. I don't know. But, we don't know if it's a viable alternative. It certainly doesn't look like it right now. But with enough money, with enough leadership. But, Linda, you also have the Iranian nuclear threat. You have war in Ukraine. You have the challenge of dealing with China and trying to sort through that relationship. My experience with the U.S. government is we're pretty good at handling one issue at a time. 2 issues simultaneously, that's hard. Put this on us, it's even more difficult. So we've got many different issues on the plate for the United States government to deal with right now. This is another one. Look, if this is President Trump's priority, then the U.S. government has to follow it. But I've done these peacekeeping operations before. I know what the negotiations entail. And this is a very, very difficult proposition to make work. And even Benjamin Netanyahu didn't say, oh, yeah, let's do it. He said, it's interesting. We'll look at it. It could change history. Okay. He's on a diplomatic visit to the United States. But we should know that when we put American soldiers in there, if there's fighting, we're in the middle of a conflict in the Middle East, that's probably not sustainable. And President Trump said he doesn't want another war. So it's a difficult problem.
You got to imagine how the Americans are looking at this. The last thing they want is for the American troops to be involved in yet another war, and especially in the Middle East. I mean, is this a politically risky proposition for Trump? How do you think this will be viewed at home?
Oh, I think it'll be viewed as grandiose and probably over the top. But, he's the president of the United States, so people are going to have to take it seriously who are in the Defense Department and State Department. But, Linda, if this had been feasible, I know the Biden administration tried to talk to President Sisi in Egypt and in Jordan before the Israelis began their operations after October 7th. And there was no willingness on the part at that time to take the Gazans as refugees and get them out of the conflict zone. So they stayed there. And the Gazans didn't want to leave. And Hamas didn't want them to leave because Hamas wanted to use them as human shields. So I don't know what Hamas has to say or the Palestinian Authority. So that's really the first step in this. And they haven't been heard from.
Trump's language around Gaza seems to suggest that he looks at it as a property deal, real estate deal. For someone who has experience in the rebuilding after a war, I mean, do you think he understands what it all entails?
I don't want to, I don't know. But, yes, sure. Everybody likes oceanfront, beachfront property, sure. But this is a really difficult place in the world. And, once people start dying and other people start killing them, I mean, it takes generations to get through this. There's so much hatred. There's so much fear. There's so much concern in the region about this. And if you were to simply plop a bunch of American troops in the middle of it, we don't speak Arabic. This is not our fight. This is not something we're going to be good at. We learned the first time when we went into Afghanistan in 2001. As soon as you get in there, somebody comes up to you and speaks in a foreign language and says, so-and-so stole my bicycle. What are you going to do about it? And you don't know what they're saying. You don't know how it's dealt with. You're not part of the culture. There are huge problems at the bottom, not to mention the strategic consent at the top. So, look, he's the president of the United States. Better listen to him. But I've done these things. I can tell you how difficult this is. This is unimaginably difficult.
General, do you think what we're hearing from Trump now will be a reflection of his foreign policy stance? How concerned are you about that?
Well, you know, he's come into office. He's this second time around. He recognizes it's a different world. He likes to deal at the head of state level. He has his staff that supports him, but he makes the calls, and that's the way he likes it. He wants people under him that are loyal. So most presidents, I think every other president, something like this would have floated through the staffing process. There would have been a staff level. There would have been deputies committee. There would have been a principals committee. They would have looked at alternatives. They would have raised the risks, the costs, said, how are we going to pay for this? Where are these people going to go? Who's going to make the calls? Everything would have been coordinated and worked out in advance. There's no indication that that's really taken place. Thus far, he's only been in office for about 2 weeks, and there's so many things going on.
Right.
But, you know, he likes to be in the headlines every day. He certainly captured the news cycle with this one. And obviously, if you could end fighting in the Middle East, it'd be a great thing.
याद रखना गाइस, क्रूड ऑयल में सेलर्स जो हैं, ठीक है, अपना हाफ प्रॉफिट एटलीस्ट बुक करके चलना। एंड यहाँ पर अगर ये एफईजी के नीचे ब्रेक करता है, मतलब ब्रेक इन द सेंस ऑफ कैंडल क्लोज, तो थोड़ा सा टारगेट बड़ा रखेंगे। नहीं तो अगर पूरा निकलना चाहो निकल जाओ, रिमेनिंग क्वांटिटी का एसएल कॉस्ट पे रख सकते हो। यहाँ से एक पुल बैक आने के चांसेस हैं थोड़ा बहुत। ये रेंज बन चुकी है, किसी एक साइड के एसएल जाने जरूरी है, तभी कुछ बड़ा मूव आएगा। नहीं तो अ, इससे बड़ा मूव आना मुश्किल है थोड़ा सा इस लेवल पे, जब तक फिर एक साइड निकलता नहीं है मार्केट। अगर नीचे ब्रेक हो गया तो थोड़ा सा बड़ा मूव जरूर कर सकता है, उस केस में चांसेस आर वेरी हाई। ओके, बाकी 6:30 न्यूयॉर्क सेशन की ओपनिंग है, वी विल सी दैट। पीजे सपोर्ट 10-20, अभी उन्हीं से बात हो रही थी मेरी। Okay, as expected, pullback is there from crude oil. Natural gas ध्यान रखना ये WRL in the sense of weak एक resistance zone है, weak resistance level. 2 बार यहाँ पर रेजिस्टेंस ले चुका है, लोअर लो बनाया नहीं था, थर्ड टाइम आया है प्राइस, तो थोड़ा सा वीक ही है लेवल, तो क्वांटिटी कम रखना या मिनी वगैरह ही ट्राई करना, टारगेट थोड़ा बड़ा रख सकते हो, अदरवाइज नीचे एक सपोर्ट यहाँ पर है और रेजिस्टेंस यहाँ पर है, इनका वेट करना या फिर कोई नया लेवल अगर बन जाता है हम उस पर ट्रेड करना ज़्यादा पसंद करेंगे। यहाँ पर रिस्की रहेगा थोड़ा सा रीजन, क्योंकि यहाँ पर 2-3 बार मार्केट रेजिस्टेंस ले चुका है ऑलरेडी। बाकी अगर क्रूड ऑयल में पुल बैक के लिए स्कैल्पिंग का प्लान किया था तो ध्यान रखना रेंज है, किसी एक साइड के ऐसे उड़ेंगे तभी बड़ा मूव आएगा, नहीं तो रुक जाएगा प्राइस इसी रेंज के अंदर। सिक्स 6:30 न्यूयॉर्क सेशन की ओपनिंग होने वाली है, सो वेट फॉर दैट एज वेल।
Today, Israel's defense minister orders the army to prepare for Gaza residents' departure, as some Arab American voters say they're standing by Trump after his shock proposal. South Africa's president prepares his State of the Nation in the face of US opposition to a land ownership law.
And Trump seeks to ban transgender athletes from women's sports. It's Thursday, February 6th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Jonah Green in New York.
And I'm Tara Oakes in London. Israel's Defense Minister Israel Katz has ordered the army to prepare a plan to allow for the voluntary departure of residents from the Gaza Strip. Israel's Channel 12 quoting him as saying countries who opposed Israel's military operations in Gaza should take in the Palestinians. US President Donald Trump's proposal to take over Gaza and resettle Palestinians has drawn global condemnation.
His plan also got pushback from some Republicans in Congress, including Senator Rand Paul, who tweeted, "I thought we voted for America first." The fiercest comments were perhaps from United Nations Secretary General Antonio Guterres.
It is vital to stay true to the bedrock of international law. It is essential to avoid any form of ethnic cleansing.
Trump's top aides staunchly defended his proposal, but backed away from some elements of the plan. Here's White House Press Secretary Caroline Leavitt.
The president has not committed to putting boots on the ground in Gaza. He has also said that the United States is not going to pay for the rebuilding of Gaza.
While Arab American leaders are criticizing Trump's proposal, some voters in the community still think he's the best option for peace. Reporter Andrea Shalal has been talking to them to find out why.
A lot of Arab Americans and Muslims that voted for Donald Trump credit President Trump for helping to bring about the ceasefire. After months and months and months of less than stellar results by the Biden administration, it was really on the eve of the inauguration that this ceasefire was reached. And people also said to me, look, we know this is how this guy operates, right? He says things that are provocative, like buying Greenland. We know it's a negotiating position. I spoke with someone earlier today, Yahya Basha, who's a medical doctor and founder of Muslims for American Progress, who said he wasn't surprised.
I don't regret anything I did to get Trump elected, and I hope we see positive signs in the future.
There have been proposals like this before, so some people remain skeptical that those plans will actually be executed.
A second federal judge has issued an order blocking Donald Trump's plan to curtail birthright citizenship, saying no court in the United States has ever endorsed the Republican president's interpretation of the Constitution.
The Panama Canal Authority says it has not made any changes to charges or rights to cross the canal. The announcement comes after the State Department said that US government ships could make the crossing without paying any fees. The Trump administration has been toying with a plan for reform at the World Health Organization, including putting an American in charge of it as a condition for the US remaining a member. That's according to two sources familiar with the plan and a document reviewed by Reuters. And Argentina says it will also pull out of the WHO, its President Javier Milei citing deep differences over health management, particularly the COVID-19 pandemic. Over on markets, China is challenging Donald Trump's tariffs at the World Trade Organization, and shippers are warning of chaos. Kamal Crimmins is here with more.
So Beijing's move is the first stage of a dispute process, but its ability to get a ruling at the WTO is going to be stymied because the panel that settles trade disputes doesn't really function after the Trump administration blocked.
Tarunji, good evening. लगता है किसके एसएल जाएंगे पहले, बायर्स के या सेलर्स के क्रूड ऑयल में? ये सपोर्ट ब्रेक होगा पहले या फिर ये रेजिस्टेंस? क्योंकि किसी ना किसी एक को तो ब्रेक होना ही पड़ेगा मोमेंटम अगर आना है तो। फाइट अच्छी होगी यहाँ पे। बाकी नेचुरल गैस का ध्यान रखना, ये वीक रेजिस्टेंस लेवल है, थोड़ा रिस्क ले रहे हो तो क्वांटिटी कम ही रखना, नहीं तो अवॉइड भी कर सकते हो। बाकी लोगे तो मिनी वगैरह ट्राई कर सकते हो। WRL वीक रेजिस्टेंस लेवल, ऊपर एक रेजिस्टेंस थोड़ा दूर है और नीचे सपोर्ट भी, बीच में कोई नया सपोर्ट रेजिस्टेंस बनेगा तो वी विल सी दैट। गोल्ड के क्या लेवल हैं? ओवरऑल व्यू तो गोल्ड का बुलिश ही है फिलहाल के लिए। 7 PM पे एक डेटा आने वाला है, मेरे अकॉर्डिंग उसका वेट करना चाहिए, उसके बाद ही ट्रेड करना चाहिए, ज़्यादा सेफ रहेगा ट्रेड करने के लिए। बाकी वैसे आप देखोगे लेवल 15 मिनट टाइम फ्रेम पे एक बार देख लेते हैं, कल ऑल टाइम हाई मारा है मार्केट ने, कुछ रेजिस्टेंस अगर बनाया है तो एक सेकंड दो। ठीक है, ये देखो ऑल टाइम हाई का ये रेजिस्टेंस है इसका, कल 2-3 बार रेजिस्टेंस ले चुका है, 5 मिनट में भी था, 15 मिनट में ही बना दिया खैर अब तो। Any breakout above 2877 gives the fresh momentum. बाकी सपोर्ट देखोगे तो डे लो सपोर्ट ही है 2851, तो यही छोटी सी एक रेंज बना के बैठा हुआ है मार्केट। ओवरऑल व्यू बुलिश ही है, ध्यान रखना, ओवरऑल व्यू कहीं से भी बेयरिश नहीं लग रहा है फिलहाल के लिए। 7 PM का डेटा और 6:30 की कैंडल हो सकता है थोड़ा बहुत मूव करा दे, अदरवाइज जब तक इस रेंज के ऊपर है, जब तक आप कह सकते हो 2844 के ऊपर है, बुलिश ही है। 2877 के ऊपर ब्रेकआउट किया तो और बुलिश हो जाएगा। तो ये एक लास्ट रेजिस्टेंस, वैसे कल यहाँ से 5 मिनट में 15 मिनट में रेजिस्टेंस ले चुका है प्राइस, ध्यान रखियो, और सपोर्ट आज ही लिया है। 15 मिनट चार्ट रिमेंबर। अब सो रहा होगा, आई होप सो। $30 होने वाला है, न्यूयॉर्क सेशन की ओपनिंग है, ध्यान रखना। फोरकास्ट इन्वेंट्री का देखोगे आज नेचुरल गैस की, लास्ट टाइम -321 बुलियन था, इस बार -167 बुलियन, मतलब लास्ट टाइम के कंपैरिजन में थोड़ा सा ज़्यादा एक्सपेक्ट कर रहे हैं, माइनस का साइन है, ध्यान रखना। -167 इज ग्रेटर देन -321, तो फोरकास्ट तो ज़्यादा एक्सपेक्ट कर रहे हैं, तो अगर -167 बुलियन से ज़्यादा कुछ भी डेटा आता है तो ये नेगेटिव होना चाहिए प्राइस के लिए। तो फोरकास्ट के अकॉर्डिंग देखो, अगर डेटा आता है तो प्राइस को फॉल करना चाहिए। अब एग्जैक्ट डेटा कितना आता है ये देखना पड़ेगा, बट या फोरकास्ट के अकॉर्डिंग प्राइस को डाउन जाना चाहिए।
Of athletes.
For a lot of trans youth,
the government tries to get hold of land and then redistribute it to black farmers by paying for it and on a voluntary basis. The trouble is this just has done almost nothing to redress the situation.
And so what are Trump and Musk's complaints here?
Like भी करते रहो guys.
So Trump's claim
Don't forget to like the stream. 100 likes का target रखा हुआ है.
under this law, but there's not been even a single acre yet because they've only just passed it last month. Musk has been talking up this idea of a genocide against white farmers. This is an idea that tries to connect robberies on remote farms in which a farmer gets killed with the land reform and saying that actually they're connected. The problem with this is that there's about 20,000 murders in South Africa every year and only 50 of them are of white farmers. So it doesn't really stack up. It's often not really clear what their complaint is. But certainly the white farmers that they're speaking to, their complaint is that this nil compensation is going to violate property rights and scare off investment.
The war on women's sports is over.
President Trump has signed an executive order attempting to exclude transgender girls and women from female sports in schools. Schools that don't comply immediately can be cut off from federal funding. Supporters of the new order say it will restore fairness in sports, but critics and activists say it infringes on the rights of a tiny minority of athletes.
For a lot of trans youth out there, it just means, once again, their country's declaring war on them.
Kristen Worley is a transgender former professional cyclist. This is Trump's fourth executive order since taking office that restricts transgender rights. Reporter Dan Trotta has been looking at why this measure may go over differently than some of the others.
In general terms, the trans issue has been very partisan. That is, Democrats have supported trans rights and Republicans have sought to restrict them. In this case, there may be a little bit more of an overlap. This issue, when Trump spoke about it at his rallies during the campaign, got huge applause. He spent millions and millions of dollars on an advertisement that spoke to this issue. So it seems to have found an audience beyond the other trans issues.
The order is a novel interpretation of Title IX. Can you explain how?
Title IX is a federal law that bans discrimination in education on the basis of sex. Obama and Biden both had interpreted that to mean a ban on discrimination against transgender people. Trump now is trying to reverse that and say that what Title IX really does is protects non-transgender women and girls from competing against trans women and girls in sports. It will be interesting to see what the courts say.
And for today's recommended read, a Reuters exclusive on how Ukraine has seen a marked improvement in the accuracy of Russia's North Korean missiles. There's a link to the story in the pod description.
And for more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back.
News when you want it with Bloomberg News Now. I'm Karen Moscow alongside Nathan Hager, and we start with some breaking news. The Bank of England's Monetary Policy Committee voted to cut interest rates to a 19-month low, but struck a hawkish tone by signaling that only 2 more reductions are needed to bring inflation back to the 2% target. In a blow to Chancellor of the Exchequer Rachel Reeves, the BOE warned that inflation will rise quite sharply to peak at 3.7% later this year, up from 2.8% in the last forecast. This is a downgraded growth in its estimate of the economy's growth capacity or speed limit in the short term. Nathan?
Karen, we begin in Washington, where a split is building between Republicans on Capitol Hill over how to move forward on President Donald Trump's agenda. Senate Republicans have introduced a plan that would delay action on extending the president's 2017 tax cuts until Congress passes a second so-called budget reconciliation bill. That would prioritize Trump's effort to crack down on border security and unauthorized immigrants first. But House Speaker Mike Johnson has called for combining the border and taxes into one big bill. Republican Congressman Jason Smith says that's the right way to go.
The One Big Beautiful Bill is the best and quickest approach to get as many of the president's priorities delivered to his desk as possible. The House is focused on One Big Beautiful Bill. It's the Senate that continues to say that they're going to do two.
But fellow House Republican Byron Donalds tells Bloomberg's Balance of Power he's getting behind the Senate approach to send more resources to President Trump's border czar.
Tom Homan needs money today in order to get the repatriation of force that the president has said that the American people voted for up and running. We have to get debt ceiling through, and we need to do it without Democrat votes because Chuck Schumer is going to use that as leverage.
Now, President Trump plans to meet with Republican lawmakers today. He has said repeatedly he would like, quote, one big beautiful bill, but he's also said he'd be okay with more than one.
Well, Nathan, President Trump's proposal to take over Gaza and turn it into what he calls a Riviera continues to reverberate through Washington. Now some of the president's top aides are trying to tone down the idea. Here's White House Press Secretary Caroline Leavitt.
The president has not committed to putting boots on the ground in Gaza. He has also said that the United States is not going to pay for the rebuilding of Gaza.
And White House spokeswoman Caroline Leavitt says any relocation of Gaza's more than 2 million residents would be temporary. Secretary of State Marco Rubio says the president does not want the U.S. to own Gaza.
The only thing President Trump has done very generously, in my view, is offer the United States willingness to step in, clear the debris, clean the place up from all the destruction that's on the ground, clean it up of all these unexploded munitions.
Israelis have welcomed President Trump's talk of a reborn Gaza, but the Palestinian Authority says it rejects all calls for displacement of the Palestinian people from their homeland.
Well, meanwhile, Karen, Secretary of State Rubio says he will not attend a Group of 20 summit in Johannesburg later this month. Among the reasons he cites is South Africa's efforts to address inequality. The move adds strain to U.S.-South Africa relations. They have been tense due to South Africa's close ties with China and its refusal to condemn Russia's invasion of Ukraine.
Well, Nathan, today is the last day for federal workers to decide if they want to take up President Trump on his offer to quit their jobs. And Bloomberg's John Tucker is here with the latest. And, John, what's the response been so far?
Well, Karen, more than 40,000 workers signed up this as of yesterday. That is about 2% of the federal civilian workforce. And the administration expects a rush of applications in the final hours. The deadline to apply, the end of the day today. A government employee simply has to send the word resign from a government email account. President Trump and the head of his Department of Government Efficiency, Elon Musk, told the federal workers they'd be paid through the end of September if they took the offer. But federal employee unions, they question its legality. The head of the American Federation of Government Employees said in a statement that federal employees shouldn't be misled by what he called slick talk from unelected billionaires and their lackeys. I'm John Tucker, Bloomberg Radio.
Okay, John, thank you. The White House says Elon Musk will police himself and determine if there are conflicts of interest between his work reviewing federal spending and his overlapping empire of 6 companies. Musk's SpaceX has significant government contracts with NASA and the U.S. military. He's also CEO of Tesla, the electric car maker that's been the subject of multiple federal probes.
Well, turning to the markets now, Nathan, U.S. futures are higher following yesterday's gains on Wall Street. The 10-year Treasury yield is hovering near the lowest since mid-December after Treasury Secretary Scott Bessent told Fox Business that the focus is bringing down yields rather than the Fed's benchmark short-term interest rate.
He wants lower rates. He is not calling for the Fed to lower rates. If we get this tax bill done, if we get energy down, then rates will take care of themselves and the dollar will take care of itself. He and I are focused on the 10-year Treasury and what is the yield of that. I believe the bond market is recognizing that, as you and I talked about, energy prices will be lower and we can have non-inflationary growth.
And a programming note, Bloomberg's Saleha Mohsen speaks live with the Treasury Secretary today. Full coverage is at 1 p.m. Wall Street time on Bloomberg Radio and the Bloomberg podcast page on YouTube. And futures this morning are little changed. S&P and Dow futures, Nasdaq futures down 0.2%, and the 10-year Treasury yield at 4.42%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow alongside Nathan Hager, and this is Bloomberg.
Donald Trump has already changed the way we think about the US economy. Now he's back in the White House, and Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, head of government and economics at Bloomberg. Whatever the big question of
the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
You are a born skeptic, some might even say a cynic. You've built your career on questioning conventional wisdom, what people, what companies say. So when it comes to expectations for Trumponomics and the market under Donald Trump, what is the crowd perhaps getting wrong? What are they not seeing?
Well, I think that, and I've been posting that, I think the budget cuts are going to be a lot harder than people think. I mean, we're going after kind of the low-hanging fruit, both practically and politically right now, like the USAID stuff. But this is, and it is outrageous as some of the things that the DOGE committee is finding, and I agree that some of them are pretty silly. I think that materially, we're not really going to be able to do a lot until you get to kind of more serious items like Medicare, Medicaid, defense.
The third rail.
And yeah, the hot ticket third rail type stuff. And that's going to be much, much tougher. And so I think we're still in the early parts of sort of political theater on Trumponomics. And then, of course, we have the whole separate issue of tariffs.
And that gets me to the next question. I mean, you look at Trump's policies overall. They're both populist and, as you've described them, standard Republican. But so far, he's chosen to focus on trade war over, say, cutting taxes. So what does this tell you about Trumponomics in this second go-round rather than the first attempt?
Yeah, so, I mean, he obviously came right out of the gate with the tariffs over this past weekend that have been walked back temporarily. So it appears they're serious there. We'll see. The fact that Mexico and Canada kind of agreed to do things that they had already agreed to do. I mean, Mexico had 10 to 15,000 troops on its border going back to 2017 in a promise they made to Trump the first go-around and reiterated with Biden. So, again, how much is political theater? How much is real? We'll have to see. The China tariffs, I think, obviously are a lot more serious and are worth watching.
What's the economic risk?
Well, the economic risk, I mean, there's a couple of problems with the message, which is, well, if we charge enough tariffs, we really can eliminate things like the income tax and a lot of other sort of broad promises. And the fact of the matter is, I mean, tariffs, I think, brought in about $80 billion last year. And so, you know, in order for tariffs to replace the income tax, which is about $2 trillion of our $4 trillion in revenues, you got to have a lot of tariffs. Mm-hmm. So I don't think we're looking at that. I think the question is this being used as a national security cudgel as well as an economic cudgel, or is it strictly economics because they really believe they can raise a lot of money with tariffs? The numbers just kind of don't pencil out.
I am curious, though, when we talk about the potential overhang of this. I mean, I know in fairness to the Trump administration, it's only been a couple of weeks here, but the idea that now Mexico and Canada have won a 1-month reprieve, at least for investors and economic watchers, that's another month of uncertainty. Do you think we'll get more of a concrete policy, meaning an actual resolution of some form or another that will at least provide some certainty to the market? Whether the market likes it or not, that's a whole other conversation.
Yeah, well, I think drama is part of the message, Romaine. I mean, it was in the first administration. I don't see a whole lot different changing in this. I mean, the one thing you might at least point out in the past administration, for good or bad, I didn't have to check my X feed first thing in the morning to see what was coming out of the White House overnight. And so we're back to a much more volatile set of political pronouncements and streams and walkbacks, and it's a little more uncertainty.
Well, how much confidence do you have in the people around Trump? Because Trump himself, we know he's just sort of this vortex, but there are some relatively competent people around him, including the Treasury Secretary, who you have some familiarity with back when you were running Kinnikos.
I trained him.
He was one of your first analysts out there.
He was my first analyst.
So you liked him then. Do you still like him now?
I like Scott Bessent an awful lot. We don't share the same politics, but he's a man of real character, and I think he was probably the best man for the job, given the political arena. So I'm hoping he does well. I think he will do well, hopefully, and I know he has the country's best interests at heart.
And you did see him, but you didn't actually get to talk to him about what he's doing right now.
Well, I was able to see him and congratulate him after he got the nod. So he's got his hands full.
You've described the last few years as the golden age of fraud, funny accounting, questionable behavior on the parts of investors, of companies. How would you describe where we are now, given that the lines between government and business are pretty much blurred, more intertwined than ever? You've got Elon Musk running Doge. You've got the president selling his own meme coin. You've got regulators perhaps taking their hands off the wheel completely.
Yeah, I'm hard pressed to think that we're going to see less of it in the near term. It sure seems like we're going to see more of it. Look, this is a cycle the likes of which I've never seen, and the willingness of people to believe things that just simply aren't true, it never ceases to amaze me, particularly as the cycle carries on, and the willingness of management teams now to project way into the future and make all kinds of claims and promises. I think is also sort of unprecedented. It's always been there, but it's greater now. I've always said that bull markets place a premium on promises, and bear markets discount reality. And right now, there's lots of companies making lots of promises.
Lots of promises, but what is the reality? And I mean, and to Scarlett's point, you have some conflicts of interest in some of the folks who are. I don't know if they're in charge. I mean, they would say they're not in charge, but certainly sort of leading the charge in sort of trying to sort of root out whatever they think could potentially be bogging us down here. If you're not a friend of Elon Musk or a friend of Trump,
I think that's fair,
and you're running a company or an investment fund, should you be worried?
Yeah, I mean, I don't know. I don't know how personal it's all going to get to companies and individuals, but I am concerned that we have this whole new structure set up with people that are basically going in again. And if you read the president's executive order setting up the Doge Committee, which was an existing committee, the U.S. Digital Services Committee, it has no budgetary authority or even recommendations. It's set up as a technology and software consulting organization. So obviously the bailiwick has expanded to be something much greater than that. And the question will be, will at some point a federal judge somewhere say, wait a minute, this is, you're going beyond your purview, beyond your legal.
Does it undermine faith, though, in the system? I mean, particularly when I see people rooting around in the Treasury system. I mean, we can talk about USAID and some of these other things, but the Treasury, I mean, we're talking about the backbone of our economy, the backbone of our financial markets.
Structure. Yeah, I mean, we'll see. And we'll see to the extent when it goes beyond just, aerobic studies about shrimp and USAID and gets into Social Security and Medicaid payments and things like that. They're really serious, and then I think you're going to see if there's any pushback, it's going to be pretty serious.
I want to shift our conversation now to the tariffs on China, which you said are going to be much more serious. The U.S. began imposing an additional 10% tariff on Chinese goods, and Beijing's response was targeted tariffs on about 80 products, which hardly seems like a proportional response. What does this reveal? Does this indicate that China has more to lose from a trade war with the U.S. than the other way around?
I mean, the argument for the administration is that they do, right? That China has much more to lose. They're a much more export-driven country. We'll have to see. I mean, I think China probably feels it was proportional, and we don't know what discussions are going on behind the scenes. So I think, again, wait and see. But I think that 10% isn't going to do it, by the way. I mean, getting back to our early conversation about the amount of tariffs you need to raise serious revenues, you would have to raise them substantially on both China and the EU and we haven't seen that yet. So we'll have to see what exactly comes within 30 days, 60 days. Does it escalate, or does it cool off? And it was an early campaign promise that he's delivered on, and now he's moved on to something else.
But at the same time, this comes at a precarious time for China's economy. You've been warning for a long time about China's debt bubble and its broken economic model. What does the imposition of tariffs, now at an additional 10%, but perhaps going even higher, mean for that long-term decline?
Yeah, it doesn't help it, that's for sure, because China saw fewer reliance on net exports after 2010, when we first put out our warning, and that it's growing again. And part of that is due to the fact that the investment-driven model that we've been crying wolf about forever, albeit correctly, is losing its impetus to continue to grow. And the banking system is still bloated, and we've seen now problems in the residential real estate area completely trickle down into the actual developers. So they've got a model that really now is facing kind of a crossroads with what they're going to do. And the U.S. putting on major tariffs to one of their few thriving parts of the engine, the export manufacturing area, isn't going to help.
Jim, we look at the market. It's now 3 months after the election, and the S&P 500 is up about 4%, just about 1% shy of its record high. Isn't it still just a big, long trade right now? How significantly different is the market under Trump than it was under Biden?
Well, it did pretty well under Biden. It did pretty well under Trump first go-around, too. So it's done pretty well under both administrations. And historically, the equity markets have done better under Democratic administrations than Republican administrations. Everyone kind of forgets that. But it's hard-pressed to see, if you just look at the continuity of the last 8 or 9 years, or even going further back, where the elections were, because really the market's done pretty well under all administrations.
And because it's done so well, there's little institutional appetite for short selling. And just over a year ago, you converted your hedge fund into a family office and an advisory because of that. We recently saw activist short seller Nate Anderson quit as well, shutting down Hindenburg Research. Is the traditional short selling strategy just dead now?
Well, so there's two different models there that you've referenced. The sort of traditional model that we employed for better part of 40 years, which was just simply putting on short positions, hedged or unhedged, for our clients who were looking for that exposure. And then there's the short activist model, which people like Nate and others have perfected or really done well with. And so I think it's almost two different questions. There is virtually very little appetite for a short-oriented fund product, even if it's hedged. Now, a lot of that is the advent of the so-called pod shops, the multi-manager shops, which have done a pretty good job of delivering returns with very little net exposure, which is what the long-short industry did for years and years and years. That changed. The long-short industry morphed into basically mostly long on the hedge fund side. But I think that I think there's always a market for insurance, as I've said. And remember that good fundamental short positions allow you to be more long. That's always been the point, that they allow you to finance your longs. So for us, it was passive, right? We bought the indices and had our short portfolio. And by the way, Bloomberg has a wonderful short index in its in the terminal, the Goldman Sachs Most Shorted Index. It's rebalanced monthly. If you looked at that since the GameStop episode, where everybody has basically said short selling is dead, the risks are too high, and you simply shorted that index, bought the S&P or a related passive index, rebalanced monthly, that return has been spectacular. And so there's still alpha on the short side. It's just nobody thinks it's there anymore.
That's on a more of an index level. What about on an individual
stock
level?
That index is actually individual stocks.
It is
the most
individual
shorted
stocks.
The most shorted stocks. It's a representative portfolio of very dicey companies, a lot of which we were short.
Well, but what's the risk out there? I mean, we talk about, we've sort of written all these headlines about the demise, and I know it's not completely dead, but we talk about, short bias funds down like 70% since the financial crisis, but even activist campaigns. I saw last year was like a record low, despite all the headlines that we got out of all these companies like Starboard and a few others. It was a record low year for activist campaigns. Is that a reflection of market dynamics, or is that more of a reflection of public and political dynamics?
I think it's both. I mean, it's remember. The market prices are people's, facts, people's opinions based on facts, and so people have gotten much more bullish over general political level of regulation, the promises that companies made, and we talked about earlier. So, these are all part of a bull market. It's just the cycle has lasted a lot longer than a lot of people would have thought, including me. But I think that can change too, and so the problem is that price levels and where we are in that part of the cycle don't give you a good sense of timing. Yeah. They do give you a good sense of how much risk you're taking should the timing change.
It feels like there's a lot of risk in this market right now. When you look at public market valuations, whether on an index level or an individual stock level, valuations are high. You look in technology, you go deeper into AI, the valuations are even higher. Yeah. Can you make a case that there is a bubble out there?
And speculation is there, Romain. Not quite as where it was in 2021, which was the most speculative market I've seen. But it's getting back there. The speculation in meme coins, again, where just people are floating these things.
So you did not buy the Melania coin, is what you're telling us.
Yeah. I didn't buy the Enron coin that was floated yesterday, by the way. So there you go. So I think that these are all signs. And what we haven't seen yet, which we saw in 2021, but I suspect we will see soon, is a lot of issuance. As I've always said, that Wall Street has a printing press too, just like the Fed. And once that printing press goes and everybody gets filled, generally you end up with some heavier weather, as we did in 2022. Haven't seen it yet. I suspect we will.
I want to get your thoughts on DeepSeek, the revelation of DeepSeek and its technological breakthrough, a cheaper, more efficient AI model. Does it help answer the question of whether we're in an AI bubble?
Well, what I pointed out when it came out, and I know nothing about LLM models or any of that, which one is better, is it underscores the risks of disruptive technology. And that is, when you are betting on disruptive technology, you have to always consider the risk that technology will be disrupted itself by a better mousetrap, the kid in the garage. We can talk about all of the possible risks, and that's something coming out of left field that I think can change the argument. So I think that's what DeepSeek underscored, was that, well, wait a minute, maybe there's a way to do AI with less capex, less chips, cheaper. And nobody had kind of really considered that until DeepSeek. Now, I don't know that DeepSeek dethrones the other models. It's beyond my pay grade. But it does underscore the risks of paying multiples of revenue that are historically considered, egregious. And now we have companies routinely trading at 20, 30, 40 times revenues.
Yeah.
And so that gives you an idea of the risk in those businesses.
I look at Palantir and how well it's done, and it's talk about untamed organic growth. So at least when it comes to big tech and AI, this threat of disruptive technology, do you see any evidence that institutional investors maybe have an appetite to start hedging or looking to protect against some of those positions?
Well, they should. I don't know if I'm seeing it yet, but they should. And as I said, there's and the other thing that I'll just mention about disruptive technology is in the up phase of it, as we saw in the late 90s when the internet, which was certainly a disruptive technology, everything is a positive. The internet will affect all things positively. And in fact, what we found, and what I and my clients made a lot of money on from 2000 to 2010, was how many businesses got unfortunately disrupted by the internet, how many businesses went away. And I suspect that's going to be the same thing in AI that not a lot of people are talking about yet. I mean, AI is a very revolutionary technology and will be benefiting lots of things and hopefully humanity. But by definition, it will put a lot of business models out of business.
Yeah, and we're already starting to hear talk about that. And I was interested in how so many people were dismissive of DeepSeek and its founders. And I know there are a lot of questions about exactly what they did and how they paid for it. But we saw that same dismissiveness back during the computer era when that was coming up. And of course, during the dot-com bubble, what led up to the dot-com bubble, a lot of the giants today, I mean, people scoffed at Jeff Bezos and Amazon. People scoffed at what Apple and Steve Jobs were doing.
Right. And again, those companies had big valuations in the up part of the cycle. But what everybody forgets about Amazon, for example, is the 290+% declines it had in 02, 03, and 07, 08 along the way. And for me to tell investors, well, that's fine. But by the way, when you're down 95%, tell me if you're still holding and adding to the position. Number one. Number two, we then forget about the America Onlines, the Yahoos, the Ask Jeeves, the businesses that.
I remember them. I still mock them to this day. But do we also forget about, I mean, the Enrons, the WorldComs, and all that? Because how am I supposed to believe that all of these companies that are trying to sell their AI product and giving numbers as to what they're selling are on the up and up, particularly because we don't have a Jim Chanos out there rattling the cages, maybe to the same extent.
I'm still trying occasionally. Occasionally, Jermaine.
Yeah.
But that's, you underscore an important part that fundamental short sellers play, whether fund managers or activists. And that is, they're still the only ones incentivized in real time, other than journalists, to point this stuff out.
As we wrap up our conversation here, if investors are indeed less sensitive to valuations, and that certainly seems to be the case over the last couple years, and passive funds are driving a lot of the price action, the inflows there, what is the impact on the health of markets overall? And I mean, I guess you could expand that to capitalism.
So I've had this discussion with my friend Mike Green, who's been talking about this now for years, about passivity and the impact on markets. And will it just simply lead to more disruptive events, meaning everyone going one side of the boat, but then going to the other side of the boat, so flows become much, much more important. I mean, I certainly kind of hope that's not the case in extremis. It's certainly happening now, because the fact of the matter
You are a born skeptic, some might even say a cynic. You've built your career on questioning conventional wisdom, what people, what companies say. So when it comes to expectations for Trumponomics and the market under Donald Trump, what is the crowd perhaps getting wrong? What are they not seeing?
Well, I think that and I've been posting that I think the budget cuts are going to be a lot harder than people think. I mean, we're going after kind of the low-hanging fruit, both practically and politically right now, like the USAID stuff. But this is, and it is outrageous as some of the things that the Doge Committee is finding, and I agree that some of them are pretty silly. I think that materially, we're not really going to be able to do a lot until you get to kind of more serious items like Medicare, Medicaid, defense.
The third rail.
And yeah, the hot ticket third rail type stuff, and that's going to be much, much tougher. And so I think we're still in the early parts of sort of political theater on Trumponomics. And then, of course, we have the whole separate issue of tariffs.
And that gets me to the next question. I mean, you look at Trump's policies overall. They're both populist and, as you've described them, standard Republican. But so far, he's chosen to focus on trade war over, say, cutting taxes. So what does this tell you about Trumponomics in this second go-round rather than the first attempt?
Yeah, so, I mean, he obviously came right out of the gate with the tariffs over this past weekend that have been walked back temporarily. So it appears they're serious there. We'll see. The fact that Mexico and Canada kind of agreed to do things that they had already agreed to do. I mean, Mexico had 10 to 15,000 troops on its border going back to 2017 in a promise they made to Trump the first go-around and reiterated with Biden. So again, how much is political theater? How much is real? We'll have to see. The China tariffs, I think, obviously are a lot more serious and are worth watching.
What's the economic risk?
Well, the economic risk, I mean, there's a couple of problems with the message, which is, well, if we charge enough tariffs, we really can eliminate things like the income tax and a lot of other sort of broad promises. And the fact of the matter is, I mean, tariffs, I think, brought in about $80 billion last year. And so, in order for tariffs to replace the income tax, which is about $2 trillion of our $4 trillion in revenues, you got to have a lot of tariffs. So I don't think we're looking at that. I think the question is this being used as a national security cudgel as well as an economic cudgel, or is it strictly economics because they really believe they can raise a lot of money with tariffs? The numbers just kind of don't pencil out.
I am curious, when we talk about the potential overhang of this. I mean, I know in fairness to the Trump administration, it's only been a couple of weeks here, but the idea that now Mexico and Canada have won a 1-month reprieve, at least for investors and economic watchers, that's another month of uncertainty. Do you think we'll get more of a concrete policy, meaning an actual resolution of some form or another that will at least provide some certainty to the market? Whether the market likes it or not, that's a whole other conversation.
Yeah, well, I think drama is part of the message, Romaine. I mean, it was in the first administration. I don't see a whole lot different changing in this. I mean, the one thing you might at least point out in the past administration, for good or bad, I didn't have to check my X feed first thing in the morning to see what was coming out of the White House overnight. And so, we're back to a much more volatile set of political pronouncements and streams and walkbacks, and it's a little more uncertainty.
Well, how much confidence do you have in the people around Trump? Because Trump himself, we know he's just sort of this vortex, but there are some relatively competent people around him, including the Treasury Secretary, who you have some familiarity with back when you were running Kinnikos.
I trained him.
He was one of your first analysts out there.
He was my first analyst.
So you liked him then. Do you still like him now?
I like Scott Bessent an awful lot. We don't share the same politics, but he's a man of real character, and I think he was probably the best man for the job, given the political arena. So I'm hoping he does well. I think he will do well, hopefully, and I know he has the country's best interests at heart.
And you did see him, but you didn't actually get to talk to him about what he's doing right now.
Well, I was able to see him and congratulate him after he got the nod. So he's got his hands full.
You've described the last few years as the golden age of fraud, funny accounting, questionable behavior on the parts of investors, of companies. How would you describe where we are now, given that the lines between government and business are pretty much blurred, more intertwined than ever? You've got Elon Musk running Doge. You've got the president selling his own meme coin. You've got regulators perhaps taking their hands off the wheel completely.
Yeah, I'm hard pressed to think that we're going to see less of it in the near term. It sure seems like we're going to see more of it. Look, this is a cycle the likes of which I've never seen, and the willingness of people to believe things that just simply aren't true, it never ceases to amaze me, particularly as the cycle carries on, and the willingness of management teams now to project way into the future and make all kinds of claims and promises, I think is also sort of unprecedented. It's always been there, but it's greater now. I've always said that bull markets place a premium on promises, and bear markets discount reality. And right now, there's lots of companies making lots of promises.
Lots of promises, but what is the reality? And I mean, and to Scarlett's point, you have some conflicts of interest in some of the folks who are. I don't know if they're in charge. I mean, they would say they're not in charge, but certainly sort of leading the charge in sort of trying to sort of root out whatever they think could potentially be bogging us down here. If you're not a friend of Elon Musk or a friend of Trump,
I think that's fair,
and you're running a company or an investment fund, should you be worried?
Yeah, I mean, I don't know. I don't know how personal it's all going to get to companies and individuals, but I am concerned that we have this whole new structure set up with people that are basically going in again. And if you read the president's executive order setting up the DOGE committee, which was an existing committee, the U.S. Digital Services Committee, it has no budgetary authority or even recommendations. It's set up as a technology and software consulting organization. So obviously the bailiwick has expanded to be something much greater than that. And the question will be, will at some point a federal judge somewhere say, wait a minute, this is, you're going beyond your purview, beyond your legal.
Does it undermine faith, though, in the system? I mean, particularly when I see people rooting around in the Treasury system. I mean, we can talk about USAID and some of these other things, but the Treasury, I mean, we're talking about the backbone of our economy, the backbone of our financial markets.
Structure. Yeah, I mean, we'll see.
Yeah.
And we'll see to the extent when it goes beyond just, aerobic studies about shrimp and USAID and gets into, Social Security and Medicaid payments and things like that. They're really serious. And then I think you're going to see, if there's any pushback, it's going to be pretty serious.
I want to shift our conversation now to the tariffs on China, which you said are going to be much more serious. The U.S. began imposing an additional 10% tariff on Chinese goods, and Beijing's response was targeted tariffs on about 80 products, which hardly seems like a proportional response. What does this reveal? Does this indicate that China has more to lose from a trade war with the U.S. than the other way around?
I mean, the argument for the administration is that they do, right? That China has much more to lose. They're a much more export-driven country. We'll have to see. I mean, I think China probably feels it was proportional, and we don't know what discussions are going on behind the scenes. So I think, again, wait and see. But I think that 10% isn't going to do it, by the way. I mean, getting back to our early conversation about the amount of tariffs you need to raise serious revenues, you would have to raise them substantially on both China and the EU, and we haven't seen that yet. So we'll have to see what exactly comes within 30 days, 60 days. Does it escalate, or does it cool off? And it was an early campaign promise that he's delivered on, and now he's moved on to something else.
But at the same time, this comes at a precarious time for China's economy. You've been warning for a long time about China's debt bubble and its broken economic model. What does the imposition of tariffs, now at an additional 10%, but perhaps going even higher, mean for that long-term decline?
Yeah, it doesn't help it, that's for sure, because, I mean, China saw fewer reliance on net exports after 2010 when we first put out our warning, and that it's growing again. And part of that is due to the fact that the investment-driven model that we've been crying wolf about forever, albeit correctly, is losing its impetus to continue to grow. And the banking system is still bloated, and we've seen now problems in the residential real estate area completely trickle down into the actual developers. So they've got a model that really now is facing kind of a crossroads with what they're going to do. And the U.S. putting on major tariffs to one of their few thriving parts of the engine, the export manufacturing area, isn't going to help.
Jim, we look at the market. It's now 3 months after the election, and the S&P 500 is up about 4%, just about 1% shy of its record high. Isn't it still just a big, long trade right now? How significantly different is the market under Trump than it was under Biden?
Well, I mean, it did pretty well under Biden. It did pretty well under Trump first go-round, too. So it's done pretty well under both administrations. And historically, the equity markets have done better under Democratic administrations than Republican administrations. Everyone kind of forgets that. But it's hard-pressed to see if you just look at the continuity of the last 8 or 9 years, or even going further back, where the elections were. Because, I mean, really, the market's done pretty well under all administrations.
And because it's done so well, there's little institutional appetite for short selling. And just over a year ago, you converted your hedge fund into a family office and an advisory because of that. We recently saw activist short seller Nate Anderson quit as well, shutting down Hindenburg Research. Is the traditional short selling strategy just dead now?
Well, I mean, so there's two different models there that you've referenced. The sort of traditional model that we employed for better part of 40 years, which was just simply putting on short positions, hedged or unhedged, for our clients who were looking for that exposure. And then there's the short activist model, which people like Nate and others have perfected or really done well with. And so I think it's almost two different questions. There is virtually very little appetite for a short-oriented fund product, even if it's hedged. Now, a lot of that is the advent of the so-called pod shops, the multi-manager shops, which have done a pretty good job of delivering returns with very little net exposure, which is what the long-short industry did for years and years and years. That changed. The long-short industry morphed into basically mostly long on the hedge fund side. But I think that I think there's always a market for insurance, as I've said. And remember that good fundamental short positions allow you to be more long. That's always been the point, that they allow you to finance your longs. So for us, it was passive, right? We bought the indices and had our short portfolio. And by the way, I mean, Bloomberg has a wonderful short index in its in the terminal, the Goldman Sachs most shorted index. It's rebalanced monthly. And if you looked at that since the GameStop episode, where everybody has basically said short selling is dead, you know, the risks are too high, and you simply shorted that index, bought the S&P or a related passive index, rebalanced monthly, that return has been spectacular. And so there's still alpha on the short side. It's just nobody thinks it's there anymore.
But that's on more of an index level. What about on an individual
well,
stock level?
That index is actually individual stocks.
It is individual stocks.
The most shorted stocks. It's a representative portfolio of very dicey companies, a lot of which we were short.
Well, but what's the risk out there? I mean, we talk about, I mean, we've sort of written all these headlines about the demise, and I know it's not completely dead, but we talk about, I mean, short bias funds down like 70% since the financial crisis, but even activist campaigns. I saw last year was like a record low, despite all the headlines that we got out all these companies like Starboard and a few others. It was a record low year for activist campaigns. Is that a reflection of market dynamics, or is that more of a reflection of public and political dynamics?
I think it's both. I mean, it's remember. I mean, the market prices are people's, facts, people's opinions based on facts, and so people have gotten much more bullish over general political level of regulation, the promises that companies made, and we talked about earlier. So, I mean, these are all part of a bull market. I mean, it's just the cycle has lasted a lot longer than a lot of people would have thought, including me. But I think that can change too, and so the problem is that price levels and where we are in that part of the cycle don't give you a good sense of timing. They do give you a good sense of how much risk you're taking should the timing change.
It feels like there's a lot of risk in this market right now. When you look at public market valuations, whether on an index level or an individual stock level, valuations are high. You look in technology, you go deeper into AI, the valuations are even higher. Can you make a case that there is a bubble out there?
And speculation is there, Romain. Not quite as where it was in 2021, which was the most speculative market I've seen. But it's getting back there. I mean, the speculation in meme coins, again, where just people are floating these things.
So you did not buy the Melania coin, is what you're telling us.
I didn't buy the Enron coin that was floated yesterday, by the way. So there you go. So I think that these are all signs. And what we haven't seen yet, which we saw in 2021, but I suspect we will see soon, is a lot of issuance. As I've always said, that Wall Street has a printing press too, just like the Fed. And once that printing press goes and everybody gets filled, generally you end up with some heavier weather, as we did in 2022. Haven't seen it yet. I suspect we will.
I want to get your thoughts on DeepSeek, the revelation of DeepSeek and its technological breakthrough, a cheaper, more efficient AI model. Does it help answer the question of whether we're in an AI bubble?
Well, what I pointed out when it came out, and I know nothing about LLM models or any of that, which one is better, is it underscores the risks of disruptive technology. And that is, when you are betting on disruptive technology, you have to always consider the risk that technology will be disrupted itself by a better mousetrap, the kid in the garage. We can talk about all of the possible risks, and that's something coming out of left field that I think can change the argument. So I think that's what DeepSeek underscored, was that, well, wait a minute, maybe there's a way to do AI with less capex, less chips, cheaper. And nobody had kind of really considered that until DeepSeek. Now, I don't know that DeepSeek dethrones the other models. It's beyond my pay grade. But it does underscore the risks of paying multiples of revenue that are historically considered egregious. And now we have companies routinely trading at 20, 30, 40 times revenues. And so that gives you an idea of the risk in those businesses.
I look at Palantir and how well it's done, and it's talk about untamed organic growth. So at least when it comes to big tech and AI, this threat of disruptive technology, do you see any evidence that institutional investors maybe have an appetite to start hedging or looking to protect against some of those positions?
Well, they should. I don't know if I'm seeing it yet, but they should. And as I said, there's and the other thing that I'll just mention about disruptive technology is in the up phase of it, as we saw in the late 90s when the internet, which was certainly a disruptive technology, everything is a positive. The internet will affect all things positively. And in fact, what we found and what I and my clients made a lot of money on from 2000 to 2010 was how many businesses got unfortunately disrupted by the internet, how many businesses went away. And I suspect that's going to be the same thing in AI that not a lot of people are talking about yet. I mean, AI is a very revolutionary technology and will be benefiting lots of things and hopefully humanity. But by definition, it will put a lot of business models out of business.
Yeah, and we're already starting to hear talk about that. And I was interested in how so many people were dismissive of DeepSeek and its founders. And I know there are a lot of questions about exactly what they did and how they paid for it. But we saw that same dismissiveness back during the computer era when that was coming up. And of course, during the dot-com bubble, what led up to the dot-com bubble, a lot of the giants today, I mean, people scoffed at Jeff Bezos and Amazon. People scoffed at what Apple and Steve Jobs were doing.
Right. And again, those companies had big valuations in the up part of the cycle. But what everybody forgets about Amazon, for example, is the 290+% declines it had in 02, 03, and 07, 08 along the way. And for me to tell investors, well, that's fine. But by the way, when you're down 95%, tell me if you're still holding and adding to the position. Number one. Number two, we then forget about the America Onlines, the Yahoos, the Ask Jeeves, the businesses that.
I remember them. I still mock them to this day. But do we also forget about, I mean, the Enrons, the WorldComs, and all that? Because how am I supposed to believe that all of these companies that are trying to sell their AI product and giving numbers as to what they're selling are on the up and up, particularly because we don't have a Jim Chanos out there rattling the cages, maybe to the same extent.
I'm still trying occasionally. Occasionally, Romaine.
Yeah.
But that's you underscore an important part that fundamental short sellers play, whether fund managers or activists, and that is they're still the only ones incentivized in real time, other than journalists, to point this stuff out.
As we wrap up our conversation here, if investors are indeed less sensitive to valuations, and that certainly seems to be the case over the last couple years, and passive funds are driving a lot of the price action, the inflows there, what is the impact on the health of markets overall? And I mean, I guess you could expand that to capitalism.
So I've had this discussion with my friend Mike Green, who's been talking about this now for years, about passivity and the impact on markets. And will it just simply lead to more disruptive events, meaning everyone going one side of the boat, but then going to the other side of the boat, so flows become much, much more important. I mean, I certainly have hope that's not the case in extremis. It's certainly happening now, because the fact of the matter is that if we can't differentiate valuations, if it's all just a matter of flows, then an important part of capitalism and the signaling mechanism in capitalism is broke. Right? You don't want to be sending a lot of money to the Enrons and WorldComs and Theranoses of the world. You know, you want to be sending it to the Amazons. And so we hope that the market starts differentiating these beyond just simple flows and narratives and positioning and all the things that everybody watches now like a hawk day to day and hour to hour. Because if not, we got a bigger problem with capitalism.
Final question to you. What's the single biggest risk you see in the next 6 to 12 months?
Something that I don't see, probably. I mean, by definition, it's the stuff that, exactly. I mean, look, I think the political theater is going to get ratcheted up. It sure seems that way, that we're heading to kind of an issue where Congress is going to have to say, well, I'm just going to abrogate my entire responsibility to the executive branch. So I suspect day to day it'll be politics, but the real risks will be something like DeepSeek that comes out of left field that changes people's thinking, and by definition we don't know what that is.
Good morning from our global headquarters in New York. I'm Manny Skrenny. You're welcome to Bloomberg Brief. Let's set that agenda. Trade war fallout. Beijing weighs formalizing a probe into Apple. The U.S. Postal Service halts inbound parcels from China. President Trump proposes a U.S. takeover of Gaza, sparking a rebuke from Palestinians and Arab officials. And a bad day for tech. Alphabet and AMD tumbled on disappointing earnings. Qualcomm is up next. Good morning. We shift from a managed de-escalation on tariffs and trade yesterday to the reality of tech in search and chips, and also the obfuscation by the United States Postal Service in terms of packages from China. This is about a risk to the tech composite. That's really what the market is worried about. Alphabet took $200 billion off its market cap last night. We'll talk more about that in detail. Bucking that trend is Meta, up 12 sessions in a row. Roll it over, have a look at the bond market. The risk is this, that you have a macro slowdown as a result of tariffs, job openings at a 3-month low, and an abundance of caution from the Fed. Yields down 3 basis points this morning as we see this equity market, really the shine come off it from tech, so money flows to bonds. Goolsbee, Bowman and Jefferson up today. Will they add to the abundance of caution that has been proposed by Mary Daly and Austin Goolsbee yesterday? So those bond markets are picking up the slack. They are the defense to the equity storm this morning. There are individual names that are on the move. AMD is top of that list, dropping as the Chipmaker reported data center revenue that was weaker than expected, despite growing by double digits. It was all about the guidance, down 8.5%. JD.com also falling as the U.S. Postal Service temporarily suspending inbound international packages from China and Hong Kong. And Apple down. Bloomberg reporting that China's antitrust watchdog is laying the groundwork to formalize a probe into Apple's practices. And this is around the fees at the App Store. In just a few moments, Monica Defend from Amundi Investments Institute joins me to discuss first reaction to those breaking headlines this morning from China. And Marvin Lowe from State Street. What are you worried about in the bond markets? Well, the trade war has begun to take effect. The United States Postal Service temporarily halting those inbound packages from China and Hong Kong. Shares for Chinese retailers, as we said, Alibaba, JD.com, on the back foot this morning pre-market. Meanwhile, you've got China's antitrust watchdog formalizing the groundwork for a potential probe into Apple's policies on their fees that they charge the app developers. It's been running for a while. Apple is down pre-market. China's Ministry of Foreign Affairs called for diplomacy.
What we need now is not unilateral additional tariffs, but dialogue and consultation based on equality and mutual respect.
Joining me now to run through the escalation, Brendan Murray. Brendan, I look at the United States Postal Service and I ask myself, intended or unintended consequences. But I look at the language from China, but then this probe, the escalation on these antitrust probes is perhaps the more malevolent kicker here.
Yeah, exactly. So these are basically just the latest jabs that we're seeing the U.S. and China throw at each other in a brewing trade war. The U.S. Postal Service move on the U.S.'s part is really aimed at closing a loophole, a big loophole. There are something like 1 million or 2 million small packages arriving into the U.S. through e-commerce channels. A big one of those is from China. And so, and the thinking from the Trump administration is that there could be fentanyl being smuggled into these smaller packages, and just basically tariff avoidance in general. So they're closing down those channels. The Apple move on China's part is definitely an interesting move in that China is saying to the U.S., how are we going to hit back at you? We're going to hit you where it hurts, and that's your big tech companies that lead the world in a lot of different ways. So interesting steps, just gradual steps at this stage. There's no giant escalation of anything, but just a kind of tit for tat. You hit us, we're going to hit you back, going back and forth in now week 3 of the Trump administration.
Yeah, it started yesterday with tit for tat. It sort of shifted gears in the past couple of hours. Brendan, thank you very much. Brendan Murray there. Joining me now is Monica Defend, head of Amundi Investment Institute. Good to have you with us, Monica. Look, we're in the foothills of a trade war. We're 13 days on from DeepSeek. And these antitrust investigations into Intel Alphabet and Nvidia. How do you assess these moves relative to what was seen yesterday as a calibrated response from the Chinese?
Well, I really think that what is clear is that both the US and China are playing this chess game. That is not something that started yesterday or last week. It's really something more strategic. And what China is doing has been progressively reducing its dependence import-wise from the US. In 5 years, they reduced 8% the quantity of imports from the US, while the kind of bargaining that we are seeing is really leaving them the room for further bargaining. So it's not really an attack, an hard one, what we are seeing, but they are leaving the room for further discussion. And what China is doing is really targeting on those goods, energy, where they might have some alternatives. And let's do not forget that China has also the room on the fiscal side. So I'm not saying that these tariffs war won't be a drag on growth. In general, this will be a drag for who is imposing and who is receiving the tariffs. But they might play it out, and we will wait for March to see how the fiscal response will be sized out of China.
Well, China can always rely on Saudi Arabia, as it were, to turn on that export tap. Exactly. Monica, when it comes to risk, you're becoming more discerning on the U.S. Is that targeted to equities or just a general step back? And is it directly as a result of tariff escalation?
Well, I think that the asset classes that are really responding to tariffs are notably FX and equities. On the fixed income market is still under the umbrella of the Fed, of the central banks, still in a restrictive territory, but on the way to lower rates, although this will come later in the year. While when it goes to the U.S. equity market, still it's overvalued, concentrated, so it is really a matter of being selective, quality, high dividend stocks where you might but stay out of technology, for example. While on the FX, probably we will still see king U.S. dollar, which is not unstoppable, but will remain strong as being one of the major diversifier in an asset allocation perspective. So king dollar, queen, volatility for the time being.
Often we look for the unintended consequences. People are floating the idea that the Bank of Canada could go for an intermeeting cut now. People are floating the idea that China will be provoked into a much more significant and serious stimulus response. These unintended consequences can have a pro-risk narrative for alternative markets to the United States, so long as tariff and trade war doesn't run away with itself.
Well, it really depends how these tariffs will be displayed in terms of target countries or sectors, in terms of sequencing, when, smooth, all at once, and in terms of size. For this, we are going back really on the macro fundamentals, seeing who is exposed, who is less exposed, not only at country level, but at sector level, just to seek for alternatives to the U.S. market. And notably in Europe, you might find some nice alternatives. Look at small cap, look at the financials, for example.
Well, the EU, we have a line this morning there preparing in terms of how they actually go about defending themselves. It's interesting because European equities have actually outperformed US equities along with European investment grade relative to the rest of the world. Is that just a short-term blip, or is that something about a tail risk that can improve for Europe?
Well, Europe is starting from a much lower level and undervalued equity market. So if I flag the relation between China and US a chess game, probably in Europe it's more volleyball match. And it is really important that this does not turn into a beach volley. So the problem that I see is that the Trump administration might push into cracks within the euro. We need really a cohesive answer to the posture of the policy administration shift in the U.S.
Is Europe really prepared for what might be coming towards it from the United States?
Well, we are very good when a crisis comes into reaction. So if you want to see the glass half full, this might push further into some of the structural reforms of the spending that are desperately needed. We are just discussing the investment in defense, which is not a trivial discussion, but probably I would see this as an accelerator towards better moments for Europe.
Well, the line from Europe this morning is preparing for a proportionate response. It just depends what President Trump levies on Europe in the first instance. Monica, thank you very much. Recalibrating risk. Monica Defender at Amundi Investment Institute. Other stories trending on your Bloomberg terminal. This is what I've got for you this morning. The Nikkei reports that Nissan is pulling out of its deal with Honda after the two companies failed to reach a consensus. That's after 7 weeks of talks, and friction emerged over Honda's proposal for a complete acquisition. Nissan's future is unclear as it faces an outdated product lineup and a shaky leadership. Novo Nordisk expects sales to surge again this year as the drug maker builds supply for the blockbuster diabetes medicine Ozempic and obesity treatment Wegovy. Now, shares climbed after it reported the forecast and better than expected results. The company signaled it will continue to struggle to meet demand this year. Santander said it intends to buy back $10.4 billion of shares over the coming years as it posted another record profit. It partly reflects an ongoing effort to move low-yielding assets off its balance sheet and deploy the capital for new business instead. Shares hit the highest level since 2018 on the announcement. It is all about tech stumbling, Alphabet to be specific. A disappointing outlook for the cloud. What does it mean for the business? We'll tell you that in just a moment on Bloomberg. Bloomberg Brief, I'm Manus Crenny here in New York. Well, the tech earnings are rolling in and they are dragging the markets lower today. Alphabet sliding pre-market after reporting revenue miss in the fourth quarter. Joining us now, it is Matt Bloxham from Bloomberg Intelligence to run through the numbers. I mean, Matt, when you look at this cloud business, up 30%, less than the market had thought, but they're telling us, look, we are constrained. So this is part of the challenge for them. We've got cloud, but we're constrained by what we can do.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump's creative suggestion. The U.S. president's aides seek to tone down his proposal of a Gaza takeover after global condemnation. Beijing takes fresh steps in response to U.S. tariffs, calling for trade talks at the WTO. The U.S. Postal Service, meanwhile, reverses its decision to halt shipments from China and Hong Kong. And Qualcomm and ARM fall in late trading. Slowing smartphone growth concerns hit Qualcomm, while a tepid revenue forecast hurts ARM shares. It's just gone 8 a.m. across the Emirates. I'm Jemana Versace in Dubai, getting you up to speed on the markets this morning. Second positive day in the row for the S&P, so rebounding from some of that down performance that we had on Monday. But since then, we are leaning towards the green. Today, futures are up about 0.1%. And a lot of those so-called tariff trades have actually started to be unwound in global markets in the last couple of sessions. So 10-year yields actually rallied 9 basis points yesterday. Really strong rally. Remember, we've been talking about 4.5% as sort of being that line in the sand, a support level for 10-year yields. Broke through that yesterday on the weaker services print out of the U.S. The dollar also today slightly firmer, but the theme for the USD, again, has been one of weakness and declines the last few sessions, trading at the lowest level in the past 5 days. So a lot of those macro Trump trades have been priced out of the market in the last couple of sessions. Brent also in focus today, up about 0.1%, but we did fall as much as 2% in trading yesterday. yesterday, and this on a buildup of stockpiles coming out of the U.S. So again, fundamentals beginning to trump some of the geopolitical concerns that we have been talking about. Switching over, I also just want to point out today is a central bank meeting day. We've got the Bank of England coming up. The market is 90% pricing in a 25 basis point rate cut. But this is a really good chart because it just shows the two twin focuses of the Bank of England. On growth, on one hand, you've got growth stagnating. Basically, the UK economy isn't really growing. It's growing at around 0%, so not growing at all. And at the same time, we have seen a small acceleration in inflation towards the end of last year. Services inflation still continues to put upward pressure on the UK economy, even though the prints have started to show some signs of deceleration. But these are the two aspects that the Bank of England have to weigh when thinking about the path ahead for interest rate policy. So I'll park that there, and we'll talk more about the Bank of England later with Lizzie Burden. But for now, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio, and I guess a more positive reaction today for some of these markets.
Yeah, Jumana, I mean, you look at the price action this week, volatility has really been the name of the game. Earlier, we saw on Monday stocks coming under pressure given those tariff concerns. So today, it's that continued calm or semblance of it that's returning. And we're seeing stocks in Asia mostly higher, including Chinese shares. Worth noting, the US Postal Service has reversed an earlier decision to halt China shipments. You're looking at the Nikkei also tracking Wall Street gains despite the climb in the Japanese currency amid hawkish BOJ commentary. One of the stocks that we're focusing on in Japan as well is that of Nissan, as sources tell Bloomberg that it's looking for a new partner with that deal with Honda set to collapse. And according to sources, Nissan is set to prefer a partner from the US and from the tech sector. So among the things that we're watching in the Asia Pacific today, Jumana.
Avril, thank you so much for that overview. Aides to President Donald Trump are playing down his proposal to, quote, own Gaza. That's after the U.S. president suggested his country should take over and redevelop the coastal Palestinian territory while displacing its residents to neighboring Egypt and Jordan. White House Press Secretary Caroline Leavitt calls it an out-of-the-box idea.
The president has not committed to putting boots on the ground in Gaza.
Is the U.S. prepared to remove Palestinians from Gaza by force?
The president is prepared to rebuild Gaza for Palestinians and all people in the region.
Why not rule out the idea of committing U.S. troops? This has been a long-standing argument that the president has made really over the last decade or so, talking about endless wars are not something the U.S. wants. Why not rule out?
Because I think the president is very good when he's making deals and negotiating, not to rule out anything, because he wants to preserve that leverage in negotiations.
The announcement was criticized by Saudi Arabia, Egypt, and France, while Egyptian President Abdel Fattah el-Sisi said his country plans to quickly roll out efforts to reconstruct Gaza. So for more on this and the fallout, let's bring in Dan Akhrish, Bloomberg's UAE bureau chief. So quite clearly now, Trump's aides within the U.S. administration are dialing back on the comments. We just heard from the press secretary there, and she was saying there are no plans at all to send U.S. troops to the Gaza Strip. What do we make of this slow rollback?
Exactly. They are toning it down. And we saw her saying, tax dollars are not going to go into the deployment of U.S. troops in Gaza. I think what they're trying to suggest is that this is Trump's way to raise the bar really high, a ploy to probably force some concessions on countries that have been very resistant to any idea of displacing Palestinians. I think he might want some flexibility, and maybe this is the way to get it, he thinks, is to have this kind of a shock and awe thing about the U.S. taking over the entire Gaza Strip. Now, we saw a lot of reactions yesterday from the region, specifically from U.S. allies, right? Jordan, Egypt, and Saudi Arabia. And these three all have balancing acts, right? You see, Jordan and Egypt rely heavily on U.S. aid, especially Jordan. Most of that U.S. aid that comes annually plugs its budget deficit. It has a population that's also displaced Palestinians, and they fear kind of resistance, they fear instability, they fear all is that Iran might actually take advantage of this, might rile the crowds to again say we need to resist or, more terrorist acts.
But I guess one of the aspects of yesterday is it did cast light on the situation of so many Palestinians living in the Gaza Strip who don't have anywhere to live right now. And so how has this pushed along the discussions vis-a-vis the reconstruction efforts and the temporary housing that hundreds of thousands of Palestinians will need in the coming years?
So we're in the first phase of the ceasefire. We still have a second phase. And the third phase is apparently what is called the reconstruction, right? They haven't even pledged money. None of the Gulf countries that need to put in money for Gaza have discussed this. We don't know what the future will hold, right, in terms of Palestinian Authority, in terms of Hamas. Are there going to be a joint governance to this? So it's very not clear about the future of Gaza. And maybe this is what they think the third phase would hold, is that when you get to that third phase, you bring back the hostages. And we saw Israelis also yesterday, right, you have the far right who thought this was, a dream come true for them. This is part or aligns with their idea of clearing out Gaza, clearing out Hamas, primarily. But then you have centrists and others saying, okay, but we need the hostages. They don't want this to obstruct the ceasefire agreement and the details in this, and bring back the hostages and really just stabilize Gaza for them so they won't have a repeat of the October 7th
the backdrop to all of this is the ceasefire is still very tenuous anyway to begin with. Dana, thank you so much for the reporting. Dana Khrish, Bloomberg's UAE Bureau Chief. Let's continue the conversation with Hassan Al-Hassan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Good to have you with us. I was just speaking to Dana about the fact that the U.S. administration's aides are coming out now to dial back some of the language that the president used yesterday and not implying at all that they're going to send troops at any point in the future to the Gaza Strip. Yet I do wonder whether, to a certain extent, the damage has been done with some of the U.S.'s closest allies within the region, because we got a really strong rebuke out of all of these Arab states, Egypt, Jordan, and Saudi Arabia.
Yes, hi, Jemana. It's good to be with you. No, we have been seeing a degree of creative reinterpretation by the U.S. Secretary of State, Marco Rubio, by the U.S. Press Secretary as well, trying to tone down and roll back some of Donald Trump's comments. But I think, listening to his press conference with Benjamin Netanyahu, he was explicit. He was very crystal clear, really, about what his intentions were in Gaza. The idea of displacing Gazans out of the Strip to neighboring countries, specifically Egypt and Jordan, the U.S. owning the Strip. Now, we have to be very clear about the terminology, because what that amounts to essentially is the ethnic cleansing of Gaza. And if we were to take Trump's words literally about U.S. ownership of Gaza, then that would obviously be an annexation of the Strip. And all of this would obviously be a gross violation of international law. I don't think this is something that any of the regional countries, including those that depend on U.S. aid, including longstanding U.S. partners in the region, such as Saudi Arabia, Jordan, Egypt, even the UAE, Turkey, and others, can accept. No one wants to be seen as complicit with a second Palestinian Nakba, with the idea of an ethnic cleansing of Gaza. So I think, as you've said, I think the damage has been done. We've already seen many of these countries reacting vociferously, explicitly rejecting this idea. Egypt and Jordan have very good reason to reject it very explicitly. I don't think either country has the capacity to host 2 million Palestinian refugees. They would be met with sweeping domestic opposition if they were seen as being complicit with the ethnic cleansing of Palestinians. And of course, they have security concerns about turning into staging grounds for cross-border attacks by Palestinian armed factions against Israel, because that would obviously put their peace treaty with Israel at risk.
Yeah, I mean, still so many elements of the proposal are unanswered for, including whether the displacement would be temporary or permanent. But this is also just part and parcel of who the president, the U.S. president, actually is. He oftentimes, with any topic, be it tariffs or geopolitical questions, he goes for the most extreme option in the hope that there will be some deal negotiated somewhere in the middle. What do you think he's trying to get out of this stance on Gaza? What are the concessions that he's looking for out of Arab states?
So I think, first of all, we have to be very suspicious about this idea of a temporary displacement of Palestinians. I think it's quite obvious that if we were to see a large-scale displacement of Palestinians out of Gaza, that the Palestinians would very simply not be allowed to return. That seems to me to be the broad trajectory of Israel's policy towards the Gaza Strip over the past year or so. And so I think there is really region-wide skepticism of this idea of a temporary displacement. Now, the question as to what President Trump might be trying to achieve here, there are really, I think, two main possibilities. He's either, as you said, raising the ante, bluffing, using this as a bargaining leverage. There is also the possibility that he's actually quite literal and serious. It's difficult to know at this stage in which direction he exactly is heading. But the issue is that it's really not clear what he wants in return. When it comes to tariffs, the bargaining, the negotiation is clearer. He wants China and other countries to take measures to rectify, rebalance the trade relationship with the United States. There is a clear quid pro quo. In this case, it's not really clear what he wants if he were to be bluffing from the Arab states. He's asking Jordan and Egypt to take in the Palestinians. It's not entirely clear that if they do or if they don't, what this would lead to beyond their taking in the Palestinians. So I don't think, it seems to me that because the implicit ask here is not really clear, I think we would be better advised to take Trump at his word and to take his position at face value. He may, in fact, be trying to engineer a large-scale displacement of Palestinians and ethnic cleansing of Palestinians out of Gaza because he thinks that this would be in favor of the long-term security of Israel. So I think that, to my mind, the possibility that he is actually being literal rather than bargaining for something that isn't entirely clear to me at all is the greater possibility.
What does this do to the current ceasefire negotiations that are taking place? We're in the middle of phase one. It's been quite tenuous. The discussions have started around the transition towards phase two and perhaps a more permanent ceasefire. But the fact that he's thrown this out there, does that derail the potential progress that we could see?
Absolutely. I think the ceasefire is in really bad shape. I think, in a sense, President Trump, by floating the idea of an annexation and ethnic cleansing of Gaza, really is doing the bidding of Israel's extreme far right. We've already heard Benjamin Netanyahu, during his press conference with President Trump, talk about the ceasefire as being a temporary ceasefire, quote unquote. And so I think he's already paving the way, partly under pressure from his extreme right-wing coalition partners, for a resumption of the war once Israel receives some of its hostages back. And so I think the idea that Benjamin Netanyahu and Donald Trump have also floated about dismantling and disarming Hamas is obviously totally inconsistent with the idea of a ceasefire. Hamas isn't just going to voluntarily, peacefully give up its control over the Gaza Strip. They're not going to disarm themselves. And so for that objective to be accomplished, which Benjamin Netanyahu has placed as one of his top priorities, that would obviously imply a return to the conflict. And so I think if we were to observe these positions, it's quite clear, I think, that the ceasefire is in very bad shape and that we may very well see a return to armed hostilities and to war in Gaza if Hamas doesn't comply, which I think it won't, with Israel's or the US's demands to unilaterally disarm itself.
Yeah. Hassan Hassan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Thank you so much. And on a programming note, coming up later today, talking about the U.S. economy now, we speak to the U.S. Treasury Secretary, Scott Bessent, live on Bloomberg TV and radio. That's at 10 p.m. across the Emirates, 6 p.m. if you're watching in London. And up next, we're going to be talking about these global markets and hear why Standard Chartered Global CIO Steve Bryce says China believes it is more prepared for a trade war with the U.S. this time around. This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian equities have advanced after stocks and bonds rose on Wall Street in a week marred by tariffs, lackluster tech earnings, and uneven U.S. economic data. Joining us now is Standard Chartered Global CIO Steve Bryce. It has been quite an interesting week, not least because of all the tariff noise on Monday. But actually, if you look at macro performance in the last 24 hours, all of those tariff trades are being unwound. So 10-year yields are rallying. We've rallied down to 4.42 on the 10-year. The dollar is losing some steam. So it must be quite a tricky environment to be an investor. But ultimately, do you think that there was too much priced in terms of these tariff trades?
I think with Trump, what you've got to decide is to address it either in one of two ways. So you either have to basically trade the tweets and you become an intraday trader because you don't know what he says today and what he's going to say tomorrow. It could be the opposite. Or you say, OK, we're going to have a bit of a volatile ride. We're going to get a bit of maybe entertainment in terms of the news flow. But don't get knocked off your investment plan. So you sort of look longer term and then take opportunities as they arise through whatever comes out of Donald Trump's mouth. So from our perspective, obviously we favour the latter because we think that's the better way to build long-term wealth. But you really need to decide between those two.
What are you feeling about the dollar here? Again, one of those consensus trades, and it's been on the up for more than a year now, 6 months, I guess. Do you feel like the dollar has peaked?
We're sort of talking about it with clients this week, and sort of even when we're hitting up towards 110, saying it just feels like it's a bit toppish. We know that the dollar's extremely overvalued. And we saw the dollar obviously rally since Trump's election, and people talking about all this tariffs, this US exceptionalism, the tax cuts, deregulation, etc. So that could all lead to a strong US economy, no landing scenario, and that puts upward pressure on the dollar. But yeah, I think you're right. I think it looks like it's pretty much priced. So our sense is the way I'd probably trade the dollar is saying, look, I'd probably want to short the dollar if we get back towards 110 on the DXY index. You have a stop loss at 110.50 because, you know, if it does break through that, I think that's significant, so you shouldn't ignore it. But we'd probably be sellers on rallies.
OK, interesting. Let's talk about yields as well. Scott Bessent, Treasury Secretary, gave an interview to Fox yesterday, but he's speaking to us, to Bloomberg, later today. So perhaps we can get some more commentary around how he's thinking. But one line that did come out of yesterday is he said he wants lower 10-year yields and not Fed cuts, i.e. they don't want to influence the Fed. That's what he's saying. But they would like to see longer-term, longer-term yields. Now, the question I have is, how does that square up with an administration that wants to introduce permanent tax cuts to the U.S. economy?
Yeah, so obviously I guess the challenge is one on the inflation and then on the fiscal deficit. So if you look at the inflation picture, obviously we've seen inflation come down, but it's been more stable of late. So from that perspective, the 10-year yield is supported from there as well. And then obviously you talk about the tax cuts in terms of maybe raising the fiscal deficit or at least raising the structural deficit and putting upward pressure on the 10-year yields. But markets didn't react like that. I mean, the 10-year yield has come down quite sharply this week. So I think they're sort of just saying that they're trying to make sure they take the balancing act. I think they will be focused. They realise that the election was lost to a significant extent on the ability of the Republicans to blame the Democrats for inflation. They don't want to be on the other side of that in 6-12 months' time. It doesn't really matter today. Obviously, Trump has a strong standing within his own party. Doesn't have a strong majority, but he has strong standing. But obviously, as we get towards the end of the year, then we're going to start talking about midterms, and he could be a bit more constrained. So he wants to get done pretty quickly what he wants to get done, and I think tax cuts are high on the agenda.
Yeah, but I mean, again, it boils back to those two dynamics, inflation and the size of the deficit, which is 7% right now in the U.S. Let me just ask you, earnings season, we're in the middle of earnings season. So far, the scorecard has been positive. We are seeing a series of beats, but the reaction for tech earnings has been mixed. Is that going to drive sentiment for U.S. markets?
Well, obviously, tech is a very important component of the U.S. market, right, in terms of its weight. I mean, we have seen more beats than normal, so around 77% of companies have beat expectations. Normally, they do beat, but about 66%. So we're seeing a slightly better than normal beat scenario. So Our view is that this is probably going to be a good environment for the stock market. So the US earnings growth this year around 15% is what's expected. Yes, valuations are pretty stretched, so we have to acknowledge that, but they're not super extreme. So our central scenario is that we could see maybe another 10% upside for the US market this year. And obviously tech is a significant component of that, but we do see it broadening out as well into other sectors. So banks, for instance, we saw significant beats there, and on communication services as well.
Yeah. Steve, great to have you with us. Thank you so much for joining Horizons today. Steve Bryce, Global CIO at Standard Chartered. Coming up, China's response to the 10% tariffs. We got the details on the WTO complaint, as well as the latest on the U.S. Postal Service saga. That's a bit later in the show. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. A lot more green on the boards today. The handover from Asia, a lot more positive than we had in yesterday's session with these Chinese markets fully back in action. S&P futures leaning towards a positive as well, up at 0.2%. Nasdaq up a tenth. Later today, we get Amazon earnings, so watch out for that in terms of the big tech names that have been reporting. And Eurostoxx futures also leaning towards the green as well, up 0.4%. Later in Europe, we'll be watching out for the Bank of England meeting. So that's going to be one to watch later and what guidance they give for interest rate policy. But coming up, it was an earnings beat for ADNOC Gas in its full year results. We'll be speaking to the CFO in a moment. This is Horizons Middle East and Africa. Our top stories this morning. Donald Trump's creative suggestion. The U.S. president's aides seek to tone down his proposal of a Gaza takeover after global condemnation. Beijing takes fresh steps in response to U.S. tariffs, calling for trade talks at the WTO. The U.S. Postal Service, meanwhile, reverses its decision to halt shipments from China and Hong Kong. And Qualcomm and ARM fall in late trading. Slowing smartphone growth concerns hit Qualcomm, while a tepid revenue forecast hurts ARM shares. It's just gone 8:30 across the Emirates. I'm Joanna Versace in Dubai. A little bit more green on the board today. S&P futures leaning towards a positive, up 0.2%. This after posting its second gain in a row yesterday. So back-to-back gains on Tuesday and Wednesday after that big down day that we had on Monday on tariff day. But of course, with the decision to postpone the imposition of tariffs on Canada and Mexico, we saw a bit of a reprieve for markets. Not so much the case for 10-year yields. We've been rallying, actually. So we've moved down about 10 basis points over the course of the last 24 hours. 4.42 is where we are right now. This, as a lot of those tariff trades or the tariff consensus trades in the market get priced out. USD also falling. Not so much today. We're up 6 basis points. But the theme over the last couple of days has been downward pressure on the greenback. The energy complex also in focus today. We've got the Brent crude sitting just below $75, around 74 handle. Yesterday, we dropped 2%. So we actually reached the lows of 2025. This, again, on global growth concerns around the tariffs, but then also a bigger stockpile number coming out of the U.S., higher than expectations. Flipping over, though, today, I just want to point out that we are getting through the earnings season. And of course, the focus is going to be on Amazon earnings later today. But look at the number of beats that have come through. 77% of the names that have reported have actually beaten expectations. And so far, we're about halfway through earnings season. 53% of the S&P 500 have reported. And so far, we are getting higher beats than usual. Our prior guest was saying that typically you get around 55 to 60%. This time around 77% of the names that have reported have beaten expectations. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, what have been the main drivers of the price action today?
Yeah, I mean, it's a positive day, and they're tracking the momentum we've been seeing coming back on Wall Street. So that's, I think, the main driver. But when you look domestically, I thought I'd highlight what we're seeing in Japan. You talk about the earnings in the US. We're also about more than halfway through the earnings for companies on the Nikkei. We're seeing about 60% that have beat versus estimates. And the biggest beats are coming from a consumer discretionary as well as financial firms. So not too shabby, helping to add to the positive mood. And this performance you're seeing on the Japanese gauges comes despite the climb you're seeing in the Japanese currency. A bit of the dollar-yen move lower this week has been because of the greenback, a slight reversal from the strength. But we also got fresh commentary today from a BOJ board member, the most hawkish among them, saying they see the need for 2 more hikes at least this year, before next year, that is. So providing more impetus for the yen bulls. Among the stocks that we're keeping a close watch on are the automakers, Nissan, Honda. That deal, according to sources telling Bloomberg, reportedly set to collapse. And Nissan is also said to be looking for new partners. The stock enjoying quite a pop today. Jumana.
Yeah, that was a big story that broke on our show yesterday. Nissan Honda, thank you for bringing us the latest. Avril Hong in Singapore. Now, turning to earnings now, ADNOC Gas has reported $5 billion in net income for the full year, beating the average analyst estimate and 6% higher year on year. Joining us exclusively is Peter van Driel, the CFO of ADNOC Gas. Good morning to you, Peter. Good to have you on. Just taking a look through the numbers that have come through, revenue was also a beat, $24.4 billion versus estimates of $20.8 billion, up 7.5% year on year. And EBITDA, we also spoke about, up 14% year on year. So you must be pretty pleased with these results. What have been the factors contributing?
Yes, it was a very strong result in 2024. The company did, as you pointed out, net income of $5 billion. We serve 2 markets. We supply gas to the UAE, and that gas is used for the power, for the petchem industry. But also we export a lot of our products. Think about LNG, think about LPG. Both in the domestic market and in the international market, the pricing was strong. However, what we see in the UAE in particular is demand is driven by the strength of the economy. You see the population growth coming through. Everybody living in the UAE needs to have access to power, be it your light, your air conditioning. And that demand growth in the UAE has been a key driver for what I call a very strong year for ADNOC Gas.
Yeah, well, you say that those drivers are in place, but let me just ask you, is that going to manifest in terms of higher volumes or in terms of higher pricing, or both in 2025?
It's a combination of both. We've seen both the volumes in the UAE increasing, but also we were able to enhance the margins that we realize, and that is on the back of discussion with our customers, who, for example, want to have more flexibility, and we cater for that, and that has an impact on the pricing. In terms of the exports, it's very much a function of what Brent does, and Brent came up 2% compared to 23, which underpinned the pricing improvements in the performance for the export markets.
Yeah. I want to ask you a perhaps bigger picture question. What does the Trump's return to the office mean for the LNG market? And clearly, the U.S. are intent on boosting their own output. Do you expect buyers to move towards the U.S. As a market simply to get favors from the Trump administration?
Today we produce close to 6 MTPA of LNG, and in 28 we will further grow our production base for LNG with another new facility, Ruwais LNG, and that gives an additional 9.6 MTPA. Both facilities have the majority of their sales subject to long-term contracts. And a long-term contract, you can think when it goes to the Far East, is about 20 years. When it is Asia, Central Asia, it's closer to 10 to 15 years. So in that sense, we're quite resilient in anything that happens around us. And yes, opportunistically, we will send cargoes either to Europe or to the East, and we just see how markets play out. And on the back of that, we are able to optimize our LNG revenues.
Could you give us an update on the Ruwais LNG project and how much of that has been contracted to the two buyers?
So, in general, ADNOC Gas is all about growth. We will grow our EBITDA by 40% in the next 5 years. And in this year, that growth, we realized already 14%. So we're clearly on track to realize the growth of the 40% EBITDA. Ruwais LNG, which will come and deliver its first cargo on the 2nd of December 2028, is part of. And to date, Ruwais LNG has been awarded its contracts for the construction, and we're on plan. So, as I said, we are ready to sail in December 28, and it gives us an extra boost in the size of the portfolio, but also our reach and ability to serve our customers that we have long-standing relationships with. We will be able to even serve more customers.
Very clear. Peter van Driel, the CFO of ADNOC Gas, thank you so much for joining our show today on a very positive earnings report. Now, the U.S. Postal Service says it's accepting all international inbound mail and packages from China and Hong Kong, reversing an earlier decision to halt some shipments. And News Desk editor Jill Deeses joins us now in Hong Kong. Jill, what is going on here? Why between one day and the next was this decision taken and then rescinded?
Well, ultimately, Jumana, it's a bit difficult to sort of unpack whether this is a political decision or a logistical decision. But I do think one of the things that we can really kind of drill down and explore here is that there are quite a lot of logistical challenges that the U.S. Postal Service, that other shipping companies kind of have to contend with when they're trying to understand some of these latest tariffs from Donald Trump. So what it may boil down to here, and again, there's not an explicit connection here, but what this may boil down to is, as part of the new 10% tariffs that Donald Trump installed on China here, part of that kind of comes down to the revocation of a rule known as de minimis, which means generally when companies are shipping packages abroad, there's an exemption for packages worth under $800 to sort of be shipped into the country duty free. This is a rule that over the last several years, companies, a lot of fast fashion or e-commerce companies in China, such as Temu or Shein, had really taken advantage of to kind of undercut, other companies such as Amazon. And what we saw as a result here is the number of packages that, sort of were allowed to enter the U.S. under this exemption really ballooned last year, hitting 1.4 billion. So, when you kind of revoke that rule, that kind of throws a lot of logistical questions into disarray here in terms of what a service like the U.S. Postal Service has to kind of account for when they're looking at the packages that are coming into the U.S. There's a lot of concerns over some of these packages coming from China in terms of what kinds of sort of things are contained within these packages, and so you can kind of look at this revocation of this halt on these packages coming in as maybe the U.S. Postal Service is trying to figure out exactly how to comply with these orders from Trump and where we go from here. I don't think this is the end of this saga. I think we'll have to see, sort of where we go from here. But it does, I think, really throw into consideration here a lot of these logistical challenges.
Yeah, it was a really interesting story yesterday that emerged, and our colleague Rebecca Chung-Wilkins did a report about how it's going to hit Shein and Temu because so many of their price points are sub $800, obviously, when people tend to order them in bulk. But let's just continue the conversation around China and their retaliation to the tariffs introduced by the U.S. The most recent one is they've also filed a complaint at the WTO, which in itself is questionable because the WTO has been lacking in efficacy in the last couple of years. But what are they looking to achieve there?
Yeah, I think that ultimately, what they're trying to do is get a little bit more information about these tariffs. I'm not sure, where we'll kind of go with that WTO complaint, but ultimately just kind of kicks off the start of the saga where, obviously China is trying to challenge some of these tariffs. We have seen, other measures that they've taken, including probes into tech companies like Google. We've reported just recently, actually, that, another part of this may be part of this complaint about Apple's App Store, not directly tied to the recent recent tariffs, maybe more of a long-standing concern there, but that's something that, maybe just kind of entering the conversation because of this. I think, at the end of all of this, really, Jumana, is, it does seem like we sort of reignited the U.S.-China trade war here. Sure, there's going to be additional measures, this tit-for-tat measures taken between these two countries against each other, and I'm sure there's just more to come kind of over the course of the Trump administration. One of the things that we're really waiting for right now is whether we actually do get a Xi-Trump phone call at some point to see, whether they can hash out some of these difficulties over the coming days and weeks.
As ever, Jill, thank you so much for the reporting. News Desk editor Jill Desis. Now for a look at some of the other stories we're following today. The U.S. Treasury Secretary says the administration's focus with regard to bringing down borrowing costs is 10-year Treasury yields rather than the Fed's benchmark rate. Asked whether the U.S. president wants lower interest rates, Scott Bessent told Fox Business that Trump is not calling for the Fed to lower rates. Bessent repeated his view that expanding energy supply will help bring down inflation. And Bloomberg has learned U.S. allies expect President Trump's administration will present a long-awaited plan to end Russia's war on Ukraine at the Munich Security Conference in Germany next week. The blueprint is set to be presented to allies by Keith Kellogg, Trump's special representative for Ukraine and Russia. Elements include potentially freezing the conflict and leaving territory occupied by Russian forces in limbo while providing Ukraine with security guarantees. Coming up, Zimbabwe's efforts to woo the UAE gives the African nation a lifeline, even as the country's economy is still struggling. We'll take a closer look next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Zimbabwe's efforts to find favor with the UAE have resulted in the wealthy Gulf states becoming the country's biggest export partner. The UAE has plowed $1.4 billion into various sectors since 2022. But despite that, Zimbabwe's economy remains troubled with a debt pile of $21 billion, high inflation, and a struggling local currency. So to make sense of all of this, as ever, Bloomberg's Andira Ganga joins us with more. Andira, the big question here is what has attracted the UAE to Zimbabwe? Many other players have turned their back on the country.
Hi, Jumana. So the big attraction is Zimbabwe's gold, which has become a bright spot for the local economy. And the genesis of this relationship began in 2019 when Zimbabwe's president went to the UAE for a roadshow to try and attract investment in the country. At that time, this was an economy that was on a free fall, that had been locked out of the capital markets due to sanctions, also default on their debt and years of misrule from the previous administration. And we're beginning to see green shoots in this partnership. You have Dubai Gold and Commodity Exchange saying that they will set up a gold market. Then you have a minor Bluefin Gold Group that plans to set up in the country. And there are also plans to develop a 60 billion cyber city that is going to replace the capital city, Harare, that is currently in ruins. If you also look at the UAE, they're part of the country's top 5 foreign direct investment sources. But then again, this is an economy, like you mentioned in the intro, they're struggling with debt, their currency is not stable, inflation is high, legacy infrastructure issues. And emerging market strategies say that investment from the UAE will not be enough just by itself to turn this economy around.
Yeah, but this is a part of the trend out of the UAE to invest more in the African continent. So how does this contribute to the UAE's race to gain and grow influence in Africa?
Jumana, if you look at the investment strategy, they're just taking it one country at a time. If I take you back to last year, they bailed out Egypt's economy for $35 billion. This is equivalent to 7% of the annual economic output. And someone close to the matter told Bloomberg that the UAE was open to doing it again. And we are seeing an influx of Emirati money flowing into the African continent. So far, $110 billion has been invested in sectors like trade, in sectors like renewable energy, food, infrastructure, and also logistics. And this comes at a time when China is scaling back on its loan, EU is scaling back on presence, and US is putting America first under Donald Trump. So a power vacuum is opening up, and whoever has the bigger pass and an open mind to work with African leaders can make play and get to the front.
Yeah, so interesting you bring up the Egypt bailout because, well, I shouldn't say bailout. I should say investment announcement because it did mark the beginning of the turnaround for the Egyptian economy last year. So yes, a notable footprint in Africa. Bloomberg's Ondiro Ganga, thank you so much. Now, AP reports that Rwanda-backed rebels have gained ground in eastern Congo despite the unilateral ceasefire they declared earlier this week. Residents say the M23 group has taken control of a town 100 kilometers from the provincial capital of Bukavu. Forces are reported to be engaged in heavy fighting along the main route to Bukavu. Now, coming along, we'll take a look at chip-linked stocks in Asia following earnings reports from Qualcomm and ARM. More on the all-important, you guessed it, AI outlook next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, ARM Holdings has given a cautious revenue forecast for the current period, adding to recent concern that spending on AI computing is slowing. Meanwhile, Qualcomm, the world's biggest seller of smartphone processors, fell in late trading on investor fears that demand for new handsets will stall in 2025. Let's bring in Bloomberg tech reporter Annabelle Jewelers for more. Maybe let's just start with Qualcomm. What is the read across to the smartphone industry, given that they manufacture the processors that go into these smartphones?
Well, there's a really strong read across, and it's been an interesting earnings release because we actually saw some pretty mixed moves in late trade. Initially, the stock rose, and that was because there was really a lot of positives in these numbers. It was a broad outperformance across a range of different business segments. We saw earnings per share, for instance, up around 24%. Revenue for the quarter as well, that reached $11.67 billion. The second quarter revenue forecast as well, that was strong, between $10.3 billion to $11.2 billion. The estimate had been for 10.35. But the concern and why we actually saw the stock and after hours flip into negative territory and close down 5% was because there was this concern around the tech licensing business, and that really came into focus. So tech licensing, this is actually a really small part of the overall pie, but they forecast sales of around $1.25 to $1.45 billion. The estimate had been for $1.4 billion. That's based on an estimate of smartphone sales from IDC. And so if they say weaker sales for that segment moving forward, it tells you perhaps they also see a weaker or a slowing smartphone market as well.
Yeah, let's talk about ARM as well. I'm just curious to see the price action and why the investor community took it so negatively, because ultimately it looks as though a lot of the results actually beat or came in line with expectations. So are we seeing some form of a DeepSeek impact here?
It's certainly, yeah, it still relates back to DeepSeek in particular, and this sort of question that a lot of people have, are we going to see more of that trend toward small language models instead of large language models like ChatGPT? And if you see that, are the same sort of resources needed? And so, I mean, this report as well, it came off the back ARM, it came off the back of AMD, and it was really relating to that weaker or softer outlook moving forward. And so they're expecting revenue of between $1.18 to $1.28 billion in the fiscal fourth quarter that runs through the end of March. That actually was an increase from the prior forecast, and again, it was largely meeting a lot of different estimates on Wall Street, but it didn't meet the loftiest, and that was around $1.33 billion. So it's sort of just that general recalibration we seem to be seeing right now, which is so much exuberance around AI. It seems to be running into a little bit of trouble, and really what is behind some of that as well is this launch of DeepSeek.
Yeah, and the majority owner of ARM is SoftBank, but SoftBank are also in acquisition talks to acquire Ampere. What do we know about that, and how will it complement their portfolio?
Yeah, well, this is actually another chip designer, and it's been something that's been underway for quite a period now. So actually, Bloomberg News was reporting last month, for instance, that they were in talks for this deal. So it's going to be valued perhaps at around $6.5 billion, including debt. We're hearing that transaction could be announced over the next couple of weeks, rather. it's interesting as well, that valuation, which has been mooted of $6.5 billion, because actually going back to 2021, Bloomberg was reporting at that point that SoftBank was interested in taking a minority stake in the chip designer, but it was at a valuation of $8 billion. So there is certainly a lot of different companies that are interested in essentially capitalizing on the spending boom in AI. But given you've got that lower valuation now being suggested, it does also tell you that there's increased competition in the space.
Yeah, most definitely. That's one of the signals that is coming through from this earnings season. Bloomberg's Annabelle Jewelers, thank you so much. Well, a quick look at equities before we head out into the second hour of the show. Leaning towards the green, better end for Wall Street yesterday. This is all your futures. Your stocks futures leading the charge up 0.4%. But coming up in the next hour, we discuss the U.S.-China trade war with Eugenia Victorino. I'm Joanna Bersecci in Dubai. Stay with us as Jennifer Zabazaja joins me from Johannesburg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump's creative suggestion. The U.S. president's aides seek to tone down his proposal of a Gaza takeover after global condemnation. Beijing takes fresh steps in response to U.S. tariffs, calling for trade talks at the WTO. The U.S. Postal Service, meanwhile, reverses its decision to halt shipments from China and Hong Kong. And Qualcomm and ARM fall in late trading. Slowing smartphone growth hits Qualcomm, while a tepid revenue forecast hurts ARM shares. Good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Joanna Bersecci in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, we're seeing a bit of calm, a different day to start as opposed to what we were seeing just a few days ago.
Yeah, and certainly that's being reflected in markets, Jennifer. The handover from Asian stocks today is slightly more green. And you can see the futures board behind me as well, tilted towards the green as well. This after better close for Wall Street. So the second day in the row that S&P posts gains, and this after that deep decline that we got on Monday after the tariff scare. But of course, since then, a lot of those tariff trades in the markets has started to be priced out. So take a look at the 10-year Treasury yield, for example, 4.42, rallying a full 8-9 basis points yesterday. We did get a slightly disappointing ISM services print, but beyond that, it feels as though many of the trades that the investment community had put on to play for the tariff impact and potentially the inflationary impact of tariffs are now being unwound. So 10-year yields are lower. The dollar today slightly higher, but the theme there has been one of weakness. And in fact, the DXY index is sitting at its lowest level in the past week, despite the gains over the last 6 months. Energy in focus as well. Brent sitting below $75, but yesterday we came off 2% in trading. Again, on growth concerns around the tariff, what that means for the rest of the world, global demand, but then also a higher stockpile number coming through from the US as well, putting some downward pressure. Flipping over, today's a big day in the UK. It's the Bank of England rate decision. The markets are pricing in a 90% chance of a 25 basis point rate cut. But as ever, the Bank of England are battling with the dual focus of one, a weakening growth backdrop in the background. So we've got UK GDP basically stagnating, not really growing. It's flatlining here around 0%. But at the same time, the inflation numbers continue to be quite hot in the UK, though we did start to see some moderation come through in the latest print. So this is the balancing act that the Bank of England has ahead of them today. Let's move on and check on how markets in Asia are faring as well, though. Avril Hong is in our Singapore studio. A lot more green on the board today.
Yeah, including in China, where we're back from the lunch break. So let's just check in on how equities there are faring. That positive mood from the morning session continues. A lot of this coming from the AI robotics related story. You can see how the tech-heavy Chinex is faring today, but also a bit of a mood lifter coming from holiday spending data showing Chinese consumers splurged over the period. And you're looking at records in terms of travel, movie attendance So it's helping to lift the mood a little, but some of our resident skeptics on the MLive blog have also been highlighting that it's kind of hard to ensure a broad-based rally if you think about how the tariff risks continue to weigh, and we also got really weak services data just earlier this week. So against that backdrop, we're seeing the stocks bounce today, but question marks as to how long this lasts. In the meantime, we're seeing the Chinese yuan dollar China hovering towards the 7.29 level, continued weakening and catch down on the onshore renminbi to what we're seeing on the offshore renminbi. Guys.
Avril, thank you so much. And also shout out to our resident skeptics, the in-house skeptics from MLive. You're right. All right, moving over to regional politics now. Aides to President Donald Trump are playing down his proposal to, quote, own Gaza. That's after the U.S. president suggested his country should take over and redevelop the coastal Palestinian territory while displacing its residents to neighboring Egypt and Jordan. White House Press Secretary Caroline Leavitt calls it an out-of-the-box idea.
The president has not committed to putting boots on the ground in Gaza.
Is the U.S. prepared to remove Palestinians from Gaza by force?
The president is prepared to rebuild Gaza for Palestinians and all people in the region.
Why not rule out the idea of committing U.S. troops? This has been a long-standing argument that the president has made really over the last decade or so, talking about endless wars and not something the U.S. wants. Why not rule out troops?
Because I think the president is very good when he's making deals and negotiating, not to rule out anything, because he wants to preserve that leverage in negotiations.
Should be said that the announcement was criticized by, amongst others, Saudi Arabia, Egypt and France, but welcomed by many lawmakers in Israel. So let's go to Jerusalem now and speak to Bloomberg's Dan Williams. It certainly was a Trump earthquake yesterday, those comments around Gaza. And we spoke about the likelihood and the viability of this plan actually being implemented. Let me just ask you about the reception it has had within Israel to start.
Well, as you noted, this has been welcomed right from the top. Prime Minister Netanyahu positively beamed in Washington at the White House at the side of Trump, although there are some indications that the Prime Minister himself may not have been fully informed about the extent and the level of detail that Trump would commit to this proposal. He seems to have adjusted very quickly to it and welcomed it. Of course, other members of Israel's right-wing camp have really exulted over it. The reception has been more moderate, welcoming perhaps, but with some caution the more you go toward the centers of the political stage in Israel, given, I think, realization that the logistics of what Trump proposes and the politics would be quite difficult, regionally speaking. As you noted, the aides to the president have been, if you called it an earthquake, perhaps they've been trying to recast it as more of a tremor, a way of opening up the Overton window of discussion of this very touchy issue dating back decades, and enabling fresh thinking among all parties involved in these negotiations.
Yep, I do want to bring it back to the here and now. The reconstruction plan was always going to be part 3, phase 3 of this ceasefire agreement that's in place right now. We know that the ceasefire is still quite tenuous. Discussions were supposed to be taking place this week about moving from phase 1 to phase 2. Does the fact that President Trump has made this shock announcement derail the progress on the ceasefire discussions?
Quite the opposite. I think it's worth noting that the president himself said at the same event that those negotiations would be now addressing phase 2. As far as he's concerned, the ceasefire talks are still in force and indeed continuing. And there's some indication that his comments, his very ambitious, unprecedentedly ambitious plans for the Gaza Strip may have been aimed to actually calm the Israeli far right and keep them on side while Israel continues in discussions with Hamas on a ceasefire that may eventually leave Hamas in power in some form in the Gaza Strip, although Israel has denied that this is something it would accept. Basically, if they are happy with a long-term plan proposed by Trump for the Gaza Strip, the far right in Israel may object less to continuing to talk with Hamas, as if Hamas will be a long-term partner, or at least a long-term address in the Gaza Strip. Hamas will not be removed or destroyed anytime soon, because it's rather hard to see how Israel can continue negotiating with Hamas on a release of hostages while Hamas is actually wondering about its own future survival. if Israel is openly promising with US support to eventually dismantle, destroy, exile members of Hamas. So if the far right in Israel is happy for now with a US master plan, it may be okay with the more immediate concerns of these ceasefire talks, which entail keeping Hamas in place to deliver those hostages and continue the negotiations.
Yeah, and therein lies the perhaps a contradictory situation that these negotiators find themselves in. Bloomberg's Dan Williams in Jerusalem, thank you so much for the report.
Thank you.
Let's turn to the trade war now. The U.S. Postal Service says it's accepting all international inbound mail and packages from China and Hong Kong, reversing an earlier decision to halt some shipments. News desk editor Jill Desis joins us now in Hong Kong for more. So, Jill, can you explain the latest twists in this saga? There's been a lot of back and forth over the past 48 hours about this.
Yes, that's right, Jen. So, look, the U.S. Postal Service hasn't, kind of come out and explicitly tied this to some of the, concerns over the trade rules that we've really seen here. But, so it's difficult to tell whether this is really a political decision or a logistical decision to reverse this decision. But what it really is kind of bringing to light here are a lot of the logistical challenges behind enforcing some of Donald Trump's tariffs on China. Ultimately, as part of this 10% tariff, it seemed that Donald Trump also wanted to revoke what's called the de minimis rule, applying to, sort of exempting smaller packages worth less than $800 per package from duties when they're, transporting that to the United States. A lot of e-commerce companies in China actually were taking quite a bit of advantage of this exemption over the last couple of years. Think of companies like Shein, the fast fashion retailer, or Temu, also another e-commerce company shipping, low-cost goods to the United States. So, by revoking that rule as part of this escalation in the U.S.-China trade war, assume that the U.S. Postal Service would actually have to check all of these packages, what amounts to, some 1.4 billion last year for, whether or not they were in violation of certain U.S. rules. That's potentially what played a part here in, sort of this decision to first halt packages, but then obviously, kind of reverse that decision as they're kind of, wading through the logistics of this. I think, Jen, what you can really kind of take away from this entire back and forth is that there's a lot of, concerns here about how to ultimately implement some of these tariff rules that Donald Trump wants to put in effect. And there's a lot of concerns over what that actually does to supply chains and kind of, shipping considerations here. I don't think that this is the end of this saga whatsoever. We'll have to kind of see how that continues to develop in the coming days.
And Jill, I mean, there appears to be more pressure, many people wanting there to actually be some discussions being had, at least from the Chinese side. We've seen now there's a WTO complaint in the works there. I mean, how is China responding now?
Yeah, so, Jen, it looks like, what China has ultimately done, I mean, they're clearly blasting, a lot of the tariff restrictions that the U.S. is putting in place is unfair, bringing that to the World Trade Organization to attempt a resolution. That does seem to be stage one here. Obviously, that's in addition to some of the retaliatory moves that we really saw China take, that included things such as a probe into Google, for example. There's some additional, tariffs that, that China put in place on energy from the United States in response as well. So that kind of plays into this. I think the really big thing to look out for going forward is whether or not there's actually going to be a call between Presidents Donald Trump and Xi Jinping. That's something that Donald Trump initially earlier this week said he thought was going to take place within a day or so when we were first waiting to see these tariffs actually take effect against China. Then later he said, well, we don't need to necessarily rush into that or do that immediately. So I think it just kind of, shows that there's at least some desire to kind of open up an avenue of communication here. We have seen the trade war, at least this time around during Donald Trump's tenure, get off to maybe a bit of a slower start than we, or at least, sort of a lesser start than we did the first time around. I mean, the tariffs that we're seeing put in place, some of the response measures from China haven't been as aggressive. We'll have to see whether or not that call takes place and where we go from here.
Right. A bit more subdued is really what we're seeing. Jill Desis, our news desk editor there in Hong Kong with the latest. Jill, thanks as always for joining us. Now, here's a look at some of the other stories we're following this morning. The U.S. Treasury Secretary says the administration's focus with regard to bringing down borrowing costs is 10-year Treasury yields rather than the Fed's benchmark rate. Asked whether the U.S. president wants lower interest rates, Scott Bessent told Fox Business that Trump is not calling for the Fed to lower rates. Bessent repeated his view that expanding energy supply will help bring down inflation. Bloomberg has learned U.S. allies expect President Trump's administration will present a long-awaited plan to end Russia's war on Ukraine at the Munich Security Conference in Germany next week. The blueprint is set to be presented to allies by Keith Kellogg, Trump's special representative for Ukraine and Russia. Elements include potentially freezing the conflict and leaving territory occupied by Russian forces in limbo while providing Ukraine with security guarantees. Now, coming up, SEBI's head of Asia strategy says Beijing's measured response to the U.S. tariff signals a reluctance to escalate into a full-blown trade war. We'll speak with her next. This is Bloomberg.
फाइट काफी अच्छी चल रही है लग ही रहा था इन्हों की किसी न किसी एक साइड पे मार्केट को ब्रेक करना पड़ेगा तभी क्लोज नहीं किया ध्यान रखना
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Asian equities have advanced after stocks and bonds rose on Wall Street in a week.
Okay, crude oil में आएगी 9 बजे अभी टाइम है फोरकास्ट तो बुलिश ही है प्राइस के लिए लास्ट टाइम जितना एक्सपेक्ट किया था उससे कम एक्सपेक्ट कर रहे हैं लोग संदीप गोंजी को सुनाई नहीं दे रहा मैंने कहा क्रूड ऑयल में अगर ये एफईजी ब्रेक करता है तो नीचे ये सेकंड टारगेट रहेगा ये थर्ड टारगेट रहेगा अभी भी क्लोज नहीं हुई है मार्केट रेंज के अंदर ही है ये एफईजी और ऊपर रेजिस्टेंस इसके बीच में प्राइस फिलहाल के लिए चल रहा है यूएस मार्केट की कैंडल क्लोज होने वाली है लेट्स सी नीचे कैंडल क्लोज करता है तो रेंज ब्रेक हो जाएगी फिर थोड़ा बड़े टारगेट एक्सपेक्ट कर सकते हैं उस केस में नहीं तो ये बस इसी रेंज में घूमता ही रह जाएगा आज बाकी नेचुरल गैस थोड़ा सा वीक रेजिस्टेंस एरिया था मैंने कहा था मिनी वगैरह ही सेल करना टारगेट बड़ा रख सकते हो जिन लोगों ने सेल किया है वो लोग निकल जा रहे हैं यहाँ पर एक सपोर्ट है यहाँ से वापस बाइंग का प्लान कर सकते हैं टारगेट देखते हैं कहाँ तक बनते हैं 7 PM वाला डेटा आई थिंक पॉजिटिव था वो तो गोल्ड और सिल्वर के लिए था इम्पोर्टेंट टेलीग्राम पे डाल दिया था मैंने ऑलरेडी अनएम्प्लॉयमेंट क्लेम्स का डेटा नेगेटिव फॉर डॉलर पॉजिटिव फॉर गोल्ड एंड सिल्वर वैसे गोल्ड को देखोगे अभी भी गोल्ड भी उसी रेंज के अंदर ही है अपने टारगेट पे पहुंचने वाला है जिन लोगों ने सेल किया है एक बार सपोर्ट ले चुका है लेट्स सी होल्ड करता है या ब्रेक करता है इस लेवल को ये भी रेंज के अंदर ही चल रहा है कल से 15 मिनट के लेवल है कल 5 मिनट के लगाए थे मेरी वॉइस कम आ रही है ऐसा होना तो नहीं चाहिए इज माई वॉइस इज क्लियर एंड लाउड ओके क्लोज हो तो भाई Nasdaq bought 21,660 Nasdaq पे तो बाइंग ऑलरेडी हो चुकी है आई थिंक कंप्लीट 21,600 ही सपोर्ट था उसमें प्राइस ऑलरेडी मूव करके निकल चुका है ऊपर की साइड फिर से बाई किया क्या आपने सेकंड टाइम वो ऑलरेडी सेकंड या थर्ड टाइम आया था लेवल पे ध्यान रखना वो फर्स्ट टाइम नहीं आया था दैट लेवल इज नॉट द फर्स्ट टाइम प्राइस इज रीचिंग फर्स्ट टाइम दैट इज द सेकंड और थर्ड टाइम प्राइस टेकिंग द सपोर्ट Yeah, target is done. If you bought it 21,600, target is done. You can book the profit. US market open. Let's see if it gives the breakout of 21,785. If it gives the breakout, it will again bullish. गोल्ड का नेक्स्ट सपोर्ट किया फिलहाल तो यही है सपोर्ट अगर ये ब्रेक हो गया तो देखना पड़ेगा और कहाँ बन सकता है अभी तो यही है फिर आपको मिलेगा वही 2828-30 के अराउंड अगर ये होल्ड नहीं होता है यहाँ पर भी ये 2 बार सपोर्ट लिया है एक बार प्रीवियसली और ये एक हायर हाई बना नहीं है एक बार हाई लोअर हाई तो वो थोड़ा सा वीक होना चाहिए इसको लेट्स सी डायरेक्टली बाय मत करना बस, रुकेगा तभी देखेंगे, अदरवाइज ब्रेक करने के चांसेस काफ़ी हाई हैं। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। ओके देखो क्रूड ऑयल की कैंडल क्लोज हो गई है एफईजी के नीचे, तो रेंज ब्रेक हो गई है। अब एक्सपेक्ट कर सकते हैं थोड़ा सा मोमेंटम कंटिन्यू होना चाहिए। ट्रेड अभी बना नहीं है इसमें और, ठीक है, वही सेलिंग का ही ट्रेड था बस। बाकी थोड़ा बहुत एफईजी पर रुक सकता है, नीचे एक सपोर्ट फिर 6212 के अराउंड है, और कहीं पर लेगा तो देखा जाएगा। यहाँ पर भी थोड़ा बहुत मुझे लगता है, देखते आता है तो रुक जाओ 6237 के अराउंड। ऊपर से नेचुरल गैस में भी थे, निकल जाओ, थोड़ा सा वीक रेजिस्टेंस लेवल था, आ गया बट काफ़ी देर रुका यहाँ पर, देख पा रहे होगे 1.5 घंटे के आसपास यहीं पर रुका रहा, फिर सेलिंग आई। इंपॉर्टेंट ये है कि अब ये क्या लोअर लो बनाएगा या नहीं बनाएगा। यहाँ स्विंग के नीचे अगर जाता है तो ये लेवल स्टिल स्ट्रांग रहेगा, अगर नहीं जाता है तो फिर ये कहीं पर भी रुके हायर लो बनाना शुरू कर देगा, ध्यान रखना। $6,250, yeah. Harry, you didn't hear me right now. Still, my voice is not clear. Let me check here. Let me check. मेरी वॉइस आ रही है गाइस आप लोगों तक क्लियरली? कुछ डिस्टरबेंस है या फिर बहुत लो है क्या? नॉर्मल है? वॉइस क्लियर है ना? Harry, I will suggest you can refresh your browser once. Okay. My voice is clear. I already checked in my system as well. निजी वॉइस क्लियर आ रही है, चलो बढ़िया है। कल वापस पुल बैक देगा, वापस सेल कर देंगे। आ जाना चाहिए नीचे तक। Okay, now it is clear. Great, great. कभी कभी voice, sometimes voice not clear, so you can refresh your browser. अपना browser refresh कर सकते हो। भी करते रहो guys. Don't forget to like the stream and subscribe the channel. Share with your friends and family members so that they can also watch. Okay, now clear. फॉरेक्स चार्ट में देखोगे तो सीधा नीचे $70.40 तक ही दिखा रहा है ये तो। ऐसा लग रहा है रुकेगा ही नहीं उससे पहले। ठीक है, मैं एफएक्स ओपन ब्रोकर की चार्ट की बात कर रहा हूँ। थोड़ा बहुत ऊपर नीचे अलग अलग प्राइस ब्रोकर में चार्ट हो सकता है। हाँ, 70.41 ही दिखा रहा है, 70.40। लेट्स सी क्या वहाँ तक गिरेगा ये। कुछ खास बुलिस लग नहीं रहा है मुझे क्रूड ऑयल पे यहाँ से। ठीक है, फॉरेक्स में देखोगे ना यहाँ तक दिखा रहा है, यहाँ सपोर्ट एक बीच में भी है सपोर्ट, बट यही एक मेजर सपोर्ट दिखा रहा है इस एरिया के अराउंड। ओके, देखो दूसरा टारगेट भी आ गया है। अब देखते हैं थर्ड टारगेट मिलता है नहीं मिलता। दिस इज द थर्ड टारगेट। ये देखो ये सपोर्ट है, ये भी एक सपोर्ट है। ठीक है, जो थर्ड लेवल लगाया है, बट ये थोड़ा वीक है, जस्ट लाइक नेचुरल गैस। इसके जस्ट नीचे एक सपोर्ट है, थोड़ा स्ट्रॉन्ग है। लेट्स सी ये कहाँ पर होल्ड करता है। दिस इज द फाइनल टारगेट। हाँ, ऊपर के एफईजी रिमूव करते जाना। ठीक है, जो ब्रेक हो जा रहे हैं फिर वो काम के नहीं है। यू कैन रिमूव दिस एफईजी नाउ। पुल बैक आ सकते हैं, ठीक है, बट सपोर्ट तो नीचे ही दिख रहे हैं सारे फॉरेक्स में भी। बढ़िया लेवल आ गया ना। कल थोड़ी सी हमने बीच में से एंट्री करनी शुरू कर दी थी, वो नहीं करी आज। हैरी जी के स्टडी मैं बाइंग साइड हूँ। 2 यूरो पर पिप लेता हूँ, 2 यूरो पर पिप लेता हूँ। थोड़ी देर के बाद 4 यूरो पर पिप बाई करता हूँ। थोड़ा ऊपर जाता है तो 6 यूरो पर पिप बाई करता हूँ। अब क्या होता है, सडनली रिवर्स होता है तो मैं स्टॉप लॉस रिमूव कर देता हूँ ड्यू टू बिकॉज मेरा टोटल 12 यूरो पर पिप हो रहा है। तो ट्रेल नहीं करते हो क्या? लाइक मैं समझ गया, आप आपकी पोजीशन जब जब प्रॉफिटेबल होते जाती है आप और क्वांटिटी ऐड करते जाते हो, बट अगर वो रिवर्स कर गई तो फिर या तो ट्रेलिंग एसएल भी डालते रहो उसमें नीचे को, क्योंकि अगर मार्केट रिवर्स कर गया गंदा सा तो फिर क्योंकि नीचे लेवल पे बड़ी क्वांटिटी उठाई है, बड़े पिप्स में है, ऊपर के जितना प्रॉफिट होगा उससे ज़्यादा लॉस होना स्टार्ट हो जाता है अगर रिवर्स एज यू मेंशन कंप्लीटली हो गया। गोल्ड का वही सेवन लेवल बताए थे, वही है, कुछ चेंज नहीं हुआ है फिलहाल के लिए। नीचे एक सपोर्ट है, डायरेक्टली बाय मत करना, मैंने बताया इसमें डायरेक्टली बाय मत करना। यहाँ पर लोअर हाई फॉर्मेशन पे है प्राइस, एक बार सपोर्ट लिया है, दूसरी बार सपोर्ट लिया है, लोअर हाई में है। अगर एक कैंडल कहीं क्लोजिंग देगी 2850 के ऊपर तभी देखेंगे, नहीं तो डोंट बाय डायरेक्टली। हो सकता है थोड़ा पुल बैक आ जाए, बट डायरेक्टली बाय नहीं कर सकते। बाकी ये भी नहीं कि ब्रेकडाउन पे रीटेस्ट कर रहे हो, आने दो। अगर ये होल्ड करेगा 2850 के ऊपर तब कहीं देखेंगे, नहीं तो ये और जा सकता है। नेक्स्ट सपोर्ट वैसे देखा जाए 2830 के अराउंड ही दिख रहा है। ऊपर कोई नया रेजिस्टेंस बन जाएगा तो बन क्या जाएगा, मुझे लग रहा है बन ही गया है। हाँ देखो, अगर ये मार्केट थोड़ा सा पुल बैक दे दे, बाई तो मत ही करना। 2859 के अराउंड, 58 के अराउंड वापस सेल कर सकते हो, बाइंग नहीं है। अगर नीचे आ गया डायरेक्टली तो फिर 2830 के अराउंड सपोर्ट मिलेगा नेक्स्ट। कोई डेटा अब नहीं है फिलहाल के लिए। ओके देखो, हो गया टारगेट कंप्लीट। अब बुक कर लो पूरा प्रॉफिट क्रूड ऑयल में, ठीक है। ये कैंडल भी क्लोज करेगी तो एफईजी को रिमूव कर देंगे, जो कि मुझे लगता है कर ही देगी। 2 मिनट बचे। ये देखो सपोर्ट स्टार्ट हो चुका है यहाँ पर क्रूड ऑयल में। दिस इज अ सपोर्ट एरिया। थोड़ा सा वीक सपोर्ट है, जैसा नेचुरल गैस में था, थोड़ा क्वांटिटी कम रखना। इसके नीचे भी एक सपोर्ट है। समझ में आया? आया या नहीं आया? थोड़ी क्वांटिटी कम ही रखियो। वीक सपोर्ट लेवल है। उसका रीजन क्या है? लास्ट टाइम जो बाइंग आई थी उससे पहली वाली बाइंग के कंपैरिजन में वही सेम लोअर हाई क्रिएट किया था। यहाँ पर सपोर्ट था, एक हाई बना, दूसरी बार आया लोअर हाई बनाया था। ये थर्ड टाइम आ रहा है यहाँ पर, थर्ड है ना? हाँ, तो थोड़ा क्वांटिटी कम रख के ट्राई करेंगे। थोड़ा अगर नीचे आ जाए तो बेटर ही है एग्जैक्ट लेवल पे। ओके 55 सेकेंड्स। ये गया था मार्केट लिक्विडिटी लेने, सब छोटी छोटी कैंडल बना के लिक्विडिटी लिया और फिर गिर गया। सिल्वर में लेवल नहीं बनाया रमेश सैनी जी, गोल्ड में बनाया, सिल्वर में नहीं बनाया। बनाया ही नहीं लेवल सिल्वर में। ठीक है देखो, गोल्ड में एक पुल बैक मुझे लग रहा है आना चाहिए, ठीक है, क्योंकि ये जो करंट सपोर्ट था वो ब्रेक हो चुका है, कैंडल उसके नीचे क्लोज हो गई है, तो वो अब काम का नहीं है, उसको रिमूव कर देना। दो चीज़ होंगी, या तो पुल बैक आएगा या फिर डायरेक्टली गिरेगा। अगर पुल बैक आता है अपर साइड पे तो फिर जैसा मैंने अभी थोड़ी देर पहले लेवल बताया आपको, 285859 के अराउंड वापस सेल का प्लान रख सकते हैं अगर पुल बैक आता है तो, ठीक है, गोल्ड में। एंड डाउन साइड पे करंट एरिया पे एक पुल बैक के लिए, एक सेकेंड, ठीक है। ठीक है, इसी लेवल पे ओके, ये कैंडल यहाँ से एफईजी रिमूव कर दो क्रूड का। यहाँ से एक पुल बैक के लिए गोल्ड में बाई किया जा सकता है। एसएल से ज़्यादा बड़ा मत लेना, 2836 से नीचे। पुल बैक वही जो रेजिस्टेंस बताया वहीं तक रहेगा। न्यूज़ का पता नहीं सर, छोटा सा ही एसएल है, पुल बैक आ जाए तो बेटर है, ऊपर रेजिस्टेंस है क्योंकि। नेचुरल गैस में अब इन्वेंट्री भी आने वाली है, तो मुझे लगता नहीं वैसे मूव आएगा नेचुरल गैस में अब, तो थोड़ा ध्यान रखना। सपोर्ट पर जरूर है बट इट माइट पॉसिबल। गोल्ड का हो गया टारगेट, ठीक है। गोल्ड में बुक करना चाहो कर सकते हो, या फिर अगर हाई लेवल से सेल किया ट्रेलिंग एसएल फिर, नहीं तो 2859 के अराउंड रखो। एक पुल बैक आना चाहिए यहाँ से, बाकी ऊपर वापस आता है तो 28, जैसा मैंने बताया, 5859 के अराउंड वापस सेलिंग का प्लान रखियो। यहाँ से एक पुल बैक आने के चांसेस हैं। एसएल भी है, इसका मतलब ये नहीं कि एसएल नहीं लगाना है। 2836 के नीचे एसएल रखना, अगर जाता है तो फिर निकलना भी है, ठीक है। बाकी अगर एग्जैक्टली बाकी थोड़ा सा एग्जैक्टली अगर थोड़ा सा और नीचे आ जाए तो वो भी बेटर है। 28 जैसा मैंने बताया 2830 2829 के अराउंड वो एग्जैक्टली सपोर्ट ही है। सो ये कुछ सिचुएशन चल रही है फिलहाल गोल्ड में। चांस शेयर वाले जी 7 के बुक कर लिया क्रूड ऑयल सेलिंग साइड पे। ग्रेट। वाले पे एग्जैक्ट सपोर्ट पे आया तो फिर एसएल वही 2825 के अराउंड बनता है। अब वहाँ पर आएगा नहीं आएगा देखना पड़ेगा। थोड़ा पुल बैक आ जाता तो बेटर रहता क्योंकि वो लास्ट 3 कैंडल कंटिन्यूसली गिरी हुई है, तो जिन लोगों ने नहीं किया उनको भी एक अपॉर्चुनिटी मिल जाती। एक बार फॉरेक्स का चार्ट भी देख लेते हैं। ठीक है ये भी हो गया इसका भी। क्रूड ऑयल में सेलिंग में अभी भी हो तो फिर ट्रेलिंग एसएल का यूज़ कर सकते हो, वैसे टारगेट हो चुका है। If you still want to hold, trail the SL. Eighty people are watching. Come on guys, बाकी लोग भी लाइक करते रहो। कल नेचुरल गैस इन्वेंट्री आने वाली है, ध्यान रखना। सपोर्ट पे जरूर है बट अगर इन्वेंट्री पे कुछ भी हो सकता है, मूवमेंट आ गया उससे पहले जिसके चांसेस कम ही है, तो वेल एंड गुड। नहीं आता है तो फिर इन्वेंट्री का वेट करेंगे। इस कैंडल के बाद सिर्फ एक कैंडल और है इन्वेंट्री में। लाइक्स डन, लाइक करते रहो गाइस सभी लोग। कि फॉर्म में आके अननेसेसरी रिस्क मत ले लेना, सेटअप बनेगा तभी ट्रेड करना, अदरवाइज अवॉइड। लाइक 21,660 बाई से हूँ, उसमें तो टारगेट हो चुका है ऑलरेडी, प्रॉफिट बुक कर लो। नैस्डैक का बताया अभी मैंने, टारगेट हो चुका है उसमें। ऊपर वो रेजिस्टेंस जोन है, ब्रेकआउट हो गया तो और ऊपर जा सकता है, अदरवाइज वहाँ पर थोड़ा बहुत कंसोलिडेशन में फंस सकता है प्राइस। मार्केट तो ओपन हो गया, टारगेट हो चुका है यहाँ पर 21,700। ये थोड़ा सा कंसोलिडेशन एरिया है। बाकी 21,780 की 90 के ऊपर क्लोजिंग आती है या फिर कोई नया सपोर्ट बना देता है तब थोड़े और चांसेस रहेंगे। बाकी ट्रेलिंग करना है तो आप प्रॉफिट बुक करके ट्रेलिंग ऐसा लगा लो कॉस्ट पे। पंद्रह मिनट और हैं नेचुरल गैस इन्वेंट्री में। इन्वेंट्री देखो फोरकास्ट के अकॉर्डिंग अगर देखें, लास्ट टाइम जितनी आई थी -320, उसके कंपैरिजन में थोड़ा ज़्यादा ही एक्सपेक्ट कर रहे हैं, -167। तो फोरकास्ट के अकॉर्डिंग अगर डेटा ज़्यादा आता है कुछ भी, इट इज़ नेगेटिव फॉर नेचुरल गैस प्राइस। प्राइस को गिरना चाहिए अगर फोरकास्ट के अकॉर्डिंग डेटा आया तो जो लोग सेलिंग में है आई होप वो लोग निकल गए होंगे। जो लोग बाइंग में है वो लोग भी ऐसा थोड़ा स्ट्रिक्ट रखना। वी डोंट नो किस साइड मूव हो जाए, जरूरी नहीं है कि फोरकास्ट के अकॉर्डिंग ही डेटा है। समझ गए ना? पहले भी देखो पुल बैक दे दिया ठीक ठाक. लेट्स सी ऊपर तक आता है तो 2857-58 तक.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Thursday morning trading is underway with modest moves on Wall Street. That's the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by about 0.2%, getting close to 6,100. The Dow Jones Industrial Average opens 0.2% higher as well. It's close to 45,000. And the Nasdaq Composite opens with a gain of, there it is, 0.2% at about 19,700. The 10 basis points at
जैक में बताया मैंने ऊपर वो रेंज पूरा ही कंसोलिडेशन का है मेरे अकॉर्डिंग. उसमें ऊपर और कोई लेवल अभी है नहीं. दैट होल एरिया इज अ कंसोलिडेशन एरिया. प्राइस अगर 21,790 के ऊपर क्लोज करेगा फिर देखते हैं. दिस होल एरिया इज अ कंसोलिडेशन जोन. तो यही एक एरिया है. कुछ नए लेवल बनेंगे वो देखेंगे, नहीं तो 21,790 के ऊपर कैंडल क्लोज होती है तो उसके बाद. तो दिस इज अ रेंज. Okay, 15 minutes left guys in natural gas inventory. Only 15 minutes left. ज़्यादा लाइन क्या ड्रॉ करी है सर आपने? कुछ ज़्यादा ही लाइन ड्रॉ कर दी लग रहा है आपने मिस्टर हैरी. इतनी ज़्यादा ट्रेंड लाइन क्या ड्रॉ कर दी है? थोड़ा ट्रेंड लाइन कम रखो. मुझे भी देखने में थोड़ा सा कंफ्यूजन लग रहा है. Remember always, those who tried to bury you didn't know you were a seed. Got it? कल होगा आई थिंक एक डेटा इंपॉर्टेंट कल भी रहेगा. कल लास्ट ट्रेडिंग सेशन है ना. ये एवरेज आर्ली अर्निंग और नॉन फार्म एम्प्लॉयमेंट चेंज बोथ आर इम्पॉर्टेंट. कंज्यूमर सेंटिमेंट भी है बट ये दोनों भी इम्पॉर्टेंट है. बाकी हो सकता है नेक्स्ट वीक थोड़ा लाइव स्ट्रीम ना कर पाऊँ, तो देखते हैं मंडे और ट्यूसडे को स्पेशली.
At 4.44%. So not a lot of movement on Wall Street, but there is lots happening overseas. Israel's defense minister says he has ordered the military to draft a plan for Palestinians to leave Gaza voluntarily. That's after President Trump floated the idea of a massive resettlement and U.S.-led rebuilding of the war-torn territory. We get more from Bloomberg's Ethan Bronner in Tel Aviv.
I think that everybody here, like everybody everywhere, is raising the question of how realistic and how serious this is. But I think that from an Israeli perspective, it is great that it opens the conversation beyond the binary of, is it either going to be run by Hamas or Palestinians, or we're going to have to occupy it.
Bloomberg's Ethan Bronner in Tel Aviv. Now, White House aides had been tempering the president's proposal since he floated it this week. Press Secretary Caroline Leavitt called it out-of-the-box thinking. This morning, the president doubled down, as we hear from Bloomberg's Laura Davison in Washington.
What he suggested in a social media post is that at the conclusion of fighting, the Gaza Strip would be turned over by Israel to the U.S., when then the U.S. would be responsible for developing some sort of hotel resort project.
Bloomberg's Laura Davison reports the president called for Palestinians to be resettled elsewhere in the region. He says no U.S. soldiers would be involved. Palestinians say they reject all calls for displacement from their homeland. This morning, President Trump is attending 2 national prayer breakfasts. He's speaking now to supporters at the Washington Hilton.
And I do that despite the fact that they say I can't run again. That's the expression, sir. Then somebody said, I don't think you can. Oh.
Earlier on Capitol Hill, the president said he would talk with congressional leaders about upgrading the air traffic control system after last week's deadly midair crash in Washington. Trump meets with Republicans this morning to work on strategy for a budget. Bloomberg's Bill Ferries reports time is running out.
A deadline is coming up, and I think patience is running out. The Senate and the House have been at odds, even though they're both controlled by Republicans, as you know, but they've been at odds over how to achieve some of President Trump's budgetary and policy goals here, and it looks like that is breaking more out into the open today, and we'll have to see if President Trump can help make a decision.
Bloomberg's Bill Ferries. Senate Republicans are pushing to delay work on extending Trump's tax cuts so they can pass border security resources first. House Speaker Mike Johnson wants to pass both issues through his narrow House majority in one big bill. This is the last day for federal workers to take up the Trump administration's offer to keep getting paid through the end of September, as long as they leave their jobs by the end of this month. As of yesterday, more than 40,000 had. That's about 2% of the civilian workforce. The White House had estimated 5 to 10% would take the so-called buyout offer. The latest read on the overall job market looks like this. Weekly jobless claims picked up last week to 219,000, more than economists expected, but still in line with pre-COVID levels. Labor productivity picked up at the end of last year, up 1.2%. For the full year, it was 2.3, the best in 14 years if you don't count the pandemic. The Fed is hoping that productivity gains, including through technology, will keep labor costs low. Checking some stocks at the open, Roblox shares are tumbling down 17%. The gaming platform reported more than 3 million fewer daily users than Wall Street expected. Eli Lilly shares are up about 2% at the open. It met Wall Street's estimate for earnings. The company's working through inventory problems with its blockbuster diabetes and weight loss drugs. Ford shares are down 4% after the automaker warned its profit could fall by more than $2 billion this year. And it's the end of an era for an industrial conglomerate. Honeywell is splitting in three. Bloomberg's Kriti Gupta has the details.
They're now going to be breaking apart into companies dedicated to one to automation, one to aerospace, and another to advanced materials. Automation being the largest business. It looks like it's a breakup idea inspired by their talks with Elliott Investment Management. That's the activist fund that's been working with Honeywell.
Bloomberg's Kriti Gupta. The breakup news comes as Honeywell came out with an earnings forecast for this year that missed Wall Street estimates at the open. Honeywell shares are down 4.5%. That's news when you.
Guys, crude oil में जो लोग buying में हैं, not seed बीज की बात कर रहा हूँ मैं, not seed मतलब तो अलग मीनिंग हो जाएगा. I'm saying there's those who tried to bury you did not know you were a seed. SEED. ओके, क्रूड ऑयल में गाइस ध्यान रखना, जो लोग बाइंग में हैं इस वीक सपोर्ट लेवल से, यहाँ पर एक एफईजी है. देखते हैं यहाँ पर रुकता है तो थोड़ा सा बायर्स ध्यान रखना. अगर एफईजी के ऊपर क्लोज कर गया तो फिर और ऊपर जाने के चांसेस रहेंगे. तो यहाँ पर क्या करेंगे, एफईजी के ऊपर अगर कैंडल क्लोज आती है तो फिर अपना हाफ प्रॉफिट बुक करके ट्रेल कर लेना एसएल. बाकी इन्वेंट्री आने वाली है 5 मिनट में. अगर किसी ने बाई किया था नेचुरल गैस, एसएल गॉस पर रख लो. मुझे भी नहीं पता इन्वेंट्री क्या आएगी, ठीक है. फोरकास्ट तो बेरिस है, अगर फोरकास्ट देखोगे फोरकास्ट बेरिस ही है, बट एग्जैक्टली डेटा कितना आएगा वो तो डेटा आएगा तभी पता चलेगा, ठीक है. लास्ट टाइम -321 था, इस बार -167. लास्ट टाइम से कम, लास्ट टाइम से हाँ माइनस है ना, -321, और इस बार -167 बिलियन एक्सपेक्ट कर रहे हैं. लास्ट टाइम से ज़्यादा एक्सपेक्ट कर रहे हैं, तो अगर फोरकास्ट के अकॉर्डिंग ज़्यादा आता है तो प्राइस के लिए नेगेटिव हो सकता है, तो प्राइस फिर वापस नीचे ना चला जाए. ओके ग्रेट. देखो इसका भी हो गया है टारगेट क्रूड ऑयल का बाइंग का. निकलना चाहो तो अब निकल जाओ, बाकी कैंडल क्लोजिंग का वेट कर रहे हो तो कैंडल क्लोजिंग का वेट कर सकते हो. दोबारा सेल मत करना, ठीक है, ऑलरेडी सेल कर चुके हैं हाई लेवल से, सो डोंट सेल डायरेक्टली, वेट करेंगे. एक बार देख लेते हैं इसके ऊपर और कहाँ पर जा सकता है प्राइस. ओके ठीक है, इस लेवल के आसपास. फाइव मिनट लेफ्ट. क्रूड में बुक करना चाहो कर भी सकते हो, ठीक है. जो लोग बाइंग में हैं दे कैन बुक द प्रॉफिट. बाकी एक कैंडल एफईजी के ऊपर ही क्लोज करेगी तो रिमूव कर देंगे. Minute left guys, only 3 minutes left in inventory, crude oil inventory. 2 minute left. Yeah, 2 minute. क्रूड ऑयल को भी देखोगे तो ऊपर से वापस रेजिस्टेंस लिया है, थोड़ा और ऊपर आ जाता तो बेटर रहता, फिर से वहां से सेल करते। बट जिन लोगों ने बाइंग किया होगा अच्छा प्रॉफिट हो गया होगा। सेम ही 80 पॉइंट वहां भी मिले। कैंडल देखते हैं एफईजी के नीचे आती है फिर ऊपर क्लोज होती है। इंपॉर्टेंट है क्लोजिंग कहाँ हो रही है। 2 मिनट। ट्वेंटी के बुक कर दिया क्रूड ऑयल में, ग्रेट। 2 दिन से ऐसा ही हो रहा है, बाइंग में 5 मिनट में टारगेट आ जा रहा है। वॉलेटिलिटी बहुत ज़्यादा है आजकल। मेन रीजन वही है ना, यूएस में प्रेसिडेंट ट्रम्प कब क्या बोल दें कुछ भरोसा नहीं है वहाँ पे। seconds are left. जी आई लाइक यू कॉन्फिडेंट माई प्रॉफिट आर वाइप्ड आउट। बुक नहीं किया क्या आपने? नैस्डैक की बात कर रहे हो? देखते हैं उसको, एक सेकंड थोड़ा इन्वेंट्री देख लेते हैं एक बार। ओके इन्वेंट्री आ गई है, लुक्स लाइक पॉजिटिव ही आई है, गैप अप कैंडल है। देखने दो, आने दो एग्जैक्टली डेटा। पॉजिटिव लग रहा है। हाँ पॉजिटिव ही आई है। -167 कम एक्सपेक्ट करी थी, कम ही आई। सॉरी -167 बिलियन, जितना लास्ट वीक था उससे ज़्यादा एक्सपेक्ट कर रहे थे, कम आ गई है। -167, वहाँ -174 है, माइनस का भी साइन है। तो फोरकास्ट छोड़ो, जितना फोरकास्ट किया था प्राइस इन्वेंट्री उससे कम आ गई है, तो इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस। -167 था, -174, ज़्यादा डिफरेंस नहीं है, थोड़ा सा ही डिफरेंस है, बट या इन्वेंट्री इज पॉजिटिव फॉर नेचुरल गैस प्राइस। लेट्स सी कितना होल्ड करता है, डिफरेंस बहुत कम है, 167 174, लग 7 बिलियन का ही डिफरेंस है, बहुत ही कम। जो लोग बाइंग में थे अपना एसएल कॉस्ट पे रखे रहना, ठीक है। ओके देखो कैंडल क्लोज हो गई है, एफईजी के ऊपर क्लोज हो गई है, तो अभी एफईजी हमारे काम का नहीं है, इसको हम रिमूव कर देंगे। नहीं उसको भी लेते हैं अभी। इन्वेंट्री पॉजिटिव फॉर नेचुरल गैस प्राइस। नेचुरल गैस इन्वेंट्री इज पॉजिटिव फॉर नेचुरल गैस प्राइस। नेचुरल गैस के प्राइस के लिए पॉजिटिव है, इसको ट्रेल कर लो। हाँ ट्रेल गैस। मैं आगे 10 के बुक किया था, 20 के बुक कर लिया, बढ़िया है, ग्रेट। 5 मिनट में मैंने तो 15 मिनट का चार्ट लगाया, 5 मिनट में यूज़ नहीं करता हूँ। क्लोज कर दो, अब क्यों करना है क्रेट। नेचुरल गैस में अगर हो ट्रेड में तो ट्रेल कर लो ऐसे। बाकी अब ट्रेड क्रूड ऑयल में तो ऊपर ही मिलेगा अगर ये रेजिस्टेंस पे यहाँ आ जाता है, या फिर ये नीचे आ जाए, इन दोनों ही लेवल पे अब अच्छा ट्रेड मिल सकता है या फिर इसके अलावा कोई नया ट्रेड बन जाए तो नया लेवल क्रिएट हो जाए। ठीक है, गोल्ड ने भी अच्छा पुल बैक दे दिया है एज एक्सपेक्टेड। लेट्स सी थोड़ा ऊपर तक जाता है 285758 या फिर एक और डिप लगाता है नीचे। ग्रेट पुल बैक। क्या था ना, ऊपर वाले लिक्विडिटी लेके गया। फिफ्टीन मिनट का ही चार्ट था बट 5 मिनट में ही मूव आ गया। अच्छा 5 मिनट में ही मूव आ गया। 5 मिनट में ही फास्ट आ गया मूव कह सकते हैं। ठीक है, बाकी बायर्स आई होप निकल गए होंगे। अगर कोई अभी भी रुका हुआ है तो रिमेनिंग क्वांटिटी का एसएल कॉस्ट पे रख लो। यहाँ से वापस अभी सेलिंग एक्सपेक्ट नहीं कर रहा हूँ। देखते हैं कुछ नया लेवल बनता है थोड़ा ऊपर या फिर नीचे प्राइस वापस आता है इन लेवल्स पे। बाकी नेचुरल गैस में भी एसएल कॉस्ट पर रख लेना। ऊपर दो एफईजी बने हुए हैं, देखते हैं कहाँ पर रुकता है प्राइस। लगा ही देते हैं एक सेकेंड। यहाँ पर एक छोटा सा एफईजी है, लेट्स सी होल्ड करता है या नहीं। नहीं नहीं उसको नहीं। नैस्डैक 21,660 से बाई। अच्छा आपका बता तो दिया सर हैरी जी। 21,660 से ट्रेलिंग एसल नहीं लगा रही क्या आपने? आप तो फॉरेक्स में ट्रेड कर रहे हो तो ट्रेलिंग एसल डाल दिया करो, आपके लिए तो बड़ा इजी होता है वहाँ पे। चार्ट से डायरेक्टली मूव करो, यू कैन इजीली ट्रेल द एसल जैसा फॉरेक्स में करते हैं हम लोग। ठीक है, थोड़ा कंसोलिडेशन जोन है ये। ट्वेंटी वन थाउजेंड सिक्स सिक्सटी पे दो बार लिक्विडिटी लेने आया था। इस पर मैं कुछ कमेंट नहीं करूँगा। यहाँ जरूर सपोर्ट था 21,600 पे, वहाँ से ले चुका है लिक्विडिटी। हो सकता है कोई न्यूज आ गई हो। एंट्री आ चुकी है नेचुरल गैस की, पॉजिटिव ही आई थी मतलब प्राइस के लिए। Natural gas inventory data is positive for natural gas price. यहाँ देख सकते हो लास्ट टाइम forecast -167. एक्चुअल में आई है -174 और लास्ट टाइम आई थी आपकी माइनस में 321 बुलियन. की अर्निंग है टुडे इवनिंग सो आई कैन नॉट क्वाइट इजीली. अच्छा यूएस मार्केट में हाँ वहाँ इवनिंग मतलब यहाँ नाइट हो जाएगी. ये भी एक एफईजी है नेचुरल गैस में नीचे वाली सी रिजेक्शन ले लिया इसने. ये ऊपर वाला एफईजी है जस्ट इसके नीचे देखोगे एक और एफईजी दिख जाएगा आपको. दिस वन ये भी एक एफईजी है. इन्वेंट्री पॉजिटिव जरूर आई थी गैप अप भी हुआ थोड़ा बहुत ऊपर भी गया बट वापस प्राइस पुल बैक गिव्स द पुल बैक. बायर नेचुरल गैस में अपना एसएल कॉस्ट पे रखना अगर ट्रेल कर रहे हो ठीक है. नीचे मत लगा के बैठ जाना कॉस्ट पे ही होना चाहिए. इन्वेंट्री की कैंडल है किस तरह से मूव होगी डोंट नो. इन्वेंट्री पॉजिटिव जरूर आई है प्राइस के लिए बट यू कैन सी प्राइस इज नॉट मूविंग अपसाइड taking kind of rejection. Next value भी है. Let's see next candle देखते हैं next candle कहाँ close होती है. Next candle natural gas में बड़ी important हो जाएगी 15 मिनट की. Next candle will decide natural gas reverse करेगा यहाँ से या फिर और गिरता ही जाएगा यहाँ से नीचे.
Regarding tariffs and things of that nature, export controls that could also continue to weigh on some of these chip names moving forward. All right, next up, Roblox missing estimates for fourth
right now on the street. So I thought putting in perspective, especially Webbush's Michael Pachter, who has been on the program with us a number of times, he was saying that there is still a lot to be encouraged about within this report once you do look at some of those underlying numbers there. So I thought.
All right, coming up, with the intensifying trade war in China, Chinese retailers hit with an additional levy. What that could mean for some of your online orders. Plus, we've got the CEO of Brooks Running explaining how the company could navigate tariffs moving forward. Stick around for those conversations next.
Time. Right? Uh-oh. Free child alerts to the rescue.
Eli Lilly reporting earnings for the fourth quarter of 2024 in line with the street's expectations. Sales of the drug maker's weight loss drugs Mounjaro and Zepbound coming in slightly higher or lighter than analysts expected, but in line with Eli Lilly's estimates from earlier this month. Joining us now with more on the drug maker, we've got Jared Holtz, who is the Mizuho Healthcare Equities Strategist. Jared, good to have you on the program with us this morning. Just want to get your read in on Eli Lilly and the forecast that they're putting forward for 2025.
Thanks a lot for having me. Yeah, I think the forecast is fine. I think basically right in line with street expectations for the most part in terms of revenue, guiding EPS ahead. I know there are some analysts who thought earnings could even be higher. I'm sure they're reinvesting a lot of this back into the business for pipeline opportunities, et cetera. But I think when you see the totality of the numbers, I thought they were fairly strong.
Jordan, take a look at what's next here for Eli Lilly. Lots of questions about inventory issues, what some of the progress looks like there, what pricing is going to look like for some of these weight loss drugs, especially when you look ahead to 2027. How are you factoring that in?
Well, I think from a manufacturing standpoint, I really wouldn't want to be anyone other than Lilly or Novo at this point. When you can kind of consider how much they've invested behind CapEx and the supply chain, logistics, all those items, it's been overwhelming. I mean, over $30 billion invested over the past couple of years. So I'm really not concerned about manufacturing. I'm not really concerned about supply demand. I think demand is still incredibly high. Can they get enough drug to each patient in any particular quarter to kind of satisfy investors? I think that's the debatable topic. But as we move over the next couple of years into 2027, 28, when pricing gets a little bit trickier, I still think this is going to be either player 1A or player 1B, depending on the quarter in obesity.
It wouldn't be, of course, the Eli Lilly conversation if we didn't acknowledge the oral pill, orforglipron, which in itself sounds like it comes straight out of Narnia. But all these things considered, how quickly they're able to get that to market and what type of demand they're expecting to kind of normalize the run rate for the demand that we've seen across GLP-1s. How are you evaluating that? What does that kind of normalization look like long term?
Well, no one knows. I think that the toughest part about getting the modeling right or getting the forecasting right is just understanding how long each patient is going to be on the drug for. And I don't really think that's an exercise that anyone can predict with certainty. And as we move over the next couple of years, we're going to be faced with, a whole variety of other competitors, whether it's coming from Lilly or Novo or for another company. I think the orals are going to be a massive market opportunity insofar as the data from a safety standpoint is pretty good. I'm in the category, I think that the orals are going to essentially support the injectables and be used more for maintenance therapy. I don't think we're going to be able to get that much weight loss in a single pill. But for patients who have been very successful on the injectable already, I don't know why they wouldn't take a single pill every day to make sure they maintain their weight. So I think as we look at the markets, that's really where these things are going to fit in.
Jared, what's the efficacy threshold, do you think, in order for that to work?
I think anything north of 10% for me for a pill would be pretty good. I know other analysts are out there and companies are saying 15%. I'm not really sure we need that. And the reason for that is look at what's happening in the GLP market already. Patients are fine losing 15 to 20% of their weight. I don't think there's a desire for the majority of the bell curve in this market to lose more than that. So I think from an oral, if you can lose around 10%, and obviously that's going to work in a maintenance market as well. You could have patients who take this as a first-line therapy. You could have patients who take this adjunctively to an injectable. It's a huge opportunity.
ओ मेहता साहब किन ख्यालों में खोए हुए हो?
म्यूचुअल फंड के इक्विटी फंड में एसआईपी तो किया है पर अभी मार्केट डाउन है समझ नहीं आ रहा चालू रखूं या बंद कर दूं।
म्यूचुअल फंड्स में रिस्क तो है इसलिए इसमें उतने ही पैसे डालो जिसे लंबे समय तक रख सको।
बात तो सही है आपकी चले
चलिए
संभल के।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
We're taking a closer look at some trending tickers this morning. We've got Roblox, Hershey, and Tapestry all moving on earnings. We're covering them in 30 seconds each. Let's go. First up, Roblox. It's falling big after missing on daily active users in the fourth quarter. The video game developer reporting 85.3 million users versus Wall Street's estimate for 88.4 million. And fourth quarter bookings just falling shy of estimates at $1.36 billion versus the $1.37 billion that was estimated. Roblox has been growing at a fast clip, with shares up about 90% over the past 52 weeks. But its results, coupled with disappointing earnings from Electronic Arts, is fueling some concern about the health of the industry.
Plus, Hershey beating on fourth quarter earnings bolstered by higher prices. But the chocolate company is issuing a weaker than expected annual profit forecast pegged to higher cocoa prices. Now, the results following a similar story at snack maker Mondelez, which issued a weaker outlook on cocoa prices a day earlier. Now, cocoa futures up more than 90% over the past year.
And meanwhile, Tapestry is boosting its profit outlook for the year. It now sees adjusted earnings per share of $4.85 to $4.95 on the top end. That's up from the prior estimate of $4.50 to $4.55 in that range. The boost largely attributed to an 11% sales increase at Coach, its biggest brand. Tapestry says its outlook includes the expectation for an additional 10% tariff on goods imported from China into the U.S. The fashion firm says tariffs are not expected to have a big impact on fiscal 2025 results.
इन्वेस्टमेंट की रेगुलर इंफॉर्मेशन मिलती है क्या?
लेते हुए हाथ ऊपर जोड़
बिल्कुल। पूछ, विड्रॉ करने के बाद पैसे कितने टाइम में मिलते हैं?
सुन सवाल चंद, म्यूचुअल फंड सही है .com पर लॉग इन कर, वहां तेरे सारे सवालों के जवाब मिल जाएंगे, समझा?
सही है फिर। कौन सी वेबसाइट?
म्यूचुअल फंड सही है .com।
सही है।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Let's break it all down further with our own Josh Schaefer here. And Josh, you've been tracking since you came into the newsroom this morning saying, all right, there's not a ton of movement this morning, but ultimately we're still
here. There's something to be excited about.
Some days futures are just kind of flat, right, Brad? Yeah. And that's okay. Yeah. We'll get some movement once the trading session starts, I'm sure. But I mean, I think the biggest thing I was watching sort of overnight into this morning is what Shana was referencing with how the administration's talking about watching the 10-year yield rather than the Fed in terms of interest rates, and thinking about why we normally, or how we're normally watching the 10-year yield in terms of the economy, right? And sort of how economic data will move that 10-year yield. Of course, the administration essentially saying that they feel like they want 10-year yields to come lower, right? So what would bring 10-year yields lower? Probably some version of soft economic data, right? If we look ahead to tomorrow's January jobs report, typically hot reports have sort of sent yields a little bit higher, right? Sparked a bond market sell-off. So that will be something to watch going into tomorrow. But one thing I was writing about, Shauna, this morning was we keep talking about the stable labor market, right? And sort of what can change that narrative. It's been a lot of low hire, low fire, things are okay if you have a job. That's sort of been the labor market vibe for, feels like 6 months now. And I asked Neela Richardson, what could, she's ADP's chief economist, what could kind of change that? She pointed to inflation, which I thought was interesting and sort of reminded me that every conversation still feels like it comes back to inflation. Her point being, right now, a lot of the sectors that are leading the gains in the jobs market are consumer-facing sectors. So if you get a period or resurgence of inflation off of these tariff policies, off of really anything, it could hurt the consumer, then hurt hiring. Maybe that's how you get your labor market slow down. But net, the question continues to be, what will slow down the labor market that is moving relatively steady at this point?
And I wonder how worried she is about the inflation picture right now, just in terms of that narrative, that rhetoric changing almost daily here when it comes to the latest updates that we're getting from the White House, even on the street, very much. They still have it in their view, but not so much calculating or incorporating it, I don't think, into their models as of yet. We've gotten some of these worst case scenarios, our discussion with Matthew Lazzetti not too long ago, just about maybe what that upside pressure could potentially look like. But I guess the question is, how much of an uptick do we need to see in order to see maybe some of that deterioration?
Yeah, I mean, just talking specifically about what Matt had said, Matt would point to about 3% on PCE, right? And you're looking at a year-over-year PCE at 2.8, so you'd have to move up a little bit. And I think part of what Neil was talking about is what Fairshare Apparel talks about, which is inflation, but also inflation expectations, right? So expectations started to tick up a little bit, haven't moved up significantly. And then to your point on the actual data shifting higher, that's not really where the story is right now. It's just coming down slower than it was. So it seems like it would take several months for that to play out, right? For us as consumers to realize, oh, inflation's going back up, I have less money than I thought, I'm going to spend less. That's a trickle down that would take a little bit, but still could come eventually. I think overall, it's just hard to paint different pictures of what's going to really deteriorate the labor market at this point. So we're kind of trying to find a needle in a haystack when it comes to that story.
Well, and going sector by sector, two of the ones that she called out as we had her on yesterday was manufacturing and construction. Those both seeing declines, signaling a shift in the labor market, she told us on Yahoo Finance as well. And if you want to know everything that you need to know about the labor market, follow the consumer, coming back to your discussion with her. And we, on top of that, got jobless claims info out this morning, which came in
Let's go on an adventure. Explore
from the Wall Street Journal.
Now, the legislation is echoing a strategy that was similar to what Congress used to ban TikTok from government devices, which marked the beginning of the effort to block the company from operating in the U.S. We know DeepSeek really moved the market following the revelations, the headlines just about how effective it could potentially be, maybe the risk that this then poses to some of the massive spending that has been going on from some of the larger tech giants here in the U.S. But ultimately, I think the takeaway has been it's good, though, for wider adoption, right, going forward. So we'll see how this all plays out. All right, coming up next, it's Wealth, dedicated to all of your personal finance needs. Brad Smith has you for the next hour.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks mixed as investors look ahead to Amazon's earnings out after the close. Eli Lilly shares rising. The company beats Wall Street's expectations in its fourth quarter and issued an upbeat outlook as Lilly sees surging demand for its weight loss and diabetes drug. And sticking with the pharma space, Bristol Myers Squibb dipping today. The company saying generic competition for its older drugs will cause its full year 2025 revenue to fall more sharply than analysts forecasted. And Peloton shares soaring. It's after boosting its guidance and handily beating earnings estimates. The company striving for profitability after a shaky couple of years. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. Hey, on today's show, we're examining your portfolio. We'll talk about ideas for artificial intelligence investing and how to broaden out beyond the Magnificent Seven. And real estate hacks. Mortgage rates have held between 6 and 7% for the last 2.5 years, according to Freddie Mac. I'll break this down with the Barbara Corcoran, who has 5 tips for your home search. Plus, the Super Bowl is nearly upon us. We'll discuss how to bet on the big game without breaking the bank. We've got all that and much more during today's show. But first, we take a look at some of the action here. We're 90 minutes into the trading day. Stocks, they are mixed as investors digest more earnings reports and look ahead to Amazon at the close today. They're going to be reporting earnings. Joining me now, we've got Brian Mulberry, who is the Zacks Investment Management Client Portfolio Manager. Brian, great to have you here with us in studio today. Thanks for making the trip.
Thank you.
You say that you're focusing on high-quality factors when investing in stocks to help manage the recent volatility that we've seen play out. What factors should those be that investors are watching?
Well, we've come a long way with the Magnificent Seven in such a short period of time. Explosive growth, explosive revenues, all profitable. Those are good things, but we are where we are now. Mag 7 PE averaged 38. That's a very rich valuation. The S&P 500 now at 22 times the forward one-year earnings. So where can we put money to work at a better valuation? So we're looking for those higher quality factors, which is strong cash flow management. So good free cash flow yield, low levels of debt, and low short interest. Those factors allow us to reach into some names that have a better valuation, but also the potential to maybe outperform that technology sector that's done so well over the last couple of years.
Nobody hears hedging in terms of an investment strategy and says, man, that sounds sexy. But that's really what's playing out right now as this volatility has certainly reared its head. So where are some of the top opportunities here and the ways to navigate volatility by hedging?
Absolutely, because sometimes boring is best, and that's what it comes down to. These are not super sexy names, to your point, but they do grow and they are very profitable names. And so what we like is companies that are using AI and analytics to be more targeted and more productive with the revenue that they're generating. A name that we really like is John Deere. Obviously, we just talked about farming. What you're seeing from John Deere is the ability to use AI analytics to build better, smarter equipment that is more efficient and effective for farmers to use. That means better, cheaper yields on the acreage, but also the ability to use less equipment and less manpower. That's productivity across the board. So John Deere is doing a great job of using AI, not just in designing their products, but also helping farmers be more productive as well. This is a great name, a PE of around 18, and a really strong revenue growth model for the next couple of years.
There's another pick that you had as well, I believe. It was JP Morgan.
JP Morgan, the biggest bank on the planet. Again, not a super sexy name, but they're using a growth model as well. And the analytics that they want to open around 500 branches in the next couple of years, it's really helping them target where to build those branches and what services they want to offer to engage with clients. Smart, efficient use of the capital that they're spending so that it will be more reliably profitable and productive for their balance sheet going forward, and a PE of around 13.
When you hear about some of the big CapEx dollars that are getting tossed around right now, the figures that are being brought up on earnings calls, how should investors be thinking about and evaluating when those spends actually turn into realized revenue and also pass through to the margins?
Absolutely. Looking into the details of what they're spending that money on, and then how is that going to be monetized. So if I'm building data centers to run large language models, what does that look like in terms of closing the loop and profitability? Is it just going to be a subscription service forever, or does it turn into kind of like what Google has been for 10 years, and that is a free service for consumers, but supported by ads? We don't know that yet. It's a lot of money. We're approaching $1 trillion worth of spend on these types of AI projects over the last year, planned for the next couple of years. Where does that get monetized? How does that come back to the balance sheet? Google going to spend $75 billion. Where does that come from? At Microsoft, $80 billion. We want to see revenue coming back to the balance sheet and profitability.
I guess what also got exposed is what DeepSeek means, and more DeepSeek perhaps as the poster child for competition really means for some of the spends that have gotten put forward, but also what real competitive landscape within the AI applications also mean for the rest of the industry's investments as well.
Absolutely. And I think that if we carve out that large language model segment of AI, the competition is big and it's growing. You already have Gemini, ChatGPT, Grok, all of these names. Apple's going to come out with their own, and now DeepSeek jumps into the fray at a substantially lower operating cost. Does that mean that, like Google or search, that eventually just this becomes a free service for consumers supported by ads? It's a bit of a race to the bottom right now. So monetizing large language models becomes a bit of a challenge with the wrench DeepSeek has thrown into that model. On the other side, generative AI, analytics, all of those have value that can substantially increase productivity, and that's the side that we're trying to lean into without the huge CapEx outlay. That's where we think we can find opportunity.
Who do you think has the most exposed business model as a result of potential free ChatGPT, DeepSeek-like tools, models, and applications that could be introduced to the market for free, as you were mentioning?
Well, I think at the moment, Microsoft is probably the one that has the most cloud business that they can support the large language model with. They've also been really good at Azure and it's stratifying different levels of service for enterprise use. That could easily translate into consumers in a free model, but enterprise functionality for businesses, again, the analytics side of it, that's one that I think would be very well positioned to do just that.
Brian, thanks so much for taking the time here with us. Great to see you.
Thank you.
Absolutely. Now time for some of today's trending tickers that we're tracking. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. Joining me now, we've got Catalyst co-host Madison Mills here in studio. All right, let's hop on a stationary bike, if you will, for a hot second here. First up, Peloton. It's popping this morning after beating on profit expectations in the second quarter and lifting full year guidance for adjusted EBITDA to $300 to $350 million from $240 to $290 million here. Shares, wow, they're up by about 14% right now this morning, Maddie.
Yeah, a huge turnaround in place from the new CEO of the company here. It's interesting if you take a look at analyst recommendations for the stock, despite this huge beat today, still very tepid reaction on Wall Street, right? Over 80% of analysts have a hold rating on the stock right now, only 3 buys and then 1 very rare sell rating. Having said that, some bullish commentary following today's earnings print, right? Peloton's solid financials reflecting laser focus on efficiencies, also stronger than expected EBITDA here, and this is really important, a 26% guidance raise for full year with EBITDA of $325 million at the midpoint, coming in hot there. Really great when it comes to the product mix. The new CEO, Peter Stern, really focusing on 2 things, efficiency and then mix with Tread and Tread Plus. It's not just about the bike anymore. It's also about those subscriptions, making sure that people don't cancel those subscriptions, keeping costs down when it comes to some of their staff. We obviously saw them cutting back on some of their A-listers over the past year, much to the chagrin of certain users, but all of those things clearly leading to a positive lift in their earnings.
Okay, the chagrin of certain users. All right.
Not to be named.
Okay, we won't name them. Not here, not now. You talk about some of the partnerships that they've had. They also had a partnership with Hilton, another company that reported earnings this morning. Hilton beating profit expectations in the fourth quarter, but falling short of a number of guidance metrics for the first quarter and full year. Shares, though, are up by about 5.6, just about 6% right now.
Yeah, revenue per available room is the kind of key stat when you are looking at earnings for hotels, and that was the shining star of this earnings print. Hilton's also going to be expanding into additional markets here, and just because of the bullishness around that revenue share per available room, we're also seeing a lift to other hotels in the space. Marriott and Hyatt also trading higher today. When it comes to that revenue per room outlook for 2025, that growth leading the street to estimate that the company is going to potentially outperform their rivals, that they could also continue to expand more broadly in North America and Europe. And interesting to see that they are seeing that global expansion when we do have questions about what global economies are going to look like, especially as we get into some tariff conversations, and those policies could potentially be impacting companies globally as well. But one comment that stood out to me, strong trends in leisure occupancy and continued growth in the business continues to lead to expectations for favorable trends throughout 2025 here.
Yeah, 8% growth in their approved and kind of the development pipeline that they were mentioning here. 498,600 rooms in that pipeline. So we'll see how that ultimately gets brought to fruition and where we see some of the bookings be beneficiaries as a result. Stick around. We got one more here, and this one's a little tastier. Yum Brands, sales turning positive after 3 consecutive quarterly declines here. Same-store sales rising 1% in the fourth quarter, driven by growth at Taco Bell here. You're taking a look at shares up by about 8% on this news. Congrats to Sean Tresvant and team at Taco Bell. He's the CEO over there, and certainly contributed to Yum's results here.
I thought it was really interesting that they not only succeeded, as you mentioned, at Taco Bell, but they were also able to succeed at some other firms here. Obviously, strong Taco Bell sales fueling the beat here, but KFC, their same-store sales, they were flat for the quarter, but the fried chicken chain overall did see strong demand outside of the U.S., specifically in China, and that was actually a through line amongst all 3 companies that we just mentioned today, Yum, Hilton, and Peloton, all seeing a little bit of an uptick in demand coming from China, which could be a positive indicator just throughout our entire stock market, because all 500 names have been impacted by that declining economy in China here. So if you can see growth there, that is potentially a positive catalyst for a lot of these names. Yum also growing its unit count by 5% over the course of this year, so we can continue to expect more of that growth. And then they had this AI announcement. They're giving franchisees some AI-driven software that can be used for digital orders for their kitchens. So that could potentially make things easier for customer orders.
I thought you were about to tell me that AI was going to come up with the new taco that we're going to be ordering. If only, yeah.
But no, just like online chatbot stuff. Now that's just, even though AI is brand new, I'm like used to that by now. That's not as snazzy as it once was.
Exactly. But, it's the call center rejuvenated, I guess.
Exactly. Yeah.
Maddie, thanks so much for taking the time.
Thank you, Brad.
Appreciate it. Coming up, everyone, we're talking about the state of the housing market with Barbara Corcoran, who joins me on set. Stay tuned.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Shares of chipmakers Qualcomm, ARM, and Skyworks lowered today after disappointing investors with their latest results. And if you're looking for some new ways to invest in AI beyond chips, there's plenty of ways and insights in ARK Invest's Big Ideas 2025 research report. Joining me now to break down some of the biggest trends in the technology space and how investors can play them, we've got Brett Winton, who is the ARK Invest Chief Futurist. Brett, great to have you here with us. Let's start with AI here. What are the three names that you're watching within this space?
Sure. Well, there's platform as a service type companies such as Palantir that allow enterprises to set up their data to be successfully deployed against artificial intelligence. Of course, there's Tesla, which is using AI to drive its robotaxi service, which should commercialize by June. And then Tempest AI is a great example of deploying artificial intelligence into the healthcare space. And that really is the industry that probably has the most to gain from AI, since so many health dollars are inefficiently administered today, and AI can really drive better decisions and better patient outcomes.
Now, a lot of our viewers might be looking at the screen. They see Anthropic, they see SpaceX, and they say, hey, wait a minute, those are not publicly traded companies. Are we seeing abilities for retail investors or those who might not have the big dollars to throw around to get early exposure? And how is that kind of allowing them to focus in on the next wave of innovation to come through AI?
Yeah, we have the ARK Venture Fund, which is, we've really worked hard to allow that to be available to any investor, not just accredited investors who have to hit certain wealth thresholds, and so that has OpenAI has OpenAI, Anthropic, xAI, SpaceX. These are all companies within that fund, and we really think it's both a unique investment exposure, and it's a great way to get access to innovation that you otherwise can't get access to.
You know, Brett, as we think about AI, there was the major wrench that was thrown at the mindset of markets and investors with DeepSeek. And so with that in mind, is this a positive or net negative for AI development? How are you evaluating that?
Yeah, it just accelerates the performance improvement curve and the cost decline in AI. So artificial intelligence, we think, is cost halving every 4 to 5 months compared to traditional technology cycles where that takes 2 years. If anything, DeepSeek hit or potentially accelerated that curve. With every cost halving, we've seen an expansion in the amount of money invested and the number of opportunities that people see in deploying AI into real-world productive circumstances. The same is true here. DeepSeek is likely to drive and breadthen kind of the number of AI exposures that are interesting and just bring the future forward faster.
And, you know, as we think about, and you mentioned the halving of costs to make sure that AI is more affordable to operate, then there's also the halving that we thought about with crypto last year. I wonder how you are evaluating the cryptocurrency landscape and the calls that have emerged from ARK just around Bitcoin and where even stablecoins play into the larger landscape over the course of 2025.
Yeah, stablecoins are really important in growing innovation. It allows anybody in the world to get synthetic dollar exposure, and many emerging markets want synthetic dollar exposure. It should actually reduce the cost of funding, reduce interest rates in the US. And we think that stablecoins pair really well with Bitcoin, where people want kind of to use the dollar as a unit of account on a global basis. And they also want in a currency without a country, a hedge against everything that happens with the traditional dollar system. And so we think that you could end up in kind of a two-currency world in the future, where you have a dollar-dominated world with Bitcoin as kind of like this alternative currency that lives alongside it.
And so how does that also, crypto asset adjacent, when you think about the platforms that allow for the buying and selling, the trading and holding of crypto, does that thesis also translate over to the investment thesis for those platforms, thinking about Robinhoods, thinking about the Coinbases of the world?
Yeah, we think Coinbase is extraordinarily well positioned here. They facilitate, not just the trading of these instruments, but they are really building a robust layer 2 solution for smart contracting platforms to operate, and everything from prediction markets to meme coins to really new ways to deploy and motivate capital all accrue to Coinbase's benefit. And this isn't independent of AI. We think that kind of smart contracting ecosystems are where AI autonomous agents are going to really sharpen their teeth. And that could inspire a lot of activity as you have digitally native assets operated by AI agents into real-world capital markets. It could be a wild couple of years.
Brett, thanks so much for taking the time here with us today, breaking down some of these 2025 ideas. Appreciate it.
Thank you.
Vanguard is lowering investing costs from dozens of its mutual funds and ETFs. The firm says the reductions could save investors more than $350 million this year alone. To help explain and put it into some context here, we've got Yahoo Finance senior columnist Carrie Hannon. Carrie, what do we know about this?
Hey, Brad. Yeah, now this is the largest reduction in their fees in its entire history for Vanguard, so that's about 50 years. This is a big deal. It's 168 funds and ETFs where they've slashed their expense ratios, which is in essence the operating costs. So it's everything from management fees to accounting fees, legal fees, all kinds of things that go under the covers of what it costs to run these funds. That's what you think of as your expense ratio. And in fact, they slashed that 20%, which is really great for investors. And in fact, we may see more of their competitors doing a similar thing. So today, their average expense ratio at Vanguard is something like 0.07% compared to an industry average, which is around 0.44%. So this is really good news. Now, I've got to say, Vanguard is very low expense anyway. So they've already have very low expense ratios. So while it's significant when you say 20% cut, they're still pretty low to begin with. So it's the more important thing is the message it sends to people is that we care about your costs. Now, I'd be remiss not to mention that Vanguard in the last couple of weeks ago did have a settlement with the SEC for what is called, for one of its target retirement funds. The settlement was around $106 million, and it was for, quote, misleading statements related to capital gains distribution. So, there's always good and bad news along these things. So maybe it's back, a way of some good PR for them. But whatever it is, it's great news for investors.
So what do lower expense ratios mean for investors then? And how should they be thinking about this change in their portfolios?
Exactly. It all comes down to fees, Brad, because the fees are taken out of your investment return. So over time, even something that seems like minuscule, like I just said, 0.07%, right? Now that seems like a tiny little fraction of money. But when you look at it over time, it has an outsized impact on what your actual investment is going to return to you. So it's very important that people pay attention to fees because it's something none of us really think about. And you can go to the page of the mutual fund, you see, it says right there what the expense ratio is. Anything under 0.10% is considered low. Go for the lowest fees you can get. If you have the opportunity to find a low-cost fund, the lower, the better, because you'll be grateful down the road when you find out that there's less being taken from your account. If you want to know specifically what those, quote, operating expenses are, go to the fund's prospectus, which you can find a link to it on the fund page as well, and dig through all that stuff, and they'll explain what they're spending on. But the key is that fees matter. They matter big time, and a lot of people just think, oh, it's such a small amount. What do I care? You should care.
Carrie, thanks so much for breaking this down for us. A huge move, it sounds like, being made over there. Appreciate it. Coming up, everyone, the Super Bowl is this Sunday, and we're talking to a sports betting expert about the best ways to bet on the big game without breaking the bank. That's next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Sports betting around the Super Bowl is exploding in popularity as more states legalize the activity. Wagering amounts around the big sports day has nearly quadrupled since 2019, hitting $23.1 billion in 2024 and is forecasted to reach as high as $28 billion by 2025, according to Dox Sports. Joining me now, we've got Rafael Esparza, a handicapper at Dox Sports. Rafael, great to have you here with us today. So can you just start by breaking down what a handicapper does?
I want to jump back on that question. Just wait till Florida, Texas, and California have sports betting. We'll probably look at $35 to $40 billion. But what I am labeled as a handicapper / odds maker. I also do a lot of the prop bets that you can bet on throughout the Super Bowl. But a handicapper is what we like to call ourselves, is a guy that studies everything, that can give the public a better opinion on what's going to happen in the game. And we do the research for you so we can help the bettors out there to try to see what goes for over, under, who we like in the game, Chiefs, Eagles, or how many points are going to be scored. So it breaks it down like that. But for me, for being an odds maker, I'm the guy that creates all those Taylor Swift prop bets, and Travis Kelce is he going to get engaged after the Super Bowl. So it's pretty crazy right now.
So what trends are you expecting to see this year as wagering amounts grow even more?
It's been crazy. I'm here right now in Super Bowl week, and a lot of people wanting to bet the referee prop bet. So we getting tons of action on referee prop bets of Kelce. We have Travis and his girl Tay out there. People are betting that. But I think down the road, everyone wants to see, can the Chiefs do the three-peat? Right now, the Chiefs are -1. The books took a big action yesterday on the Eagles on that one, so that made the number come down to the Chiefs -1. A little bit shocking that a team going for a three-peat, only a -1 point favorite. Total is 49.5. I think the betting public will probably push it up to probably 50. So if you like the under, I would say wait for that half a century number to come out.
And so as a handicapper, what bets would you advise people to avoid this time around?
I usually tell people just because there's a game on TV does not mean you need to bet that game on TV. But this one's the Super Bowl. Everyone's watching it. Have fun while I'm not saying you have to put down your double mortgage on it, but, put $10 on the coin toss. Maybe bet the commercial prop bets. Maybe bet will Saquon Barkley run the ball and use his butt as a blocker. There's so many other ways to do that, but have fun on Super Bowl Sunday because you're usually at a party. You're usually eating food you're probably not supposed to be eating. So Super Bowl, have fun. Don't bank all your money on just one bet.
Now, you also say to avoid non-football bets in particular here, and I will admit that I have fallen susceptible to this in the past, betting on the first song that Rihanna would perform a couple Super Bowls ago, which actually was the last time that these two teams met. So why should you avoid those non-football bets in particular?
I mean, because usually the odds are not that good. Usually the money, you can't bet more than probably $25 to $50 on those halftime bets. But it's just fun to have it. My wife loves to bet the halftime bets. I think the national anthem is probably getting more action than the halftime show itself. John Batiste is playing, doing the national anthem, so you can bet over-unders on 1.20 seconds right now. I think the total is right now. And will he play the piano? Minus $4 is the yes right now.
So what tips do you have to make sure that people are betting responsibly and not blowing their budget, as you were mentioning and alluding to earlier?
Have fun. You're not going to make your mortgage payment on Super Bowl Sunday. Just have fun. Bet small. Bet with your friends. Do the squares that everyone does. Just have fun on Super Bowl Sunday. You don't need to be stressing out on Super Bowl Sunday just because you have a $100 bet or a $50 bet. Have fun on Super Bowl Sunday. Eat what you're not supposed to eat.
Look, some of my friends would challenge that they're not going to make their mortgage back, and they would say, hold my beer on that one. But I wish everybody the best out there if they are going to participate. What are the best bet promos? Because that typically flies around as you see the customer acquisition costs really get factored in to the marketing that gets put out there from some of the sports book. Are there good best bet promos?
Oh, yeah. I mean, right now you can bet some books have even money on both sides to bet the game. So normally it's a 10% juice when you're betting either the Chiefs or Eagles, but some books have even money on both games, so there's no vig or juice, what we like to call it. And there's also, every book, you should always have multiple, as we call them, shops, but multiple books, because they give out such great bonuses. I know that there's going to be $1 million bonuses probably for Super Bowl Sunday. Take advantage of that. BetMGM has a great one. I worked for MGM for 13 Super Bowls. Caesars has a really good one. Both DraftKings and FanDuel have fantastic ones. A bet $5 to win $200 bonus, I do believe FanDuel is having right now. And you get to watch the kicking prop. Who Manning is going to kick a field goal? Is it going to be Eli or Payton? Eli's a $2 favorite.
Wow. Okay. Rafael Esparza, a lot to keep tabs on here. I took a few notes. We're going to be watching closely here. We appreciate your time.
Thank you.
Thanks. And stay tuned for more sports betting talk with FanDuel CEO Emmy Howe tomorrow at 9:45 a.m. Eastern Time. Among the wealthiest black Americans in the 19th and early 20th centuries, Junius George Groves received the name the Potato King of the World by the U.S. Department of Agriculture in 1902. A producer and shipper of potatoes on his farms, at the start of the 1900s, Groves had expanded his produce reach extensively throughout the United States, Mexico, and Canada. In 1910, black American farmers owned between 16 to 19 million acres of farmland, and today, that figure is less than 1% of the total, and the shrinkage is widely regarded as a contributor to the black-white wealth gap. Fast forward to now. The work of black farmers is again growing in recent years. According to the latest data from the U.S. Department of Agriculture published in 2024, the average size of black or African-American operated farms reached a record high of 163 acres in 2022. The National Black Farmers Association founder, John Boyd Jr., joined us on Yahoo Finance today and offered his outlook for opportunities in building wealth through farming.
Well, first of all, to build wealth, you need land. And we also need a more interest from younger African Americans to look at farming and agribusiness, to study at these major universities and farming and agribusiness, and to come out and start small. We're not looking for producers to be full-time, three commodity farmers like I am, but they can start on a much smaller scale, and we're going to need those farmers in the coming years to offset what's going on around the world.
Coming up, everyone, do you ever spend an extra few bucks just to get free shipping? Why spending money to save money, or spaving, can get in the way of your financial goals. That's next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
A programming note on this week's episode of Stocks in Translation. DataTrek Research co-founder Nick Collas highlights the silver lining of DeepSeek's AI breakthrough and what it could mean for investors.
If there's cheap AI, and it looks like DeepSeek has shown us that that's possible, that's actually such a huge net positive for companies that are going to use a lot of AI, because that means that the $50 billion that they were going to put into it this year, just pick a number,
Software companies.
just has to be maybe 10 billion. Where does the 40 go? Stock buybacks, dividends, things that enrich shareholders. So I'm not too worried about that feature. I think it shows that innovation can come from anywhere, but in terms of how you think about allocating money in a portfolio, you want to be in a space where profits are allowed and welcomed, and the government says it's okay to have private enterprise that makes people very, very rich. That exists in the US, it doesn't really exist in the rest of the world.
You can watch Stocks in Translation every Tuesday and Thursday at 8:30 a.m. Eastern on Yahoo Finance or wherever you get your podcasts. The suspension of the de minimis rule that limits the cost of shipping from China and Hong Kong means that e-commerce might get a lot more expensive. One silver lining, though, it might make more consumers realize they're spaving or spending more to save on fees like shipping. Yahoo Finance's Casey Bond is here to explain. So Casey, what exactly is spaving, and what are some of the common ways that people wind up falling into its trap?
Right. So spaving is essentially a marketing tactic that retailers use to get people to spend money in order to receive some sort of savings, or at least a perceived savings. Some common spaving tactics include buy one, get one, or BOGO, free shipping when you spend over a certain threshold, or similarly, a discount if you spend a certain amount. And while these might seem like a great deal, they often encourage us to spend money that maybe we hadn't planned to spend, or accumulate stuff that we maybe don't really need or even want that much.
And so, Casey, how can consumers separate good deals from spaving?
Yeah, it really comes down to having a solid plan for your money and spending intentionally. So that really starts with having a budget, so you know exactly how much you can spend in certain categories. Always making a list before you go shopping. If you happen to find a great deal on something on your list, great. Otherwise, avoid those spaving traps. And that also helps you avoid those impulse purchases that aren't really part of your spending plan and can cause you to accumulate more stuff that you don't really need.
Casey, thanks so much for breaking down all things spaving. You're going to make me think twice before I purchase online.
Thank you.
Thanks. Many college students are on a tight budget. According to a study last year, 78% of undergrads reported negative impacts to their mental health due to financial stress, and 59% considered dropping out over it. Joining me now, we've got Dan Ricardo, who is the University of San Diego finance professor. Dan, thanks so much for taking the time with us today. I want to start with the top money mistakes that you see college students making. What are some of the most common issues?
Yeah, hi, Brad. Thanks for having me. Plastic, right? Credit cards. They can be your best friend or your worst enemy, depending on how you use them. Unfortunately, for younger adults, we see them making lots of mistakes. They run those cards up right to the limit. They are late in their payments. All things, as you know, Brad, that will damage their credit, possibly for years to come. So that's the single biggest mistake I see. Student loans, where folks are bringing on a lot of debt without really understanding what that means after graduation. They're thinking, well, I can hope for forgiveness. Hope's not a strategy. So let's make sure we really understand when we're piling on those student loans, what's going to happen? What does that mean after graduation? And finally, choice of major. Brad, here's the thing. We spend a lot of time thinking about what school we're going to go to, and that's important. You and I, for example, went to Drexel. Shout out to the Dragons. But at the end of the day, Brad, your choice of major is actually more important most times than your choice of school.
Yeah, absolutely. Look, you caught me off guard with the Drexel mention. You're absolutely right, though. Yes, you've got some tips to help college students make smart decisions with their money here. So what are some of those tips, and how can the students really make sure that they're managing money correctly during that experience?
Yeah, great question. Listen, the first one is pretty self-evident, I think, is limit your student debt to no more than what you believe or expect your first year salary to be. If you're going to come out as an engineer and making 90 grand a year, fine, borrow 90 grand. If you're going to major in basket weaving, well, change your major. So prioritize emergency savings. At any age, let's make sure we have that rainy day fund. Things happen. New set of tires unexpectedly, right? Things like that. Choose your major carefully. And Brad, here's something that I'm noticing more and more with my students. Internships lead to jobs. That is so true nowadays. So snag that internship somewhere between sophomore, junior year, or maybe junior, senior year. Oftentimes that'll lead to a job. Treat it like a dress rehearsal and let it go into a real-time job.
Yeah, thank goodness that Drexel University's Westfall Arts and Design School did not have basket weaving as a major. Otherwise, they could have got this money. You also talk about the best ways for college students to build credit. How can you go about this while you're going through your studies?
This can be tough, but there are tips. So number one, start with a store, what we call a retail card, Target or something like that. They tend to be easier to get, have lower limits. Can't get into too much trouble, build your credit from there. Move up to a student card. Most major banks offer a student card that, again, a lower limit, easier to qualify for. There's a couple of really good choices out there. And then gradually move up to those better cards. But the key is we want to build our credit profile as we do that. Pay your bills on time, keep your balances low, that sort of thing. Avoid the minimum payment trap. Brad, if you owe $5,000 on your credit card at today's interest rates and you're only making minimum payments, it'll take you about 20 years to pay off that balance. So that pizza you got last night better be epic, because you're going to be paying for it for a really long time.
You also have some tips for post-grad financial planning here. When you're about ready to walk across the stage and then you get hit with the aha moment like, oh wait, I've got to pay back some of this and I've got to make sure that I'm able to make sure that everything kind of comes to equilibrium with the job that I'm trying to get into as well.
Absolutely. As you leave the quad, think about making a budget. And that doesn't have to be this big, elaborate spreadsheet. It can be, one page. It can be a very simple budget. And a budget is how you and I choose to spend our money. It's really a simple thing, right? Sign up for your 401k plan at work on day one. Don't delay. Time is on your side. Do it now and keep adding skills. Brad, I'm often asked, what's the best investment I can make? It's really simple. It's yourself. Invest in your skills, your human capital. That pays off the best.
All right. I hope that pizza is epic for anybody who's watching this and trying to figure out how they do some financing after it. Dan, thanks so much for taking the time here with us today. Real pleasure.
Thank you, Brad. Take care.
Certainly, you too. Let's do a final check of the markets here. We're approaching 12 noon Eastern time, and we're taking a look at the U.S. major averages right now. The Dow Jones Industrial Average, you're seeing that in the red. That's lower by about 0.3%. The S&P 500, though, and the Nasdaq, they are both in positive territory, fractionally as it may be, holding on to some of those gains here out of the gate here this morning for the front half of today's trading session. I'm taking a brief look at what's driving this activity, and right now, of the sectors that are holding on to those gains right now, financials is leading the pack. Bringing up the caboose, though, is energy. Everyone, that's it for Wealth. I'm Brad Smith. Thank you for watching. You can stay tuned for Market Domination with Julie Hyman and Josh Lipton. That comes up at 3 p.m. Eastern Time. They'll count you down to and through the market close.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial gain. We'll go beyond the headlines, analyzing all the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks mixed. The S&P and Nasdaq moving higher as investors digest earnings and policy changes. Roblox, top trending ticker on Yahoo Finance, shares are sinking, seeing its biggest intraday decline since May of 2024 after reporting daily active users in its fourth quarter falling below analyst estimates. Also, Honeywell shares are lower after confirming plans to split into 3 publicly traded companies. That's amid pressure from an activist investor. Honeywell already announced a spinoff of its advanced materials business. It will now separate its aerospace and automation units. Shares of Apple supplier Skyworks are plunging after the company said increasing competition in the smartphone market could lead to a significant drop in sales. And that is your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan that QR code on your screen to track the best and worst performing stocks of the session.
Welcome to Stocks in Translation, broadcasting from the New York Stock Exchange. I'm Jared Blickery, your host. The People's Voice is on assignment, and today we have Yahoo Finance senior reporter Alexandra Canal next to me. First, please like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, Amazon, or YouTube. And today we are welcoming Nick Collis, co-founder of Data Trek Research. Hello, guys. I am excited because I followed Nick for years. This is the first time we've met on camera. And today we're going to be talking about institutional investors as opposed to retail, tapping our guest's experience in the industry, including a stint with Mets owner Steve Cohen at SAC Capital back in the day. Our phrase of the day is smart money. It beats dumb money, but is there such a thing? Do institutional traders really have the inside edge? And this episode is brought to you by the number 42%. That is the share of zombie companies in the small cap Russell 2000 index. What is the magic threshold that triggers the zombie small cap apocalypse? So Nick, before we really dig in, what do you think of the market action so far this year? We are taping this, I should know for the viewers, on Fed Day, and there's been a lot happening recently.
There really has. I mean, just the last week, we've had everything from Treasury rates finally starting to break down because we were worried about 5% 10-year yields, and now that's gotten a little better. We're back down towards 4.6, 4.7, so that's a positive. Then we had this staggering news over the weekend about Chinese artificial intelligence that rocked the market on Monday. So it's really been like at least a month's worth of news in just the last couple of days.
Well, I want to get to our word of the day here, our phrase of the day, and we were talking about this just before the show. It is smart money, and I'll give you the definition. Is it formal? Well, we're just going to get to it. Smart money refers to institutional investors, hedge funds, pensions, and pros who are thought to have superior research, execution, and market access, often moving ahead of retail traders. So there's a lot of probably misinformation about what constitutes smart money versus dumb money. There was even a movie made about the latter. What do you think about these terms?
I don't like them very much. Having worked with institutional investors basically all my life, I can tell you that, yes, they are smart in the classic sense of the word. However, they have jobs to do, and sometimes those jobs don't necessarily fit with maximizing returns. So they might have a more risk-averse approach than their investors want that. They certainly have access to a lot more information than the average retail investor. That is absolutely true. But the most important thing about smart money versus dumb money is it's not about the information that you have that you use to make investment decisions. It's the process by which you make decisions. So, for example, you mentioned Steve at SAC.
Yes.
We had to go through a weekly meeting with an in-house psychologist every week for the first year, where we went through every single trade that we did and explain what our thought process was, what our stop levels were, what our take gain levels were. And he would really focus on how did you feel during that trade? Literally, how did your body feel? Were you relaxed? Were you anxious? How did you feel? Were you confident? What he was trying to get us to understand was, past a certain level of knowledge, your intuition is very powerful. And that intuition is really your secret sauce. It is what makes you a good versus bad trader. It isn't just what you know, it's how you execute on it. And it's that process that makes for great investors. Every great investor, from Peter Lynch to Julian Robertson to Steve as a trader, have a very specific process. So if you're smart if you follow your process, and you're dumb if you just roll the dice.
And I want to pick up on that point. You said a lot of institutional investors are risk averse, and it feels like there's a lot of risk on sentiment in the market. You can see that market concentration, obviously everything we saw with the DeepSeek sell-off, concentrated in those very few big tech names. Is that a problem for markets down the line?
It is both the market's biggest feature and biggest bug, honestly, because you've got, call it 35% of the S&P in 7 names. You've got 45% of the S&P in tech, plus the names that are tech but not really in the tech sector. Super concentrated. Don't have that in Europe. Don't have that in Japan. You do have it somewhat in China, but it's kind of landlocked tech. It's tech that only operates in China. The reason they're so concentrated, the reason they're so highly valued is because they have extremely high returns on capital. So if the average company around the world has a 10% return on capital, big tech has between 40 and 100% return on capital. Apple's return on capital is 100%, meaning that's what they make on their capital equity every single year, which is amazing. How do you value that? Is 30 times a multiple correct? That's what it trades for now, so fine, that's what the market says. But is 25 the right number, or is 40 the right number? If Apple can start growing again, 40 is probably more than the right number, but it's that tension that makes U.S. companies and U.S. equity indices so uncomparable to the rest of the world, and people get very confused about that.
Yeah, it almost seems like we have two issues of concentration. We have the concentration of the world's excess returns in the U.S. market, and then within the U.S. market, we have concentration, which over the last couple of years has been in these mega caps that we talk about, Magnificent Seven. But when you go back through history, 100 years of stock market returns, concentration is not unique to this period. It's been very common before, and you'll see comparisons to the dot-com boom and bust. How valid are those? Are you concerned about this at all in terms of an inevitability of a downturn?
So I was at SAC during the peak of the dot-com bubble, and then the first 18 months of its blow up.
So definitely boring time.
Oh,
Nothing
yeah.
going on.
And first and foremost, the firm made a lot of money. So you can make money both ways. Doesn't matter what the direction of the market is. More broadly, I think the issue is, what do you think technology has done to indexes over the last 10 years? Because technology is a kind of winner-take-most phenomena. And we've seen that with Apple and Microsoft and the rest of the names we all know. There are no European Microsofts or Amazons or Apples. They're all here. And this is what we hear talking to European clients all the time is, thank goodness the U.S. market exists, because otherwise we wouldn't have exposure to these very important trends. So I think this is different from the late 90s because you have much more profitable, much more globally scaled companies. And don't forget, we've had like 20-odd turns of Moore's Law since the 1990s. So technology has gotten much more powerful. And that's what we see with the AI boom now. I mean, we've had 30 turns of Moore's Law since it was invented in the 60s. We went from basic PCs to AI.
And that's where the number of transistors roughly doubles every 18 months to 2 years. And so it's been wonderfully predicted.
Yeah, the computing power per dollar is Moore's Law. Its size and it's how much it costs to access computing power. And that's really the power that we've seen expressed in these very high concentrations in the S&P, because these are the companies that take Moore's Law and leverage it into profits.
How much of this is due to the interest rate situation, do you think, that the U.S. has just emerged head and shoulders above the rest of the world in terms of tech innovation and being able to monetize it in the capital markets? I mean, we had ZIRP. That was a thing in the 2010s, and arguably we had a low-rate interest environment in the early 2000s leading up to the global financial crisis. And now we've seen a reversal. We've seen interest rates, especially on the long end, heading higher. Do you think things have changed such that maybe Europe can be competitive again because interest rates are higher? Maybe the Fed isn't such a factor with ZIRP.
Yeah, the issue with Europe, for example, just not to pick on them, but it's a good example. It's a big, broad market and a huge economy. The issue is not interest rates. The issue is, how do you tap intellectual talent and get it capital? That is the key issue. We are very good at that in the U.S. It is very hard to do in Europe. It's almost impossible in Japan, and China is somewhat mixed. So you have to have that access to capital. Europe has plenty of intellectual capital, and it has enough financial capital. But what I wrote about is, for example, DeepSeek on Monday was the biggest embarrassment is not that the U.S. didn't get it, it's because Europe didn't get it. Europe has just as much intellectual firepower as China does, but they didn't access it and they didn't leverage it.
Yeah, and when we've been thinking about DeepSeek, something I've been also thinking about is that AI, the trade is real, but it's also very speculative. And it makes me think about cryptocurrencies. You were the first on Wall Street to cover Bitcoin, also a speculative trade. And we've sort of seen this correlation between crypto prices, tech prices. So how do you balance the risk rewards within a speculative environment?
Yes, you're right. And to some degree, crypto, thank goodness for crypto, because it's kind of kept some of the speculative excesses out of the U.S. equity market, unlike the 1990s, where we saw just crazy numbers of IPOs in 98, 99, 2000 do spectacularly well the first day out, because there was so much demand for disruptive innovation. And that's been funneled over to cryptos. What's interesting is that it's mostly been a Bitcoin rally over the past couple of years. The rest of the ecosystem really hasn't gained anywhere near as much. Bitcoin's share of the crypto system has continued
Not even
to grow.
Doge.
To me, with the existential issue we're getting at is people trust technology. There's a new generation of investors that trust technology and understand how technology creates competitive advantage and business models. And they understand it at a deep fundamental level, which is why they're basically flocked to crypto, because they understand what it is. They understand its technology. And let's face it, Bitcoin's the only technology that's never been hacked at the core level. The blockchain's never been hacked. How much can you say? You can't say that about any other technology on the planet.
Interesting.
Every company's been hacked. Every major technology, Tesla's been hacked, Microsoft's been hacked. There are hacker competitions that target those companies in a friendly way to show their security failures. We haven't had that with the blockchain, and that's fascinating to me.
What do you think about the regulatory environment changing at the SEC? A new president, it's going to be a new SEC chair. We've already seen a flood of leverage ETFs being filed for. So there are expectations that things are going to change. How much do you think they actually change this year?
I think they're going to change a lot, particularly in the crypto space, and particularly with more speculative ETFs. I think the new administration is much friendlier to the idea that let the products come out. People can judge on their own if they're good or bad or proper for their use, and let it go from there. I think that's healthy.
Where do you see Bitcoin prices going in the long run? I know that's a big
How
crystal
many
ball
commas?
question.
That's what America wants to know. How many commas?
All I can say for sure is that as long as quantum computing doesn't come along and kind of wreck the idea of a private key.
So is that the risk to crypto?
To me, that's the biggest
It's a risk to humanity if that happens. All encryption just goes out the window if you got the keys to the kingdom right there.
Yes, I have an annual chat with a guy who used to run FBI cybersecurity and counter cybersecurity efforts, and our running joke is, we'll know that the first quantum computer's out in the wild when Bitcoin goes to zero in a day, because that is going to be the first most profitable use of that technology.
Because all cryptography immediately can be basically broken with minimal effort or a lot less effort.
That's the idea. Quantum still feels like it's a good decade away, but that's to me like one risk. Other than that, I think it can generate choppy but steady positive returns for the next decade. It's clearly a scarce asset that people understand and want to be involved with it. I think the biggest mistake Americans make in thinking about Bitcoin is, we have the dollar. And that's true. The dollar is very stable. The dollar compounds at 1% a year versus other currencies pretty reliably. So we have a nice, strong currency. But for the rest of the world, they don't have access to that. And Bitcoin, like gold, is access in a way to a dollar-based proxy. In the Bitcoin's case, if more demand comes along, the price goes up.
And the dollar also, it's been moving pretty aggressively depending on whatever Trump says with tariffs. Can you explain why a strong dollar is not always great?
Well, the history of commentary on the dollar goes back to Bob Rubin during the Clinton administration. His mantra was a strong dollar is in the best interest of the United States. And I fundamentally believe that. A strong dollar is a sign that we are receiving capital at an incremental pace, because capital goes where it's most well used, most welcomed, and safest. And the U.S. fits all those three things. We use capital extremely well relative to other countries. So I would prefer to see a strong dollar over time, but a sudden rise in the dollar is always a warning sign. And that's what we saw at the tail end of last year. Big rally in the dollar versus everything. And now I think it'd be healthy if some of that came off the boil and we had a little weaker dollar for the first 6 months just to reset things. But fundamentally, I'm very positive on the dollar over the long term relative to other fiat currencies.
Hold that thought. We got to take a short break, but coming up, we're talking zombies taking over the small cap space and channel. We're going to channel the ghost of Indiana Jones on today's Who Wore Better Runway Showdown.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
We are back. This episode is brought to you by the number 42%, and that's the share of companies in the small cap Russell 2000 index that have negative earnings over the last year. 42% of these 2,000 companies are unprofitable, and this stat comes from Torsten Slok, chief economist over at Apollo Global, which is our parent company, but 42% aren't making any money. Does that concern you?
Small caps have always been profit challenged. The number has been as low as 25%. It's just over 40 right now, as you cited. But that's kind of, again, a feature of those names, because what they're doing is trying to invest and grow into profitability. And that's what the appeal is for investors, is small caps should do pretty well over time because they're growing into profitability versus being massively profitable like the companies we were talking about earlier.
We've been waiting for the small cap rally. It seems like every analyst has said it's coming. And then it felt like, with Trump, we're going to see a stronger dollar that's going to benefit small cap companies, more levered to the domestic economy. But it just has not happened. What's preventing this? I mean, obviously, the yield surging is not a great thing for small caps either.
Yes, for exactly the reason we were talking about. If you are not making money, you need access to capital. And that's debt capital for the most part, because equity capital is pretty expensive for a small cap. So you're going to go out and issue debt capital, and two things matter. What's the yield on the treasury, and how are corporate bond spreads, particularly high yield spreads, the amount that a company has to pay over treasuries. Those have been declining. Those are at ridiculously low levels. Spreads are very, very tight versus treasuries, but treasuries themselves have seen a push up towards 5% as recently as just earlier this month. That will make every small cap investor a little bit uneasy, because if all of a sudden the cost of capital for a small cap company goes to, call it 11, 12, 13% from 8, 9, 10, all of a sudden they're paying more for capital, and some of those companies aren't going to make it. That's what makes them zombies. It's only a zombie if they can't get incremental funding to keep on the path towards growth. And that's a big mistake. People say any unprofitable company is a zombie. Not true. There's plenty of high quality unprofitable companies because they have a clear track to profitability. But if you need capital, that's a problem if rates go up. So you're right. It's absolutely 100% rates.
And yields approaching 5%. It seems like you said, we're in the clear right now. We're hovering above 4.5%. Why is 5%? Is it a psychological level because traders aren't really used to that? And if that's the case, perhaps we're just in this higher yield environment and investors just need to get on board. Is it really so bad? And if it is, why?
Yeah, 5% is an important level, and it isn't just over the last year or two. This goes back to pre-financial crisis. 5% was a level back then, and treasuries would very rarely go over 5%. It's fascinating because debt to GDP for this country was about 60% in 2004, 5, 6.
That seems really low.
Yeah, it is, because it's now 120%. It's double, and yet 10-year yields are exactly the same, which I think kind of challenges the idea that deficits inform yields. They clearly don't, because if they did, we'd have higher yields now than the mid-2000s. So the reason 5% is a barrier is because it's been a ceiling for a long time, and because it's kind of like those old-time maps where like they didn't know what the world looked like past a certain point, so they'd say, "Here be monsters." That's what happens with 5% 10 years. You get over 5 and here be monsters.
Right.
All of a sudden, we don't know what's going to happen. Should they go to 6? Should they go to 7? Who knows?
I got to ask you, do you think value is coming back in any way? We were talking about the interest rate situation. It really hasn't been a factor this century for long stretches of time, and I think a lot of it has to do with the interest rates situation, rates being low, but now with rates being higher and the market seeming to accept them, do you think there's a place for value in investors' portfolios?
It's very hard because the minute you sort of cycle into value, you're ignoring the most fundamental trend of the last 10 years and probably the next 20 years, which is technology. Yeah. There's not a lot of tech in the S&P 500 value, for example. Apple's in there, interestingly, as the biggest holding, but it's mostly financials, healthcare, things like that. So do you want to be very underexposed to technology? Look, if the answer is yes, because you're just very risk averse, value will do fine. There's still U.S. equities. Every U.S. equity sector except energy has outperformed rest of world stocks over the last 10 years. So, to your point about American exceptionalism, It isn't just tech, it's the entire ecosystem here. We're drawing capital and using it better than the rest of the world. And I don't see any reason for that to change anytime soon. So value's fine, it's just you have to accept the fact you're not going to get a lot of tech.
Speaking of diversification, you are very anti-international diversification. Explain to me why you think that's a waste of time.
Look, I think the underlying thesis behind any kind of diversification is you reduce risk and have the same level of returns. That's the principle of diversification. That's Markowitz's efficient frontier. That's what it's supposed to do. However, it assumes that every region has the same basic risk-return profile and the same ability to translate intellectual capital into profits. And I think we've seen over the last 10 years that is not the case. Europe does not have the same ability to create disruptive tech companies as the U.S. China has some real talent, but it's kind of hamstrung by the local government's constraint on who can get rich and by how much.
But did the DeepSeek sell-off show us that it's important to not be so tilted towards tech, like that we do need to diversify our portfolios?
Well, I think it showed that for NVIDIA. I'm not sure that it showed it for the rest of the ecosystem because several of the names were up on Monday. Apple, Meta were up on the day. And so if there's cheap AI, and it looks like DeepSeek has shown us that that's possible, that's actually such a huge net positive for companies that are going to use a lot of AI, because that means that the $50 billion that they were going to put into it this year, just to pick a number,
software companies,
just has to be maybe $10 billion. Where does the 40 go? Stock buybacks, dividends, things that enrich shareholders. So I'm not too worried about that feature. I think it shows that innovation can come from anywhere, but in terms of how you think about allocating money in a portfolio, you want to be in a space where profits are allowed and welcomed, and the government says it's okay to have private enterprise that makes people very, very rich. That exists in the U.S. It doesn't really exist in the rest of the world.
We got to pivot here and get to who wore it better. And welcome to today's high-stakes fashion face-off, where two very different investors are strutting down the runway, each with a radically different approach to uncovering market riches. On one side, we have the treasure hunter, bold, risk-seeking, and ready to chase the hottest trends before anyone else, armed with a pickaxe and high-conviction bet. This investor is all about speed and speculation. Think AI moonshots, crypto rallies, and that one stock that got everybody suddenly talking about the other. On the other hand, there's the archaeologist, patient, methodical, and always digging deeper. They sift through layers of fundamentals, searching for value where others see rubble. Small cap turnarounds, beaten down cyclicals, forgotten corners of the market. This investor plays the long game, and we were just kind of talking about this, Nick. But who is walking away with the prize this year? Is 2025 about slow, careful excavation or about grabbing the treasure before someone else does?
Ooh, that is...
Or is that a false paradigm?
It's a wonderful paradigm. It sort of encapsulates a lot of the investors I've met in my career. That's very neatly summarized as like the fast action trader, a Steve, or a lot of other investors versus the deep value people that just go about their job methodically. And I would say for the year, it's still going to be the first camp. It's going to be the people that are embracing change, embracing innovation, and playing that macro trend. I think the value investor, the really nuts and bolts investor, is always going to do well. They're always going to do 10 to 15% a year because they're finding valuable companies that are mispriced. But if you're talking about where's the trade this year, I think still in the first category.
We actually have a couple minutes left. I wanted to dig back to, oh, no pun intended, get back to your archaeological days here. That's something that you were studying in school. How did this prepare you at all for trading, treasure hunting in the old sense? And that, I know that's not really what archaeology is about. But
no, archaeology is an academic discipline, and academic disciplines really focus on writing. And to this day, I write 2,000, 3,000 words every single day, and my partner does 1,000 words a day. So to me, it taught me how to write. It taught me how to process information with an empathy for the reader, to understand not just I want to express something, but I want them to hear it in a way that they can appreciate it. And that to me is what liberal arts colleges do best, which is I went to Haverford College, where Howard Lutnick actually went. He was a senior when I was a freshman.
Go Birds. See if they win the Super Bowl.
So that's what it teaches. It teaches you to express yourself in a way that people can hear you.
And I guess also archaeology, kind of looking back at history, at trends. I feel like that's also what a lot of traders do every day.
And that's a huge part of our work at Data Trek is we'll go back and look at, okay, let's look at 10-year yields. People are freaking out about 5%. Why is that? You wouldn't know it from looking at the last couple of years. You got to go back 20 years. And then you say,
Does history usually repeat in the markets?
You know, I think now that so much of our trading day-to-day is algorithmically driven, I think you have to have a real appreciation for near-term history and long-term history, because that's what the algos do. They look back 100 days and look back 10 years and develop a model of how the world's supposed to work. So if you want to understand what's going on over our shoulder, you do have to understand history very closely.
We got to wind things down here at Stocks in Translation, but make sure to check out all our other episodes on the Yahoo Finance site and mobile app. We're also on all your favorite podcast platforms, so be sure to leave a comment, and subscribe wherever you get your podcasts. This is going to end it for us. We'll see you next time on Stocks in Translation.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Our next guest believes the stock market correction could be sparked by something investors aren't thinking too much about right now, a recession. Joining us now, Jim Paulson, Paulson Perspectives blogger and veteran strategist. Jim, it's good to see you. Now, to be clear, you don't think a recession is necessarily in the cards, but the fact that people seem to be discounting it almost entirely, well, maybe that's going to change this year. Is that fair to say?
Yeah, I think that, I think recession fears have been really strong, as you know, Julie, since the pandemic, and they've kind of finally faded away. In fact, the Fed and the bond market now seem to be concerned a little bit about inflation creeping up and maybe the economy growing too much, so much so that the Fed has, sort of slowed down its easing campaign. But I think recession fears lie there just under the surface yet, and it wouldn't take slow down here to reignite those fears. We've already seen a sizable decline in economic surprise index coming down. More importantly, I think that the policies of late, while everybody's focused on the Fed easing, much of the other policies are tightening. Since the Fed's eased in September, the 10-year bond yield's gone up by a full percentage point. The real value of the trade-weighted dollar index is up by about 8%, 6 to 8%. Over that same period of time. Money growth in this country, M2 money growth is growing 3.7% year on year. That's below the level of nominal GDP growth of 5%, which is just simply insufficient to maintain that growth rate. When I go back to 1960, when money growth is less than nominal GDP, real GDP growth declines in the coming year. So I wouldn't be at all surprised if real GDP is slowing down to about 2% here in 2025. Maybe even falls a little below that. And I think that's going to reignite some recession fears. One more point. People have already been worried about the unemployment rate. It's risen almost 1% from its lows in this cycle, which is odd. And just imagine, I think it's 4.2. Imagine if that ticks up here at some point by 4.3 or 4.4. I could see where people get really nervous. And if we have a reignition of those, I could see some selling being brought to the stock market, including the tech stock.
And Jim, if that happens, so, recession fears reignite, investors get spooked, market corrects, maybe it's 10, maybe it's 15%. Would that be a buying opportunity, Jim?
I think it would be, Josh. I still think we're in a secular bull that could last a few more years. And we just haven't had, we haven't had a correction maybe in almost a year and a half. And I think we're due for one. And I got kind of a catalyst here that could bring one. And I think it'd be a great buying opportunity. I wouldn't bet a lot on this because I think we're still in a bull market. I wouldn't raise a lot of cash. I don't think it's going to be fair. But I might be tempted to move a little from some of my more aggressive investments to some defense for a little while. And if you get a correction, then you got some funds that you could put back to work at much cheaper prices on those aggressive names.
Would defense be the bond market, for example, or would you, I know that you think bond yields right now are sort of out of whack, right? If you look at various historical indicators of bond yields, and it seems like some of them are kind of broken compared to what you do see historically.
I agree, Julie. We've got a pretty good rise in the labor unemployment rate. The factory utilization rate's coming down in this country, and that's been going on now for the last 1.5, 2 years, and yet bond yields continue to go higher as our resource markets become more unemployed. That's just one example. Commodity prices are down 33% from where their highs were in 2022. Over that same time period, the 10-year yield's gone from under 3% to 4.6. The inflation rate's dropped from 9.1 to 2.7, and then 10-year yield's gone up. Those are rare things to have happen historically. Normally, interest rates sort of follow those trends lower. So I do think rates are too high, and I agree, if we get recession fears, I think there'll be a run to the 10-year Treasury. I think those rates will come down. I think the Fed will open up the floodgate for the Fed to ease more aggressively. I think money supply will go up. I think the dollar will come off, and that's what could create a pretty good rally after this correction that still gives us a okay, decent return on the overall year. I would prefer to go to defensive stock sectors and the interim than bonds. I think bonds might do pretty well if we have recession fears. but I think the stock market might ultimately do better on the balance of the year.
In terms of why yields have moved higher, Jim, we've asked some strategists, is it, economy is resilient, inflation sticky, is it investors worried about fiscal challenges? Some have argued to us on the show it's actually all three of those. Is that your opinion?
Yeah, I think it's a little bit pickup in some of the inflation measures. I mean, the CPI annual has gone from 2.4 at its low to 2.7 in the last couple of months, for example. Commodity prices have lifted off their lows a little bit. So there's some concern there. Boy, that pandemic, Josh, it really created the 1970s inflation ghost again in the culture. And I don't think we're anything close to having an inflation problem like we did then, but some people still fear that. And then I do think people think it's bond vigilantes that are objecting to chronically large federal deficits and huge amounts of federal debt to GDP ratios in peacetime and taking that in their own control. There might be some of that going on. I haven't really seen that work historically that often. And I'll tell you what, even if that is at work today, if you put recession back into the minds of investors, that will eliminate the need to raise rates.
Jim, always good to see you and have you on the show. Thank you, sir.
You're specifically watching value stocks, and you say now is the time for them to outshine growth stocks. Just define the thinking around value versus growth right now, even in this environment, and why you're expecting this type of performance.
For starters, you really do see an economic situation coming into the new year where we have GDP growth has been pretty close to 3%. Unemployment is pretty close to 4%, and inflation has now got a two-handle on it. And so, that looks like somewhat of a Goldilocks type scenario. If that's the case, then investors should expect a continuation of the broadening of returns that we saw during much of the fourth quarter last year, up until the Fed, I think, had a little bit of a hawkish commentary in mid-December. So, typically a Goldilocks type scenario is good for value stocks. You also have just reversion to the mean working in your favor. If you look at the U.S. value index, it trades at roughly a 50% discount to the growth index. Typically, it would probably be about half of that type of discount. And so reversion to the mean also works in your favor as a value investor. And I think finally, the third key point is that interest rates, despite the fact the Fed is lowering rates, they should probably, the longer term, the 10-year bond yield may stay a little bit higher than it has been over the last 10 to 15 years, which is the type of thing that maybe should push investors into shorter duration financial instruments, which would mean away from some of the really the highest growth the growth stocks, for which a lot of your value is coming from cash flows you expect in the distant future, into something for which you're getting a lot more of your cash flows today, and that tends to be value equities.
Okay, so when you think about this, the parameters, or at least the checklist that investors should be going down for the value equity portfolio play, what does that checklist look like?
Yeah, and looking for names in value, you definitely, you don't want to go bottom fishing. You want to look for quality. And so, probably the key things we look for is, free cash flow. That pretty much cures all ills. Free cash flow means you can return capital to shareholders. It means you can support a dividend. It means you can, clean up balance sheets and pay down debt. Look for companies that are generating a lot of free cash flow. And, probably the second thing you look for as far as trying to go into quality value names is, the holy grail is pricing power. Look for companies that have some sort of sustainable competitive advantage that allows them to generate pricing power in an environment that might not be as inflationary as we've seen in recent years.
Burns, as you were mentioning the economy here, it kind of brought back the thought of what the economy is anticipated to do over the course of this year. And you're anticipating a slower but more sustainable economy, normalizing from some of the hot post-pandemic rebound that we'd seen 2021 to 2023 year. So as you're thinking through 2025, what does the calculus kind of lead you to believe we could see play out? And what does that mean for the Fed and how they could also influence in their decisions what markets might be trying to get ahead of as well and anticipating the Fed?
Well, again, I noted that the economic situation is certainly fairly comfortable right now insofar as that we don't see a recession in the next 6 to 12 months. But a lot of the near term and the forward-looking indicators show that the growth is slowing, and that's not necessarily a bad thing because it does lead to a more sustainable growth. The way I like to think, if I'm a marathon runner and I come out of the gates, blazing at a 6-minute mile, I'm gonna burn up and overheat about 3 miles, which is something that kind of is represented by inflation. But if you come out with something, 8-9 minute mile, it's something that maybe you can sustain that for 26 miles. Then the key to that means that you can still see, the consumer can remain strong. You can still see jobs remain solid, and you still have that growth without becoming overly inflationary. And that's the key. You noted the Fed because if we can actually sustain that momentum without having a relapse in inflation, then it would allow the Fed to stay on the sidelines and potentially continue to reduce rates at some point this year, which is really the tailwinds that investors are looking for. Stock valuations are a little bit rich, but the policy outlook is still pretty positive insofar as the central bank is still in cutting mode, and you never want to fight the Fed.
Yeah, look, you surely are spoken like a marathon runner. So we'll be looking for those splits just to see exactly what you're running yourself, Burns. But just lastly, while we have you here, want to get your picks as you're thinking through the plays that you've just outlined here on a sector basis. Who is best positioned to outperform this year?
Well, one of the first things that we look for as value investors is try to find something that's out of favor. Look for embrace headline risk. And when I think headline risk, the first thing that pops to mind is the healthcare sector. You do have, it's a sector that lagged last year. You have a lot of investors worried specifically about the incoming administration, and perhaps the appointment of RFK Jr. might lead to threats to managed care or to some of the vaccine makers and some of the drug companies. But at the same time, what people are really overlooking is the fact that the new administration may also ease a lot of regulatory burdens. So you might actually not have the same degree of headwinds that investors are talking about. And this is a sector for which right now it trades at a discount to the market. You don't often get that. And you do have historically solid earnings growth. It's you can kind of have your cake and eat it too, whereby demographics tend to be defensive. But the healthcare sector, if you look at the longer term over the last 40 or 50 years, has actually grown earnings faster than any other sector. And so if you can get it at a discount, then that really is quality at a reasonable price. And so that's one place I think investors should maybe lean into some of that headline risk.
Burns, great to grab some time with you here. Appreciate it. We'll talk about the splits offline.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills. 30 minutes into the U.S. trading day. Let's get you the three catalysts that we're watching this hour.
First up, we get the outlook for rates as Treasury Secretary Scott Bessent looks to push bond yields lower.
Plus, we dig into how the Trump administration's policies will impact the economy and the stock market.
And a look at how tariffs are impacting farmers, retailers, and Amazon among them, with the company set to report after the bell.
Treasury yields are rising today after the 10-year yield dropped below 4.5%, still below that level.
Pressure off the Federal Reserve. Treasury Secretary Scott Bessent saying President Trump is not asking the Federal Reserve to lower short-term rates. Instead, he and the president are looking to bring down longer-term borrowing costs via the 10-year Treasury. In an interview with Fox Business on Wednesday, Bessent said, quote, President Trump is not calling for the Fed to lower rates when asked whether the president wants lower rates. He and I are focused on the 10-year Treasury. Bessent underscored that when the Fed did a jumbo rate cut last September of 50 basis points, the yield on the 10-year Treasury actually went up. Bessent says the president believes if the administration rolls back regulations, makes the 2017 Trump tax cuts permanent, and gets energy prices down, then rates will, quote, take care of themselves. Now, Bessent repeated his economic plan, dubbed 3-3-3, which aims for getting the deficit down to 3% of GDP from above 6% now through cutting regulation, as well as sustaining growth of 3% and boosting oil production by 3 million barrels a day. The newly minted Treasury Secretary also noted he will only talk about what the Fed has already done, not what he thinks the central bank should do from now on. Bessent's comments come after President Trump said Sunday night that the Fed was right to keep interest rates unchanged at its policy meeting on January 29th. Trump's about face also comes after he initially criticized the Fed's recent policy decision, arguing they, quote, failed to stop the problem they created on inflation. Now, Bessent also offered some assurances about Elon Musk and Doge's access to the Treasury's critical payment systems, telling Fox Business that, quote, our payment system is not being touched. We're conducting a study. And can we have more accountability, accuracy, and traceability of where the money goes? Guys?
All right, Jennifer, thank you so much. Shauna, what is really interesting about what we are hearing from Treasury Secretary Scott Bessent is that the idea of keeping the 10-year lower, you could argue, is at odds with some of the inflationary policies coming from the administration, like tariffs. This is something that, if we have that chart of the day, is something that fund managers surveyed at Bank of America are already pricing in as a potential risk for 2025. The idea that the bond market might have to price in further inflation off the back of these policies. But then he's saying he wants the 10-year lower.
Yeah, and when you take a look as to why the 10-year yield has been elevated now for quite some time, continues to be elevated. Yes, we are hovering right around the lowest levels that we've seen in just about a month, but still not far from that 4 or 5 level, and still not far, obviously, from where we had seen a recent peak within the 10-year yield. And a lot of that has to do with some of that uncertainty surrounding inflation, surrounding pricing pressures. Obviously, tariffs potentially could exacerbate some of those issues and put even further pressure to the upside there in yields going forward. So when you take that into account and also square that with some of the commentary and rhetoric coming from Bessent when it comes to his energy policy and what he wants to see there. And I think what stuck out to me is very much how much of that is more so sentiment driven versus how much of a material impact that is going to have, just given where production levels are right now with energy and how willing we are going to see some of these oil giants be in boosting their production. That's something that's very much been debated on the street right now. But he has made the argument that when it comes to lower prices, when it comes to a lower deficit, that obviously could be more of an improvement and could ultimately lower yields. You just got to question with the tariff policies coming out from the White House, with core PCE right around averaging 2.8% now for quite some time. Not too far from that 3% threshold that we've heard from a number of economists here on the program that could potentially make the Fed maybe rethink its policy going forward, could obviously add to more of that inflationary picture there down the line. So again, very much you could see the initial reaction in the market yesterday and obviously here this morning. But again, further digesting that news, you have to ask just how feasible it is to do do that.
Especially to your point this morning when we were talking about this, Shauna, the idea that energy prices are already low. So lowering the cost of energy further, while that is a key driver of consumer sentiment, that might already be as baked in as it can be. If gas prices go even lower than they're at now, I think consumers might say, okay, I want my grocery prices lower, which is something else that Trump promised on the campaign trail.
All right, well, President Trump's set to meet with GOP lawmakers on the budget resolution. This coming after Senate Republicans split from the House over plans to hold off on tax cuts until a budget reconciliation package is sorted. For more, we bring in Jonathan Davidson, the former chief of staff at the Department of Homeland Security, also former assistant secretary of the Treasury for Legislative Affairs under President Biden. It's great to have you. So help us sort through some of the headlines coming out from the White House. Obviously, there's discord even within the Republican Party. That when you look broadly speaking, obviously a lot of pushback when it comes to the left. How do you see this escalating and I guess the next couple of weeks playing out in regards to this?
Thank you. It's nice to be with you, and it is hard to keep one's eye on the ball in this environment. But I think you're right to focus on the reconciliation packages and some of the discord there. I think we'll see some more later this morning. The House Republicans are meeting with the president in the White House to go over their version of what they envision to be a reconciliation package in the long run here. Their preference has been stated as a singular bill that would include the tax cuts and everything else. The Senate Republicans have described their their interest in doing a shorter term, smaller package, breaking that off of the bigger bill and then doing a larger tax package later in the year. So we'll see what comes of it all. But I think you can make the case that the Senate is trying to put pressure currently on the House to kind of get its act together to move forward here, because they've had a lot of internal debate within their House caucus to try to resolve and move forward.
And Treasury Secretary Scott Bessent saying he wants those tax cuts from President Trump's first time in office to become permanent. How difficult is that going to be from a legislative perspective, in your view?
It's extremely difficult, and as you know, I think the reason the tax cuts are not permanent from the TCJA in the last go round in 2017 is because they went through reconciliation to enact those tax cuts, and now there's a question of whether they're going to do that again. That doesn't allow for permanency unless you pay for it entirely outside the budget window, and so. It's a real challenge. I think that if they do want to go that direction, it's probably going to require a bipartisan approach, and whether or not that's a reality is still very difficult to foresee at this moment, because I think they're very focused on a reconciliation approach at the current time.
Jonathan, what would the bipartisan approach or potential outcome look like?
Very, very good question. I mean, there have been some areas of tax policy where there's been some overlay. You've got some geography that defines tax policy and SALT, but the reality of that is pretty hard to envision at this moment. I think there's just so much more focus and emphasis on the reconciliation process currently. And I think with all of the kind of chaos that you're seeing through executive action, it's hard to see a negotiation breaking out at the moment. I do think that, if Treasury Secretary Bessent really wants to get what he suggests would be the most important thing for the markets for stability, maybe there could be some quiet discussions going on to see what behind the scenes could be accomplished for a permanent tax deal. I think the corporate rate is going to be, a very hard sell to anybody on the Democratic side at this point.
Mm-hmm. And Jonathan, I want to switch gears a bit because you were former chief of staff at the Department of Homeland Security. So we want to talk both immigration with you and also some national security challenges. Starting there, I spent some time at the department last fall, and it was very clear to me how focused folks are at the Department of Homeland Security on the fentanyl challenges. Given your experience with DHS, how effective do you think tariffs are as a tool to fight the challenges related to fentanyl coming into the U.S.?
It's a really good question. I think it's a powerful tool for a lot of reasons, for a lot of purposes. I don't think that the current interaction and engagement between Canada and Mexico in terms of the threatened tariffs, the kind of 30-day pause that we're in now, and the subsequent National Guard posting at the border on either side of the border is necessarily going to have a dramatic impact on fentanyl. Fentanyl is not as much of a threat from the northern border as it is from the south. Mexico, has needs technology. There is in the Senate effort that was announced yesterday. There's an effort to try to put more resources to the border. Those are really the kind of the technology that we need, the additional personnel. Those are the things that make a significant difference on our side of the border. I don't believe that the concessions that were gained in this last go round of the threatened tariffs were significant for that fight. It does catch people's attention, and it makes people at least engage in a conversation. I think similarly with China, you can see a scenario where China would do something around precursors related to fentanyl in the face of threatened tariffs. But it's a tool. It's a blunt instrument, and what it actually yields often is really in the eye of those who are being threatened with the tariff.
Jonathan, I'm curious, as we take a step back and take a look at what has happened since the Trump administration took effect the second time around, and the cost cutting being led by Elon Musk and the defunding and the plans to do so, what has already transpired over the last several days. Obviously, now there's fears that more and more workers are going to be laid off or offered some sort of severance packages. What's the biggest risk in your view from being inside DC there that this potentially poses, not only from a national security standpoint, but also just from an economic standpoint, from a market standpoint that investors need to know?
It's an important question. I think that there are significant risks that when you combine all of these things together, look, I think that this new administration is filled with capable, smart people. There is chaos, and I'm not a person who believes in caricatures. I do think that the question of where in the chaos is the plan, and what is the kind of, how does this respond to the mandate of lowering prices, and addressing the migration problem. The real risk here is that, you just take USAID as an example. It's a little known agency by most in the American public. It's a $40 billion budget, but it's doing significant work to try to counter what China is doing in various parts of the world, and it has a significant role to play in terms of supply chains and how we engage in diplomacy in those parts of the world. And so, you take that loss of brain trust and loss of expertise and that loss of a tool, and you combine it with some of the other threats that are being made through tariffs. You look at some of the other impact here, and at some point the world, the rest of the world is a strategic set of countries that are looking to make alliances and looking to make sure that they can pressure back, and whether or not we get out over our skis too much and we kind of leave opportunity on the cutting room floor because we've kind of overreached is really my biggest concern. I think there's again, every new administration comes in and out of the gate, executive actions these days are a big tool and something that makes a lot of noise. The question really is, what is the actuality of the legislative initiatives that are taken, and what is the long term through the courts? What impact do these actual policies have on personnel? We'll see how many people take the buyout. It's hard to see right now whether that survives a court challenge, which is underway. But it's really the overreach that I worry about.
All right, Jonathan, we got to leave it there. Thanks so much for joining us. Appreciate it.
Thank you.
The stock market surged following President Trump's win, in part due to the expectation of tax cuts. But with that looking to be potentially delayed, could investor enthusiasm for this administration fade alongside it? For more, we've got Brett Nelson, the head of tactical asset allocation at Goldman Sachs Investment Strategy Group. Brett, thanks for being here. If we don't get tax cuts, how rough could that be for the market?
Well, I think that there is a spectrum of policy pejoratives of the new administration. And so on the one hand, we have things that are very market friendly, like, as you mentioned, tax cuts and deregulation. On the other side, we have some of the things that you were just speaking with Jonathan regarding immigration policies and what we do with tariffs. And so it's really a question of, how far that dial is turned in either direction. I think it's likely that there will be a focus on tax cuts and deregulation. It's a cornerstone of the Trump administration's policies. And so I think it would be quite surprising if nothing happened on that regard, especially just an extension. Whether we get additional tax cuts, that's a whole separate question, in terms of the corporate tax rate. But it seems likely that they are going to try to extend the tax cuts that were put in place in 2017 along kind of the lines of what the market is currently expecting.
But when it comes to how much optimism has been priced in, when it comes to just the overall degree, even beyond the tax cuts, your read just about how maybe caught off guard the market seemed to be when it comes to tariff, and maybe what that spells just about the downside risk then that lies ahead.
Yeah, so I think that, we expected there to be volatility related to tariffs this year, and certainly they have not disappointed in that regard. But when you step back and look at even the language that was in the White House's fact sheet, they used the word leverage 6 times, they used the word tool twice. And I think if we look at what's happened in the last week with Colombia, Mexico, and Canada, it seems like these are tools to extract some type of concession from our trading partners, as opposed to an end in of themselves. I think there was a lot of concern initially that these would be things that would be an end in of themselves to raise revenue and things like that, and it seems like they are more of a negotiating tool to get things that are important to the United States and our interests. Now, our view is when we step back from the tariffs and a lot of the volatility, at the end of the day, we think 2 themes that we've had for 15 years or so in the investment strategy group, U.S. preeminence and stay invested, are very much intact. And the reason U.S. preeminence in particular, we think, can weather the set of challenges that we're seeing is because these are things that are structural. They're not likely to change overnight. And what I mean by that is if you think about the U.S., for example, it is the largest country in the world, it is the wealthiest developed economy in the world, and it has the largest and deepest financial markets. It's the only country in the world that has all 3 of those characteristics and is in the top 10 of each of those. And that means the U.S. has a tremendous advantage in terms of how much it can invest in healthcare, R&D, innovation, the military, education, et cetera. These are things that are not going to change overnight, and they have persisted throughout many administrations in the past, rather than because of those administrations. And so we again focus on that because that really underpins our staying invested in U.S. assets. We have an 8% total return target on the S&P 500 this year. We think corporate earnings are going to grow around 10%. These are things that are likely to persist regardless of the headline noise we get around tariffs in our view.
8% sounds low to me, and I know I've been, spoiled by 2 years in a row of double-digit returns here, Brett. How do you think about your narrative of U.S. dominance staying intact and your bullishness on that with the fact that you've got a price target on the S&P that doesn't necessarily mean huge gains that I've come accustomed to?
Yeah, so it's a fair point that I think as investors, we know that there's probably some quantum of returns that the market has to offer relative to its fundamentals. And so clearly we've come through an environment in the last 2 years where we've had 20% plus returns in the last 2 years. That is obviously atypical. So I think it's very fair to say that it's unlikely we can sustain that level of appreciation. And one of the things we highlight in the report is that from the trough of the financial crisis in 2009, U.S. equities have delivered 17% annualized gains. That's obviously well above the historical average. So first and foremost, yes, you are correct. It's unlikely we can sustain those returns. But When you think about 8% in the context, you have to ask, well, how does that compare to my alternatives? And when we look at cash or bonds, we think those are around 4 to 5% returns. We're placing low 20% odds on a recession. Recession's the greatest risk to equity investors because that's where 3/4 of bear markets have come from. So if you have low recession odds, then you worry less about the defensive characteristics of cash and bonds. And then when we look at other equity markets around the world, we think that those returns are probably 6 to 7% versus 8 in the US. And if you're a US dollar-based investor, you're going to have to weather the fact that we expect the dollar to appreciate a few percent, which would drag on those returns. So on a relative basis, it is the kind of the tallest tree in the forest, so to speak, from our perspective, even though it will not deliver the type of returns that we've seen in recent years, to your point.
Guess you got to be thankful for what you could potentially get, and making that sound, I guess putting in context, 8% doesn't sound that bad. All right, Brett Nelson, great stuff. Thanks so much.
Great, thank you.
Coming up, we're going to take a look at some of today's trending tickers, why one chip maker is on track for its worst day in years. That's coming up next on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session, all done on Yahoo Finance's trending tickers page. First up, Apple. It's a supplier here, Skyworks, under pressure today after Skyworks forecasted a decline in revenue for the current quarter. The company expecting a hit from growing competition in the smartphone market. Now the chipmaker also naming former Intel executive Philip Reis as its next CEO, announcing a $2 billion stock buyback. So certainly a lot to unpack within this report, but you're looking at Skyworks shares off just about 23%. So they are off the lows of the morning if we're looking for some sort of silver lining within some of that selling action that we are seeing this morning. But just to put this in perspective for you, Apple is Skyworks' largest customer right now, and they expect share of that business in regards to their components to fall by 1/5 all the way up to a quarter. Clearly that will have a detrimental and a massive impact on their bottom line. We're seeing that reflected in the selling pressure here this morning, and that is why, to the degree that we are seeing shares down just about 23%, Maddie.
Yeah, it's interesting because they talked about how the iPhone represents 85% of their overall revenue just from Apple, one of their largest customers, as you mentioned here. And that's interesting when you contrast this with Qualcomm, because Skyworks had talked about kind of the competitive landscape being too intense. They didn't say that there's too much pressure on iPhone sales itself leading to this. They talked about competition in the smartphone chip space. And then you take a look at a company like Qualcomm, that stock dipping after earnings, but a bright spot in their earnings was smartphone chip revenue coming in hot for the third quarter in a row, up 13% on the year. So one of the questions here is, are companies like Apple looking elsewhere and potentially no longer going to be the biggest customer for a company like Skyworks? And what does that mean for investors moving forward here, especially given that there is, of course, the geopolitical concerns as well regarding tariffs and things of that nature, export controls that could also continue to weigh on some of these chip names moving forward. All right, next up, Roblox missing estimates for fourth quarter bookings and daily active users. The gaming company also issuing a weaker than expected forecast for bookings this year, and the outlook adding to concerns about the health of the video game industry. This follows a disappointing outlook from Electronic Arts. I should mention some of the biggest drops in Roblox that we've seen in years, the stock down 15%. It was at a record high right before earnings, so I think that's important context for the degree of this sell-off here, but really that annual bookings coming in below estimates, sparking a bigger fear about growth at Roblox slowing after years of strong progress here that they have had. That could be one of the potential reasons that we're seeing this. And then, of course, one of the biggest issues was that daily active user count still coming in high. I believe it was a 19% gain in that daily active user number, but that just wasn't as high as the street was looking for. And then, of course, the guidance disappointment there as well.
Exactly. And this company has very much been in focus in the spotlight ever since Hindenburg Research, a report claiming about inflated user growth, child safety issues. Much of the decline that maybe we did see in the fourth quarter largely being attributed to the fact that they are cleaning up some of those inactive customers, some of the bots on the platform. Going forward, there'll be with so much focus on that growth, Maddie, that you were just talking about. Well, what was interesting to me was some of the analyst commentary surrounding that. And they said that maybe this reaction, the degree to which we're seeing some of that selling this morning, is overblown, because when you take a look at these numbers, it is the third consecutive year of roughly 20% growth in bookings. So even as many of its rivals here are trying to do all they can to win back some of their lost customers, especially in the face of slowing macro environment, inflationary pressures, are still getting a growth rate that is relatively impressive, especially when you compare it to some of the other competitors right now on the street. So I thought putting in perspective, especially Wedbush's Michael Pachter, who has been on the program with us a number of times, he was saying that there is still a lot to be encouraged about within this report once you do look at some of those underlying numbers there. So I thought that was interesting just in terms of whether or not maybe the initial reaction, the setup that we're going to see going forward, investors may be using this as an opportunity to buy.
And that's in part why I wondered if some of the selling was just due to the run-up that we've seen in the stock heading into earnings, because yes, their guidance came in kind of near the lower end of estimates, but it was still above estimates there. So if you look at some of those kind of under the hood data points, it was still a positive print.
All right, let's take a look at Maersk reporting better than expected fourth quarter results boosted by disruptions in the Red Sea. Now, the shipping giant expecting 4% global growth this year. That was despite uncertainties surrounding the Trump administration's trade policies. You're looking at gains of just about 1.5%. Have been up about 6%, I believe, just over 6% in earlier trading there. They also had a buyback announcement there that was adding to some of that risk on sentiment earlier. But again, when you take into account some of the uncertainties that still are present, or still are very much present for Maersk, when you talk about the global macro picture right now, the trade uncertainties, geopolitical conflict, how that then could potentially weigh on a name like Maersk very much is one of the topics that is in consideration here for investors, for their CEO, as the executive team tries to navigate this very uncertain time.
Yeah, especially when you think about the reopening of the Red Sea that is expected by mid-year, according to Maersk, which they talked about in this earnings print here. That could potentially weigh on freight rates, which have been more expensive in that region due to some of the blockages due to Houthi attacks in the Red Sea. If we see that geopolitical risk getting off the table, what does that mean for their profit margins moving forward if that is no longer a factor in those increased profits for them? Having said that, there, as you mentioned, Sean, a 4% growth in the container market overall this year, fourth quarter earnings beating estimates with that revenue coming in, rising 24% and seeing that 2025 EBITDA from $6 to $9 billion, squarely above the estimate there at the higher end because the estimate was $6.7 billion. So those fourth quarter earnings and that revenue really coming in strong. And then you've got the buyback cherry on top of all of that as well. So it'll certainly be interesting to see whether or not those company fundamentals can outweigh some of those broader policy risks with regards to tariffs and then, of course, globally with geopolitical risks this year as well. All right, coming up, with the intensifying trade war in China, Chinese retailers hit with an additional levy. What that could mean for some of your online orders. Plus, we've got the CEO of Brooks Running explaining how the company could navigate tariffs moving forward. Stick around for those conversations next.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Chinese retailers that sell products on Shein and Temu will now have to pay an additional 30% levy on goods shipped to the U.S. This after President Trump imposed a 10% tariff on goods from China and revoked a de minimis exemption that allowed small packages under $800 to enter the U.S. duty-free. Joining us now is Arun Sundaram. He is a CFRA's senior equity research analyst. It's great to have you here. Let's talk about the impact that this has overall on retailers. Who is the winner in this situation? Is it a name like Amazon?
Yeah, no, I think all the large discretionary retailers in the U.S. are winners from this. So Amazon, Walmart, Target, I think these will be winners from this because, one thing we've learned, and even some of the e-commerce retailers, like I think Etsy would be a winner from this. eBay might be a winner from this. Because I think one thing we learned over the last few years is that these Chinese competitors, Temu and Shein, have gotten really competitive in the U.S. and taken away some market share. We even saw Amazon last year. They introduced their own similar model to Temu and Shein called Amazon Haul, and that was really a competitive response against these Chinese retailers. So, I think at the end of the day, it's a net positive for these large U.S.-based retailers.
That's interesting, Arun, and it's great to chat with you here. I pulled a stat this morning. 25% of the cost of products for Amazon come from China, and of those products, about half of their products sold overall are coming from China on Amazon. So obviously a huge potential impact. But are you saying that the kind of risks on tariffs to a Shein and Temu outweigh the risks that could cause to a company like Amazon?
Yeah, and I think Amazon has a lot of optionality. One, it's because they have both their own first-party e-commerce business and they have a very large third-party e-commerce business. In fact, their third-party e-commerce business has gotten larger than their first-party business as they introduce more third-party sellers. But yeah, you're right. No, Amazon doesn't disclose how many third-party sellers they have coming specifically from China. But there's indications that it's a large percentage. But again, Amazon does have optionality. I think we could see some third-party sellers leave. We can see other new third-party sellers enter Amazon. This does open the doors up for more US-based third-party sellers. But again, yeah, I think the thing about Amazon is that they have optionality. They have a very broad selection of products. They have a large third-party base. They have low prices. They have fast shipping. And at the end of the day, I think they'll be just fine.
Arun, let's talk Amazon's results after the bell tonight. Very high expectations. They're expected to have a strong quarter when it comes to retail. Some of the trends that they saw during the holiday season is expected to boost results. Also, the cloud business expected to very much outperform. What does this setup look like for Amazon overall this year?
Yeah, I think for this quarter, for Q4, I think the setup is positive for Amazon. Their e-commerce business should have done really well, given that all indications were that we had a strong holiday season, especially for e-commerce retailers. So I'm not worried about the e-commerce side of Amazon. I think that we'll see a beat there. I'm also not worried about the bottom line either. Operating profits, that's been an area of positive surprise for Amazon over the last few quarters. In fact, the last 3 quarters, Amazon has been on the operating profit line by an average of $2.6 billion. So I'm not worried about e-commerce. I'm not worried about the bottom line. Where investors tend to focus more on is AWS and their cloud business. And the bogey for this quarter, for Q4, is 19% AWS growth. And if they hit that 19% AWS growth, that would represent stable growth from Q3 and Q2 of 2024. And I think that would be viewed as a positive because we did see some misses in the cloud business for Microsoft and Google. Both of them saw deceleration in cloud growth. So if Amazon can hit that 19% mark, I think that would be viewed very favorably by investors. If they hit 20% AWS growth, then we're going to start having questions about whether Amazon's taking market share away from companies like Microsoft and Google.
Yeah, Arun, talk to me about the CapEx question mark, because this has been such a sticking point for Wall Street this earnings cycle, with that $75 billion in CapEx at Alphabet, leading to a sell-off in the stock following their earnings. I know you forecast about $86 billion in net CapEx for Amazon in 2025. Is that number going to be too high for some investors?
So I think the risk, there's probably upside risk to that estimate now. What we've learned over the last week or two with all these big tech earnings is that CapEx numbers are rising more than expected. So yeah, we're forecasting about $86 billion in 2025. My guess is when they report today, they don't always give exact guidance for CapEx, but my guess now is probably going to be above $90 billion in CapEx. I think one thing we've learned over the last week or two with all this DeepSeek news is that these big tech retailers or big tech companies are not backing down. In fact, this has essentially lit a fire underneath them, and they're actually trying to become more competitive now and raise their CapEx expectations. So yeah, I think that could be a risk where if CapEx is higher than consensus, especially, then it could lead to a sell-off like we saw with some